So we move into the last chapter for day 1, that is cash flow statement. Okay, we have 6 questions in cash flow statement. Huh? Is it? Okay. Cash flow statement. Okay, understand it. Earlier they used to ask 14 marks question, 15 mark question in old scheme. Now also they are asking in new scheme. But they are not asking directly. They are asking 7 marks in descriptive, 8 marks in MCQ. 15 marks is there. Are you getting my point? And any cash flow question can be put into any place. Any cash flow question can be put same like that only. They can put it into MCQ also. They can put it into descriptive also. You know how? Cash flow statement has cash flow from operating activity, investing activity, and financing activity, and net cash flow. 4 things will become 4 MCQs when it goes to MCQ. When it is in descriptive, prepare cash flow statement. Huh? Yeah, they did it in January attempt. They did it. Huh? Midterm. MTP also they are asking. Yes, cash flow statement they are asking. Okay, let's go further. Let's try to understand the concept of cash flow statement. Okay, I hope you remember it. AS3, third accounting standard done for the day. 24 standards. Wait, we just started. Motivation, yes. 24 standards will be remaining for tomorrow. Okay, only. Branch is also there. Branch will also cover AS11 little. Yes. We'll start, yes. Otherwise, you might ask, what is P&L only? Next question. Already you are asking about accrual concept only. Yes, cash flow statement. Let's start cash flow statement. Full focus, guys. It's an important scoring area. It's an important scoring area. Remember this. Okay, AS3, cash flow statement. Statement showing inflow and outflow of cash and cash equivalents. Not just cash, cash and cash equivalent. Cash equivalent is bank and highly liquid short-term investments. Bank and highly liquid short-term investment. What does it mean? That means investment which I can sell at any time and it will not fluctuate too much. Clear? Yes. Cash flow statement and P&L. What is the difference we have to understand? So that when we are preparing indirect method and all, it will become very clear in our mind. Cash flow statement, they follow cash system. P&L, they follow accrual system. Clear? Now, cash system, expense paid and income received related to any year you will record. In cash flow statement, expense paid and income received of any year, last year's, next year's, anything, I will take it as in cash system. But in accrual system, expense unpaid and income receivable are recorded if related to current year. Expense unpaid and income receivable, if it is related to current year, we will record it. Clear? Now, all transactions, revenue plus capital, I will show. I will not bother about revenue, capital and all. Everything will be shown. If there is inflow and outflow of cash, that means if I buy one asset also, it should go to cash flow statement because there is movement of cash. Clear? Only revenue transactions will be shown in P&L. Capital transactions will be shown in balance sheet. This is like basics. We need to know that. CFS. 3 activities are there. Cash flow from operating activity, which is cash flow from operating activity related to day-to-day business transactions. These are usually P&L items. Clear? Cash flow from investing activity, that is related to non-current assets. If it's related to non-current asset, it becomes cash flow from investing activity. Then cash flow from financing activity. If it is financing activity related to non-current liabilities and shareholders funds. So very, very clear you should be. P&L items always CFOA. Okay. Investments, that is non-current assets, always CFIA. And then CFFA will be non-current liabilities. Sir, what about current liabilities, sir? Current liabilities, current asset will be taken here only. Operating activity, day to day it is. Clear? Now, examples. One guy is there, Amarnath. He looks like this. Huh? What? No, this is the recent batch. It was in Coimbatore. That's why the name got changed. And this handwriting was more neat. So I picked this. In the Chennai batch, handwriting was not that neat. So I didn't take that. Yeah, because there the iPad problems used to be there. When you write that, lines will come. So that's why it used to be not as neat as this. Okay, so the names got changed. We will read now. I will read. You have to listen. Okay, Amarnath is there, who is doing furniture business. Okay, if he purchase of furniture will be cash flow from operating activity minus purchase of furniture business only. Okay, sale of furniture will be cash flow from operating activity plus purchase of computer, not his business, computer becomes asset, so cash flow from investing activity minus sale of old computer, it is not his business, selling computer, cash flow from investing activity plus. Clear? Now, purchase of furniture for office use. You are doing furniture business, but you purchased furniture only, not for resale, not for selling, for office use. That time that furniture also becomes an asset. It will be cash flow from investing activity minus. Is this clear? Okay. Now, investment purchased, cash flow from investing activity minus interest on investment, cash flow from investing activity plus. Yes, investment sold, cash flow from investing activity plus. Array, when we sell, we'll get money. How it will be minus? Investment statement I am not doing. If I am doing investment statement, investment will be minus. When I am selling, I am doing cash flow statement. Investment, let it go. Money came plus. Clear? Now, purchase of investment, cash flow from operating activity minus. If you are an investment company, if you are a mutual fund, then it is operating activity minus sale of investment, operating activity plus interest received on investment, cash flow from operating activity plus. Clear? Now understand, if one thing is in one area, related everything will be in that area only. Purchasing investment, investing activity, sale of investment, investing activity. From investment, if I get something, that is also investing activity. Is this clear? Shares issued, financing activity plus, because you'll get money. Shares issued by investment company. Investment, mutual fund company has issued shares, still financing activity. Still financing activity only. Anybody issues shares, that is for accumulating money for their business. It will be financing activity. Don't get confused. Any company issues shares, it will be financing activity. Banking company, if they give loan, operating activity minus. If they give loan, money goes. Loan repayment received, operating activity plus. Interest on loan received, operating activity plus. Loan borrowed. Your business is not borrowing loan, your business is giving loan. So loan borrowed will still be financing activity only. Loan repayment made, you made the repayment, financing activity minus. Interest you paid, financing activity minus. Is this clear? Accepting deposit will be operating activity. Okay, now usually loan bank, what they will do? They will take loan from RBI and give loan to customers. That taking loan from RBI will be financing activity, but giving loan to customer will be operating activity. Yes, bank issues shares. Anybody issues share, financing activity plus or minus plus. Loan given, not bank, others, loan given, investing activity minus. Loan given will be going and sitting in loans and advances in the asset side of the balance sheet. So cash flow from investing activity minus. Loan repayment received, cash flow from investing activity plus. Interest on loan received, cash flow from investing activity plus. Depreciation, operating activity, yes, but not cash flow from operating activity. Therefore, it will not come into cash flow statement. If they give an MCQ, depreciation, operating activity, investing activity, cash flow from operating activity, cash flow from investing activity. Answer is operating activity. Why? It is operating activity only, but is there a cash flow from that? There is no cash flow from it. Are you getting my point? Is it related to day to day? Yes. No. Buyback. 12 hours ago, we were doing buyback here in the same location, and we are here now. Okay, buyback. Cash flow from financing activity minus. Redemption of preference shares. Cash flow from financing activity minus dividend paid. Cash flow from financing activity minus dividend received. Cash flow from investing activity plus. You will get dividend if you make investment. Okay, interest paid, financing activity minus interest received, financing activity plus. Oh, sorry, what am I reading? Investing activity plus. Correct. Interest also you will receive only if you make some investment. Direct method, indirect method, two methods are there. First, cash flow statement, simple format, operating, investing, financing, done. That's it. Operating, investing, financing, done. Net cash flow can be positive or negative. What will you do? You will add the opening balance of cash and cash equivalent. Don't take from the question. You should get the closing balance on its own. Then you check the question and see whether it is matching. Are you getting this? This much you will do. Opening balance you add. From the question you add. And then you see the resultant figure. Resultant figure should match with the closing balance. That means you have not made one-sided errors. Okay, that means you have not made one-sided errors. You could have still made errors. How? Instead of putting investing activity minus, if you put financing activity minus, it will still tally, no? It will still tally. Are you getting my points? Errors of principle can be made. Errors of principle. Okay, but one-sided errors cannot be made if at all it tallies. Now, direct method. Direct method. Okay, simple it is direct method. What do we do? Directly. Okay, direct method, what do we do? Directly. Things are given to you, you pick. Oh, I want this, I want this, I want this. Remember that box? Okay, I want this, I want this. I think I have drawn that box somewhere here. Anush, see, I have drawn that box over here. I'll discuss again. We will discuss that. Okay, in direct method, okay, understand what happens in direct method. We start with cash sales. Cash sale. Okay. Cash sale will give you money, so you will take it, and it's operating activity. Credit sales we are not going to take only. Why? It does not give me money. When does credit sale give me money? When amount is received from debtors. Amount is received from debtors. Then other income, any other income that is received, which is operating income, no, that will be added. Okay. Then cash purchases minus. Cash purchases minus. Credit purchase no minus. Only when it is paid. Okay, when amount is paid to creditors minus any other expenses, all other expenses, operating expenses which are there minus, you will get some value. From that, remove the tax paid, not tax provision, tax paid. That time you will get cash flow from operating activity. You will get cash flow from operating activity. Is this clear? Any doubts? No. Now, some water. Okay, guys. Before you open that package, yes, let's start. Already opened. Indirect method. Now listen. Indirect method. Okay, guys. Shh. Indirect method. Now, indirect method is very important. Now, how important indirect method is? They are asked indirect method only most of the times. Okay, to test your concepts. Now, understand in indirect method what you are doing. Okay, indirect. Wow. Indirect method, what we are doing? Okay. Oh, it doesn't move, man, because I took it as PDF. It doesn't move. See, now I'll tell you, I'll just explain to you from here only. Indirect method is, see, for example, you have three boxes. One is for footwear, one is for clothes, and one is for stationery. And all these things are given outside. What you will do? Direct method. What you will do? Take and put into the right boxes. That is direct method. Whichever is there, you put it into right boxes. If everything is dumped in one box, that is indirect method. From here, what is required, you will keep it here only. What is not required, you will remove and put it to other box. This is called as items which are related to other heads, which you remove and put it into respective heads. Clear? Now, very important to understand indirect method. What do we start with? PBT, PAT or retained earnings. What did you put income, man? Full smell is there. Like the tiger balm. Yes. PBT. Uli. Tiger. Yes. PBT, PAT and retained earnings. Huh? Puli in Tamil. Okay. Yes. Okay. Guys. Come on. See, it happens. End of the day, no, then motivation will drop. Sir, motivation dropped afternoon, sir. What are you telling? End of the day. Okay. No, this is like, I tell you, no. Go into washroom. Syndrome. What happens? Remember in class, we have discussed this. 2 hours you are going in the bus. Urgently you want to go to washroom. But still you can control and you can sit. When you get down from the bus, you can see your house there. As you are walking closer and closer to the house, pressure will be higher and higher. Are you getting this? When you open the gate of the house, you know washroom is very, very close by. That time the pressure will be high. When you enter the hall, it is uncontrollable. When you open the washroom door, forget it. Okay. Are you getting my point? Okay, that is not normal, no. But if that bus journey would have been half an hour more, you would have still controlled. Are you getting my point? So, take one more chapter now. After listening to that, but whatever it is, when after all that pressure, when you actually go to the washroom, the joy is too good. Are you getting my point? You'll be like, you'll feel so relieved. Correct? Okay. Now, same way, at the end of the day, we'll have that. Just want to get rid of it. We will not do it. We'll finish the chapter properly. Okay. It's only 8:20 anyways. Okay. PBT, PAT, retained earnings. Okay. Which one should I start with, sir? Whichever is given to you. Best PBT. Because the tax related adjustments will be lesser. Okay. Now, if they give you 2 balance sheets, then I have no other option. I have to start with retained earnings only. If they give me 2 balance sheets, I have to start with retained earnings only. Is this clear? Are you following this? Okay. Plus or minus. Non-cash items and items covered under other heads. Non-cash items and items covered under other heads. Now, simple. These are the things which are there in the P&L. I should remove it for only 2 reasons. 1, they are non-cash. 2, they don't belong here. Are you getting my point? 2 things only. If I am doing anything under this heading, no, it's only because of 2 reasons. 1, it is non-cash or they don't belong to operating activity heading. Remove it and put it into the correct heading. Depreciation and amortization. Why am I adding it back? And remember this. In P&L, it is there. I am removing, right? If it was expense in P&L, I will add it back here. If it was income in P&L, I will minus it over here, reduce it over here. Is this clear? Depreciation and amortization is non-cash, so I add it. Expense, I will add it back, non-cash. Profit on sale of asset, it is cash related item only, but it does not belong here. So from here I'll minus and entire sale value will be shown in investing activity. Clear? Loss on sale of asset. It is not this heading. Loss, you will add it back and you will show the sale value in the investing activity. Interest paid. Interest paid. Did you pay it? Yes. But you will add it back over here and you will show it under financing activity. Interest received. You will remove it from here. Minus. Income is added already. We will subtract it and then we will show it under investing activity. Clear? Then that time you will get cash flow from operating activity before working capital changes. Tax provision, there is a separate working note I have done for that. You know why? Depends on starting point. I have made one chart. Somewhere it should be here. See. Tax provision. We'll discuss that. Okay. Before working capital changes. Working capital changes. Increase in current assets. Okay. Logic we know. What is the logic? Current asset, for example, current asset, one current asset is debtor. Debtor increased. How can it increase? Credit sale. Where did credit sale go? Revenue from operations. That means it is added to profit. Remove. Logic. Debtor decreased. How did debtor decrease? I made the payment. Okay, if I make the payment, it is not there in the P&L, but money went minus. Oh, what am I telling? Sorry, debtor decrease. I get the money. I get the money. It is not there in P&L. I add it. Clear? Yes. Okay, creditor increase. How did creditor increase? Credit purchase. Credit purchase is also shown as expense in the P&L. That means they have already removed from the profit, but it is non-cash. I am going to add it back. When creditor increase, can you see over here? Increase in current liabilities, I am going to add it back. Creditor decrease. That means I made the payment. But if I make payment to creditor, entry is creditor account debited to bank. It will not be there in the P&L. But money went right. Minus. This is logical. Other way around. Just remember, current assets, whichever side that movement happens, you do opposite. Current liability, whichever side the movement happens, you do the same side. So current asset increases, here it will be minus. Current asset decreases, here it will be plus. Current liability increases, here it will be plus. Current liability decreases, here it will be minus. Is this clear? That time you will get cash flow from operating activity after working capital changes. Then tax paid, not tax provision, tax paid. You will get your cash flow from operating activity. Is this clear? Any doubts? No. Note. Usually if they give you like this, understand this. PBT is your starting point. From that you remove tax. What tax is this? Tax provision if company maintains provision. If company does not maintain provision, then it is tax paid only. If company maintains provision, what goes from here? Now imagine, this is the example I was giving. There is one girl called Anusha. Okay. This is her wallet. Red hair. Yes, she colored her hair. Okay. Okay, this is her wallet. Now, this is her wallet and she has a fund called as movie fund. Whenever there is a new movie releasing, Vijay's movie, she wants to watch Vijay's movie. Let's assume. Okay. She makes a movie fund for Vijay's next movie. Only movie, one movie is remaining. Okay. That depends on political career also. Okay. If he loses, he'll come back and make more movies maybe. Yes. He has a movie fund. She has a movie fund. Clear? Now tell me one thing. When she wants to watch a movie, what she will do? Take the money and put it into movie fund. Then when she has to go for the movie, she will not take from her wallet. She will take from the movie fund. This movie fund, you replace it with provision for tax. And this wallet is P&L. When you have created provision, then what will happen? If you pay tax, it will go from provision. If you don't have provision, then directly it will go from P&L. Therefore, if provision is there, what you are minusing over here is tax provision. If provision is not there, what you are minusing over here is tax paid only. Clear? Then you get PAT, then dividend you will remove, preference dividend, equity dividend, you will get the retained earnings. Clear? Now, if provision is created, now understand this, we are starting with PBT, PAT or retained earnings. Tax provision created, not applicable. Why? Because it is profit before tax. Provision is not yet removed for you to add back. But because if it is profit after tax, provision is already removed, you have to add it back because provision is a non-cash item. Provision is a non-cash item. You just took money from one pocket and kept in the other pocket. It's a non-cash item. So you are going to add it back. If it's retained earnings also, already it is removed, you are just going to add it back. Tax paid, what you are going to do, wherever your starting point is, tax paid will be subtracted in operating activity at the end. At the end, it will be subtracted in operating activity. Is this clear? Yes. Now, steps to solve CFOA indirect method. Indirect method only is the challenge. How to solve it? First, analyze the additional information which is given at the end of the question. No, analyze that. Preparing ledgers and all that you do and analyze it. Then analyze other items in the balance sheet. Analyze means what? Where whichever head it falls into, put it there. Prepare CFS. CFS here is cash flow statement, not consolidated financial statements. Okay, indirect method CFOA. Now understand this. P&L items. P&L items. P&L items. Non-cash other head remove. Non-cash items, other head items remove when you're preparing CFOA under indirect method. Clear? Depreciation, non-cash item. That's why we are removing it over here, over there. Okay. Profit on sale is not a non-cash item, cash item, but it's other head item, removed. Interest paid, cash item, but it's other head item, removed. Are you getting this? Okay. Now, what you're going to ignore? Any non-cash item that is not entered in P&L. Non-cash item that is not entered in P&L. There are some questions where they are putting it into capital reserve. Ignore it. It has not impacted by P&L at all. If it is a cash item, it has gone anywhere. We have to take it. Non-cash item went to P&L. Mistake. We are starting with P&L as the base. Remove it. Non-cash item went somewhere else. Ignore it. Is this clear? Okay. Done. Now, after that, it's accounting for investments, which is it. That is it. We should start with questions. We have only 6 questions to go. Okay. CA Inter Jan 2025 question we will see. Recent questions we will see everything what is asked by ICAI in the exams. Yes, Tarani, is it done? Let's continue. Okay. You are required to prepare for the year ended 31st March 2024 cash flow from operating activity and financing activity. 1-page question. That's it. Okay, let's go. Let's go. We have come so far in the day. We have to finish it at any cost. Yes, yes. Share capital. This is 2023. This is 2024. Clear? Share capital from 4 lakh it became 5 lakh. That means shares are issued. It will go into financing activity. Can you see issue of share capital 1 lakh positive? Why positive? Because you are getting money. Okay. Next, P&L. Retained earnings 50,000. This will be our starting point. 50,000 retained earnings. Clear? Next, debenture from 0 it became 1 lakh. That means debentures issued. If you issue debenture, you will get money. Can you see 1 lakh debentures issued? And they told one thing, issued at the end of the year. Why are they telling you the date and all? No interest. They are telling you because no interest. Issued at the end of the year, no. Last day, no. No interest. If they would tell issued at the beginning of the year, interest also would be there. Okay. Bank loan from 2 lakh it became 250. That means you took loan or you repaid the loan. Loan is borrowed 50,000. Can you see loan borrowed 50,000? Financing activity. Next, trade payable from 75 it became 60. This is called as working capital changes. Reduce. So there also you will reduce. Can you see 15,000 minus? Clear? Next, dividend payable. 50,000 dividend payable was there. It became 0. That means dividend is paid. So 50,000 minus. Is this clear? Yeah, but they had provision already. They had provision. Movie fund. Movie fund. Already movie fund is there from last year. That means last year they removed from P&L and they put it into provision. Dividend payable. Didn't get it. Then why are you telling yes? You didn't get it. See, how did it come to last year's balance sheet over here, 50,000? They have passed the entry P&L account debited to dividend payable. That's why it is there in the balance sheet. This year if I pay dividend, entry will be dividend payable account debited to bank account. That means this time it didn't go from profits. It went from the provision which was already there. Okay. 50,000, yeah. Dividend paid, we should show it over here. 50,000 already taken, yes. Next, interest payable on bank loan, current year. They told interest payable on bank loan, current year. That means what? Last year's interest is paid. This year's interest is not paid. So what will happen? Last year's interest is paid, no 20,000. You will show it as financing activity 20,000 minus. This year's interest is not paid, no. So you will add it back to operating activity. Interest expense debited to P&L. So you will add it back. Interest paid, you will show it in financing activity. Clear? Last year's expense paid this year. This year's expense will be paid next year. Clear? Next. Goodwill. From 150 it became 120. Did we sell the goodwill? No, it is amortization of goodwill. 30,000. Can you see non-cash? Sorry, not this one. 30,000 non-cash item. You are going to add it back. Then trade receivable from 95 it became 65. 30,000. Trade receivable went down. That means you have to add it back plus 30,000. Okay. Inventory 30,000 became 25,000. Inventory increased. That means we have to minus. That's it. All the things are marked. You will get cash flow from operating activity also, financing activity also. Clear? Question number 1. This was asked in Jan 2025. Recent exam. 7 marks. 7 marks. Yes. And 8 marks which was there in MCQ also was easy only. Yes. Question number 2. September 2024. September 2024. I'm telling you, cash flow is scoring. Cash flow is scoring. When you have to spend time on your amalgamation and consolidation problems and all, you will do cash flow fast and keep some marks in the pocket. Okay. Now, see enter September 2024. Listen. On the basis of the following data, prepare cash flow statement as per AS3 for the year ended 31st March 2024. That's it. Oh, not that's it. More is the. Okay. Now listen. Total sales for the year. That means they're starting with total sales. That means it is direct method only. It's direct method. Total sales for the year were 380 lakhs, out of which cash sales were 262 lakhs. That means we have to take 262 as cash sale, and you can see in your direct method cash sale 262. Cash sale is 262. Is this clear? But credit sales we are not going to take. What we are going to take? Amount received from debtors. Usually, if they don't give you information, you have to prepare a debtors account. You have to prepare a debtors account and missing figure will be there. But don't worry. Receipts from credit customers during the year 134. Directly they are given. Spoon feeding. 134. What will happen? See over here. Cash collected from credit customers 134. Added. Next. Kid, listen. Total purchase for the year amounted to 220, out of which 80% were credit purchase. That means 220 into 20%. 44 is cash purchase. Go and write 44 minus operating activity. I hope you know which activity it is. Okay. Opening balance in creditors is 84. Closing balance is 92. Why did they tell us this? We prepare a ledger. Opening balance is 84. Closing balance is 92. And the credit purchase is how much? 220 into 80%. 220 into 80%. 176 plus 84 minus 92. That means amount paid to creditor is 168. This is the balancing figure. Debtors they told directly, but creditors they expected us to do it. 168 amount paid. Is this clear? Next. After that you have suppliers of other consumable and services were paid 19 lakh in cash. Operating activity 19 lakh in cash minus 19. Is this clear? Then employees of the enterprise were paid 20 lakhs in cash. Operating activity minus 20. Clear? Then fully paid preference shares of the face value of 32 lakhs were redeemed. Redeemed. Financing activity 32 should be minus. If you redeem, money will go. If you redeem. Next. Issued equity shares of the face value of 20 lakhs at a premium of 20%. 20 plus 20% makes it 24. So what will you do? Add 24. When you issue equity shares, you get money in financing activity. Next. Debentures of 20 lakhs at a premium of 10% were redeemed by issue of equity share. Ignore and tell bye to them. Why? Because debentures are redeemed by issuing equity shares. No cash movement has happened. Debentures went, equity share came. That's all. 26 lakhs paid by way of income tax. Operating activity show 26 lakhs minus tax paid. Then a new machinery costing 20 lakhs was purchased in a part exchange of an old machinery. The book value of the old machinery was 13 lakhs, but the vendor agreed to take over the old machinery at a higher value of 15 lakhs. Oh, what a vendor. Our book value was only 12 lakhs, 13 lakhs. He said, I will take your machine at higher value. What is the new value of the machine? 20. He agreed to adjust how much? 15. 20 minus 15, that means 5 I have to pay. 5 I have to pay. Investing activity minus asset purchased. Investing activity minus. Is this clear? Exchange happened. I don't care about what was there in my book. Book value, I don't care. If I take my book with me and go to the showroom also, he will not adjust my book value. He will adjust what he feels like. He said 15 lakhs. I will be very happy. I'll close the books and put it in the bag. I don't want him to see that 13 over there. Are you getting my point? Okay, usually they will tell lesser value, but we are supposed to worry about only what is the value that is adjusted. Clear? Dividend 15 lakhs, including dividend distribution tax of 2.7 lakhs. One star they have put. What is the star? Oh, I think they put the star to tell that dividend distribution tax is abolished. Okay, good morning. Long back it is abolished. Okay, dividend. You can see dividend they have paid only 15. Why? They are trying to test your tax skills over here. They're trying to test. Do you know that there is no concept called as dividend distribution tax? Yes. There is not. It's not there only. It got abolished some 1.5 2 years back. Before, companies distributing dividend, they only will pay the tax. Now, shareholder will get the dividend and he will show it under income from other sources and he will only pay the tax. Clear? So that is why dividend 15 lakhs is paid, only 15 lakhs is shown. 2.7 lakhs, who will pay? The receiver will pay. So why we are worrying? We are preparing cash flow statement of the company. Clear? Can you see dividend paid 15 here? No. It is not including. They have taken full 15. They have paid 15. No, actually it's not there only. I don't know why they are asking even now these questions on dividend distribution tax only, because they are also doing copy paste from somewhere. It is not there. This concept only is abolished. You cannot include. But anyways, because they paid 15, you are just taking 15. That's all. 15 lakhs is paid. No. For you cash went. No. Minus plus no need to do. 15 lakh went. No. That's it. Okay. Next. Debenture interest debenture interest of 3 lakhs was paid. What will you do? Financing activity 3 lakh minus. Next. During the year 8 lakh rent was received from property held as investment. Rent received, what will it be? My business is real estate. Then it would have been operating activity. Here they are holding the building as investment. So we will show it under investing activity plus. Clear? Next, 0.5 lakh interest was earned on the advance payments to supplier. Supplier 0.5 lakh I have received. Day to day, part of the business. Operating activity 0.5. Then cash and cash equivalent on 1st April 2023, 2 lakhs. Very good. Everything is done. Cash from operations you got. This will be your operating activity. All the things are marked. Okay, you add 2, you will get your closing balance 98.5. Clear? Nothing else is there in that question. That should be it with that question. Let's go into the next question. Question number 3. See, enter May 2024. May 24 also they asked a question. Okay, let's see what they have asked. I think it's one page. Yes, one small question they have asked. Again 7 marks. Now let's focus. Income tax provided during the year. First of all, what will I start with? P&L difference. What will be the difference? Retained earnings. Quickly tell me what is the retained earnings? 37,800. Everyone is doing minus. I will do plus 5,400. 43,200. Everyone is doing minus, but I will do plus. Why? This is debit balance, guys. 43,200. Yes, this is debit balance. Huh? Yes. So what has happened? It was loss. It became positive. That means you have first gotten 5,400 to make it 0. Then you got another 37,800 to make it 37,800. No idea at all, sir. I don't know what's happening only in life. I'm looking like this. When he comes back from Coimbatore, we'll empty it. Technical timeout for 2 minutes, guys. Okay, guys, third question. Okay, see, enter May 2024. Listen, we had already discussed it before we took a technical timeout. Debit balance became credit balance. Debit balance became credit balance. That means 43,200 is the retained earnings. People didn't get it that time. By eating chocolate, suddenly they will not get it. Now I have to explain that anyways. Now, see over here. If you have a P&L. This is your P&L. For example, debit balance means you have 5,400 over here. Credit balance means there should be actually 37,800 over here. Credit balance, two balance carried down is for credit balance. That means here 43,200 should be there. Profit that is earned. This is from ledger point of view if I am explaining to you. Otherwise, if a loss has to go and become profit, first you should get the profit to make the loss zero. Then you should get the profit to make the profit positive. So 43,200 is your retained earnings. See over here, 43,200. See ICAI, okay, difference between P&L. Some poor guy who has seen only one question before going to exam, this one, he will think difference between P&L means you should always add and you have to write it over there. Here debit balance, that's why it's added. Is this clear? Okay, so don't rely on ICAI in one question and go. What ICAI did is correct, but thing is they wrote difference between P&L and added it. Now, provision for taxation. You have to be careful. Income tax provided during the year 1,62,000. See over here. This is your provision for tax. What is the opening balance of provision for tax? 221,400. What is the closing balance? 135,000. What is the tax provided? 1,62,000. For tax provided, we write by P&L. What is the difference? 2 lakh. What is this? Tax paid. So you'll write to bank. Tax paid to bank. 162,400 will be added back and 248,400 will be subtracted. 162, sorry, not 400, 162,000. I read it wrong. 162,000 will be added back and 248,400 will be subtracted. Tax provision is a non-cash item added back. Tax paid only is the cash item subtracted. Clear? Next, after that, general reserve. If general reserve is increasing, that is also profit only, retained earnings only, 27,000. Yes, 27,000 general reserve also increasing. Clear? Next, after that, new debentures have been issued at the end of the current year. Okay. Debentures, what happened? Increase. Debenture, if it is increasing, 1,18,800, 291,600, 1,72,800. Debenture issued or debenture redeemed? Debenture is issued, 1,72,800. You can see in financing activity, they didn't ask only. They asked only cash flow from operating activity. Okay, ignore. Trade payable. What about interest, by the way? They said debentures are issued at the end of the year. That means there is no interest. Okay, trade payable. Increase. Increase in trade payable. What should we do? Add. Trade pay. What am I seeing? Oh. 129,600 minus 118,800. 10,800 should be minus. Decrease in trade payable. Working capital changes it is called. Next. Investment 54,000. Ignore. Investment. But 8% current investment. What did they tell? New investment have been acquired at the end of the current year. Now understand this. Actually there is interest. No, there should be interest. No, this was there last year also. No, 1,18,800 into 12%. How much you're getting? 14,256. But it will not be over here. What they have done? They are adding it back over here. Why? They said new debentures are issued at the end of the year. That means old debentures are there. No. On that you have to pay interest. No. Interest is already debited to P&L. No. You have to add it back. No. Because it is not at this head. Okay. Same way investment. New investments are made at the end of the year. But on this 54,000 into 8%, you will get interest, right? Okay. Minus. Expense added back. Income subtracted. Is this clear? Now, after that, you have property, plant and equipment, 399. Ignore. Ignore. Why? Why? It is operating activity only that they have asked. Depreciation concept they have not spoken only. Okay, so 399, 600. It's same value. If it has reduced, yeah, provision is there. Accumulated depreciation is there. 129, 600 became 162. 32,400. That is depreciation for the year added back. Why added back? Depreciation is a non-cash expense, add back. Next, trade receivable, increase. Increase in trade receivable means value should decrease. Can you see over here? 1,80,360. Then provision for doubtful debt increase. That means value should increase. Provision for doubtful debt is a liability. So 27,000 added back over here. Then inventory decrease. That means value should be added. Where is it? 54,000 for inventory. Clear? Cash and cash. No. Inventory is asset. Decrease. So value should be added. Okay, current asset. Cash and cash equivalent. We don't have to bother. What increase? We are preparing cash flow statement. We'll not bother only about it. It is the last point. That is it. See, all the numbers are ticked. Okay, you get this ultimate value. That is what they asked. Provision for taxation, they prepared ledger. Otherwise, you will not be able to find this 248,400. Question number 4. Study material. 3 more to go. 4, 5, 6. Only 3 more questions to go, guys. Let's do it. Yes, come on. From the following information of Mr. Zen, prepare a cash flow statement as per AS3. For a specific reason, I have picked this question. Okay. Because they told Mr. Zen. Now what will happen? Machine costing. Oh, did I put some wrong thing over here? Yes. Machine costing 80,000, accumulated depreciation 24,000, was sold for 40,000. Now, prepare a machinery account quickly. Okay, this will help us do a lot of things. Machinery account. What is the machinery opening value? It is, no. Yeah, 6,40,000 and 4,40,000. 6,40,000 is the opening balance. 4,40,000 is the closing balance. Now, was sold for 80,000, accumulated depreciation 24,000. That means it became 56,000. It is sold for 40,000. If you sell for 40,000, entry is bank account debited to machinery. So you'll write over here by bank 40,000 and loss you will write by P&L 16,000. Clear? Provision for depreciation is 2 lakh and 3,20,000. 2 lakh and 3,20,000. How much is the depreciation here? 2 lakh minus 24,000 minus 3,20,000, 1,44,000 is the depreciation. By depreciation. Why? When asset is sold, whatever the accumulated depreciation is there, it will get subtracted from the provision. So from 2 lakh you will remove 2 lakh you will remove, how much is that? 24,000. That time it will become 1,76,000. 1,76,000 is the opening balance. Closing balance is 3,20,000. That means 1,44,000 is the depreciation for the year. Okay. The net profit for the year they have given, that we will see later. Now, if you see 40 plus 16 plus 144 plus 440 minus 640. Any purchase? No. That's it. Just to check whether there is purchase. No. Bank 40,000. What should we do? Interest. Investing activity, add 40,000. Then 16,000 loss on sale. What should we do? Add it back. 16,000 add it back. Then depreciation. What should we do? 1,44,000 add it back. And if you see over here, net profit for the year is given 3,60,000. Is it PBT or PAT? Is it PBT or PAT? PBT or PAT? There is no tax only. Hey boss, there is no tax. It's a sole proprietor. So for sole proprietor, tax is personal expense. For sole proprietor, tax is personal expense. That's why the study material question is picked. Are you getting this? Sole proprietor, no tax. PBT, PAT, whatever you want to think, you think. No tax. Clear? Now, here, trade receivable, 240 became 4 lakh. Increase, okay, 1,60,000 minus. Then, inventory, 280 became 2 lakh. Decrease, add, 80,000, add. Land, 6 lakh became 8,80,000. That means, land is purchase, investing activity, 2,80,000 minus. Then, loan from bank, 3,20,000 became 4 lakh. That means more loan is borrowed. 80,000 add. Where is it? No, investing is there. Financing. I think I missed the financing by mistake. It's over here. By mistake, it's on the wrong sheet. Okay. You can see loan from bank, 80,000 add. Then after that, what is the next thing that we have? Mrs. Zen's loan. From bank you took loan and you paid wife's loan back. Okay, very good. Okay, Mrs. Zen's loan, 2 lakh became 0. That means loan is repaid. Good to see what and all they do. Okay, repayment, 2 lakh minus. Clear? After that, trade payable, 320 became 352. Trade payable increase, 32,000 will be added to operating activity. 32,000 add. Is this clear? Next, after that, what did we learn? Zen's capital. Now, usually, because many times we have seen this, you will be like, 2,24,000 shares issued. There is no share issued. It is individual. Are you getting this? What is the share capital? What is his capital? 10 lakhs. What is the profit? 3,60,000. That means his capital should have been 13,60,000. But what is the closing balance? 12,24,000. That means difference is 1,36,000, which is drawings. 1,36,000 is drawings. Drawings means cash inflow or cash outflow. Inflow or outflow? Outflow, very good. Okay, here only we will show it. 1,36,000 minus. Done. Clear? Now, see, all the things are marked. Operating activity also done. Done, finished. Done. If you take it as shares issued, you will not get it to match. Shares issued for companies. Here, that's why I told in the starting of the question itself, they have told Mr. Zen. Clear? Mr. Zen. Okay, let's go into the next question. Question number 5. CA Inter, Jan 2021. Small question. Then CA Inter, May 2023. Smaller question. Only last 2 questions are there. Question number 5 now. Okay, for a reason I have picked this question. Okay, there are some twists and tricks in this. You have to be careful. Now, September people are telling Jan people are not telling I mean May people are not telling What is this? From the following information extracted from the books of S Limited for the year ended 31st March 2020. End of the question. You are required to prepare cash flow statement for the year ended as per AS3 using indirect method. Now, indirect method, yes, very nice method it is. Okay. Net profit before taking into account income tax and after taking into account the following items. Before income tax, but these items are already taken. Before income tax, but these items are already taken. 30 lakhs. Before income tax means it is PBT. Your starting point is what? PBT, 30 lakhs. Is this clear? Okay. Then they told depreciation taken. Good or bad? Depreciation, is it right? Add back. Why? Non-cash item, 7 lakhs add back. Next, discount on issue of debenture. Written off. Discount on issue. It is a non-cash item. What will you do? Add back. Loss is debited. You will add back. Okay. Now, interest on debentures paid. Paid. It is a cash item, but it is not this head. What will you do? Add back 4,35,000. Go to financing activity. Go to financing activity and write interest paid minus. Is this clear? Next, investment of book value 3,50,000 sold for 3,75,000. Will you put investment sale into P&L? Will you put investment sale into P&L? No. What will you put? Wait. What will you put? 25,000 profit you will put. Correct? 25,000 profit has to be subtracted. First you wrote correct. Now you are changing your answer. Subtracted. And then what you are going to do? 3,75,000 sale value. Where will you show? Investing activity. Sale of investment. 3,75,000. Is this clear? Profit on sale will be removed from P&L. I mean, it's put into P&L. You'll remove it from operating activity and then you'll show the full 3,75,000. Is this clear? Yes. Interest received on investment. Received. But it is not operating activity. So what you will do? minus from operating activity, and you will show it as investment or investing activity, interest received. Is this clear? Yes. Now, income tax paid during the roho, directly they are telling you 12,80,000. Where should I put this income tax paid? And 12,80,000. Next, company issued 60,000 equity shares of 10 each at a premium of 20%. 60,000 into 12, 7,20,000. Correct? Equity shares issued. Which activity? Financing activity. Can you see in financing activity 7,20,000 positive? Clear? Sir, how is net profit in indirect method? What question is that? Like it is hitting my soul. How is net profit in indirect method? What does that mean? Net profit is always PAT. Net profit is always PAT. Net profit means what? Last thing in your P&L. It is always PAT. See, net profit given in the question is after considering only the items listed in the information in the question. Hence, amount of loss on plant is not added back. Okay, what they have told in the question, only that much you follow. Okay. Ananya Goyal. See you tomorrow. Okay, 7,20,000. Next, 20,000 9% preference shares of 100 each were redeemed on 31st March at a premium of 5%. So 20,000 into 105. 21 lakhs. Which activity? Financing activity. Plus or minus? Minus. You are paying. Money is going. What plus? Yes. Dividend paid during the year amounted to 11 lakhs. We have to add it back, not minus. We have to add it back. But here you see only these items are removed from P&L. They say net profit after income before income tax, but after taking into account the following items. That's why ICAI also gave a note. Where is that note in the suggestions? See, they told net profit is given in the question is after considering only the items listed in the information. Other things we are not going to add back. And otherwise we have to add back. Yes, because P&L account debit we do know for premium or redemption of preference shares. Issue we don't need to, because issue the premium will go to securities premium. It will not go to P&L. Yes, that should be the one. Whenever anyone is asking doubt, everyone is looking at the person, not to ask, listen to the doubt, to tell them don't ask doubt. You have to go fast. Okay. Yes, 11 lakhs dividend paid. Now 11 lakhs dividend paid. Your dividend paid over here. Yes, done. Financing activity. Now, new plant costing 7 lakhs was purchased in part exchange of an old plant. Book value of the old plant was 8 lakhs, but the vendor took the old plant at a value of 6 lakhs. Okay, 7 minus 6, 1 lakh. 7 minus 6, 1 lakh you have to pay. So, what you will do? Investing activity. Payment for purchase of fixed assets minus. Can you see this minus over here? Yes. Now, company decided to value inventory at cost. This is the bouncer over here, total bouncer. Okay, company decided to value inventory at cost, whereas previously the practice was to value inventory at cost less 10%. Inventory according to books on 31st of March 2020 was 14,76,000. Inventory on 31st of March 2019 was correctly valued. Look at the heights of amazingness. Before they were valuing inventory, decided to value inventory at cost. Before they were valuing inventory at cost less 10%. Now, when you change the method, usually opening stock, okay, you can see over here, opening stock there can be a mistake. Closing stock it can be correct because just now I changed. But opening stock was correctly valued, closing stock was not correctly valued. If they are changing the method, now, they have not changed the method. They are changing the method. That means they are asking you to change. Now, what will you do? 14,76,000 is 90. How much is 100? Gives you 16,40,000 is the new value of the inventory. Inventory closing stock should be 1640. But now, what did you do to the inventory? You increase the inventory or decrease the inventory? It was decreased. What did you do? increase minus 14,76,000, 1,64,000. What will happen? See over here. Add stock adjustment. Why did we add? This is not. See, all the other items which we saw till now, no, they had done. We are rectifying. They had done. We are rectifying. Here, they had not done. We are doing it. We are doing it. So what we are doing? If at all, see, profit is there no here. If at all stock value increases, profit increases. So we are adding it to profit. Are you getting my point? We are adding it to profit. But after adding, if you make a mistake, when you go to this inventory over here, then you are in deep trouble. After adding there, now closing stock is not 1476. If you take this and do, no, you will be wrong. What is the closing stock now? 1640. 1640. So 16,40,000 minus 13,50,000. 2,90,000. The stock has gone up. That means you will reduce it. 2,90,000 you will reduce. Can you see this very important adjustment? Okay. Now understand this. They said before we were having a method, stock was valued at cost minus 10%. Now we have changed the method to cost. And when we change the method, opening stock is correct. Closing stock we have not corrected. So closing stock you correct it. If it is cost minus 10%, before we were showing it at 90%, now I should show it at 100%. So when I increase the inventory, what will happen when I increase the inventory? When I increase the inventory, profit will increase. Profit I have added. Can you see I have added 1,64,000 to profit? Then what I should do? When I take the changes in inventory, I should take the correct value. What I just corrected, no? Sorry. What I just corrected, I should take that value only. Don't take the old value. After doing the correction, don't take the old value. So 16,40,000 and 13,50,000, you are taking the difference. You got the value. Inventory increases. You know what will happen. Cash flow, you will decrease it over there. Now, current asset and current liability they have given. Trade receivable. Okay, increase or decrease? Decrease. So the value should be added. 13,800 added. Okay. Cash and bank balance don't bother. Trade payable is increasing or decreasing? Trade payable is increasing. So you will add it. Add it 2,600. Outstanding expense is increasing or decreasing? Increasing. Current liability. So you will add it. Clear 4,400. Now other than that you have nothing. You can see over here all the things are marked. This was a very important adjustment, the stock adjustment. Okay, rest of the things we have seen. Then already yes, tax pattern we have taken. Investing activity, financing activity also everything is done. That's it. That is it for that question. We'll go to the next question. Last question for the day. CA Inter May 2023. Last question for the day. Oh, I thought it was direct method. Okay. Flora Limited. End of the day, they're making you flower leak. Okay, Flora Limited. 22-23. Listen. Let's go further. Additional information. You are required to prepare cash flow statement from operating activity for the year ended using indirect method. What did they ask? Only operating activity. 10-mark question. Only operating activity is asked. We'll see. Only operating activity. That means there should be something. On 1st April 2022, one of the vehicles was sold for 3,000. No new purchase was made during the year. Oh, very good. We should sell all the vehicles. Where is the vehicle here? Sorry, I am looking at liability side for vehicle. Amazing. 22,000. Okay, I have a vehicle account now. Okay, what is the opening balance? Hey, hello. Opening balance is 28,000. Closing balance is 22,000. And they said one of the vehicle was sold for 3,000. So what will happen? Buy bank 3,000. I should actually put it to investing activity, but they told only operating activity in this question. 3,000. 28 minus 3 should become 25. How did it become 22? That means 3,000 is depreciation. Oh, they told her. Oh, we read one line and we are deciding. Very good. 22,000. There is more information, guys. Sorry. Okay. Depreciation provided during the year is vehicle 2,200. So you will write 2,200 over here by depreciation. By depreciation. Now it's a loss. By P&L, 800 is loss. Okay, both should be added back to operating activity. Okay, starting point we didn't check yet. We'll check the starting point. Depreciation 2200, loss on sale 800. Is this clear? Okay. Next, part of the total land. Wait, did they prepare only operating activity or everything? Okay, only operating activity. What? Sorry? Correct. But we are doing only operating activity in the question. We should put in investing activity. They didn't ask it. Okay. Part of the total land was sold for 1,25,000. Cost was 1,10,000. That means, sorry, 1 lakh. That means 25,000 is what? Profit on sale. Okay. And the balance was revalued. Let them revalue. No issue. Capital reserve consists of profit on revaluation of the balance land. No new purchase was made during the year. If you see the land value, no? See the land value. What has happened to land here? From 5,75,000 it became 6 lakhs. Now, what did they tell over here? Land is sold for 1,25,000. We are preparing operating activity, no? So what we should worry, 25,000 profit is there. What should we do? Go and minus 25,000 the profit on sale. And the land is revalued. After revaluing profit, they put it into capital reserve. Ignore. Non-cash item which does not go to P&L, ignore. Remember, I wrote that. Non-cash item which does not go to P&L, ignore. Non-cash item which goes to P&L, reverse. Okay. Now, after that, depreciation on furniture and fixtures, 5,000. Now, furniture and fixture, we will have to prepare a ledger. What is the furniture value? 44. It became 48. So you'll write 44,000 and then you'll write 48,000. What is the depreciation? Depreciation is 5,000. So by depreciation 5,000. 44 after depreciation should become 39. But it has become 48. That means we have purchased. How much did we purchase? 9,000. So here you will actually write to bank. 9,000 to bank. Are you getting this? But we don't have to worry. It would have gone to investing activity, but there is no investing activity. But 5,000 depreciation will be added back to operating activity. 5,000. Yes. After that, what do we have? Interim dividend of 5,000 was paid during the year. Dividend was paid during the year. So what should we do? We should add it back. Operating activity, I think they have done here. PBT only they have taken. They could have started with retained earnings. They added everything and they started with PBT only. Okay, see over here. Now, just explaining to you, see over here. General reserve from 60,000 it became 90,000. That means 30,000 is the profit. And P&L from 52,000 it became 93,000. That means it is 41,000 is the increase. This is actually retained earnings. Okay, see 41,000 and 30,000 retained earnings. They could have started with that only. What did they do? Dividend paid. Dividend paid is not this activity. Dividend paid is financing activity. So it is added back over here. Dividend paid is added back. There it will be minus. Clear? Then provision for tax is also there. We have to discuss that. Okay, we don't know that yet. Provision for tax also. Now, next point. Provision for tax for the year 16,000. Non-cash item. What will you do? Add it back. Now they got what? PBT only they got. No. From retained earnings, added back the dividend. Added back the provision, they got PBT only. They got PBT 92,000. That is why they started with 92,000 PBT. Is this clear? Tax paid we have to calculate, or have they given already? No. Interim dividend is, tax is 16,000. Now we have to prepare one ledger. What is the provision for taxation? Last year 11,000 it became 18,000. So 11,000 is 18,000. What is the provision for tax? What is the entry for provision for tax? P&L account debited to provision for tax. So we'll write over here by P&L 16,000. By P&L 16,000. That means to bank how much? 9,000. Tax paid 9,000. 16,000 did we already see that 16,000 is added back? added back when you calculated PBT. 9,000 should be minus at the very end. 9,000 tax paid. Clear? Next, after that, 8% debentures were redeemed at par after half year interest payment on 30th of September 2022. Go and check what is the debenture. 3 lakh. It became 0, but half year interest is there. So 3 lakh into 8% into 6 divided by 12. 12,000. So can you see 12,000 here? Interest on debentures is added back. They redeemed, yes, but they redeemed at the middle of the year. So half year interest they paid and they redeemed. If it was financing activity, all this would sit in financing activity. Clear? Now after that, you have part of the long-term investment were sold at a profit of 8,000. Okay, profit we are worried about 8,000 minus. 8,000 minus. Clear? Because profit. But long-term investment, I just want to tell you, 110 became 68. Sorry, 110 became 60. Difference is what? 50. What is the profit? 8,000. That means 58,000 should be shown in investing activity. 58,000 should be shown in investing activity because part of the investment is sold at a profit of 8,000. 50 is reducing over here 8,000 profit. Clear? We don't have to worry about that now because we are preparing only operating activity. Okay. Interest income received during the year on long-term investment 6,500. What should we do? Minus, deduct 6,500. All the items are done. Now you have to go into additional information is done. Item by item you have to check. Will goodwill bother us? Yes. Can you see from 28 it became 15? That means 13,000 goodwill is written off. Amortized. Yes. Amortized. Written off. So what we are going to do? 13,000 is added back. Now after that, land will not bother us. Furniture and fixture done. Vehicle done. Office equipment which was 0 became 21. That means they have purchased office equipment. It will go to cash flow from investing activity. Long-term investment done. Stock in hand. Okay, stock in hand from 88 it became 96. That means 12,000 increase. We will decrease. 8,000 increase. We will decrease it. Clear? Now, bills receivable from 14,500 it became 18,150. That means increase 3,650. Clear? Then trade receivable has decreased. That means we will add back 6,000. Clear? Then cash and bank, ignore it. You are only preparing operating activity anyways. Equity share capital has increased. That means it is shares issued. It should be in cash flow from financing activity plus. General reserve, all that is done. Capital reserve, it is just revaluation of land. It will not bother us. It's a non-cash item. Debenture became 0. It will go to cash flow from financing activity minus. And loan from Andrew became 0. Loan from Andrew became 0. Cash flow from financing activity minus. Bills payable decrease 2,000 minus. Bills payable it is. Trade payable increase. What should you do? 4,000 plus. Then creditor for equipment. Creditor increase. Doesn't matter. Creditor, right? Current liability. Yes. What we will do? Why it is not there over here? Because see over here. Equipment. You can see equipment here. What happened to equipment? 0 became 21,000. And half the amount you have not paid. If at all you have to prepare full cash flow statement, then in cash flow from investing activity, you will show only 10,500 as minus. You will show, didn't understand. Okay, now see over here. I purchased one equipment of 21,000. That how did I get to know? From 0 it became 21,000. From 0 if it became 21,000. But here there is one creditor also. That means full amount I have not paid. 21,000, 10,500 is not paid. So 10,500 is paid. So only half the amount is paid. If at all they would ask full cash flow statement, CFIA would be 10,500. Is this clear? Yes. Are you following this? Yes. Now outstanding expense 3,000 became 4,500. That means what you are going to do? 1,500 plus. That's it guys. Provision for tax we have already done. Vehicle account, ledger only we prepared. That should be it. That is it with the cash flow statement. That's it with day 1 guys. Tomorrow we have branch accounts and all standards. That's it. Okay. See you. Have a good sleep. and see you tomorrow morning. Bye bye. Yes, welcome guys. Good morning to day 2 CA Inter Marathon happening all throughout the day in Chennai. Yesterday, what we wound up at 9:30. Today, we'll try to go a little early. Okay. Huh? No, we'll try to finish little early today. We don't know what time, but we'll try to finish early. But standards we'll discuss. See, standards we can't solve questions like how we did in those chapters. Those were the core chapters. That's why I solved more questions. Standards we are only discussing the concepts. Maybe one question somewhere here and there from the RTP. Otherwise, we are only focusing on the concepts of the standards. Now, we start with branch accounts. Today we start with branch accounts. Branch accounts has decent weightage, not too much. Earlier they used to ask branch accounts for 12 marks, 10 marks and all regularly in old scheme. But now they only ask, in the last question they ask for some 6 marks. 6 marks, 5 marks weightage is there. But with ICAI, you never know. Whenever they want, they can put it this side and ask one 10 mark question also if they want to. Do they have 10 mark questions to ask in branch accounts? Yes, it is there. They can ask. Okay. Now, branch accounts, for example, we have Darshan over here. Okay. Doing business in Chennai. He wants to expand. So he goes to Mumbai. He sets up a branch. He goes to Kochi. He sets up a branch. He wants to go outside. He goes to Bangladesh. He sets up a branch. Then that branch gets closed. Okay. Or he goes to Nepal or somewhere and he sets up a branch. This branch which is outside India is called as foreign branch, which is within India is called as inland branch. Okay. Sri Lanka. Now, branch when we are talking about, we have two types. Okay. Inland branch and foreign branch. Our job is to do accounting only. Clear? Inland branch, there are again two types, dependent branch and independent branch. Dependent branch means what? They are completely dependent on you. Whatever you tell them, they will do that only. These are the kind of questions where they will tell, branch sends money to the head office as and when collected. Branch sends collections to the head office at the end of each day. These are the words they use usually in dependent branch. That means they are not doing anything. I am giving the goods to them. They will take the goods, they will sell it at the price and then they will give the money to me. That's all. They don't take any decisions. Usually their expenses also are paid by me over here. They are small expenses. For that I am going to give them petty cash. Clear? No. Dependent branch. Independent branch means what? They take their own decisions. Clear? Now, dependent branch, if they are not doing anything, then obviously they are not maintaining books also. No books. Correct? So, who has to maintain the books for them? Head office. Independent branch, if they are taking all their decisions, then 100% even the books are maintained by independent branch itself. Clear? Now, independent branch, two things can happen. We can send goods at cost, invoice price. And sometimes we can even send it at wholesale price. What is wholesale? What is cost? Let's say 100 rupees is the cost. I will add the profit, 20 rupees, and I will give it to them at 120. I will give it to the branch at 120. You have to sell it now minimum at 120. That means for the head office, 20 rupees profit is guaranteed. Are you getting my point? But if I give it at 100, now that guy also gets to know that the cost is 100. Clear? Now if he sells at 105 also, he'll feel 5 rupees profit is there. No. But if I give it at 120, he knows only 120. He doesn't know how much profit I have added. So now if he sells at 121, extra profit. But if I sells it at 120 also, I'll still get 20 rupees profit. Clear? Now, wholesale price means what? There will be a manufacturer who will give it to wholesaler at wholesale price. That fellow will sell it at retail price. That means head office is the manufacturer, will give it to branch at wholesale price. Branch will sell to customer at retail price. Retailer. Okay. So now in that case, we have wholesale price also. Now, if it is cost or invoice price, we have three methods. debtors method, stock and debtors method, and trading and P&L method. What are the three methods? Debtors method, stock and debtors method, and trading and P&L method. Okay. Now, if you have a dependent branch, we'll focus first on dependent branch, because independent branch, there is nothing much. Only thing is you have to reconcile. There can be difference. They are passing entries, yes, but we are also passing entries. There can be difference between our books and their books. That time we have to pass the entries for reconciling. Okay, then foreign branch, actually there is nothing much in foreign branch. Foreign branch, they'll give one financial statement that will be in foreign currency. Trial balance will be in foreign currency. I have to convert that trial balance into home currency. To convert what rates to use, AS11 is going to tell us. Clear? Okay. Now, debtors method and stock and debtors method and trading and P&L method, one by one we have to understand. First, dependent branch, accounting is done by whom? Head office. Goods are sent at cost. First we'll focus, if the goods are sent at cost, what will happen? Goods are sent at cost. In debtors method, you have one tip. When you're passing entries or preparing ledgers, no, you have one tip that you have to remember. The tip is, head office records only transactions between head office and branch. That is why the method is called as debtors method. That means I'm considering the branch as a debtor and I'm going to record only transactions between head office and branch. If there is a transaction between branch and somebody else, I'm not going to record it. If there is a transaction between branch and somebody else, I'm not going to record it. Clear? Now, in the books of head office, we prepare one account called as branch account. Only one ledger. Branch is what for me? Branch is a debtor. Debtor means what? Somebody who has to give you money. Clear? Debtor means somebody who has to give you money. Now, balance brought down. In balance brought down, can you see stock is there? Why stock? I have sent goods to him. He has not sold it. That means it is there with him. But who is the owner? I am the owner. That means I have to get the money. For the stock which is sitting there also, I have to get the money. Clear? No. Debtors is there. That means I have sent the goods to him. He has sold the goods. He has received the money. Sorry. He has sold the goods, but he has not received the money. That means he has to receive the money. If he has to receive the money, I have to receive the money because it is my money only. My goods it is. So debtors have to get money there also. Clear? Cash is there. That means I have sent the goods. He has sold the goods. He has received the money, but he has not given the money to me. That is also receivable by me. Are you getting my point? If goods are given by me, from there only the debtor situation arises. I gave the goods, he did not sell. I have to get money. I gave the goods, he sold. He did not get the money, so I did not get the money. Receivable. I gave the goods, he sold the goods, he got the money, but he has not sent it yet. Receivable. I gave him one asset to use. My asset it is. Receivable. I gave him money for small expenses. Receivable. Are you getting this? So whatever I have given to that guy, whatever is there over there, everything belongs to head office. So all that will be taken as balance brought down. Obviously, those things will be there in balance carried down also. Clear? Now, goods are sent to branch. What should be the entry? Goods are sent to branch. For me, what is it? Expense or income? For me, it is income, guys. I am the head office. For me, it is income. But I am preparing branch account. That means I am preparing the accounts for the branch as if the branch would prepare in the books of head office. Are you getting my point? Otherwise, when I send goods, so for me it's income. But I am going to record for whom? For the branch in the books of head office. Okay. So now what happens? When I send the goods, the entry will be branch account debited because for them it is expense. Branch account debited to goods sent to branch account. Goods sent by head office to branch. Clear? Now, tell me one thing. After this, if they return the goods, what will happen? Same entry will reverse. Goods sent to branch account debited to branch account. Now, when we had all these opening balances, okay, debit side, we have one opening balance on the credit side also. What is this? Outstanding expense. That means in branch, some expenses pending. Who is supposed to pay that? Me. When I'm telling all this is mine, which is sitting in the branch, obviously this liability also is mine only. So that also can happen. Clear? Now goods sent to branch, we'll reverse it. Next, if at all expenses are paid, branch expenses are paid by me, paid by head office, what should be the entry? Branch account debited to bank account, because branch it's an expense, credited to bank account. Branch expenses paid by head office. If branch expenses are paid by branch, what should be the entry? No entry. Branch expenses are paid by branch, no entry, because it's a transaction between branch and somebody else. It's not a transaction between branch and head office. Clear? Next, what if sales, we gave them goods, no, they sold the goods. Amount, cash sales, what should be the entry? No entry. Cash sale, no entry, because it's a transaction between branch and customer. Credit sales, what should be the entry? No entry. Why? It's a transaction between branch and customer. Clear? So amount received from the debtor, what should be the entry? No entry. Why? It's a transaction between branch and customer. But that amount which he received, he is going to send it to me. That time there is a transaction between us. So what should be the entry? I got money. Bank account debited. Who gave me money? Branch account. So we'll write here by bank. Amount sent by branch to head office. Is this clear? These are the regular transactions that happen. Ultimately, what was the purpose of preparing all this? To find whether the branch is making profit or loss. If it is profit, it is transferred to P&L. Whose P&L? Head office P&L. Where are we? In head office books. So we will not write head office P&L. We are already in head office books. So we will transfer it to P&L. So the branch profit goes to P&L. Branch loss also will be debited to P&L. Is this clear? This is your format of debtors method, branch account. Now tell me one thing. This goods sent to branch, where will it go? Account. Goods sent to branch. Goods sent to branch account. The balance, where will it go? It will go to trading account. Can you see what entry you passed over here? Branch account debited to goods sent to branch account. So later you will pass an entry. Goods sent to branch account debited to trading account. Sir, why we have credited to trading account, sir? Because remember I told you it is like sale for me. It is like sale. My goods have gone from here. Are you getting this? Yes. Okay. Now listen. Let's continue. Entries not to be recorded. What entries we should not record? What are the entries we are not going to record? 1. Branch expenses paid by branch. Why? Not a transaction between head office and branch. Cash sales at branch. Not a transaction between head office and branch. Credit sales at branch. Not a transaction between head office and branch. Sales return at branch. Who is returning to whom? Customer is returning to the branch. We are not involved. Discount allowed, bad debts, all that at the branch. We are not at all involved. Is this clear? So what we are focusing on, this tip which we discussed first. Head office records only transactions between head office and branch. They are not going to record any other transaction. Clear? What is the goal of preparing this? To find the profit. To find the profit or loss. Is this clear? Any doubts? Okay. Now let's go further. Next method, trading and P&L method. There is no problem at all in trading and P&L method. We have to prepare trading and P&L account. Who's trading and P&L account? Head office trading and P&L account. No. Branch. Why will I prepare head office trading and P&L account when I'm in branch accounts? I'm in branch accounts. Why will I sit and prepare? Oh, branch accounts I'm doing. Okay, head office trading and P&L I prepare. Branch, let them sit there without books of accounts. No problem. Okay. Trading and P&L method. Trading and P&L account is to be prepared for branch by head office. Yeah, in the books of head office, we'll prepare trading and P&L account of the branch. Whatever profit we got over here, we should get the same profit. We cannot tell the person correcting, no, that I prepared under debtors method. That's why the profit is 5,000. If I would have prepared under stock and debtors method or trading and P&L method, profit would have been 8,000. We can't tell, no, profit is same. Are you getting my point? Without ledger, if you sit and calculate plus minus also, you should get the same profit, right? Profit is same. So understand that this is just different methods of presentation. Ultimate profit will be same, whichever method you use. So what you can do as practice is, whatever problems are solved in one method in class, you can go and solve it in the other method in at home. Yes. Now, stock and debtors method. Okay, guys. Stock and debtors method. What happens in stock and debtors method? Everything gets recorded. Nothing gets, eliminated. Everything is recorded. That means all transactions are recorded. Okay. That means if you have to record all transactions, you need more ledgers. Before you had only one ledger called branch account. Now you have more ledgers. What are the ledgers? Branch stock account, branch debtors account, branch cash account, branch petty cash account, branch P&L account, branch expenses, and branch asset. Okay, obviously you'll have one more ledger, which is goods sent to branch. Goods sent to branch account. That is the ledger which is maintained by head office. These are the ledgers which are maintained by head office for the branch. Is this clear? Are you following this? Now tell me one thing. Till now, whatever we discussed, it is happening in whose books? Head office books only. Branch is not maintaining. If branch would maintain, we would not talk about it also. It is happening in head office books only. Okay, now transaction one by one. Goods are sent by head office to branch. In branch, now you have to imagine what is happening in the branch, but we are doing it in the head office. We have to imagine what will happen in the branch, and we have to pass the entry for the branch where in the head office. Clear? When I send the goods to them, what will happen to their stock? Stock will increase. Branch stock account debited. Stock increased. Correct? 2 goods sent to branch. Branch stock account debited, 2 goods sent to branch. Clear? When goods are returned by the branch, what will happen to their stock? Stock will decrease. So goods sent to branch account debited to branch stock account. Goods sent to branch is sales or the head office. So this goods sent to branch will later go and it will go to trading account, credit side. See, when you have drawings, what entry you pass? Drawings account debited to cash. But if the drawings are in goods, what entry you pass? Drawings account debited to purchase. That means you are reducing from trading account. Purchase reduce or putting on the credit side of the trading account is the same. You have trading account like this. Here you have 2 purchases. Either I will reduce this amount only, or I will put the amount on the credit side. It means the same, no? It gives the same result, right? Yes. Now, next, cash sales at branch. What is the entry? Cash sales at branch. What does the branch get? Money. Branch cash account debited. What went? Stock. To branch stock account. What came? Branch cash. What went? Branch stock. Clear? Credit sales at branch. What happened? Branch debtors account debited because they didn't give the money. What went? Stock went. Branch stock account credited. Branch stock account credited. Is this clear? Next. Sales return. Sales return. What came back? Stock. Branch stock account debited. Because they gave the goods back, they don't have to pay the money. So debtors reduce, branch debtors. Or if it was cash sales, branch cash. Clear? Expenses of branch paid by head office. Whose expense? Branch expense. So branch expense debited. Who paid? Head office. So money went from the bank account credited. Is this clear? Are you able to follow the transactions? Expenses of branch paid by branch. Branch expenses, they only paid to branch cash. If they paid from petty cash, it would be branch petty cash. Clear? Now, amount sent by branch to head office. They sent us money. So their money should reduce. Our money should increase. Correct? Bank account debited to branch cash account. Next, amount sent by head office to branch. That means their money should increase. Our money should decrease. Branch cash account debited to bank account. Next, amount sent by head office to branch for petty expenses. I gave them money, they didn't spend it. I gave them money to spend in future. So their petty cash increased, my money decreased. So petty cash branch, petty cash account debited to bank account. Clear? Petty cash expenses at branch, they spent it. That time what will happen? Their petty cash will reduce and their expense will increase. Branch expenses account debited to branch petty cash. Clear? Yes. Asset purchased by branch, paid by head office. Who purchased the asset? Branch. Who made the payment? Head office. So branch asset account debited, but their money did not go. Our money went. So to bank account. Asset purchased by head office, paid by head office. Asset purchased by head office, paid by head office. It has no connection with branch only. Asset account debited to bank. Normal asset purchase entry. Asset sent by head office to branch. Their asset increases, our asset decreases. Branch asset account debited to asset account. Clear? Bad debts or discount allowed. Their expenses increases and their debtor decreases. Usually what entry will pass for bad debt? Bad debt account debited to debtor. Bad debt is expense only. It will go to P&L. What entry we pass for discount allowed? Discount allowed account debited to debtors. Okay, discount is an expense. Clear? Now, closing. How to close each ledger? One by one. Branch stock, you know it's an asset. Correct? Okay. Now, transfer the P&L, profit or loss to branch P&L. Now, you thought that branch stock should have balance carried down. Yes, it will have balance carried down of what? Only the stock which is unsold. Unsold. Now, you see, usually in stock, everything will be at cost, no? Here, goods sent were at cost, but goods sold were at selling price. Remember, what was the entry for sales? Branch cash account debited to branch stock. What was the entry for credit sales? Branch debtors account debited to branch stock. All this was recorded over here at selling price, no? So this is called as branch stock, but actually it works like a trading account. It is branch stock only, but it works exactly like a trading account, but we can't call it as trading account because we are preparing the ledger over here. Okay. Now, branch stock, transfer the profit or loss to branch P&L. Transfer the gross profit to branch P&L. Now, branch debtors will have balance carried down. See, whenever you prepare ledger, you have done incomplete record somewhere. Whenever you prepare ledger, some amount can go missing. That amount will be the balancing figure. Because of that amount, you'll be able to complete some other ledger. This can happen. Branch cash, balance carried down. Branch petty cash, balance carried down. Branch expenses, no balance carried down. Transfer to branch P&L. Expense transfer to branch P&L. Branch P&L, transfer the profit or loss to head office P&L. We will not write head office P&L because we are already in head office only. We will just write transfer to P&L. Is this clear? Yes. Now, branch asset, balance carried down. Branch asset also will be balance carried down. Now, goods are sent at invoice price. What is invoice? What is invoice price? Cost plus profit. Correct? We'll give you the invoice price. That means we are adding the profit only and sending it. Now, tell me one thing. In debtors method, whatever we learnt, everything remains same. What will change? Just when goods are sent at invoice price, you need to have one reflex action. Like this, just now I thought like that. You need to have one reflex action. What is the reflex action? Oh, opening stock, the balance brought down. Stock is at invoice price. Unrealized profit is there. Reverse. Buy stock reserve. Buy stock reserve. Sir, stock reserve means we have to remove from profit, no sir. So it should be debited. Why it is getting credited over here? Because it is last year's stock. Last year's stock unrealized profit was last year. Opening stock is expected to be sold this year. So last year unrealized profit. That means this year it is realized profit. If it is realized profit, we should credit, no? We should credit. So wherever, see, just a mechanical method is just understanding that, okay, wherever I see invoice price, I will pass opposite effect. Opening stock at invoice price, buy stock reserve. Goods are sent at invoice price, reverse it, buy goods sent to branch. This is called as removing the loading. Okay. So here you recorded invoice price. What you will do? The profit portion immediately it is reversed. Sir, if it's immediately going to be reversed, why are we recording only at invoice price? Directly we can take cost only over here. That time the reader won't even get to know that it was sent at invoice price. Are you getting my point? So imagine I am sending 100 rupees goods at 120. I am sending 100 rupees goods at 120. For sending the goods, the entry is branch account debited to group goods sent to branch account. So what I'm doing here is I'm recording 120 and I'm putting 20 over here. Clear? Does it come back to 100 only? If it comes back to 100 only, instead of that, sir, why can't you put 100 itself? If I put 100 itself, the reader won't get to know that goods were actually sent at 120. We actually sent the goods at 120. No, there it will be going and sitting at 120. So we will record at 120, remove it for profit calculation. Clear? Now, if goods are returned, it will be returned at 120. There is invoice price, it's invoice price, reverse the profit. Clear? Finally, closing stock will be at 120. So you create stock reserve 20. That time we are seeing stock reserve. First time we saw stock reserve yesterday in amalgamation. When purchasing company sold to selling company or selling company sold to purchasing company and it is still in the closing stock of the purchasing company or selling company and it was sent at invoice price. That created stock reserve. Why? Because purchasing company and selling company are now together. So goods have not gone out. So it creates unrealized profit situation. So we reverse it. How do we reverse? Remove from profit, remove from stock. Clear? That means stock reserve is created. Remove from profit means their P&L or something would be debited. Here branch profit, no. So branch account is debited. Second time we saw unrealized profit. When did we see unrealized profit for the second time? We saw it in consolidation, where holding company sold to subsidiary company or subsidiary company sold to holding company. And whoever is the receiver still has these goods in stock. That means holding subsidiary together now in consolidated balance sheet. Now this is our own stock now and it becomes unrealized profit. That means goods have not gone out. So profit is not yet realized. Clear? Here what is happening? Head office sent to branch. Head office sent to branch and it is at invoice price. If it is at cost, no need to worry. It is at invoice price. That means profit is there and stock is still sitting over here in the branch. When we think of the company or when we think of the business, head office and branch are together. No, one person only, head office and branch. Now if the company records profit, it will be like I sold to myself and I recorded profit. Are you getting my point? That is why it becomes one more situation of unrealized profit. So we have to eliminate the unrealized profit. Clear? So understand that. One thing we have to understand is we are actually reversing the profit portion. Wherever it is recorded with profit and goods have not gone out, we are reversing the profit portion. If goods have gone out, what is the entry when goods are sold and we get the money? If goods are just sold, no entry. Why? Because it's a transaction between branch and customer. If goods are sold and we receive the money, what should be the entry? Bank account debited to branch account. So I'll write over here by bank. This will be at invoice price or this will be at cost. This will be at invoice price only because it leads to realized profit. It leads to realized profit. That's why we are recording and not reversing. Whenever it leads to unrealized profit, we are recording and reversing. Are you getting my point? So if sale is there, we get the money, that is at selling price only. We are not passing opposite effect over here because that is that will create realized profit. I'll get money, profit over there. I've earned that profit. But if say any other thing is there where we have recorded at invoice price, only 3-4 things can happen. One, opening stock it is as at invoice price. Last year unrealized, this year realized. So credit. Sent goods at invoice price, reverse the profit. Returned goods at invoice price, reverse the profit. Closing stock is at invoice price, create stock reserve. Create stock reserve. Is this clear? Now, if they ask debtors method or branch and debtors method, I don't think they will ask at cost. Okay, they will test you with this invoice price concept only. So what you have to remember as a shortcut to remember what I told was in debtors method only, not in other methods. In debtors method, whenever you record something at invoice price, immediately your hand should move to make the opposite effect. Immediately your hand should move and pass the opposite effect. Is this clear? Okay. Now, stock reserve. unrealized profit. Okay, head office sold goods to branch at invoice price and such goods are still in inventory. We have discussed it. Same language in different areas we have discussed already. Okay, stock and debtors method. Let's go to stock and debtors method. Now, additional ledger to be maintained, only one small ledger called as branch adjustment account has to be maintained. Branch adjustment account is actually stock reserve only in reality. Clear? Now, when goods are sent by head office to branch at invoice price, goods are sent. Forget about invoice price. What was the entry in stock and debtors method? Goods are sent. Branch stock account debited to goods sent to branch. Correct? Branch stock account debited to goods sent to branch. Now what we will do? Branch stock account debited, but it will be debited at invoice price. Goods sent to branch will be at cost only. That extra profit portion what is there, we are going to put it to branch adjustment account. Sir, what we are doing over there, no, in debtors method, same thing is happening here also. See, in debtors method, this is one ledger only I follow. I sent it at 120. Okay, I'll reverse the 20. Net effect became 100. Here I don't prepare one ledger, I prepare multiple ledgers. So I have one branch stock account. I sent it at 120 and I have one branch adjustment account where I am putting the 20. Net effect became 0. Net effect became 100 only again. Just that there the reversal used to happen in one ledger because we are preparing only one ledger. Here the reversal is happening in multiple ledgers because we have multiple ledgers. Stock and debtors method one, what is the most important thing? That we are preparing everything in detailed. That's why we have multiple ledgers. Is this clear? Yes. No. Yeah, that is the thing. What if it is reversed? If it is reversed, goods sent to branch account debited at cost only. You put cost over here. You're going to reverse cost. Branch adjustment account debited. You put the profit over here. You're going to reverse the profit. Branch stock increased over here. So branch stock will decrease. That means when goods are sent and goods are returned. What used to happen in the debtors method? Same thing is happening, but across two ledgers. Not in one ledger, it is happening across two ledgers. Is this clear? Now, after that, opening stock. Opening stock. That means branch stock account will have a two balance brought down. Okay. It will be at invoice price. If it is at invoice price, opposite effect should be there, no? But opposite effect is not inside the branch stock account. That will be the opening balance of branch adjustment account. It will be the opening balance of branch adjustment account. Now understand this. This is my debtors method. I used to prepare only one account called as branch account. And I used to write over here to balance brought down. And under that I am going to write stock. This stock was showing stock. This stock was showing 120. Correct? It was showing 120. So what I will write? By stock reserve. I will write by stock reserve 20. Correct? Done. Okay. Now in the stock and debtors method, what I will do is I have branch stock account. I have branch adjustment account. There what reversal we were doing, that is adjustment only. Here I will write to balance brought down 120. Therefore I have to reverse, no. Here it will be by balance brought down 20. Can you see what is happening in one ledger in debtors method is also happening here, but across multiple ledgers. Is this clear? Yes. Now closing balance also will be at invoice price. So closing balance of branch adjustment account will be the profit portion. Okay, closing balance, there we should write by balance, carried down stock, and here we should write stock reserve. Here it is happening in different ledgers. Is this clear? I hope it's clear, guys. Yes. Next, can we go further? Huh? Hello. Morning. Hello, madam. Here, first floor. Staying outside. What time you went home? You went home early, right? 8:15. Why did you reach home so late? What were you doing? Traffic. Nicely staying out till 9:30. What time did you guys reach yesterday? 11 you reached her. 10:15 you reached. What were you doing till 11 o'clock? And you guys? That's it. Let's try to ensure that you reach home earlier today. I don't know. Standards, right? Can't predict anything. No, no chocolates. Yes, let's go further. Trading and P&L method. Now, trading and P&L method, when we're talking about trading and P&L method, to be prepared taking items at cost. Just take items at cost, you'll get the profit. Okay, there shouldn't be too much stress about this method. Okay, now understand this. Stock reserve will be created only if closing stock is at invoice price. If it is at cost, it will be at cost itself. Now, wholesale price method. Wholesale price method. What happens in wholesale price method? Branch records everything maintained by head office at wholesale price, but we are not selling at wholesale price. We are selling it at retail price. Understand this. Cost is, okay, for example, cost is 100. Cost is 100. Correct? I added the profit. I added the profit of 20. Okay, this becomes 120. This is actually the invoice price or wholesale price. This is the amount at which, price at which given to branch. I gave to branch at this price. Clear? Now branch will add their own profit and they will sell it. Let's say this is the selling price. This is the price at which it is sold. Price at which sold by branch. Price at which it is sold by branch. Clear? Now tell me one thing. Who is maintaining records? Head office. So closing stock will be at 120. Closing stock will be at 120. At what price it is sitting in the branch? It is sitting in the branch at 120. So therefore stock reserve will be 20. If it is sitting in the branch at 120, profit unrealized till now is how much? 20. This will be the stock reserve. Stock reserve. Is this clear? Are you following this? It is not sitting in the branch at 150. They will sell later at 150. When they sell it at 150, 30 rupees will be the profit that branch made and 20 rupees will be the profit that head office made and 50 rupees will be the profit that the entire business made. Business will make 50 rupees profit. No, branch profit, head office profit, everything is profit only for the business. Is this clear? This is one method that is called as wholesale price method. Then we move into independent branch. Two, independent branch, they will not ask you to pass these journal entries. Don't worry. They will not ask you to pass these journal entries, but you need to know these journal entries because they will tell you only reconciliation or rectification. So to rectify, you need to know the journal entries. Are you getting my point? Without knowing the journal entries, how will you rectify? It's not possible only, no. Okay, now understand this. Transaction we are going to discuss in the books of head office and in the books of branch. Now, goods are, tell me one thing, in the books of branch means who is passing the entry? Head office is passing entry. No, branch only is passing entry. It is independent branch. They are recording everything. Sir, if they are recording everything, why are we bothered? Now, sometimes see, I am going to give goods to you. Okay. For me, you are a debtor. For you, I am a creditor. But sometimes you might not record it. That time, what amount I am telling as debtor in my books and what amount you are telling as creditor in your books might not match. If it is not matching, we have to just reconcile it. That's all. Clear? So we need to know what are the actual entries. Now, goods sent by head office to branch. Goods sent by head office to branch. In head office, what happens? Branch has to give money to me. So branch account debited to goods sent to branch. Branch account debited to goods sent to branch. In branch, I have to pay money to head office. So goods received from head office to head office account. Now understand this. For head office, this is like sale. For branch, this is like purchase. This is like purchase. Is this clear? Now if goods are returned, obviously the entry will just get reversed. If goods are returned, the entry will just get reversed. There won't be anything additional to worry about. Branch expenses paid by head office. Branch expenses paid by head office. Is this clear? Now, what should be the entry? Branch account debited. We are not writing branch expenses because I'm just paying on their behalf. I have paid on their behalf. They have to give me money. So, branch account debited. My money went to bank account. Clear? Now, expenses debited over there. Expenses account debited to head office. Why head office? Expenses, this is my expense, but I did not pay the money. Somebody paid the money. I have to give them money. Who is that somebody? Head office. Who is that somebody? Head office. Clear? Now, branch expenses paid by branch. No entry they are writing. What is this? Why? Who paid the expense? Branch. Why should I pass entry? They'll pass the entry, no? Expense account debited to bank account. Expense account debited to bank account. Is this clear? Now, cash sales at branch. What should be the entry? Cash sales at branch. No entry over here. Who is selling? Branch is selling. So the entry should be bank account debited to sales account. Bank account debited to sales account. Is this clear? Now, credit sales at branch. No entry. Why? It's a transaction that is happening somewhere else. What should the entry? Debtor account debited to sales account. If you notice, all these entries are just normal entries. Normal entries. They are maintaining books. They will write normal entries only. No. When they are maintaining books and we have a transaction between each other, then branch accounts comes into picture. No. Now. Your breakfast bill, if I pay, for you I am debtor. Yes, what am I? Got the answer. First one hour she'll be like this. Last 1 hour she will be just sitting here. Last 1 hour she'll be like this. She'll fold her legs. She will look that side. Then after that she will be stretching. Then she will look like this. Then she will not look at the screen. She will be looking at others' faces. How you are managing it. Last 1 hour she was doing that only yesterday. 8:30 to 9:30. Did you understand your doubt? But yes. Now after that amount received from debtors. Who received the amount? Branch received the amount. From whom? Their customer. Why should we pass entry? No entry. Bank account debited to debtor account. This is just a regular entry. Now, debtor paid amount. Debtor paid amount directly to head office. Imagine we have a head office over here. Okay. And we have one branch over here. Clear? There is one customer over here. That's it. There is one customer over here. Now, he took the goods from the branch. He is supposed to pay at the branch. But he was just walking in this area. So he thought, why to again go to branch and make the payment? He went inside the head office, made the payment. Head office will obviously accept it because we are the same business. We are the same company. Okay, same owner. So they accepted the money. So money should have gone where? It should have gone to branch. Where did the money go? Head office. Okay, now see. Head office got money. Bank account debited. Not mine. Got money but not mine. To whom I should give it? Branch. To branch. Clear? Branch. They did not get the money but their debtor went. Their debtor went. They have to get the money from head office. Head office account debited to debtor. Is this clear? Money came to the business but it did not come to the right place. So the person who received it is supposed to pay to the person who was supposed to receive it. Head office is supposed to pay to branch now. So branch is creditor and here head office becomes debtor. Is this clear? Now, amount sent by branch to head office. This is like what, this situation, like when we were small, okay, we won't have money. So, but we want to, when coming back from school, we want to eat something, okay. They won't give account because we are small, right? They won't give account and all. So, nearby regular shops are there, no, from where we buy, okay. So, going there, taking something like chocolate or biscuit and all, and telling that later mother will pay. No, that is not account. That is end of the month. They will give one total. You will just tell later. Mother told that she'll pay later. Mother has not told anything. Later, mother will go to buy something. That time they will only tell that biscuit amount is pending. Now, mother cannot act like she doesn't know. Because then it will create an impression that these people don't know, parents don't know what is happening only in the house. Mother will be like, oh, is it? Okay. And she'll pay. After coming home, biscuit will be fully digested by us. They will be like, why don't you tell? If you tell, then they will be like, why you have to eat biscuit? At home there is food. Go and eat that. That happens, right? Yes. Now, debtor paid amount directly, that we finished. Amount sent by branch to head office. If they send the money, who is receiving money? Head office. See here, bank account debited. Who is losing money? Branch. See here, bank account credited in the branch. Who gave the money over here? Branch. Branch account credited. Who gave to whom you gave the money over there? Head office. Head office account debited. It is nothing but you used to pass entries, no? Amount paid to Ram. What entry you used to pass? Amount paid to Ram. Ram account debited to bank account. Amount received from Ram. Bank account debited to Ram account. Is this clear? Now, amount sent by head office to branch. Head office is sending money now. Branch account debited to bank account. Branch is receiving money. Bank account debited to head office account. Is this clear? Are you getting this? Okay. Now, oh, your old friend Abhirami has just joined and left. She was like, which topic is going on? Okay, fine. Bad debts at branch. Bad debts at branch, what entry? No entry. But what entry will you pass here? Bad debts account debited to debtor. Can you see it's a regular entry? Asset purchased by branch, paid by head office. Asset purchased by branch, paid by head office. Is it my asset now? No. Asset will be used by somebody else. Branch account debited to bank account. Money went, that's all. Here it will be asset account debited. Asset came, but did I pay the money? No. Head office, to head office account. Is this clear? Okay. Now, paid by branch only. No entry here. Asset account debited to bank. Finished. Clear? Asset given by head office to branch. I am giving the asset. So for me, asset went, but I have to get money. So branch account debited. For branch, asset came, but I have to pay money. Head office account credited. Is this clear? Okay. These are the entries. They won't ask the entries, but what they will ask is rectification. So you should have known that time what entry should have been passed where. Then only you will be able to rectify or reconcile. Okay. Now Infosys Limited is there. We all know Infosys. Now, for example, they have branch in Hyderabad, Mumbai, Chennai, Delhi. Correct? Branch at the end of financial year, what they will do? At the end of the financial year, what they will do? They will close the books. Do you think they are passing entries? Correct. But are they going to prepare financial statement also? No. Financial statement is not prepared by branch. It is prepared by the company. What they will do? They will give the trial balance to the company and they're like, take, do whatever you want. Add it to your books and prepare financial statement. So, branch at the end of the financial year closes the books. How will they close the books? Remove everything from the books. Literally, they are not going away, only closing the books. So, liabilities are debited, income is debited, assets are credited, expenses are credited. In the trial balance, these are the 4 items you'll find. In the trial balance, these are the 4 items you find. You will give it to them, so you will reverse everything, it will become 0. Next year, we start fresh. So when we start head office, what they will do? They will add everything to their books. So branch asset debited, you got the asset. Branch expense debited, you got the expense. Branch liability credited, you got the liability. Branch income credited, you got the income as well. So this is going to be recorded. Once you recorded this, when you prepare your final accounts, automatically it will also impact your profit. Who is going to prepare final accounts? The head office, including all the branches. Clear? Now, rectification and reconciliation entries. Some common ones we have discussed over here. Goods in transit means what? Head office sent the goods Okay, so head office has already passed the entry. Imagine Darshan is over here. He is sending the goods. He is sending the goods, and the goods are going, okay, to the branch. And in branch, he has his friend Sanjit with the lollipop. Okay, now as soon as he puts the goods in the truck and sends the goods, don't you think transaction has happened for him? So he will pass the entry. So his job is done, no? Now the truck is somewhere over here. Did the goods reach Sanjit? No. Sanjit is not aware only, no. Goods are still on the way. So Sanjit has not passed the entry. Now it is causing a difference. If it is happening at the year end, no, it's causing a difference. Darshan sent on 29th March. Sanjit received on 4th April. So now at the year end, there will be a difference in our books. So that time, goods in transit entry has to be passed. Passed by whom? Just remember, whenever things are in transit, who has to pass entry? Who has not passed the entry? Who has to pass the entry? Who has not passed the entry? Who has not passed the entry? Receiver. Because he has not received. Who has to pass the entry? Receiver. Because receiver has not received or is not even aware about it. Clear? So what you are going to do? Goods in transit account debited to head office account. Goods in transit account debited to head office account. Who has passed the entry? Branch. That means goods are going to arrive. They have not arrived. Head office has sent me some goods, so I have to pay them money, credited. Cash in transit. Okay, you might not find it, what do you say, these days you might not find cash in transit because you are just going to make the payment and immediately it is reflected over there. But if you give a check and all, it might take a couple of days. So if it is cash in transit, branch sent the money, so branch has passed the entry. Head office has not received the money, so no entry. So head office, what entry they will pass? Cash in transit account debited to branch account. Cash in transit account debited to branch. Okay, I don't know why this example was created. Some doubts should have been asked. What are these doing in Thailand, Chennai and Coimbatore? We don't know. Okay, don't worry about it. Foreign branch. For foreign branch, we are focused on southern India only. We have zoomed into the map. Okay, we have a thing in Chennai here. Head office in Chennai. Branch in Sri Lanka. Branch in Sri Lanka. Clear? Now don't think. What mistake students do is they already go to the exam with a mindset that head office is India, branch is other countries. But in your study material only there are two questions where they tell that a company at New York has a branch at Chennai. So now when they give you dollar rate, you are not supposed to multiply. You are supposed to divide. See, understand the forex, how it works. $1 is equal to some rupees, or they quote it as rupees per dollar. Rupees per dollar. So if I give you the amounts $10, then what I will do? I will multiply into the amount and I will get the rupees. Clear? But if I give you rupee amount and I have to go to dollar amount, then I should divide it. Okay. Divide by the whatever the price is. Okay, 80. If it is 80, divided by 80, you will get the amount. Okay. Now when you go to, what do you say, US, you won't find it 80 there. You will find 0 point something something. It will be quoted like that. Okay, don't worry about that. We'll learn it at dinner. At dinner time, we'll study about all that. Finals. What is this? You forgot. Now. Oh, not today's dinner time. That time we will be learning accounting standards. Okay. That time we will be learning accounting standards. Okay, don't worry about that. Now, converting the trial balance of foreign branch into home currency. What we are converting? Foreign branch, okay, trial balance into home currency. AS11. AS11. Part of AS11, not complete AS11, part of AS11. Now, currency of country where company is incorporated is called as home currency. We are never telling it is rupees. Where the company is incorporated, where the business is incorporated, that country's currency is called as home currency, and that is where the head office is there. What is foreign currency? Any currency other than home currency is foreign currency. Clear? What is spot rate? Today's rate. Right now, what is the rate? That is called as spot rate. Current exchange rate. What is closing rate? Rate on date of balance sheet for us, because we are preparing balance sheet. So for us, otherwise closing rate is any day's rate. Today, end of the day, today's closing rate. End of week, that closing rate. End of month, that is the closing rate. But we are preparing end of year only, everything. That's why rate on the date of balance sheet. Opening rate. Last year's closing rate. Last year's closing rate will be considered as opening rate. Average rate. Average rate, opening plus closing divided by 2. Sir, why we are learning all this? Because the rules as per AS 11 is dependent on these rates only. Now, monetary item. What is monetary item? Items that can be expressed exactly in terms of money. See, items that can be expressed in monetary terms. If I tell you debtor, 100 rupees. Do I know exactly that I have to get 100 rupees only? If I tell you bike, 500 rupees. Am I telling exactly the bike value is 500? No. Because the bike value 500 is based on lot of assumptions. The assumptions are useful life is an assumption, scrap value is an assumption, depreciation rate itself is an assumption. Are you getting my point? If I go to the market, I might not get 500, I might get more or less also. But debtor, when I tell 100, I know exactly I have to get 100 rupees. Yeah, bad debts, for that we have created a provision. But it is exact that I know 100 rupees is the transaction value there. Okay. So items that can be expressed in terms of money, that is debtors, creditors, bills receivable, bills payable, cash, bank, loan given, loan taken. All this will be monetary items. Bad debts, yeah. Because it's just you're creating, you're just keeping it in the side. Non-monetary items means what? Anything other than this. Basically, your PPE, your stock, all these are non-monetary items. Clear? When we have foreign branch, you have two types of foreign branches. One, integral foreign operation. Another one, non-integral foreign operation. What is integral foreign operation? What is integral foreign operation? Just like dependent branch. Okay, dependent on head office. They are not dependent branch. Because when you are in another country, some decisions you have to take, but major decisions are taken by head office. Clear? Infosys, for example. Let's say they have a branch in US. Maybe the software is manufactured over here only. Software is coded over here. Then they are just giving it over there. Then they will supply to the client over there. Is this clear? Okay. Non-integral foreign operation. Non-integral foreign operation, not dependent on head office. So again, why are we learning two things? Because AS 11 rules are different for the two. Rules are different for the two. In foreign branch, if any question comes, in foreign branch, if you remember this table, that is the end of the story. If you remember this table, that is the end of the story. Now tell me one thing. I have sold some goods and it is in dollar. And I know exactly that day what was the rate and I know it in rupees. I know exactly what was the rate that day and I know it in rupees. Now, should I convert it based on AS 11 rules or do I already know it? I gave $5,000 to Bala and I know that day the rate was 80. I have converted it and I have already taken 4 lakh. I have already taken 4 lakh. I know the amount now. Are you getting my point? If I know already the amount, I don't have to look into AS 11. So first you have to read this note. If actual amount is known, do not use AS 11 rules for conversion. But what happens, why we go to AS 11 is, purchase will happen 5 times in a day. That means 365 days. Think of the number of purchases. When they are purchasing, they are not able to keep track of the rates. So they have just recorded everything in their currency. They will not think, no, later head office has to do all this in AS 11. They will not think about it. So they just record the transactions. So end of the year, I know only the total purchases. Now it's not possible to go day by day and check over there. That is why when you don't know the actual, then you ask AS11 what to do. Then AS11 will tell you what to do. Is this clear? Now, understand particulars. If it's integral, what to do. If it's non-integral, what to do. If it's integral, remember, first we'll focus on balance sheet items. In balance sheet, what do we have? Monetary item, non-monetary item. If it's monetary item, closing rate. If it's monetary item, apply the closing rate. If it's non-monetary item, then you should apply the actual rate. I don't know the actual rate, then you take average rate. If you don't know the actual rate, you take the average rate. Stock is what? Monetary item or non-monetary item? Non-monetary. But for stock, they said apply closing rate because stock is always valued on the last day of the year. Cost or NRV on the last day of the year. That's why they said stock, you take the closing rate. Is this clear? Now, what about incomes and expenses? Incomes and expenses, take the actual rate. If you don't have average rate, whatever difference you get in conversion. Now see, if I have a trial balance and 10 items, all 10 items I have multiplied into 80. Do you think my trial balance will tally or not tally? I have 10 items in my trial balance. All the 10 items I have converted into 80, 80, 80, 80. It will tally. But if 2 items 80, 181, then 182, 183, it will not tally. It will create a difference. That difference is called as Forex difference and it will be transferred to P&L. Forex difference will be transferred to P&L. Now, if it is non-integral foreign operation, all balance sheet items, monetary, non-monetary, don't even think about it. All balance sheet items, closing rate, all balance sheet items, all P&L items, actual rate or average rate. Now, if you get a difference here, don't transfer it to P&L. It's transferred to a reserve called as foreign currency translation reserve. Foreign currency fluctuation translation reserve. It will be there under your reserves and surplus as long as you have a non-integral foreign operation. Once this operation is gone, then you will use this reserve. You will transfer this reserve to general reserve or something like that. Is this clear? Are you following this? Clear? Now, rates again. If it is integral balance sheet items can have monetary item, non-monetary item. Monetary item will be closing rate. Non-monetary item will be actual rate or average rate. Then in non-monetary item there is stock. For stock you will apply closing rate. All P&L items actual rate is not there. Average rate will be used. Clear? Difference will go to P&L. In non-integral foreign operation, everything will be transferred at closing rate and remaining things will be at actual rate or average rate. That means P&L items actual rate or average rate, balance sheet items closing rate. Clear? That should be it. With branch accounts, the concepts are done. We don't have too many problems to look into. Yes, let's just quickly look into the last 3 exam questions. Only three. Last 3 exam questions, that's it. Branch, it's not that heavy weightage. You have to practice on your own. Okay, now, see the kind of questions that they have asked. They have asked easy questions. What they have asked? Easy questions. Now, listen. Give journal entries with narrations in the books of an independent branch of a business entity to rectify or adjust the following. What they have done? Directly to the point, rectification only, independent branch. I think it was asked for 6 marks or 5 marks. Yes, commission income of 7,500 allocated to branch by head office, but still no entry is passed in the books of branch. What is it? Is it income for me or expense for me? Is it income for me? Who are you? Hello? Who are you? Who are you? Who are you? Head office or branch? Branch. In the books of independent branch, how can I be head office? Okay, who am I? Branch. So whatever transaction you are seeing, think from branch angle. They said commission income of 7,500 allocated to branch. They said head office received some commission income and they told this is your share. It actually belongs to you, allocated to branch by the head office, but still no entry is passed in the books of branch. Branch has to get money or branch has to give money? Get money. See over here. Head office account debited because head office has to give money to commission income 7,500, 7,500. Is this clear? Okay. Next. Head office paid 12,000 directly to one of branch supplier. Head office paid directly. Who was supposed to pay? Branch was supposed to pay. Head office paid. The intimation is received by the branch on reconciliation of bank statement of branch with its books. We just got the intimation. Who paid? Head office paid. That means we are supposed to give the money back to head office. Creditor account debited to head office. Because my creditor is gone, somebody paid the money, creditor is gone, and I have to return the money to head office. So 12,000, 12,000. Is this clear? Next. A remittance of 85,000 is sent by branch to head office, has not been received by head office till date. What should be the entry? Remittance of 85,000 is sent by branch to head office and head office has not received it till today. No entry. No entry. Why? Head office already, branch has already sent the money. Branch has passed the entry. Head office has not received. Head office should pass the entry, no? No entry in branch books. Is this clear? That is why I asked first, who are you? You are branch, independent branch. That is already sent, no? Has not been received. What is sent? We have already passed the entry. See, rectify or adjust. Original entries are passed. Only rectify or adjust. Branch paid 9,800 as salary to head office employee, but the amount paid has been wrongly debited to salary account. Okay, now this is our branch. One employee came over here to the branch. Clear? Who is supposed to pay the salary? Head office was supposed to pay the salary to him, but branch paid the salary. Is this person branch employee or head office employee? Head office employee, but we paid the salary. By mistake, we have debited it to salary account. That means we have to remove from salary and we have to get the money back. From whom we have to get the money? Head office. Entry will be head office account debited to salary account. Rectification of errors. Clear? Next. Branch purchased furniture of 18,000 through check, but the furniture account was retained in head office books. No entry has yet been passed. Branch purchased the furniture, but head office told, don't worry, I will show the furniture in my book only. That means I have to remove the furniture from branch books. See over here. Head office account debited to bank account. That means being furniture purchased by branch retained by head office. Directly we are not writing furniture account only over here. Head office account only is debited and bank account is credited. What will, just for curiosity, what will head office pass the entry in their books? They will pass the entry furniture account debited to branch account. No, they haven't. No entry has yet been passed. No. Branch purchased the furniture through check, but the furniture account was retained in head office books. No entry has been passed only for this. So directly, instead of writing furniture account debited, directly we are writing head office account debited. Branch incurred 5,500 for expenses on behalf of other branches of head office. This transaction was not recorded in the books of branch. Now, one thing I want to tell you, what should be the entry? Is there, now see, let's say we have one branch 1. We have one branch 2. Or for example, if at all we have a situation, okay, we have India. Why do you feel that this is a little bigger? We captured the areas back from China. These areas belong to us only. Okay, that UN will interfere. We can't capture that. Yes. Now, listen. And Gujarat has gone little more into sea. Now, we have one head office over here. We have one branch over here. And we have one branch over here. Okay, 2 branches are there. Now tell me one thing. Head office has given one instruction to this person, send the goods to this branch. That is what has happened. Branch incurred 5,500 for expenses on behalf of one more branch. Okay, of the head office. This transaction was not recorded. What should be the entry? I have incurred. So what should be the entry? I have to get money, head office account debited to bank account. You are thinking, sir, that branch has to pay me. No. There is no connection between branches. Everything is routed through the head office. One branch paid the money to another branch. Still, the money is routed through the head office. Is this clear? So, head office account debited because we have to get money. Bank account credited because we have already paid the money. Is this clear? Any doubts with this first one? They have asked this for 6 marks. Almost last 3 times the pattern is last question is branch accounts. The last question in the paper is branch accounts. Okay. But sir, we have to reach till there, no sir. We are stuck in amalgamation only. Don't always do that, because out of all the big questions, only one will be very lengthy. Others will be too simple. Don't always do that. Start with the last question. Okay. Because last question, 4 questions will be there. Small. So it's better to finish one, focus on one and finish it off. It is always better to start with first question. Standard. It's a compulsory question anyways. One question will be there, little tricky. Not always though. You choose. Usually questions 4 and 5 will be easier. Questions? First question amalgamation is compulsory. 4 and 5. 4 and 5 will usually be easy questions. 2 and 3 will be little tricky, or not tricky, it will be time consuming. Now, second question. CA Inter September 2024. Okay, following is the information of Kullu branch. Okay, guys. Of best enterprises of Shimla for the year ended 31st March 2023. Do you know Shimla? Do you want to experience Shimla? Do you want to experience Shimla? Nothing. We have to just keep it in 16. In 5 minutes, you'll experience Shimla. Okay. You are required to ascertain the following: profit earned by the branch preparing trading and P&L account, and also find the stock reserve on closing stock. So trading and P&L method they have asked. Don't worry, it's not 4 plus 4. All this, only this last question was 6 marks. Okay. Don't be too excited. Oh, 14 marks they asked. Nice. Now, goods are invoiced to the branch at cost plus 20%. Okay, we know that branch sold the goods at invoice price plus 25%. So, if I take over here, my cost is 100. How much profit did I add to get the invoice price? 20. That means this became 120. This became 120. Is this clear? Now, branch sold the goods at invoice price plus 25%. So the profit that you're going to add will be 120 into 25%, that is 30, and this becomes 150. This becomes 150. Is this clear? Now if I ask you a question, there is some stock that is sitting in the branch. It is at what price? In numbers, 120. It is at 120. The stock which is sitting in the branch is 120. But the branch will sell it at, clear? Realized. Other information is as follows. Stock at cost price on 1st April 2022. Okay, they have given you 2,25,000. We'll see the trading account directly. But they are showing 2,70,000. Why? Because it is at cost price. That means 2,25,000 plus 20%, 2,70,000. Is this clear? Are you following this? Because we are preparing trading and P&L account of Kullu branch. In Kullu branch, stock is sitting at 70, 2,70,000. It is not at 225. We gave it to them at 270. Is this clear? Okay. Now, goods sent by head office to branch during the year at cost price 14,85,000. What we will do now? 14,85,000 plus 20%, 82,000. For them it is like purchase. That is why it is debited. Goods received by head office, debited. Clear? Next, goods returned by branch to head office during the year at invoice price. So what we are going to do? by goods returned, directly 75,000. Don't go to add anything. It's already at invoice price. Clear? You could have also taken this as purchase less returns. You could have directly subtracted 75 from here also, or you put it on the credit side also. Is this clear? Yes. Next, sales by the branch during the year, 19,50,000. What should be the entry for sales? Should I add something? Should I add something? No, directly sales. Why? Sales are already at invoice price. Sales realized profit, recorded like that only. Clear? Now, expenses incurred at the branch, 56,000. What should be the entry for expense incurred at the branch? Two expenses, 56,000. Actually, trading and P&L, they have merged it. They didn't calculate gross profit and all, because what they asked in the question is profit earned. Final profit only we require. Okay, then that's it. Sir, closing stock was not given. Yes, closing stock is not given because net profit we are able to calculate. How will we calculate net profit? We know the sales. 19,50,000 into 30 by 150. Oh, wait, what was the profit? What did you do? One second. Oh, they took net profit. Sorry. 3,90,000 is correct, guys. But 3,90,000 is gross profit. No. Remove the expenses, you will get the net profit. 3,90,000 is correct. Okay. 3,90,000. Okay. Minus 56,000. Final profit will be 3,34,000. Okay. Why it is 30 by 150? Because the profit that branch made is this 30 which we are talking about. Profit that branch made is this 30. And the branch sold at this 150. So 30 by 150 you will get the gross profit. Remove the expense, you will get the net profit. Clear? You can take closing stock as balancing figure, but if actually here they have calculated closing stock. How they have calculated closing stock? The cost of goods sold formula. They have used the cost of goods sold formula and they have calculated closing stock. But closing stock actually can be taken as balancing figure because you are able to compute the profit itself. You are able to compute the profit itself. But closing stock will always have stock reserve. Now, how will you calculate stock reserve? Closing stock is at 100 or 120 or 150. It is at 120. Closing stock is at 120. In this 120, there is a profit of 20. See over here. 4,17,000 into 20 by 120. 69,500 will be the unrealized profit. But no entry has been passed for that. Because who will pass the entry for unrealized profit? Head office. This is just branch trading and P&L account. Is this clear? Nice 6-mark question they have asked in the exam. We should be able to handle that. Let's go into the next question. CA Inter May 2024. CA Inter May 2024. Small question they have asked. You are required to show how it will be reflected in the books of head office in the form of trial balance if the US branch office is classified as an integral foreign operation. What did they tell over here? Conversion. Conversion. Okay. Now understand this. All the debit balances are given. All the credit balances are given. Let's go and see what additional information is there. Average rate is given 56. Fixed assets were purchased when the exchange rate was 55. Is this the actual rate? So we should take that only. Okay. Closing rate is given 58. Then they told stock item P is valued at cost 5520. Purchased when the exchange rate was 56.5. For stock, did they tell you the exact rate over there? Yes. Present net realizable value is 2,85,000. Cost or NRV, whichever is lower. Okay. Now, stock item Q. See, can you see inventory? Two things are there over here. Stock item Q, okay, is carried at net realizable value of 1035, but its cost in USD was 1065. It was purchased when the exchange rate was 1 USD is equal to 53. Cost and NRV to calculate, they have given you. Branch control account as per head office books is 266. We know actual. When you know something actual, directly go and put it. Clear? Now, one by one. Expenditure 103,095. This is in dollars. We want it in rupees. Now, trial balance. I hope you remember the format. Okay, debit credit in dollars also they have put, and rate they have put, and debit credit is put. Expenditure is showing 56 because expenditure is supposed to be at actual rate. We don't know the actual rate, so we will take the average rate. Average rate is 56 only. Clear? Are you following this? Cash and bank balance. What rate I should take? Closing rate. And closing rate in this question is 58. Can you see 58 for cash and bank balance? Clear? Any doubt about this? No. Debtors. Next item is debtors. Debtors is a monetary item. Monetary item you should apply closing rate. Closing rate is 58 for debtors. Clear? Now, fixed assets 34,200. Tell me, fixed asset what rate we should take? Actual rate. If you don't know actual rate, you will go to average rate. But we know actual rate because they told 55. They told 55. So you can take 55 over here. Clear? Then rate of depreciation on fixed asset is 20%. So can you see depreciation 20% they have taken here, and it is at 55. It is at 55. Why 55, sir? Actual rate only. Are you getting this? 1 minute, which one? Depreciation. Because they have told no here. This expenditure is excluding depreciation. So depreciation we have to take. Depreciation when we take, asset value reduces. Asset value reduces. Clear? Remember this. When you take asset at actual rate, okay, you will take depreciation also. Depreciation anyways at actual rate only. And we know the actual rate 55 for both we are taking 55. If at all it was not there, asset would be at average rate and depreciation also would be at average rate. If it is not there, here it is there, given no. Now, inventory. Listen. Inventory 5520. Listen. 5520 inventory. What did they tell about inventory? That is P, stock P. Valued at cost is 5520. Okay. NRV is 2,85,000. 5520. If I multiply it into exchange rate of 56.5, you know the actual rate. 3,11,000? 880. But are we supposed to take actual rate for stock? We are supposed to take closing rate for stock. So 5520, if you take, what was the rate? Closing rate is 58. It will be even higher. Now I have a question for you. It will not impact you. But I have a question. Tell me one thing. Cost or NRV which we are comparing. Should I take 56.5 or 58? 56.5 or 58? I should take 56.5. Why? When I know actuals, I don't even go to AS11. When I don't know actuals, then I go to AS11 and AS11 is telling take closing rate. When I know the actuals, I take actuals only. When I don't know actuals, I'll go and ask AS11 what to do. AS11 asked what is the item. You told stock, closing rate. Clear? 318, but actually the NRV is 285. Cost or NRV, whichever is lower. AS2. So directly 2,85,000. Can you see direct? 2,85,000. Now, what about inventory Q? Okay, guys. Inventory Q is carried at NRV of 1035. Cost is 1065. Which is lower here? 1035 only is lower. So, what rate we should take? When the exchange rate was 53. So, you will take directly 1065 into 53. Oh, it should have been 1035, no? Cost is, NRV is 1035. Cost is 1065. That means they are just focusing on AS11 and giving the solution. They are not thinking that AS2 is also there. Are you getting my point? If you think of AS2, it is cost or NRV, whichever is less. They have told, okay, cost is 1065. Okay, 1065 into 53. Wait, did they just make typing error? No, actual amount also they made mistake only. Okay, they are only focusing on inventory. They are not integrating standards. Clear? Cost or NRV. But 53, why did they take? Because they didn't worry about AS11. If it was AS11, they should have taken 58. They should have taken 58 because stock closing rate. They took 53 because the day when we purchased it was 53. I will consider that rate itself. Clear? When I know the actual, I won't even enter into AS11 category. Next. Huh? No, they just took cost of the inventory is 1065. Okay. Oh yeah, first one they used AS2. Here they have used AS2, here they have not used AS2. Suggested answer is just suggested. Are you getting my point? Yeah, you're right. Here they have used AS2 principles, but here they have not used AS2 principles at all. Here they have directly taken cost itself. Sorry? Yeah, closing rate is 58, no? Closing rate is 58, no? Now if you see, for example, let's compare and see if they have actually done like that. 1035 is NRV. 1035 into 58. Ah, yeah. It's correct. They have followed AS2. It will be lower only. See, 1065 into 53. 1035 into 58. 1065 into 53. You will get lower only. They have followed AS2. Yes. Yeah, because NRV is on what day? 31st March. NRV is on 31st March. Cost is when you purchased. Correct, correct, correct. Every time we can't blame ICAI. They have done correctly only. See, what happens is, this will be 58. This will be cost. That's why this only you will get as lower value. Clear? That's why directly you can take 1065 into 53. Now after that you have what? Income. What rate will you take for income? Actual rate. Actual rate we don't know. So we will take the average rate of 56. Creditors. Creditors, what rate will take? Closing rate, because creditor is a monetary item. You can see 58. Head office control account. Head office control account means head office account. Okay, 5820. Actual rate will I use or average rate will I use? I will not use anything because they have given in rupees it is 266, 265. Just go and write 266, 265. When you know the actual, you will not convert it again. Imagine they did not tell this. Then what rate we would use? What rate we would use? Imagine I don't know this. That time what rate I would use? I would use closing rate. Because head office control account, it's a monetary item. It's a debtor creditor situation. It's a monetary item. Clear? But usually head office and all, they'll tell you the actual. Huh? Hey, no, it is not expense. It is a debtor for the branch. What is the balance here? Sorry, it's a creditor for the branch. Creditor. First of all, credit balance. How can it be expense? Creditor. Is this clear? Creditor is a monetary item, so we will follow closing rate. If it's not given, they have given the value, so just go and take it over there. Okay, actually they have merged AS2 with AS11, just testing the basics of AS2. That's all. Yes, we are done with the branch accounts, guys. What? Wait. Long way to go. Wait. Now, after this, we are going to discuss more of concepts only. No break. Break will be at 10:30. Break will be at 10:30, AS13. Just drink a little water. Every time I'm putting hot water, but then I'm drinking it cold. No, it's not too hot. Yeah. First only investment. Why? Because we went in that order. I don't remember the order. That is why I don't tell, confidently I don't tell to anyone. Because when they do, some people when they don't go to college, they become too lazy and they waste a lot of time. You will feel, no, actually his portions got over when, in July or August it got over for Jan exam. And he was like chilled because he's like so much time is there. Yes, accounting for investments, guys. I'm just writing college exam for namesake. Yes, accounting for investments, AS 13. AS 13. There are two types of investments. One, current investment. Another, non-current investment. What is a current investment? When the investment is valued at cost or fair value, yes. But what is current investment? We have learned it when we learned financial statement. When the investment you are intending to hold it for less than 12 months, then you value the investment at cost or fair value, whichever is less. Clear? When it is non-current investment, it will be valued at what? Cost. But if there is a permanent decline in value of investment, then create provision for such loss which is expected. Clear? If there is permanent decline, then reduce it. That means create a provision and reduce it. Is this clear? Otherwise, it will be valued at cost or fair value, whichever is less. And if it is non-current, it will always be valued at cost. Imagine you had purchased one share for 500 rupees. That share price today in the market is 5 rupees. Still you feel that this is not permanent decline at all. It will recover and come back to 500. You will still show it at 500 only. You have a share which you have purchased at 500 rupees. The market price has reached 460 and you feel that this is a permanent decline and you will make a provision for 40 rupees. You will make a provision for the loss of 40 rupees. Obviously, asset is there on the asset side, provision is there on the liability side. It will automatically become 460 only. Now, this is the analysis of the investor. Now, listen. Let's say Sanjit has purchased one share at 500 rupees. Okay. The owner of that company has already applied for bankruptcy and has applied to close the company. And the stock price has reached 20 rupees. But Sanjit feels, no, this is not a permanent decline. Is it possible? Is it possible? No. Reality should be there. Analysis of investor, yes. When they give in the question that the company is on the verge of liquidation, then if they are telling you that it is permanent decline only. Are you getting my point? So when reality is there, don't think of like unrealistic situations. Now, fair value is less than cost. Then we should take it at what? Cost or fair value? Here, fair value is less than cost. We should take it cost or fair value? Fair value. Okay. But when I prepare my investment account, I'll get one by balance carried down. This will be at cost or fair value? This will be at cost or fair value? This will be at cost. Why? Investment account is ultimately prepared at cost only, no? You prepared the investment account, you got by balance carried down 120. This is your cost. But they said that fair value today is only 110. That means you want by balance carried down to be showing 110. You want balance carried down to be showing 110. Now how to make this 110? By creating the loss. So you will write by P&L 10. That time automatically this will become 110. Are you getting my point? That is what I meant by debit the loss to P&L. You don't debit the loss to P&L. Here you're crediting, sir. This is not P&L. This is investment account. Is this clear? So if you want the balance to go down, balance will be at cost only. If you want the balance to go down, you have to debit the loss to P&L. That time automatically the balance will go down. End of investment account questions, usually they tell you, end of the question they usually tell you, on this date, the shares were quoted at 150. Now you multiply and see if that fair value is less. If fair value is not less, take it at cost. Okay. Now, this nice beautiful airline, can you see? Kingfisher airline. Once upon a time it was there. Now it is not there. Okay. One girl is there, Samrita. Okay. She took 10,000 rupees from her mother and she told, I will invest in stock market. Within 2 months, I will give you double. Stock market, whoever enters first, they will think like that only. Okay, that within 2 months, they will give double. But later, first time when they trade, they will make profit only. Because all gambling situations, okay, not only stock market. If you go and bet on IPL match, imagine CSK versus, yesterday who played? Punjab. CSK versus Punjab match. If you would have gone and bet, then CSK would have won. Because it's your first bet, no, you should win it. Then when you start losing, you'll always remember the time when you won. And then you'll put more and more because you want to recover your losses. Same thing happens in market also. That's why keep your emotions aside. That's what Sanjit told me yesterday. You should keep your emotions aside and you should trade. Okay. So don't trade only. Best thing. Okay. 1,000 rupees, 10,000 rupees she has taken from her mother and she has invested in the stock market. Price was 280. Price was 280. She decided that she will hold this for 5 years. Okay. Hold it for 5 years. That means it should be taken at what value? Cost. It should be taken at cost. Price went to 600. She will show in her books at 280. Price went to 890. She will show in her books at 280. Price went to 270. She will still show in her books at 280. Price went to 120. She will still show in her books at 280. Price went to 40. She will still show in the books at 280 only. If permanent decline, then only create provision. When it reached 40, it is permanent decline now. That time she'll create provision for 240 to bring it down to 40. And then current investment. Hold for 5 years, it's just an intention, right? Whenever she decides to classify it as current investment, then automatically it will be cost or fair value, whichever is lower. Now the same example. Yeah. 40 only. 40 only. Now see, this entire example I took when it is non-current. If it is current, you took it as 280. Next year it became 600. You will show it at 280. Next year it became 890. You will show it at 280. Next year it became 270. You will show it at 270. Next year it became 120. You will show it at 120. Next year it became 40. You will show it at 40. Whenever you are reducing the value, how can you reduce the value of investment? By debiting P&L. Loss will be debited to P&L whenever it goes on. Is this clear? Did you understand? Now imagine it was taken as non-current. It was taken as non-current. It reached 600, no problem. It reached 890, no problem. But it reached 270. What will you show it at? 280. But you feel it is permanent decline. You will show it at 270. That means you create provision of 10. Even if it reduces 1 rupee, it is not about it reduced so much, sir. Now I know it is permanent. No. Even if it reduces 1 rupee or 2 rupees, but you feel it is permanent decline, you will make provision. Conservatism concept. Whenever you feel it is a future loss, immediately you will record it. Okay. Accounting. Can we go into accounting, guys? Okay. Accounting. Okay, guys. All this material will be shared. Okay. Don't worry. I'll share all this material with you. The notes, the questions, whatever we have discussed. Now, people who are not from our academy, okay, because when I share, they'll just put it in some group. So just take my number. Okay, just send me a message. Just send one hi message. I will share the material with you. You all will get it anyways, no? Just take my number. Just send one hi message. I will share the material with you. Clear? Yeah, I removed it. Got no? Yes. You anyways message me on Instagram. You message, right? Yes. Let's start. Accounting. We have to finish investment accounts, the concept, and then only we are going into breakfast break. Clear? Accounting. Understand this. There are two types of investments. One is called as fixed income bearing investment. Other one is called as fluctuating income bearing investment. What is fixed income bearing investment? That means income is fixed. income is fixed. That is debenture, FD, bonds, preference shares. Whenever you see debenture, you will always see 8% debenture, 10% debenture. That means what? The percentage is fixed. Every year you will get the same amount. Fluctuating income bearing investment, equity shares. You will get fluctuating return. Some years you might not get only, some years you will get high. Are you getting my point? Now, format for fixed income bearing investment. What will you do for fixed income bearing investment? Investment accounts, when you're doing, you have to be careful with the format. In the books of. You're first going to write in the books of. Then you're going to write investment account for what period you're going to create. And very important to write this script. Very important to write this script. Not script. It is script. Okay, it's not a typo, it's correct. Script means what? Type of investment. What type of investment it is? If you have invested in debentures, then you will write 8% debentures. What? 12%. Okay. 12% debentures in X Limited. This is what you will write. Description basically. You will write. If it is equity shares, then you will write equity shares in Tesla. Huh? If they get listed. Here it will not come. Yeah, it is fixed income bearing. I was just telling you the script. Here it will not come. I thought he was thinking that Tesla will not come to India only. Okay, now listen. Huh? Don't worry. Date, particulars. That is not neat, man. It was very dirty. We'll get the examples. What you are looking for. Date, particulars, nominal value, interest, rupees. Nominal value is the face value column. Just for info. Just for info. It will not impact your balance sheet. Just information you are showing. This is the amount column. Clear? What interest will be there? Interest. We are going to discuss this in detail, but interest. Always, every time you record any transaction, you will calculate interest from previous interest payment date to the date of transaction. Even if you are writing over here to balance brought down, here also you will calculate interest from previous interest payment date to the date of transaction. In opening balance, what interest, sir? Interest accrued. In opening balance, what is the interest you are talking about? Interest accrued. Are you getting my point? Now, there is one guy called VD. Okay. VD. Now, there is one company called as Arvind Limited. Arvind Limited is one company. Okay. Now, what happens over here? Arvind Limited issued debentures to VD. Understand this entire story. Investment accounts will be done. Arvind Limited issued debentures to VD. On what date? 1/4/2024. Face value was 100. Okay, 10,000 debentures, 8% debentures. What will VD do? For VD, it is what? Investment, right? He will pass the entry, investment account debited to bank account. Done. Are you understanding the journey till here? Investment account debited to bank account. Don't worry about Arvind Limited. Arvind Limited will pass the entry, bank account debited to 8% debentures. That is issue of debentures, what they are going to worry about. Here, we are focusing only on investment account debited to bank account. Clear? Now, interest payment dates are 30th of June and 31st of December. 30th of June and 31st of December are the interest payment dates. We decided that on these dates, the company will give the interest. Okay. Now, what did VD do? Okay, imagine there is one more person called Meha. She purchased the debentures. That means VD gave the debentures to this person. Okay. And 4,000 debentures are sold at 105. 4,000 debentures are sold at 105. Clear? This person should pass the sale entry. This person should pass the purchase entry. This person will pass the sale entry. This person will pass the purchase entry. In this, whenever shares are quoted, they are quoted at X interest price or they are quoted at cum interest price. X interest price will focus. X interest price means price quoted is excluding interest. Now, don't you think, if at all I am selling my debentures on 111 I am selling the debentures. When did the company give me interest? Last time company gave me interest on 30th June. That means July interest is pending, August interest is pending, September interest is pending, and October interest is pending. Don't you think I will tell that person, I will give you the debenture, but you have to give me 4 months interest? Now you're like, why I have to give you 4 months interest? Company will give you. No, company will not give. Are you getting my point? Company will not be like, okay, 4 months you had the debenture, I will give you interest. 2 months you had the debenture, so I'll give you interest. Company will not do this. What will company do? On the date, who has the debenture, they will give them the interest. Imagine interest payment date is 31st of December. No, 30th of December I have purchased the debenture from somebody. I'll get full 6 months interest. I'll get full 6 months interest, but it is not a profit for me. It is not a profit. You know why? Because when I'm purchasing, previous person is also smart. Previous person will be like, see, 4 months I had the debenture. Company will give you the interest full 6 months. Now you give me 4 months interest. When company gives you, you'll get 6 months interest. 6 minus 4, 2 months is your income only. Are you getting this? Now here 111, that means July, August, September, October, 4 months interest is pending. 4 months interest is pending. So what this person will tell, give me 4 months interest also. Later company will give you 6 months interest. So 4 months you have already paid me. 2 months interest, it is yours only because you had the debenture. Is this clear? Now, when you're passing the entry, two ways the price can be quoted in the market. They can tell the price in the question in 2 ways. One is X interest price and another one is cum interest price. X interest price means price quoted is excluding interest. So if I tell 105, 105 is only for the debenture. Interest you have to pay separately. 105 is only for the debenture. You have to pay separately. So now what happens? Bank account debited to investment account. Sale entry. How much? 4,000 debentures. If you do 105, you will get bank account debited to investment account. Clear? But they have to pay interest also, no? Now, what will be the entry for interest? See here, investment account debited to P&L. Why it went to P&L? Because I had purchased the debenture at 100. I sold the debenture at 105. 5 rupees is my profit, went to P&L. 5 rupees profit went to P&L. Now, what about interest? Where is the interest? Here. Bank account debited to interest account. We will get interest for how many months I told? 4 months. How many debentures? 4,000. Interest will always be calculated on face value into 100. At what rate in this question? Into 8%. How many months? Into 4 divided by 12. 10,667. Did we get the interest? 10,667. Yes. Bank account debited to interest account. Are you following this? Clear? No. What about the person who is purchasing it? For the person who is purchasing, money is going. So investment account debited 4,20,000 to bank account. Clear? Then person who is paying, person is paying interest. So interest account debited to bank account 10,667. Did you understand both sides of the story? This is X interest. Again, I am telling you X interest means what? Price quoted is excluding the interest. Price quoted is excluding the interest. You have to pay the price for the investment. You have to pay the interest separately. You have to pay the interest separately. That means you have to pay 105 plus whatever pending interest is there. What is pending interest? From the last interest payment date of the company till the date of transaction, you have to calculate. We are on 111. So last interest payment date of the company was 30th of June. So July, August, September, October, 4 months we have calculated interest. Is this clear? Now, what if it is cum interest price? Cum interest price means price quoted is including interest. That means in this 105, interest is already covered. That means if I am going to buy, I don't have to pay anything more than 105. I will pay only 105. In that interest is there. But when recording, don't you think when you are recording, you have to separate them? Why we have to separate? One is capital expenditure. One more is revenue expenditure. One is capital receipt. Other one is revenue receipt. So even though 105 is inclusive, we still have to separate them and record it. Now interest we already know it is 10,667. So now see income interest price what will happen? Bank account debited 4,20,000. You will not get anything more than 4,20,000. 2. Investment 409,333. So now it became 409,333. Out of 4,20,000, 10,667 is interest. Remaining is what you have paid for the investment. So out of 4,20,000, 10,667 is revenue receipt. And 4,09,333 is capital receipt. Is this clear? Now, for the other person, investment account debited, capital expenditure, interest account debited, okay, separately I have shown, interest account debited, revenue expenditure to bank. Both will be credited to bank because money is going anyways. Are you getting this? Now, investment account debited to P&L. How profit changed? Because rate only, value only changed, no. What you paid for the investment, 409,333. How much you had purchased the investment? 4 lakh. 4,000 into 100. 4 lakh you had purchased the investment. That means remaining is profit credited to P&L. Is this clear? Are you following this? Whenever there is a sale, you have to calculate the profit or loss. How will you calculate profit or loss? If sale value is greater than cost, profit. If sale value is lesser than cost, loss. Sir, if you have multiple purchases, what we will do? We will always use weighted average method. Unless they tell FIFO method, we will always use weighted average method only in the question. Weighted average means what? Calculating all the cost, dividing it by the quantity. You will get the weighted average price. Multiply into what you sold. Determination of cost of investment sold. How to determine the cost of investment sold? Only if I know the cost of investment, I will be able to calculate the profit or loss. FIFO or weighted average. Either it is FIFO or it is weighted average. Okay. FIFO means what? First in, first out. So in your investment account, what is there at the top? To balance brought down. That will be sold first. After that, the next purchase, that will be sold next. After that, the next purchase, that will be sold next. That is FIFO method. So you know the cost of individual item, you can calculate the cost. Weighted average cost what? Whenever it comes, no problem, we will average everything and calculate the price. Now, interest calculation. From previous interest payment date to the date of transaction. Every transaction in investment account, please remember this. That time you will never go wrong. Opening balance, closing balance, anything. Every time you have to fill one amount in the interest column. What amount will be filled in the interest column? Whatever is computed from last interest date till the date of transaction. Is this clear? Now, fluctuating income bearing investments. Fluctuating income bearing. Till now what we were talking about? Fixed income bearing investment. Fluctuating income bearing investment is easier. Why? Every transaction you don't have to calculate interest. Sir, every transaction we are not calculating interest because there is no interest, there is dividend. But every transaction we are not calculating dividend also. Why? Because we don't know. See, debenture if I purchase, I know, right? I am supposed to get this amount. Share if I purchase, till the company tells me, I don't know what I'm going to get only. I don't know if I'll get also. Are you getting my point? So, in fluctuating income bearing investment, same format you are going to use. Instead of interest column, you will have the dividend column. Instead of interest column, you will have the dividend column. But you will use this dividend column only when dividend is received. Dividend won't be calculated in each transaction. It will be recorded only when it is received. Is this clear? Are you following this? Any doubts with this? No. Next, journal entry. You purchase the investment. What is the entry? Purchase the investment. Investment account debited to what went from your pocket? Money went. Bank did not go. Money went. So you will write to bank account. Bank is still there only. Where will bank go? Yes. Sale of investment. What will be the entry? You got money. Bank account debited to investment account. You got money. Bank account debited to investment account. But you have to calculate profit or loss and transfer to P&L. Calculate profit or loss and transfer to P&L. Is this clear? Are you following this? Any doubts with this? No. Now, after that, bonus shares are received. Sir, wait, sir. No entry you have written. Wrong. Yesterday we learned full bonus issue topic only. There the person is issuing shares. Here the person is receiving shares. Bonus issue, no entry at all. But it will be recorded. How? In investment account, you will go and write to bonus issue. No account, don't write account, there is no account only. To bonus issue, just like a description, to bonus issue, and fill the amount only in the nominal value column. That means we are telling our quantity of shares has increased, but there is no impact on the amount. Is this clear? Whenever, see, in investment account, debit side, to bonus issue. Sir, you didn't write account. There is no account. It's not a ledger posting. It is just a description. So you'll write to bonus issue and enter the amount in nominal value column only. That means your quantity has increased. Bonus issue means what? Shares issued for no consideration, right? I didn't pay even 1 rupee, but I got the shares, right? So you will enter only in the nominal value column. You will not enter in the amount column. Why you are entering in the nominal value column? To increase the quantity. Is this clear? Why we are not writing account? Because there is no journal entry that is passed. So no posting can happen. Clear? Now, right shares. What is right shares? Shares issued to existing shareholders for a consideration. Shares issued to existing shareholders for a consideration. We have a company called as Shiva Limited. Okay. And you have all these shareholders. Shiva, Darun, Amarnath, Preeti, Kamya, Anusha, Adi, VD, Meha. All these people are there. All are holding, what? All Coimbatore people. Yes, all are holding 2 shares each. Somebody, one of them was Chennai person. I don't remember who it was. One of the student was Chennai, did foundation in Chennai and then decided to go to Coimbatore. Peaceful it is. Cool, man. The weather is so nice in Coimbatore. Chennai, we know, right, how it is when we go outside. Coimbatore weather is very nice. Yeah. Coimbatore weather is very nice. You will not sweat. I cannot tell that it is Bangalore, but it is something similar. From Coimbatore, 40 kilometers is Ooty. Or not 40. 60 kilometers or something is Ooty. Arey, you cannot compare Chennai with anything. Yes, shares offered to existing shareholders for a consideration less than market price per share. That is called as right shares. Now, right shares offered 1 share for 1 share. Now, understand this. Listen. Shh. Right shares, no, for us nothing. I'm going to pay money, buy the shares, over, finished, end of story. But whenever right shares are offered, I will sell something. What is that? Sale of right. If one person is not interested, what he will do? Somebody is interested more than what is given to them. 1 share for 1 share. No, everybody has chance of buying 1 share. But I want to buy 2 shares. And Karthik Raja does not want to buy at all. So what Karthik Raja did? Karthik Raja gave her right to me. Online guys, Karthik Raja is a girl, by the way. They are thinking, sir, your gender change is happening. Karthik Raja, her you are telling, no, it's a girl. Karthik Raja will give her right to me. So what will I do? I will pay some amount. Okay, not the share amount. This is not sale of right shares. It is not sale of right shares. It is just the sale of right. Not the share. Only the right I am giving to somebody. Imagine company tells me, I can buy 3 shares. I can buy 3 shares. 2 shares I am interested. I will pay money and buy it. 1 share I am not interested. Darshan wants to buy that share. So what I will tell Darshan, I am not giving the share to Darshan. I am giving this right to Darshan. I told Darshan, pay 3 rupees. Pay 3 rupees, I will give you the right. So Darshan paid 3 rupees and took the right. Now using that right, Darshan will go and buy the share. Now, someone is outside. Okay. Can I sell that right to them? No. Because right shares concept only will be gone that time. Shares offered to existing shareholders. So existing shareholders can sell the right among themselves. You can't sell to an outsider. Then the concept of right share only is gone. No, it become public issue that time. Are you getting my point? Okay. So, if a person is not interested, they will sell the right to outsider, not allowed. But if you are selling the right to insider, then it is allowed. Clear? Journal entry. Right shares offered by the company. What should be the entry? No entry. Why? They just gave you offer. Did you do anything with that offer? No entry. Shares are purchased. What should be the entry? Investment account debited to bank account. Shares are purchased. You paid money. You got investment. Sale of right. Sale of right. What should be the entry? Bank account debited to sale of right. Bank account debited to sale of right. If you sell the share, you will write bank account debited to investment account. You are not selling the share. You are only selling the right. You will write bank account debited to sale of right. Other income, it will be in P&L. Its other income will be transferred to P&L. Not to enter the investment account. Why it will not enter investment account? Because it has no connection with investment account at all. Okay, now dividend is a very important topic, which we already discussed in consolidation. Dividend is a very important topic. We already discussed in consolidation pre-acquisition dividend yesterday. Now you are going to tell me, today I purchased the shares. Tomorrow I got the dividend. This is pre-acquisition or post-acquisition? Not post. It is pre-acquisition. Don't see my hand action. Today I purchased the share. Tomorrow I got the dividend. I got the dividend tomorrow, but the dividend is for the previous year. It is considered as pre-acquisition dividend. Now see over here again. Okay, I think I have not given the description here because it is there in consolidation. I will just tell you the description again. Pre-acquisition dividend is dividend received in current year. Correct? For previous year. But previous year you were not the owner. Now imagine, dividend received in current year. Previous year I was owner only. Then it will become post acquisition. No. Dividend received in current year. Previous year I was owner only. Then it will become post acquisition. Dividend received in current year for previous year. Previous year I was not the owner. That becomes pre-acquisition dividend. That means dividend received for the period when I was not even the owner of the shares. What is post acquisition dividend? Dividend received in current year for the current year or for the previous year when I was owner. When I was owner. Clear? This is the situation. Is this clear? Are you following this? What is the treatment for pre-acquisition dividend? Reduce it from the cost of the investment. Reduce it from the cost of the investment. So therefore, please tell me what should be the entry? Bank account debited to investment account. Amount is received, bank account debited. Investment is gone, investment account credited. Now post acquisition dividend. Dividend received in current year for the current year or for the previous year when you were the owner. So bank account debited to dividend account. Do you remember you have a dividend column in the investment account? Enter it over there. Then from there it will go to P&L only. From there it will go to P&L because it's income. Is this clear? Next. Done. That's it. That is it with your investment account. Okay. You have to go and practice. Of late, they have not asked much questions from investment account. Earlier, it was like a regular question from investment account. Of late, they have not asked anything. So it is your responsibility to go and we'll solve one problem maybe. I think no need of problems for investment account. You should be able to practice that. When we go into standards, it's not possible to solve problems for standards. We'll discuss. Yes. We'll take a break for breakfast. What? When will we? Oh, 23 to go. Okay, guys, let's continue. Let's begin with standards now. See, CA final, I don't know. Audit is actually easy only, I guess. But for me, it was very difficult. Okay, I am not a person who liked theory subjects. So for me, it was very difficult. CA final law and CA final audit. It was very, very difficult for me. I couldn't. Okay, now there was one attempt. Okay, when I got exemption in FR and AFM both. Okay, FR I got some 70s, AFM I got 60s, both exemption I have, and I had 2 months remaining for the exam. After results, 2 months were there for the next exam. So everyone in the world, whoever I met, my parents, friends, relatives, anybody who I spoke to about this, they told you should write both groups because you have 2 exemptions. Okay, you have only 2 papers in first group. Second group you have 4 papers. You can clear in set off also. You should write both groups. But I knew my capacity in law and audit. Okay, so what I did, I told yes to everyone, but then I registered for 1 group only. Exam registration I did for 1 group only, and 2 months. Listen, 2 months. Like I did not like waste time also. 2 months every day, 8 hours, 9 hours a day, I studied law and audit every day, because I'm like, I have 2 exemptions. No, I should not lose this opportunity, because before that I have come close. I have gotten 195, 197 and all and failed. So I know that pain. So I'm like, I should clear group 1. 2 months I studied fully, only law and audit. I got 41 in law, 43 in audit. If I have written both groups, pakka fail. Okay, I knew that. That's why I didn't listen to anyone. Huh? 2 months I studied completely theory subject. And guess what? Even though I studied 2 months completely theory subject, I only studied around 70% of the paper. Because I know, see, you should study everything, okay? I knew my capacity. I cannot retain so much theory. So I thought I will study less theory and retain everything instead of studying everything and retaining less. So I used that strategy. Okay, 70% of the paper I studied, and I attempted also, I think around 60 or 65, 66 marks I attempted. But what I attempted, I wrote beautiful answers. Because I had read that like some 8 times I have revised it. Okay, previous attempt I have studied law and audit. This attempt I just went on revising. Same thing I'm reading again and again. I'm like, I don't want to fail at all. Still I got 41 and 43. If I would read both groups, I would be in 30s. 10 rupees I would spend then. Getting the paper through RTI. 10 rupees they charge, no? Yes. So, okay guys, let's study. That is dinner time. Dinner is very easy. Only lunch stuff. Dinner is very easy. Trust me, dinner is very easy. Huh? When we are in inter, we'll feel inter is difficult. When we are in final, we'll feel final is easy. Final is easy. See, actually it's easy. I'm telling you, it was difficult before. 8 papers were there. Now it's actually easy. Why? Only 6 papers. But actually it's 6 minus 1. Only 5 papers. Only 5 papers are there in final now. The 6th paper is just the 5 papers combined. Open book. Take all your first 5 paper books in one truck and unload it at the ICAI exam center and take it inside. Literally, you have to take all the first 5 subjects. People are taking in suitcase and all. So much books are there. Okay, the 6th paper is 4 hours and it is open book and it's a multidisciplinary case study book, case study exam. That is, all 5 papers are there covered in that. So basically, if you study 5 papers properly, you'll be able to pass now. It is 5 plus 1, 6. Full focus on 5. Huh? What? SPOM, yes. That what is that? When you know you have to write exams and when you have to write things, attempt anything for not exams, you'll be able to pass. SPOM you'll pass, man. No tension at all. Because I say we'll give only 2 close answers. 2 will be looking at it only, will tell this is not the answer. I feel it's not going to be a problem. Easily people are clearing that. Maybe once sometimes some people are failing, then 500 rupees they pay, again they register, next time they clear. Yes, guys. Let's continue. That is dinner time. We'll see later. At dinner time only we will see all that. Huh? Can we take? Yeah, everything you can take. Whatever, handwritten notes, chart book, anything you can take. Everything you can take to the exam. Think of ICAI. Think of ICAI. They're giving you open challenge. Get everything. Get what you want. I will test you. Mobile you can't get. Yeah, if you take mobile, you can just search no keywords directly. Not even keyword. You can go to ChatGPT and ask the answer. It will give. Yes, mobile and all not allowed. Okay, 5 papers are there. That's it. See, 1 paper is there called FR. Okay, which is equivalent to 4 papers. Financial reporting, I think, has some 5 modules or something, or 4 modules or something. Audit in group 1, audit has couple of modules on its own. 2 books are there. AFM is there, which has only 1 module. AFM is only one module. It's actually the smaller subject of the group. But people struggle in AFM only actually. I don't know why. Because so many new calculations. DT and GST are 2 different papers. Finally, it should have been at inter level only, but it is different in final level now. DT, obviously, you know, at least some 4 modules will be there in DT. GST might be a couple of modules. DT is not going to be difficult. Okay, it's just going to be vast. It is not. It is not going to be difficult. It's just going to be vast. Trust me. If you tell me no, I will put you back in time and I'll put you on the previous day of an exam. Any exam, previous day is difficult only. Okay, but I'm like everything when I think, no, I'm like, okay, previous day of CA Inter Law exam, I think I can manage revising it. Previous day of CA Inter Tax, CA Inter Audit, okay, CA Inter FMSM, I think I can manage it. When someone tells me, I will take you and put you on the previous day of CA Final DT, I'm like, no, I want to leave this world. Ooh, that is a challenge in its own. It's a different level challenge. CA Finals DT studying, beautiful. I love that subject. But CA Final DT previous day revising, the pressure, every chapter you're studying in pressure because you know so much is there and you don't know whether you can finish it in 1.5 days. When you finish DT, there is 30 marks of international taxation. CA Final DT revision is the trouble. Studying is not a trouble. It's actually very good subject. Nice it is. And when you go to CA Final, already you would have done all these DT things in office only during articleship. It shouldn't be a problem. But revision, examination pressure is too much. Inter we will finish. Lunch we will eat. Okay. Lunch is kept on the table. Now you just have to eat it now. Standards, guys. Standards, we'll discuss key areas of standards. Okay. First standard that we are going to talk about is AS12. Okay. AS12 government grant. I'm going in an order that is no, that's nothing. Did you see something? Yes, AS12. Okay, let's start. AS12 government grants, accounting for government grants, simple standard. Yeah, we are recording from that time. Okay, AS12 government grants, simple standard. Okay, what is government grant? In simple words, we usually use the word called as subsidy. Subsidy is the common name that we use for government grants. It is help given by government. Non-applicability. When is it not applicable? Government coming. For example, imagine you have a company called as Amarnath Limited and then there is Tamil Nadu state government and then there is CM Vijay. Okay, CM Vijay is there and is telling Amarnath, I will give you money but you have to give me ownership. This is not government grant. It will not be covered under government grant. That means government ownership is not covered. And CM Vijay is telling, okay, no tax for 5 years. Tax holiday. I'm giving you tax holiday. This is also not government grant as per AS12. These two are called as, this one is called as government assistance. This is government assistance and this one is called as government ownership. Okay. Both of them will not be covered under government grant. That is government grant they are only covering where government gives you money and expects nothing in return. Expects nothing in return. Clear? But if you don't follow the rules, then government will come and take it back. Is this clear? No. First one which we have is bailout grant. What is bailout grant? What is the meaning of the word bailout? You're in trouble. Someone has to pull you out of trouble. Who is that someone? CM Vijay. Who is that someone? CM Vijay. He will pull you out of trouble. Bailout grant. Clear? Received when company is in loss. If you are getting something to cover your loss, that means it should be your profit. So the entry will be bank account debited to P&L account. It is covering your profit. But all grants, tell me one thing, all government grants, government expects from you to follow some rules. Correct? Follow some rules. They're like, follow the rules, what I'm telling you. If you don't follow, then I'll take the money back from you. If they take the money back, now it's a loss. P&L account debited to bank. P&L account debited to bank. Refund. Is this clear? This is your bailout grant. Now, income grant. Income grant. Income grant means what? You are not in trouble. Okay, reward given by government. You are doing very good. So CM Vijay. What CM Vijay does, gives you one gift, telling that you have done very good job. So I am giving you gift to appreciate your efforts. Clear? Now, received, bank account debited to P&L, refund, P&L account debited to bank. Clear? Same thing. What is the difference between this and that, sir? Here, both the places, the entries are same. But here the grant was given to bring you out of loss. Here the grant is given because you are already doing good. We are appreciating your efforts. Clear? Expense grant. Expense grant. Amarnath is there. Okay. He has to pay salary to his employees. Clear? And CM Vijay is here. What CM Vijay is doing? Okay, there is COVID. Huh? Again, no. In the example, it is there. COVID. It is spreading. Okay. Now, 5,000 is given by government to cover the salary expense. This is not that simple as the first two. Here you have to be careful. They are giving you money for what? Covering the expense. That means till you pay the expense, you cannot take it as income. So, amount received, you will pass the entry. Bank account debited to liability, deferred government grant. Bank account debited to liability, deferred government grant. Why? Why? Because it is like income received in advance. Income received in advance is liability, right? So you didn't receive it. I mean, you received it, but you didn't use it yet. So you'll show it as liability. When the expense is paid, you'll pass the entry expense account debited to bank. Expense is paid. Now what you will do? P&L account debited to expense. That is your normal. Now what will you do with this government grant? Already somebody has given you money for this. No. Liability account debited to P&L. If you notice over here, what happened? Expense is debited to P&L, but this expense is already covered by the government. They gave you money for that. So expense is credited to, amount is credited to P&L. Can you see impact on you is nil? Impact on you is nil. But don't put it to P&L till you use the money for that. Because if you don't use, government will take it back. If you don't use, government will take it back. Clear? Non-monetary grant. Non-monetary grant. You have Amarnath again and you have CM Vijay. Clear? We are manifesting for you guys. Okay, CM Vijay is there and he is giving you one plant and machinery. This is the machine. Okay, wiring system that is inside. Okay, he has given you one machine. What is the market value of that machine? 5 crore. But CM Vijay has given it for free. He has given it for free. Should you show that machine in your books is the question. You got it for free. So will I pass the entry? Asset account debited 5 crores. It will not be 5 crores because you didn't spend money. So, but you can't ignore also. If you ignore, what will happen? Machine won't be there in the books only. If machine is not there in the books, imagine products are getting manufactured. Machine is not there in the book. From where is the product getting manufactured? Is it falling from the sky? No. So you have to disclose, right, from where you are getting the assets. From where you are getting your goods. So you'll pass the entry. Plant and machinery account debited 110 nominal value. Okay, 110 to capital reserve. Sir, how to decide, sir, 110 or 100 depending on the size of the business. If it is having rupees in lakhs, then you can't show 1 rupee or 10 rupee. Doesn't make sense at all. It will get rounded off to zero only. Rupees in lakhs. Then you have to at least take this entry at 50,000. That time it will get rounded off to 1 lakh. Is this clear? This you are doing just to show the asset in the books. When you don't follow the conditions, CM Vijay will come back and he will take the machine back. Return of machine. Capital reserve account debited to plant and machinery. Is this clear? Are you following this? If we are not incurring, yeah. Selling. When you sell, no, CM Vijay will come. You are supposed to use for your business. That's why they gave. You are not supposed to sell it. If you sell, everything is profit. Sometimes what they will tell, tell 8 years of lock-in. Lock-in period of 8 years. 8 years you should use it for your business. Only after that do whatever you want. I will not ask you. That time if you sell, in your books, asset is there at some nominal value. Let's assume it's at 10 rupees. You sold, and when you sold, no, you got 100 rupees. 90 rupees is profit. No, no depreciation. Depreciation is what? Basically spreading the cost across the life. No, we don't have cost only here. Depreciation is what? What I have spent. I don't want to show it as expense in 1 year. I will show it in many years. I don't have cost only, no, here. So there won't be a depreciation situation in this case, because you are just bringing it into the books so that it is visible. Just to make it visible, you are bringing it into the books. Clear? If conditions are not followed, it will be returned. Yes. After that, we have Amarnath again. And we have CM Vijay. Correct? CM Vijay has given one plant and machinery, but CM Vijay this time he is not that nice. Okay? He gave the plant and machinery, but at a concessional rate, not for free. Market value was 5 lakh. He gave it to you at market value was 5 crores. Oh, actually I was talking about reality by mistake. Market value 5 lakh, he gave it to you at 1 crore. Market value, hypothetical situation, market value 5 crores. Amount paid is 1 crore. Okay, 1 crore. Nothing to worry. You got one asset, you paid 1 crore, pass the entry. Plant and machinery account debited to bank. 1 crore. 1 crore, not 5 crore, 1 crore. Because what you spent is only 1 crore. Clear? Useful life is 5 years, depreciate it. Now depreciation will be there because cost is involved. Clear? Asset is returned. Asset is returned. What will you do? P&L account debited. Okay, to asset account at book value. What is this? P&L account debited at book value. Why? Imagine 100 rupees asset. 100 rupees asset. Okay, minus 60 rupees already depreciated. Right now it is showing 40 rupees in the books. 40 rupees in the books. When an asset is sold, profit or loss on sale should be transferred to P&L. Okay, it is sold at what? 0. It is sold at what? 0. They took it away. So whatever is there in the books, it is a loss, right? So P&L debited to asset. Whatever is already treated as depreciation, that is also loss, right? What will you do that time? What will you do that time? Nothing. Are you getting my point? You are not getting the point. See, understand this. Cost of the asset was 100. First year only they did not take. They took it after few years. That time already depreciation is charged 60. Right now the WDV is what? 40. WDV is 40. So if somebody comes and takes the asset away from you, you lose an asset which is 40. You lose an asset which is at 40. If you lose an asset which is at 40, 40 is the loss. 40 is the loss. Are you getting my point? Okay, so the loss will be 40. Sir, what about that other 60? Other 60 is already debited to P&L in the past only as depreciation. Is this clear? Okay, asset returned to government after 3 years. No, cost is 1 crore. Yes. Okay, asset returned to government after 3 years. What entry will you pass? P&L account debited to PM. See this only. 0.4 crores. 40 there I took. This is 0.4. Now, grant received as promoter's contribution. We have Amarnath again. And we have CM Vijay. Correct? CM Vijay told, don't worry anything. You don't even have business. No problem. I will give you 5 crore. You start the business. I will give you 5 crore. You start the business. I will become owner. Then no AS12. If CM Vijay tells, I will become owner. No AS12 that time. Why? Because it becomes government ownership. He told 5 crores take. You start the business. I will not ask you any questions. Okay, small conditions I have. That if you don't fulfill, I'll take the money back. Okay, 5 crores. Is this clear? Now, bank account debited to capital reserve. Amount received as promoter's contribution in AS12 will always be credited to capital reserve. If at all there is refund, capital reserve account debited to bank. Amount refunded. Is this clear? Till here, it's actually light. This is the lighter area. Calculation part comes when we have depreciable asset. Where did it go? Depreciable asset. See, every time one person won't be in power, no? Sometimes in Tamil Nadu, especially earlier history of Tamil Nadu was once Jayalalitha, next time Karunanidhi. Then Jayalalitha, then again Karunanidhi. That was how it was. Nobody came back to back. It will always change. So CM Vijay gave all these things. Take. Then comes CM Ajit. CM Ajit. Sorry. Padma Bhushan CM Ajit. Ajit Kumar. Okay, now method 1. Okay. What? I am not fan of both. I am not fan of Vijay also. I feel I don't like Vijay's act. I mean, I don't know whether he acts only, first of all. Okay. Vijay does amazing acting on stage. Recently, that political campaign, what an acting! Crazy it was. I was like, if I was a voter, I'll 100% vote for Vijay. It was like goosebumps I got when I saw that. Like, crazy acting was there. But in movies, in Tamil Nadu, like right now, in Tamil movies, only 2 people I like. I mean, acting. Obviously, no, automatically we will always like Rajini for that star, that mass thing, okay? Taking pull-ups in the first scene of the movie, but only showing upper body, because lower body 2 people are pushing like this. Stool is there, we don't know. So, only upper body they showed in the pull-up. Okay. But Rajini, obviously you can't hate Rajini. Vijay Sethupathi, amazing acting. And then we have Kamal. Kamal, you should only watch movie. You will watch movie, you will go home. Don't watch any Kamal interviews. Because first of all, you will not understand what he's trying to tell. Upon that, you will lose that respect for the movies. So just watch Kamal movies. Amazing acting. There is no question about that. Then go home. Any promotion video, interview, nothing. Especially when election is coming, don't listen to Kamal at all. We don't know what he's telling only. Whether he's telling vote for his party, vote for other party, we don't know. When his party started, when his party ended also, we don't know. Yes, but hey, as an actor, you can't tell anything against Kamal. What acting, man. Crazy. Vikram movie and all. Vikram movie is recent. You see his old movies. There is one movie called as Anbe Sivam. You should go and watch. Watch his acting in that. Then you hate Kamal, no. Then you should not watch movies only. Yes, crazy acting in that. Yes. Kerala guys. Fahad Fazil also was there in Vikram. Amazing. Yes. Depreciable asset. Method 1. Reduced from the asset. What is happening? When you get the asset, you will pass the entry. Here, depreciable asset means you are not getting the asset. They are giving you money towards the asset. This is the most common one, especially agricultural field and all. This is the most common one, which is called as subsidy. It is called as subsidy. What happens over here? They will tell you go and buy. You go and buy the asset. Okay, show me the bill. I will give you 40% as subsidy. Clear? So now here what happens? Cost of that asset is 8 lakhs and we are getting 5 lakhs. Useful life is how much? 3 years. Useful life is 3 years. What is the journal entry you are going to pass? Asset account debited 8 lakhs to bank 8 lakhs. You spent 8 lakh, no? Then are you getting 5 lakh back from the government? Yes. So you'll pass the entry bank account debited 5 lakh to asset account 5 lakhs. Asset value reduced. Because method 1 was what? Reduced from asset. Reduced from asset. Clear? Then what you are going to do? End of year 1, year 2, year 3. Every year the asset will get depreciated. You will pass the entry depreciation account debited to asset account. So useful life they have given. That means straight line method. Cost minus scrap value divided by useful life. Cost minus scrap value divided by useful life. Clear? Now, what? Scrap value is called as residual value. By the way. Yes. P&L account debited to depreciation. Next. Done. After 2 years, let's assume after 2 years, Linu had to refund the grant of 1,30,000. Okay. Why? Did you ask why? Because you have used that machinery for personal purpose. They gave you a machinery with which you are supposed to manufacture chips. Let's assume you use that chips for your brother's wedding to manufacture chips. Clear? That amount they will do. They'll take it personal purpose. So now refund of grant. So always some conditions will be there. Usually government put simple conditions only, which you are expected to follow. They are helping you because you should use it for some particular purpose. If you change it, then they will take this thing. They'll ask the money back. Here they can't ask the machine back, no, because machine was not given by them. Remember, machine was given for free. They'll take the machine back. Machine was given at concessional rate. There also they can take the machine back. But here they are not giving the machine at all. You are buying the machine and they will give you a small percentage. Clear? Now, after 2 years, if Lino has to refund the grant 1,30,000, now what entry will you pass? When you got the grant, what did you do? Asset value reduced. Now, asset value will increase. Asset account debited to bank account. When you got the money, you reduce the asset. Now you are giving the money back. You will increase the asset. Asset account debited to bank account. Clear? Now, third year depreciation. 2 years are over. No, third year depreciation. Understand this. 8 lakh was the cost. 5 lakh you got government grant. 5 lakhs you got government grant. 1 lakh depreciation is gone in the first year. 1 lakh depreciation is gone in the second year. Then the government grant becomes refundable. So you added 1,30,000 again, divided by remaining useful life. How much is the remaining useful life? 1 year. Remaining useful life is only 1 year. That time you will get 2,30,000 as the depreciation. Is this clear? Are you following this? What is the doubt? Maybe the example is different now there. Yeah. 5 lakh. Yeah, first year depreciation 3 lakh. 3 lakh minus divided by 3. How did we get 3 lakh? 8 lakh minus 5 lakh. Yeah, divided by 3 years. Yes, it's not getting double. Don't think it's double. If I start with 3 lakhs, then this will not be there. Directly 3 lakh minus. Okay. Now, government grant is received. Okay, treated as deferred government grant. Okay, government grant is received, treated as deferred government grant. This time we have CM Rajni. We have CM Rajni over here. Okay, Sastika is there. Okay, 10 lakhs. What is the cost of the asset? 15 lakhs. How much is the government grant? 5 lakhs. 10 lakhs. Okay, useful life is 3 years. Now, understand this. Here what is going to happen is, when you get the money, you will not reduce the asset. Asset will be like that only. But whatever money you get, you show it as deferred government grant. Whenever it is a deferred income, it will be taken as a liability. Deferred government grant will be a liability. Clear? Now, when you get the asset, what entry will you pass? Asset account debited to bank, 15 lakhs. There is no doubt about that one. Asset account debited to bank. Okay. When the government grant is received, last time what you did, bank account debited to asset account. Now what will you do? Bank account debited to deferred government grant. Can you see liability? Again, the net result is becoming like last time only. Net result will be still same. Okay. Year 1, year 2, year 3. You will pass depreciation. What will be the depreciation? You will not do 15 minus 10. Because minus 10 did not happen at all. You will do 15 only divided by 3 years. If scrap value is there, please put the scrap value as well. 15 divided by 3 years. 5 lakh is the depreciation. There shouldn't be any doubt about that. Clear? Next, depreciation will go to P&L. P&L account debited to depreciation. Now what you will do? Whatever that deferred government grant is there, no. Deferred government grant, you will transfer it to P&L. Whatever deferred government grant is there, you will transfer it to P&L. How much is your deferred government grant? 10 lakhs divided by 3, 3,33,333. You will transfer it to P&L. So you will pass the entry deferred government grant to P&L. You will pass the entry deferred government grant account debited to P&L. Is this clear? Now, after 2 years, let's assume that the government grant becomes refundable. Now what will you do? If it is refundable, when you got the grant, where did you put it? You put it to deferred government grant. When you are refunding, what should you do? You should take it from deferred government grant. But understand this, in deferred government grant, out of 10 lakhs, first year you removed 3,33,333 and you put it to P&L. Second year you removed 3,33,333 and you transfer to P&L. Third year is not over yet. That means still 3,33,333 will become 334 because 1 rupee rounding off. 3,33,334 is there in deferred government grant. Take it from deferred government grant. Remaining you transfer it to what? P&L. So whatever you require more than this, you will remove from P&L. Debit P&L and transfer to bank account. Is this clear? So understand this. When, okay, understand this. First method, government grant is received. Government grant is received. What you are going to do? Government grant is received. What you are going to do? You are going to reduce the asset. You are going to reduce the asset. Then depreciation will be on reduced value. Depreciation will be on reduced value. If government grant is refunded, what will you do? You will add it back to asset. Then depreciation will be on new value. After adding back what value is it? Depreciation will be on that value. Second, when government grant is received, what you will do? You will credit it to deferred government grant, and every year you will transfer to P&L. Okay, every year you will transfer to P&L. Deferred government grant. What you will do? Deferred government grant. Now understand this. Deferred government grant, okay, is going to P&L, but asset is at full value. Asset is at full value. So depreciation will be on that full value. If there is a refund, then debit the deferred government grant. Whatever balance is there, extra will go to P&L. Extra will go to P&L. Is this clear? Yes. Huh? Take it. Yeah, debit it to P&L. Take it from P&L means, yeah, go to P&L means debit it to P&L. Yes. Okay, that is your AS 12. Hey, wait. Lot of standards are there still. Now, till now. Okay, we finished AS 14 first, which is amalgamation. AS 21, consolidation. AS 3, cash flow statement. AS 13, accounting for investments. AS 12, government grants. That means we have finished 5 standards. We have 27 standards. That means we have 22 to go. Huh? No, AS1 we have not completed it. AS11 part, that part is not only full completions. Okay, AS22. 22 standards to go. 22 standards are there which are remaining. Correct? Yes. What? What do you mean you have to study theory? I didn't understand. See, without studying theory, how will you write the answers? Yeah, you have to. I mean, this obviously you don't have to study. Nothing is there in that. Theory, yes. Fixed price contract definition. You have to read it, because if at all they ask a definition for 4 marks or something, you should know it. Okay. See, some standards are completely theoretical. No. Some standards are practical. Okay. Let's go to the next one. Yes, you have to study theory. Let's go to the next one. AS7, Tala for a reason. Next one, AS7, Tala for a reason. Yesterday, Tala played well. But always, he hit some sixes, right, yesterday? 3 sixes. But match was already gone. But at least yesterday he came before Jadeja. 3 down he came, huh? 3 down. Okay. Let's continue. Tala for a reason. Next standard, guys. All MSD fans. Okay. Anyway, CSK went down. Now CSK last, huh? 9th place. Only because of net run rate, I think SRHS is down. Other day they lost in like with 4 hours. Whose match today? Tomorrow is RCB match. 10th. Where? Yeah, I think RCB match is in Bengaluru. I only watched Chennai versus RCB other day. That's it. It was a very good match. Amazing win by RCB. And from 5 o'clock to 7:30 we were outside the ground. Pass your phone. Yes, AS7, accounting for construction contract. Okay, now understand this. When we are talking about construction contract, it is basically you're constructing immovable property. Immovable property. Now, we have one person called Aryan with amazing hairstyle. Okay, and then there is one person, Rizwana. She has colored her hair blue. Red and blue. Yes, you have not seen people with blue hair. I have seen. Red also is there. Very common color. It is. Okay. Now, Aryan is telling Rizwana, I want one house to be constructed. That means Rizwana becomes the contractor and Aryan becomes the contractee. Is this clear? Contractee. AS14 is not applicable to contractee. AS7 is not applicable to contractee. AS7 is applicable only to contractor. Why? For contractee, it is fixed asset. AS10 will be applicable. Property, plant and equipment. For contractee only, contractor. Oh, okay, contractor. Okay, for the contractor it is revenue, right? Sir, if it is revenue, just follow AS9, sir. Revenue recognition. One standard is there. But there they said not applicable. Follow AS7, they said. Are you getting my point? Okay, because it becomes very difficult to calculate for contractor because house construction might go for 2 years, 3 years and all. That time we cannot take the revenue in the third year. It is injustice that time. Okay, that's why they said AS7 you have to follow. Why AS7 came into existence also I have written over here. Why AS7 came into existence? See the revenue. 5, 10, 85. Usually like this. Now imagine you're constructing a flat. You're constructing a flat. That time what will happen? Most of the flats will get sold maybe in the third year. When it's completed, more flats will be sold. So first year pre-booking, second year pre-booking, only little. Last year everything is sold. Correct? But expenses there every year. Expenses there every year. Can you see? In fact, the expense is less in the last year. Absorption. Now here, loss, huge profit. Loss and huge profit. This becomes very tough to compare. It's not possible to compare the results at all. There might be a person who is constructing one huge 100-story flat, 100-floor building. It might go on, construction might go on for 7 years. 7 years you'll be showing loss, last year you'll be showing profit. 6 years you'll be showing loss and last year you'll be showing profit. As an investor, looking at this, can I predict anything? If I see loss, I think it's a loss-making company, then they'll make huge profit. Oh, I think profit-making company next year again they'll make loss. If I record like this, clear? That's why they have introduced something called as percentage of completion method. AS7 percentage of completion method. Now, Aryan will go and tell, I want a house to be constructed. Here I am talking about the two types of contract. Two types of contract are fixed price contract and cost plus contract. Aryan will tell, I want a house to be constructed. Okay, so the other person will tell, okay, give me 50 lakhs. Give me 50 lakhs. I'll construct the house. This is called as fixed price contract subject to escalation clause. What is this escalation clause? What is this escalation clause? When I'm telling you 50 lakhs. When I told you 50 lakhs, I did some calculation in my head, no? You think randomly I told, oh, 50 lakhs. Randomly, I calculated, no? Cement, steel and all, so much money I'm going to spend. That means so much money I can get. I quoted one price, correct? Whatever I quoted, that can go wrong. Tomorrow something happens, cement price goes up. Labor rates are up. People are not there to work. That's why they put one clause called as escalation clause. That means if price gets escalated, price go up, I should be safe, no. Otherwise, what will the contractor do? When contractor knows that, when contractor knows that they are not able to complete, they will leave half and go. In the city, you will see many places half constructed buildings because of dispute and these kind of things. Clear? So that is why always escalation clause is important. Now, if Aryan tells, I want a house, but I am only going to tell you which cement to use, which steel to use. Okay, I will tell you, then only you buy. Okay, that time it can be cost plus contract. Cost plus contract, whatever cost is incurred, this person might tell, give me 20% more. Whatever cost is incurred, they might tell, give 20% more. This is called as cost plus contract. Now, we go into the next thing, contract revenue. Contract revenue. You know, in this entire standard, what we are supposed to do? Contract revenue minus contract cost will give you contract profit. Finished. That's it. That's the standard. Now, imagine we have one person called as Darun. Okay, we have one person called as Darun. He wants one house to be constructed. He wants one house to be constructed. So what he will do? He will go to one person called VD and tell, VD, can you construct one house for me? VD told, okay, I will construct the house. VD told, I will construct the house. Now, 50 lakhs. He told 50 lakhs. This is called as initial amount agreed. Initial amount agreed. Do you agree that this is contract revenue? Yes. Is it contract revenue? Yes. Now, understand this. Okay. Understand this. Imagine this fellow is the contractor. Actually, I only got confused. Who is the contractor? Who is the contractee? Okay. This fellow is the contractor. Now, imagine when something was getting constructed over here, government came and saw and told, this is the road, your building should have been only till here, you have come little front, you have to pay 5 lakh rupees penalty. 5 lakh rupees penalty. So now what will the contractor do? Contractor has paid the amount now, but he will claim that amount from the contractee. I paid 5 lakh as the contractor, but I have to get that back. So now for me, revenue will be 50 lakhs plus 5 lakhs. I have to get 55 lakhs. Is this clear? Are you following this? So what and all is included? Initial amount agreed and also any claims. Now next, understand this. Okay, imagine there is a customer called as Ajay. Okay, what did Ajay do? He told construct the house and he went. He told construct the house, then he went. Okay, after telling to construct the house, he went to Kerala. After telling to construct the house, he went to Kerala. In Kerala, lottery is legal. Okay, so he took one lottery ticket. Okay, when he took that lottery ticket, he got one huge lottery winning. 1 crore he won. 1 crore. When he got 1 crore, still he did not do anything. When he got 1 crore, what did he do? He went to France. He went to France and he is standing in front of the Eiffel Tower. This is the Eiffel Tower, by the way. You thought Burj Khalifa that time. Okay, but it is Eiffel Tower. Okay, standing in front of Eiffel Tower, but he's single. Single person standing in front of Eiffel Tower, he didn't know what to do. Okay, couples when they go, you know what they do. Okay, single person standing in front of Eiffel Tower, he didn't know what to do. But he saw there was one more girl, single, who was standing there. She also had come alone over there. So then, love at first sight. Okay, they met. Then, now he is like, this small house is not enough for me. Okay, I am first of all a winner of 1 crore lottery and I have one girl from, one French girl I am getting to India. Okay, so now I need one more floor. So he told the contractor, okay, construct one more floor. Will the contractor construct the same thing at 50 lakh only? No, this is called as variation in contract work. Variation. When there is a variation, obviously additional money will be there. That is also contract revenue. So initial amount agreed, any penalties that the person has paid and the variation will also be taken as contract revenue. Clear? Now, but Ajay is a very strict person. Very strict person. He is like, he proposed to his girlfriend and he wants the house ready on one date. 1st June, he wants the house ready. He has already told his girlfriend that we will get married on 31st of May and 1st June we'll go to our brand new house. Clear? Brand new house will go on 1st June. So he told the contractor, I want the house ready on 1st June. If you complete the house on 1st June, I will give you 10 lakh rupees extra incentive. 10 lakh rupees extra incentive I will give. Is this also contract revenue for Darun? Contingent. It is contingent. If he feels that he can complete it, he will take it as contract revenue. There are questions in your material where they will tell you about this and they'll tell you when the contract started, he had full hope that, full, certainty, not hope, full certainty, that reasonable certainty that the contract will be completed in 2 years, 10 months, something like that. Huh? Virtually certain, not 100% certainty, 90%, yes. Now, 1st June, he told, if you are going to complete, I will give you incentive. So all this incentive, variation, penalty, initial amount, everything will be taken as contract revenue. Is this clear? Now, government officer, that fine thing. Okay, contract cost. Contract cost. Now there is one person, same Darun is there, and one guy called Anthony. Contract cost. What and all is contract cost? Amount spent on the house directly. That is contract cost. Penalty that you paid. That is contract cost. Because you paid that penalty, you are recovering that penalty. That's why it was there in revenue. And interior contractor is also there. That means subcontract. If you did subcontract, that is also contract cost. Okay. There is one supervisor who is there. That is also contract cost. Whatever directly or indirectly spent on the contract is all going to be considered as contract cost. Now, what is this fine? Imagine here Ajay had told, no, within 1st June, if I do it, I will give you incentive. Now, if he tells, if you cross 1st June, then I will cut 5 lakh and give you. I will cut 5 lakh and give you because my promise went bad over there. Okay, so this 5 lakh is called as fine, not variation, fine. Okay, that also will be considered as contract cost. So basically, indirectly, they are trying to tell you whatever is spent, everything. Whatever is attributed to the contract, everything. So this general cost, what is this, sir? General cost. Now imagine, this is the house that is getting constructed. Here you have your office. As a contractor, you have your office over here. And here you have kid who is going to pass all the journal entries and calculate the profit as per AS7. Clear? The salary that you are paying to the kid, will it be taken as contract cost? No, because it is not directly attributable. Kid will be doing other accounting work also. Clear? But the supervisor who is going to stand here, supervisor, he is supervising this contract for 20 days and this house for 10 days. He is indirectly required, right? So proportionately you will add it to both the contracts. Is this clear? Yes. Now, accounting for construction contract. Accounting for construction contract, understand this. Revenue. How will you take the revenue? Total contract price into percentage of completion. This is the method, and one and only one method is there. Now you are like, how to find the percentage of completion? For that we have other methods. One is the formula which we are seeing over here. Other methods are there, which is that survey, physical survey. Go and see 60% completed. But from exam hall, they will not allow you to go out. Are you getting my point? So you can't do physical survey. You have to do percentage of completion only. Simple method, cost incurred till date divided by cost incurred till date plus expected cost or estimated cost to complete into 100. Imagine 2024, 2025. I have spent already 60 rupees on constructing the house. I feel that I will require another 50 rupees. Let's have a percentage that you don't like. Okay, another 50 rupees. So 60 divided by 110. If it was 40, then you would have not used your calculator, no? 54.55%. 545 will round out 54.55%. This is what we are going to do. Clear? So, always percentage of completion. Cost incurred till date divided by cost incurred till date plus estimated cost to complete will give you the percentage of completion. Is this clear? Now, we'll see one example. Imagine my contract price is 150. Contract price is 150. Cost incurred is 50. Expected cost to complete is 50. So, what will I do first year? 50 divided by 50 plus 50. That will make it 50%. Second year, what will I do? 30 divided by, very good. Actually, it is 80 divided by 100. 80%. 30 is the cost of only second year. What was the formula? Cost incurred till date, not cost incurred during the year. Are you getting my point? What is there in front of your eyes is not the reality. You have to think. Yes. Did you understand, Jairaj? Nothing. We thought you were sleeping. We used an opportunity to praise you when you were sleeping. Huh? Whatever, whatever I say is not right. Then you're right opposite no in the exam. Oh, not subject related. What is it, Darshan? You are going and telling your costing sir that the class is boring. You are going and telling the costing sir that whatever you tell, I am not understanding. Then now you are coming to accounts marathon and you are coming and telling whatever you tell is not right. I am deeply hurt. Yes. Okay, guys. The formula, okay, just to ensure that you don't make mistake in the formula, cost incurred till date, not cost of the year, cost incurred till date. Here, cost incurred till date is 50. But when we go to second year, cost incurred till date is 80. 80 divided by how much you require to complete 20. So 80 plus 20, this will be 80%. So last year, sir, expected cost to complete is not there because it is completed. So last year, what will you do? Don't even have to calculate. It will be 100%. How much was the contract price? 150. Can you see 50%, 80% and 100%? 150 into 50%, 75 you will take it as revenue. 150 into 80%, you cannot take it as revenue. 150 into 80% minus 75, which you already took it as revenue. Remember this. Okay. And last year, you're going to take the balance as revenue. Remove the cost, you will get the contract profit. Computation of amount due from customer. How much I have to get from customer? Cost which I have incurred, I have to get. Profit which I have recognized, that also I have to get. I don't know why they are presenting it in AS7 like this. They could have directly told you contract revenue, revenue recognized, because what is this? They are telling contract cost and the profit, you recognize it. That is becoming contract revenue only, no? 75 you have to get. If advance received is there, 70, that means 5 is due from the customer. But if advance received is 82, 7 is due to the customer. Am I going to go and give this 7 rupees back? No. Next year when the building goes little more up, it will get adjusted. Are you getting this? This year it is due to, because he has paid more money than what I have worked. Now, I actually don't remember that there is a student. Okay, Niveta is a contractor and Kamya is the contractee. Are you worried about this amazing hairstyle? Everything is on one side. You know, when girls dress up traditional, okay, they will tie the hair like this and then they will just turn their head like this. Then the hair will all fall on one side. Sir, what is this, sir? That one strand is on the other side. You have to do like this. You're getting okay. Now, house 1, house 2, house 3. Okay, and one shed is also there. House 1, house 2 and house 3. Now understand here, when we are talking about this, if one person, we have an end thing. Okay, I think, one second, I just want to see. Yeah, there is one small part. Already the major part is done. There is one small part called as, sometimes one house is one contract, right? But even though there are 3 houses over here, okay, it will be still taken as one contract only if the negotiation is done in such a way that it is one contract. What does it mean? See over here. I just want to show you that part. Separate proposals have been submitted for each asset. Now what you saw, you thought one customer, one contractor, one customer. So 3 houses are there. We will take it as one house only. We will take it as one contract only. We will take it as one contract usually. But we will treat it as separate contracts if they made separate proposals. When you give separate proposals, you have the option to accept or reject. You have the option to accept or reject. That means the contractor had the option to reject house 1 but take house 2 and house 3. Or reject house 2 but take house 1 and reject house 3 also. If this option is given, then all the 3 will be taken as separate contracts. And after doing all that, if the contractor dumps everything in one shed and does not keep track only how it is spent on each house, then gone. Are you getting this? After doing all that, if you keep something in the shed and if you keep proper track, okay, it went over here, this much went over here, this much went over here, then you can treat these three houses as three separate contracts, even though you have one person contractor and one person is the contracting. Is this clear? Now, just understand this. Separate proposals have been submitted. Each asset has been subject to separate negotiation, and the customer has the option to accept or reject the part of the contract. Okay, cost and revenue must be identified. Did you understand this? Now, what we did here, sir, one contractor, sir, one contractee, but still we took it as three contracts. Here, one contractor and we have three contractees. One contractor and we have three contractees. Here we are going to take it as one contract. Oh, what is this? There one customer, one contractee. Okay. Oh, sorry, one customer, one contractor. There you told separate. Here three people are actually there, but still it is treated as one. It's treated as one. Why? It's one proposal for everything. One proposal. This fellow Adi, he came and told that you have to construct house for me and my two friends. Huh? No. Contractor is this person. Yeah. Oh, you're telling first this is constructed. That will get to. That is also one of the point. But first Adi went and told, I want three houses and the three houses have to be constructed. If you tell I will construct only house for me but not my friends, then I don't want this contract. So I'm giving you the deal all or nothing. I'm giving you the deal all or nothing. When I give a deal like this for the contractor, it is one contract. And the houses should be constructed all at the same time or one after the other. One after the other. Can you see the point here? Negotiated a single package, closely interrelated, okay, performed concurrently or in a continuous sequence. That means one after the other or all are being constructed together. Now, that's fine. That is fine. Okay, now imagine if the houses were like this. Huh? No, what shed on top, first floor? Is this a balcony? Terrace. First house what? Round? No, like this one. No round, it's pointy. Clear? Now, first house what you want? Like this, sir. Okay, now tell me, what is it? Can we take it as single contract? No, you know why? Because they should be very closely related to each other. They should be very similar contracts. All are buildings of the same size, then we can take it. One fellow wants one more floor, another fellow wants one penthouse over here, another fellow does not want anything, only one floor. Okay, that time what happens? They are separate contracts. You cannot take it as single contract. Scroll down. Let's finish this. Shed example. See, here they told there are three houses. Okay, there are three houses. You can take the three houses also as one contract. Sorry, there are three houses. You should take it as separate contracts, even though the people are only one. Okay, you should take it as separate contracts. If you made one proposal and you had accept to reject or accept, each house has one proposal, accept, reject, one more proposal, accept, reject, one more proposal, accept, reject. This was like Muttu on first year degree. Everywhere accept, reject, reject, accept, reject, reject, accept, reject, accept. Then you know what happened. Okay, now if you do that much, then I'm telling what, this should be separate contracts. But if it is separate contract, I should have the cost also separate. So if I put everything in one shed and don't keep track only and go on supplying without keeping track, then I won't be able to do it. Cost and revenue should be identified separately. Then it becomes separate contract. Yes, you have. No, it's very hot. Ariyant, see one more kid I found like you. Ah.
What is going on first house, what is going for second house.
Doesn't matter because it's single contract, no. This is single contract, no. So I don't care only first house, second house, how much I spent. Everything is one contract, no. Here, even though same person, everything is separate contract. So I need to clearly identify. Yes, we have one person called as Ariyant. Okay. They want to construct one house. Now imagine. Huh? Why should be similar? Because if it is not similar, then the cost will be more for one, cost will be less for one. Yeah, if it is not similar, you can't take only a single contract. You can take it as single contract only if it is similar. Are you getting my point? You can take it as single contract only if it is similar to each other. Otherwise, I am not allowing. No, because if it is not similar, no. As a contractor, I will prefer separate negotiation. If it is not similar, I will want separate negotiation because here I might have to spend extra time. Here I might have to spend less time. I will not agree for one proposal. Huh? Yes. That is the thing. See now if it is similar only, it will be like, oh, what? No problem. I will construct all three and see at the same time also I can construct. I don't have to put special effort into one. All same thing together it will get constructed. It's like that package sale which they do. Package. Buy one get two. Buy one get two free. Okay, just like that. As a contractor, actually nothing for me. I have to construct whatever is told to me. But for accounting purpose, if they are not similar, costs and revenue will vary. That is why we are taking it as separate contracts for accounting purpose. Now, last point of AS7 is there. This is called as variation in contract. Now, you already told, for example, Ariyant and Sastika are there, two people. This fellow I told, I want one house. This person is constructing that house. Middle of, when the construction is going on, you told, you construct one more floor. One more floor. This one more floor which you are constructing, is it part of the same house or is it going to be treated as separate contract is the question. Clear? I have one house getting constructed. I am not worried about the customer. I am worried about the contractor. Now the contractor, what he will do? He will be calculating revenue. Correct? And he will be calculating cost. And he will calculate profit. Now tell me one thing. This house. One more floor if I ask to construct. Will it be treated as a separate contract or same contract? Usually same contract. Usually it is same contract. Correct? When will it be treated as separate contract? Imagine this person wins one lottery. Okay, and tells that I want one more floor. But now I am a rich person. The one more floor should not look like the ground floor. It should look beautiful. So what he has done, he has constructed the upper floor like this. Okay, he has constructed the upper floor like this. They told in the standard, they have told, see over here, they have told in the standard, asset differs significantly in design, technology and function. The asset upper floor which is there, no, it should differ in design, technology and function. And price of the asset is negotiated separately. Now you are telling, will you construct the first floor? If you can only tell me, otherwise I'll go to some other contractor. You might be constructing the first floor, ground floor, but the upper floor will be constructed by some other contractor. And can you see the design is completely different? Okay, and technology is also different. See what they have done. They have made one open roof. Open roof. So, and he is going to lie down and he can see the night sky. Okay, not open roof. It's like this thing, sunroof. This is like the sunroof. Who? Every girl is not the same girl. Contractor is different. This is his girl, the customer's girl. What? Just because this contractor constructor, he'll go and sleep with her. What are you talking? Okay, customer is this person. Are you getting my point? So he told, I want a house where there is a sunroof. Cars have sunroof. I want sunroof in my house itself. Daytime, if I keep the sunroof open, then down omelette will get made. Okay, I will not do that. I'll close the sunroof. Nighttime, what I will do, I'll open the sunroof. I want to see the moon. I want to see the moon. That was his plan. And he's going to tell the girl, see, there is no difference between the moon and your face. Are you getting my point? That was his plan. Huh? We are not talking scientifically. Usually the girl's face is always compared to a moon, no? That is like the, what do you say? The Kavi will be thinking like that. You will not be thinking like that. Okay, so now this was his plan. Can you see different design, different technology? This upper floor will be taken as a separate contract, and this will be a separate contract. Is this clear? But technology is good. I got that in the class only. I was thinking what to do, different I have to do. No, they told, see, they used this language. I wanted to make an example. Asset differs significantly in design and technology. So technology, what to do? Usually I tell that you can make the walls out of thermocol. They use walls of thermocol to keep it cool. Then I thought something else will do. They made a sunroof. This is not the contractor. This is not the contractor. Okay. If it is different contractor, it is different only. There is no question. If it is same contractor only, we are telling. This will be treated as a different contract if it is completely different. Done. That is for AS7. Okay, let's go into the next accounting standard, guys. Okay, next accounting standard, AS4. Now, what happens in AS4? AS4 is contingencies and events occurring after balance sheet date. Okay, now when we are talking about contingencies and events occurring after balance sheet date, usually our balance sheet is on 31st March 2024. Okay, and the financial statements are approved on 31st May 2024. Let's take a hypothetical situation, and financial statements are approved on 31st May 2024. Okay, now and the board of directors have approved the financial statements. Financial statements are prepared on 31st May 2024, but it's approved on 30th of June 2024. Now, whatever happens between this time period, this is called as event occurring after balance sheet date. Clear? That means whatever happens when year closes till the date the financial statements are approved by the board of directors or any other competent authority for other than companies. Clear? So now if you have this, after that you can see what happens. Audit gets completed. After that we actually have the AGM when we drink chai and biscuit. Okay, that is on 30th of September 2024. Now we have to worry about AS4. AS4 tells contingencies and events occurring after balance sheet date. Now contingencies are already covered in AS29. So here we are only going to focus right now on event occurring after balance sheet date. Now for example, let's say we have VD. One person is there, VD. Before the balance sheet date, what he has done? He has given one ring to Tinky. Okay, and he has given one ring to Rosie. So two people he has given the ring. Now after the balance sheet date, his parents had told the cutoff date for you is 31st of May. Within that, if you don't get married, we will get you married, arranged marriage. Okay, so now what happens? If at all he tells yes to someone, that is an event occurring after balance sheet date. If he tells no to someone also, it's an event occurring after balance sheet date. Now, what is an event occurring after balance sheet date? Anything that happens between the balance sheet date and the date the financial statements are approved by the board of directors. Clear? This is called as event occurring after balance sheet date. This time period is called event occurring after balance sheet date. Now, whenever there is an event, only then we will think further. If something happens over here, that is not even an event occurring after balance sheet date. If something happens over here, that is not even an event occurring after balance sheet date. There is something that happens over here, that is not even an event occurring after balance sheet date as per AS4. So first what we have to worry, if something happens in this time period, that is called as event occurring after balance sheet date. Okay. In that we have two categories. One is adjusting event and another one is non-adjusting event. Adjusting event means what? Event happens after balance sheet date, but the situation or condition existed on the balance sheet date. Now here, if they are going to tell yes, after balance sheet date they are going to tell yes, but the situation already existed on the balance sheet date. That means already the ring was given on the balance sheet date. Clear? That is called as adjusting event. Now non-adjusting event is an entirely new event. It has no connection with situation that is there on the balance sheet date, or that situation did not exist on the balance sheet date. Okay, it's an entirely new event. It's called as non-adjusting event. Okay. Now non-adjusting event, don't adjust. Sorry, once again, adjusting event, what we are going to do, adjust the assets and liabilities on balance sheet date. So adjusting event, we have to go back and change the assets and liabilities, but it's a non-adjusting event. It's an entirely new event. What we are going to do, we still want to tell something. Sir, we are feeling something. Sir, I have something in my stomach. I have to tell it to someone. I can't keep it in my stomach for a long time. If I tell someone, I'll feel relieved. So if it's a non-adjusting event and you are not going to adjust, but still you want to tell, you are waiting to tell someone, if it is so important, then you may mention it in the board's report. Mention it in the board's report. You may mention it in the board's reports. They never told over there that you should mention. It's an option given. If you feel it's very important and you have to tell the reader of the financial statement, it can be mentioned in the board report. Exception to the rule. Exception to the rule. Now, what is exception to the rule? Now imagine this is my balance sheet, 31st of March. I have one building. Okay, and the building caught fire on 1st of April. 1st of April, the building caught fire. Now, is it an event occurring after balance sheet date? Yes, because my financial statements are approved on 30th of June. Let's assume. Now, this is an event occurring after balance sheet date. Is it an adjusting event? No, it's a non-adjusting event. But we have only one building. If we have one building and it catches fire, then my business only comes to an end. That means it is affecting my going concern. If it is affecting my going concern, even if it is a non-adjusting event, what we are going to do? You are going to go and adjust it. It has to be adjusted. So, adjusting event, okay, no doubt about it, just go and adjust. What is adjusting event? Situation already existed on the balance sheet date. Okay, just go and adjust it. If it's a non-adjusting event, then situation did not exist on the balance sheet date. Okay, do not adjust it. You want to really tell about it, may mention it in the board's report. But if that non-adjusting event affects the going concern, if it affects the going concern, then it has to be adjusted. It has to be adjusted. So for example, see over here. Okay, we have a debtor on 31st of March. On 31st of March, we have a debtor. On 28th of March, debtors go down, caught fire. When did the debtors go down, catch fire? 28th of March, it caught fire. On 10th of April, I got to know that he is bankrupt. Okay, now did the situation exist on the balance sheet date? Yes, it is going to be an adjusting event and you may go and pass an entry for provision for doubtful debts. Clear? Now, if the fire occurred only on 10th of April, fire did not occur over here, fire occurred directly on 10th of April. Now, are you going to tell, sir, it is a situation existing on the balance sheet date? No. On 31st of March, we didn't have a fire incident at all. He was a debtor. Now, listen to this. Just because debtor is there, if the debtor becomes bankrupt after that, that is not situation existing on the balance sheet date. Situation was there already. That means fire occurred over here. Debtor was in a bad situation. Now, if something happens after that, that is a situation existing on the balance sheet date. If fire itself occurs after the balance sheet date, it's an entirely new event. It is going to be a non-adjusting event. Is this clear? This, if at all it happens over here, it is an adjusting event because situation existed on the balance sheet date. But if it happens over here, situation did not exist on the balance sheet date, it is going to be considered as a non-adjusting event. Clear? Now, one more. If I had on 31st of March, I have one building. On 31st of March, I have one building. That building caught fire. That building caught fire. Only one building. Now it is a non-adjusting event. It caught fire on 2nd April. It's a non-adjusting event. Okay, but if it affects going concern, only one building, so it's affecting going concern. Therefore, even though it is non-adjusting event, you will go and adjust it. But imagine I have 2 buildings or 3 buildings. Now, this building caught fire. It is not affecting my going concern. That means building is still going to be lost. Still, we are going to have loss. But because I have other buildings, my business is still going to continue. Therefore, it is not going to affect my going concern. Because it is not going to affect my going concern, it is going to be considered as non-adjusting event and no exception to the rule. There is no exception to this rule. Is this clear, guys? Yes. So what you are actually supposed to do in AS4, first you have to understand whether the situation existed on the balance sheet date or not, or first of all you have to understand whether something is happening between balance sheet date and the date the financial statements are approved by the board of directors or competent authority. Now, if it is happening between this time frame, it is called as event occurring after balance sheet date. Anything happens after that, don't even bother it. AS4 is not even going to worry about that. If it is an event occurring after balance sheet date, then you have to see whether the situation existed on the balance sheet date. It is going to be considered as adjusting event. If the situation did not exist on the balance sheet date, it's going to be considered as non-adjusting event. If it's an adjusting event, go and adjust it. Okay, go and adjust it. Okay, balance sheet date, go and adjust the assets and liabilities, make the change, pass the entry. Otherwise, it's an entirely new event, do not adjust anything. Okay, assets and liabilities will not be adjusted. You still want to tell, sir, something in my stomach. Then what you're going to do, mention it in the board's report. What is the exception to the rule? If it affects going concern, it has to be adjusted. Is this clear? This is our AS4. Let's go next into AS18. Okay, let's proceed further to AS18. What is AS18? Related party disclosure. Related party disclosure. Now, when we are talking about AS18, related party disclosure, okay, the main thing is you have to get highlighted about one thing. Why related party disclosure? Related parties can be there. AS18 is not telling related party only should not be there. See over here. AS18 does not prohibit related party transaction. AS18 is telling, fine, sir, you go and have your related party transactions. No issue at all. But you tell me means whom? The reader of the financial statement. So related party relationship is not prohibited. You can still have it. But related party relationship and related party transaction, both of them have to be disclosed. Both of them have to be disclosed. Clear? Now we have to understand mainly what is related party relationship. First, enterprise that directly or indirectly through one or more intermediaries controls the reporting enterprise. That means somebody is going to control you. Okay, if you take an example, we have a company called as Muthu Limited. Whatever is there in the box, that is the reporting enterprise. That means we are seeing from that company's angle. So Muthu Limited is controlled by a company called as Sharmi Limited. So 80% shares are held by Sharmi Limited. Somebody is directly controlling you. That becomes related party. Clear? Now, Muthu Limited, understand, Muthu Limited, 80% shares are held by Sharmi Limited. So, are they directly controlling Muthu Limited? Related party. Muthu Limited is holding 70% shares in Darshan Limited. Are they directly controlling Darshan Limited? Related party. But Darshan Limited is indirectly controlled by Sharmi Limited, indirectly controlled by Sharmi Limited. So these both also become related party. So if somebody is directly controlling you or if somebody is indirectly controlling you, both of them are going to be considered as related parties. Clear? Now, next you can see are controlled by the reporting enterprise. That means you are controlling someone, they are also related parties, and are under the common control of the reporting enterprise, they are also related parties. Now you can see the next example. Kiki Limited is there having 80% shares in Sharan Limited. So 80% shares, Kiki Limited is controlling Sharan Limited, so related party. Kiki Limited is there having 90% shares in Naveen Limited. So they are having 90% shares in Naveen Limited, they are also related party. And Kiki Limited and Sharan Limited are not having any connection. Sharan Limited and Naveen Limited are having no connection with each other actually. But both of them are under the common control. Okay, Kiki Limited is controlling both of them. Automatically they become related parties. So if two companies are under common control, they are also related parties. Clear? Now, see the next one. Okay, next they have told that associates and joint ventures of reporting enterprise and the investing party or venture in respect of which reporting enterprise is an associate or joint venture. So associates, joint venture. Associate is someone where you have significant influence. You cannot control them, but you have significant influence. So now there is a company called Kiki Limited and Sharan Limited. They both are actually having no connection with each other, but they start one jointly controlled operation as per AS 27. They start one jointly controlled operation. That time both of them are investing parties, so they also become related parties. Now you have a company called Harshita Limited. See what is happening. The Harshita Limited has 35% shares in Vibhuti Limited. There's a company called Vibhuti Limited. Harshita Limited is having 35% shares. Is it control, sir? No control. It is only significant influence. It is only significant influence. That means I cannot take any decision on my own, but I can influence others to take the decision with me. So 35% shares are held, okay, in Vibhuti Limited, that is related party. Okay, 35% shares are held. These two also become related party. That means control is not there, but significant influence is there. That is enough. Now, Vibhuti Limited has 30% shares in another company called as Neeru Limited. Okay, can Vibhuti Limited control? No. It is only significant influence. Still, it is related party. Now, tell me one thing. Indirect control was related party, but indirect significant influence is not related party. Can you see Harshita Limited has significant influence? Vibhuti Limited has significant influence. Indirectly, there is indirect significant influence. Indirect significant influence. They are not considered as related parties. Is this clear? They are not considered as related parties. So Harshita Limited, Vibhuti Limited, related party. Vibhuti Limited, Neeru Limited, related party. But indirectly, they are not related parties. Clear? Now, next thing we go into is individuals. Individuals owning directly or indirectly an interest in the voting power of the reporting enterprise that gives them control or significant influence and their relatives. So individuals, okay, we have to understand individuals having control or individuals having significant influence and all their relatives will become related parties. Now, for example, there's a company called as Muthu Limited. There is one girl called as Sharmi. She has 80% control over Muthu Limited. 80% control over Muthu Limited. Clear? And there is one more company called as Ambiga Limited. Okay, she also has some shares in Muthu Limited. Now, let's say she has 20% shares in Muthu Limited. Are they related parties? We'll discuss about that later. But Sharmi Limited and Muthu Limited, 100% they are related parties. 100% they are related parties. Now, Sharmi Limited has 35% shares in Ambiga Limited. Sharmi Limited has 35% shares in Ambiga Limited. So here she has control, here she has significant influence. So both of them become related parties. Now Sharmi Limited, Sharmi, okay, Sharmi has father, mother, brother, sister, son, daughter and spouse. All of them become related parties to both the companies. They become related parties to both the companies. Clear? Now, at the end they have told enterprise over which any person in C or D have control or are able to exercise significant influence. So now Ambiga Limited, okay, Sharmi has significant influence over here. This company she has control. Okay, now these two will automatically become related parties. Okay, these two will automatically become related parties. Now what you have to understand now in this case, she has 80% shares, she has 35% shares. Control, significant influence. Both are related parties and all our relatives will become related parties to both the companies. Now, next they have spoken about key managerial personnel, key management personnel. Now, key management personnel, if I ask you, you will tell CEO, CFO, sir, all that, okay? But we are talking about section 197 of Companies Act 2013. That means MD, whole-time director and manager. If these three are there, only then we are talking about key managerial personnel. Clear? Now, Kiki Limited is there, okay, which has an MD, whole-time director or manager. These people will become related parties. And their spouse, son, daughter, father, mother, brother, sister, all of them are going to become related parties. So, MD, whole-time director, manager and their relatives will become related parties. Clear? Now you have one more company, Muthu Limited. Sharmi is a person. She has 80% shares in Muthu Limited. Directly related party, no other questions to be asked. Okay, Sharmi has 1/3 share in the profits of a partnership firm in which Kiki and Darshan are also related parties. Now, is this a related party for Sharmi? But Sharmi doesn't have to worry about AS18. Who has to worry? Muthu Limited. Now, somebody who has control, has significant influence somewhere else, these both are also going to become related party. That is what last thing they said. Any individual has any significant influence anywhere else, they are also going to be considered as related parties. Now, next we move further. We have A Limited. A Limited has 30% shares in B Limited and 26% shares in C Limited. These both are related party, no doubt about it. But B Limited and C Limited, will they become related parties? No. Okay. Are under common control? Yes. Are under common significant influence? No. Clear? Next, we have one company called as Muthu Limited. Sharmi is the MD, related party. Darshan is the director, not a related party. That means what they are telling, a non-executive director will not become a related party. But if that non-executive director goes and purchases 26% shares, then related party. Non-executive director becomes relative of Sharmi, then related party. Otherwise, just because non-executive director, they are not going to be considered as related parties. Clear? Now, Muthu Limited is there, the company. Okay, there is one kid over here. The kid got a wife. Okay, 1st of June, the kid got married and kid got a wife. And 2nd of June, the kid got divorced. 2nd of June, kid got divorced. Is the wife a related party? Kid is holding 80% shares in Muthu Limited. Okay, kid got divorced just in one day. Still, this wife will be considered as related party because in the related party definition, they said at any time during the previous year, during the financial year. At any time during the year, if they were related parties, they will be considered as related party at the end of the year when you are preparing financial statement. Clear? But when we are talking about related party transaction, only what happened on that one day will be considered as related party transaction. Other days, there is no related party transaction. Clear? So, related party, relationship, anytime. Okay, even if it is one day, you are going to be considered as related party for the year end. Related party related party transaction will be related party relationship plus transaction on that day will be considered as related party transaction. Now you have Sharmi. Okay, Sharmi has is a director in Muthu Limited and Sharmi is also a director in Darshan Limited. Are they related parties? No, just because you are director in two places, you are not related party. But if at all Sharmi is a MD in those two companies, if she is a MD in two companies, she can influence the decision in both these companies, then those two companies also become related parties to each other. Clear? Now we go into the next one. Let's say Kiki Limited is there. Okay, 60% shares in Sharan Limited on 25th of December sold. 25th of December sold. 15th of November she had 60% shares and on 25th of December she sold those 60% shares. Still she'll be considered as related party. Now imagine a situation. January, February, March, I had 60% shares. Every month we are selling to one company. January, February, March, we had 60% shares. Okay. This is called as related party transaction. Then April, May, June, you have only 12% shares. You sold your shares, you have only 12% shares. This is not a related party transaction. Okay. July, again you purchased 23% shares. That time again whatever happens in July is going to be considered as related party transaction. But in the list of related parties, you will always be there, okay, at the year end, but only during the months when you had related party relationship, okay, that time whatever transaction is done is considered as related party transaction. Can you see over here, it is 12%, not even control, not even significant influence. So here there is no related party transaction. Clear guys? Yes. Related party on 31st of March. If related party at any time during the year. What did they tell? Related party on 31st of March. If related party anytime during the year, but related party plus transaction, then only it becomes related party transaction. This is your AS18. Okay. So you have to remember these scenarios. Just remember major things. They will be, they go on asking questions like, this fellow was associate for 3 months, but entire year we have sold to that particular company. So 12 months sale will be considered as related party transaction or 3 months sale will be considered as related party transaction. Only 3 months sale will be considered as related party transaction. Now what happens? 3 months sale is considered as related party transaction. Okay. But End of the year we are not associate. Still during the year you are associate for 3 months. You will be still considered as related party for the year end. But related party transaction will be only for these 3 months. Clear guys? Yes. We'll go into the next accounting standard. We'll take a small break and go into the next accounting standard. See you. Okay guys, let's begin. Okay, let's continue with our journey of standards. So till now, what and all we have finished? AS 21, consolidation. AS 14, amalgamation. AS 3, cash flow statement. AS 7, construction contract. AS 12, government grants. AS 13, accounting for investments. AS 4, contingents and events occurring after balance sheet date. 7 standards we finished. Oh, AS 18 also. Related party disclosure. 8 standards we finished. 27 standards we have. 19 more to go. 19 standards are there which we have to discuss. Okay, now AS 20 EPS. We'll quickly finish EPS. In EPS, what we have? Basic EPS and diluted EPS. Earnings per share, basic EPS and diluted EPS. Basic EPS, what do we have? What is the formula for basic EPS? Patesh divided by 1ish. 1 is, by the way, 1 is. Who is Patesh? Profit available to equity shareholders. What is 1 is? Weighted average number of equity shares. Weighted average number of equity shares is 1 is. Okay. Patesh, the formula for Patesh will be PBIT. You start with PBIT, that is profit before interest and taxes. Remove the interest from that, you will get PBT, profit before taxes. Remove the tax, that time you will get profit after tax. Profit after tax when you get, remove the preference dividend. Remove preference dividend, that time you will arrive at Patesh. This is the profit that is available to equity shareholders. Okay. Good afternoon. Okay. Next, 1 is. What is 1 is? Weighted average number of equity shares. Now, example for that. Imagine you had 1000 shares on 1/4/2024. Then you issued more shares on 1/10/2024. And you have 1/1/2025, 300 shares bought back. What does it mean here? If you see 1000 plus 500 minus 300, you have 1200 shares. This is the number of shares, but not the weighted average number of shares. Weighted average number of shares, what you are going to do? Alternative 1. Okay. You are going to calculate weightage. 1000 shares, 12 by 12, 1000 shares. 500 shares on 110, right? So 6 months weightage, 6 by 12, 250 shares. Then, then 300 shares bought back. That means the weightage has to go down. So 300 shares into 3 by 12 minus, you will get 1175 shares. This is how you can calculate. Or you have an alternative, that is calculate cumulative from one date to another date. From here to here, how many shares are there? 1000 shares for how many months? 6 months. So 1000 shares into 6 by 12. Then here the shares became 1500 and it remained 1500 for how many months? 3 months. That means 375 shares. After that, from 1500 the shares became 1200 shares and remained for 3 months 300 shares. You will get 1175 only. Both the calculations will get 1175 itself. Either take every situation as individual, or you take from one situation to another situation and go on calculating the weightage. Clear? Now, what if they give you like this? Shares are 10,000 only. Shares are not changing. But first the shares were 4 rupees paid up. Then the 5 rupees was called up and paid up. Then the 1 rupee is called up and paid up. Now what you have? When the shares are same or shares are multiple, but the value, paid up value is different. Paid up value keeps changing. That what you will do, you calculate the weighted average value first. Then you convert it into shares. 1000 shares into 4, right? Into 12 by 12. Full year. First alternative one, 12 by 12. 1000 shares over here into 5. From 4 it became 5 rupees called up. Okay. 5 rupees called up. 4 by 12 because it is only on December, January, February, March, 4 months weightage. Then you call the final call of 1 rupee, 1 rupee into 2 by 12, that is February and March. You will get 58,334 divided by the face value, you get 5833 shares. If it is alternative 2, first it was 10,000 shares of 4 into 8 by 12. Into 8 by 12. Why? First 8 months it was 4 rupees paid up. Then it became 9 rupees paid up. Then it became 10 rupees paid up. Clear? First 8 months it was 4 rupees paid up. Then it became 4 plus 5, 9 rupees paid up. Then it became 9 plus 1, 10 rupees paid up. So what you're going to do, into 4 into 8 by 12. Clear? Then what you're going to do, it became 9 rupees paid up into 9. It remained 9 rupees for how many months? December, January. That's it. February it's gone again. February it's gone. So 2 months weightage. Then it became 10 rupees share and it was 10 rupees for February and March. 2 months weightage. You will have 16,667. Finally, you have 58,334 divided by 10, 5833 shares. It's clear, both the places you should get the same value. Now note, whenever bonus shares are issued, what is the main logic you have to remember for bonus shares? Weightage will be given from the starting of the year. Weightage will be given from when? From the starting of the year. For bonus shares issued, weightage has to be given from the beginning of the year. Do not give weightage. Even if the bonus shares are issued on 31st March 2024, when you are calculating EPS for 23-24, you will give full year weightage. That means from 1/4/2023, you will give the weightage for the bonus shares. Clear? Restated or adjusted EPS has to be computed for the previous year. What is this restated or adjusted EPS? Whenever bonus shares are issued, you always will calculate adjusted EPS. Why? Why? How to calculate restated EPS? Percentage of previous year divided by 1/8 of previous year plus bonus shares. Now, for example, 2021, 2022, I have percentage of 50 lakhs and 100 lakhs. Clear? Then 1/8 was 10 lakhs. Okay, 10 lakhs. And here we have issued bonus on 1/10/2022. We gave bonus in the ratio of 1:1. Bonus in the ratio of 1:1. Or let's make it 1:2. For every 2 shares, I'm giving 1 share as bonus. Now what will happen? How much is the bonus share? We had 10 lakh, no? 10 lakh plus bonus share is how much? 1:2 means how much bonus? 5 lakh is equal to 15 lakh. How much is the bonus? 15 lakh. So 100 lakh divided by 15 lakh. Here what was the EPS? EPS was 5. 100 divided by 15, 6.67. 6.67 is the EPS, correct? Now, what is the EPS of 2021? 5. What is the EPS of 2022? 6.67. But even if they don't tell in the question, you have to calculate adjusted EPS or restated EPS of 2021. What is the formula there? Percentage of previous year. Percentage of previous year is 50 lakhs divided by 1/8 of previous year. 1/8 of previous year is 10 lakh plus bonus shares. Bonus shares are 5 lakh. 50 divided by 15, 3.33. What are we trying to tell over here? What are we trying to tell over here? Just to tell that if bonus was issued in the previous year, it would have been 3.33. So we have actually gone from 3.33 to 6.67 and not from 5 to 6.67. Don't think that last year 5, sir, we have an improvement of 1.67. No. Last year 5 before bonus. If last year also there would be bonus, then it would have been only 3.33. Is this clear? Why? In bonus, what happens? Numerator remains same. Denominator changes. If you issue bonus shares, money is not coming in. Numerator will not change. Denominator will change. Okay, sir. Then if shares are issued also, we should do adjusted EPS. No. If shares are issued, money comes in. That money is infused into the company. That time the profits will increase. So the denominator and numerator both are changing. Is this clear? Yes. Now, right issue. Right issue. You know one system is there to calculate right issue. In case of right issue, Kiki. Yes. In right issue, you know what happens? All periods prior to right issue must be adjusted for right factor. All periods prior to right issue must be adjusted for right factor. Clear? What is this right factor? See, if at all we have in this year, I have issued right issue on 1/7, and if I am following calendar year, then what I should do? 6/12 into right factor. Let's say 1.04 or something. I will multiply into right factor. Okay. Now, what is right factor? Periods before right issue into right factor I am supposed to do. What is right factor? Basically, what is this right factor? Right factor is like the bonus part. In every right issue, there is a small portion which is bonus. Because right issue, we are issuing shares at less than market price. That means we are telling indirectly there is some small portion which is issued for free. That's why that's called as bonus element. Now, what we have to understand, fair value per share before right issue, fair value per share before right issue, this will be given in the question divided by theoretical X right fair value per share. Divided by theoretical X right fair value per share. Theoretical fair value per share will not be given. We have to calculate. How do you calculate? One small formula. Simple it is. Before plus after divided by after. That's it. Before means what? Number of shares before right issue into fair value per share before right issue plus right shares into right issue price. Divide that by total shares after right issue. Divide that by total shares after right issue. What are we doing here? Before I had so much value of the company. Because of right, I got so much value. Divide by what is the quantity which is there after right issue. That time you will get theoretical fair value per share. Put it over here, you will get right factor. Usually right factors come around 1.04, 1.05, 1.06. Such kind of right factor numbers you will get. Okay. Use it to, what do you say, whatever period is there before right issue, multiply into right factor. Clear? Note. Computed, restated or adjusted EPS for, compute restated or adjusted EPS for previous year. Here also we have to do restated EPS for previous year. Yeah. Now, whenever there is right issue, okay, whenever there is right issue, compute restated or adjusted EPS. Restated or adjusted EPS for the previous year. Where did we do restated EPS? Two places. One, another, right. Take the Patesh of previous year, divide it by the 1s of previous year into right factor. What did we do in bonus? We added the bonus shares because we knew the bonus shares. Here we have the bonus shares. No, we have the bonus element. So we will multiply it into right factor. You will get the right issue. Right? We will get the restated EPS. Now, certain things you have to remember. Just quickly we'll recap. If shares are issued in the middle of the year, weightage from there. If shares are coming because of amalgamation, MCQ questions they ask. If shares are coming because of amalgamation. Now in amalgamation, we have two types of amalgamation. I forgot. Which are the two types? Amalgamation in the nature of purchase and amalgamation in the nature of merger. If it is amalgamation in the nature of purchase, what we have to do? If it is amalgamation in the nature of purchase, weightage from the date of amalgamation. Yeah, net asset method will do there for calculating PC. Okay, here we are calculating EPS. Okay, from the date of amalgamation. But if it's amalgamation in the nature of merger, then the weightage will be from starting. Weightage will be from starting of the year. Is this clear? Why? In amalgamation nature of merger, business is continued by the next person, so weightage will be from starting. Amalgamation in the nature of purchase, it's a new entity altogether, therefore date of amalgamation. Clear? Diluted EPS, what does it mean? What is diluted EPS? What is diluted EPS, guys? When the denominator increases but numerator increases little less, it changes. Water example? No. That example will not give now. Water and all. Water. Sanjit was drinking something else. Okay, some orange juice he was drinking. That time they added little water. He felt it was very strong, the orange juice. So they added some water. Is this diluted EPS? Is this diluted EPS? Yes. 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 Are you getting my point? I was giving, okay, 4 chocolates I used to keep, 5 chocolates I used to keep every day, and I used to give every student 1 chocolate. We had 5 students in class. Suddenly, I got to know that 3 people had taken admission, but they had not confirmed whether they are going to join or not. We had given them option, whenever you want you can join. So they joined. Now we have 8 students. These 5 who were there initially, are they going to get 1 chocolate? No. This is not diluted EPS. See the fun. This is not diluted EPS. This is not diluted EPS. This is EPS. This is EPS. 5 people joined. 3 people joined. It's EPS. What is diluted EPS? I have 5 students only. I have 5 chocolates only. But I know that I have given admission to 3 people. They have not joined. Anytime in the next 3 years, they can join. Clear? Now, they have not joined. I am telling these guys, you will get 1 chocolate per person. But I am also telling, there is a situation, if these guys come, then you will get only 0.67 something chocolate per person. What does it mean? Today, how much I am giving per person? 1. I am giving the chocolate to the hand and I am telling, take, this is your chocolate. But I am telling, don't always depend on 1 chocolate. Don't always think that you are going to get 1 chocolate. There might be a situation that in future, you might not get 1 chocolate. There might be a situation in future, you might not get 1 chocolate. Are you getting my point? That is diluted EPS. That happens computed when there are potential equity shares. Potential equity shares in the capital structure. What is potential equity share? Today, he is nowhere to be found. Today, he is like John Cena. You can't see him, but he can always come whenever he wants. Do you know John Cena? Okay. It is his last year in wrestling. You should know him. John Cena, you don't know? Yes. So today, they are like John Cena. They are not the shareholders, but they have the potential to become shareholders in the future. Are you getting my point? So computed when there are potential equity shares in capital structure. What is potential equity share? Not equity share today, but can become equity share in future. These are convertible preference shares, convertible debentures, options. Convertible preference shares, convertible debentures, options. Is this clear? These are potential equity shares. Whenever you see this, you have to calculate diluted EPS. Diluted EPS is making the shareholder ready for a future which might be less. Making the shareholder ready for a future where he might not get the same amount. See diluted EPS. Patish, which was already there, plus savings from conversion. Savings from conversion. One is, which was already there, increase in shares from conversion. If conversion, sir, if they convert, sir, what savings we will have? If preference shareholder converted into equity shares, we don't have to give preference dividend. That is the saving. Is it? Okay, preference shareholder has to be converted into equity share. That time preference share we don't give dividend. If debenture holder, hello, if debenture holder converted That time we won't give them interest. That is the savings. Now, what is the increase in the shares because of conversion? If they are converting, they will get you new shares. Those new shares will come and sit in the denominator. If options are potential equity shares, then while computing diluted EPS, consider only shares for no consideration. Now, AS20 is done, but I want to understand the EPS. What? Yeah. I only told savings. Savings is after tax only, no? Wait. I understood what you're telling. Wait. Okay, now listen. I have Patesh of 50 lakhs. I have one ace of 10 lakhs. What is basic EPS? Basic EPS is rupees 5. Clear? What is diluted EPS? Anything less than 5 is diluted EPS. End of story. Imagine, what if, okay, we have 10% convertible debentures. We have 10% convertible debentures, 10,000 of rupees 100. Okay, convertible into 5 shares. Convertible into 5 shares. That means you can convert it into 5 shares. Now, 10,000, let's make it, 10,000, we'll make it 1 lakh. It will look nice. Okay, 1 lakh debentures are there, convertible into 5 shares. Now, listen, what will happen in this case? If they get converted, will my Patesh be 50 lakhs only? No, my Patesh will not be 50 lakhs. What will happen? 50 lakhs plus, what will I get? Savings. Savings will be, let's say simply for fun, we will write one tax rate also. Just for fun. Tax rate is 30%. Just like that. Okay. Now, 1 lakh debentures were there. Each debenture is 100 rupees. How much was the interest that I was giving them? 10%. 1 lakh into 100, 100 lakhs, 100 lakhs into 10%, 10 lakhs. 10 lakhs I was getting. Correct? 10 lakhs I was getting. But will I get everything? No. When I get 10 lakh, one person will be sitting and telling, you are supposed to give me. Who is that? Government. How much government will take? 30%. They will not take 70%. Just because 70% is written on the screen, don't read 70%. They will take 30%. That's why 70% will be remaining for you. They will take 30%. 70% will be remaining for you. Divided by. What will you divide it by? How many shares we had before? 10 lakh. Plus, if they convert, what will happen? 1 lakh into 5 shares. 15 lakhs. So now you take your calculator. 57 lakhs divided by 15. 3.8. Yeah, I also told that one. 3.8. Oh, thank you so much. Thank you. Hotword is not working. No, that's what hotword is not working. Putting too much strain on my voice. So this is called as reverse. You take cold water and drink. And it will clear your voice immediately. Trust me. When you have fever, try drinking cold water. Your fever will go. Huh? Now, if we keep it in 16, it will be even better. Yes. Now, listen. Shh. Can you see that the diluted EPS is 3.8? EPS went down to 3.8. How much was the EPS before? 5. Now it became 3.8. Okay. Now, what if instead of preference share, convertible debenture, I use the word preference shares? What if convertible debentures? Instead of that, I use the word preference share. What will happen that time? Will it be same or will it be same but different? Same but different. 50 lakhs plus 1 lakh shares into 100 into 10%. No 70%. Only till here. Why? Remember, we saw that time when kid asked an amazing doubt. Okay, PBIT minus interest PBT. PBT minus tax PAT. Over no tax is paid, no? After that, I give it to preference shareholder, I give it to equity shareholder, make one boat and leave that note in the water also. Nobody is going to ask me anything. Are you getting my point? But here, before tax, if I have some savings, imagine PBIT is high. It becomes higher. What will happen? PBT also will be higher. So tax will be higher. Are you getting my point? Before tax, if I do any saving, government will ask me money. But after tax, instead of giving to preference shareholder, I stop this. Will government ask me money? No. That means everything will go to equity shareholder. That's why here when we are calculating, there is no tax. Do you understand this? There is no tax. So divide by same 10 lakh plus 1 lakh into 5 is equal to 60 divided by 15, 4. This is what? Diluted EPS. Now, in case government collect tax from preference shareholders, for what? No, they'll collect for the dividend. If they receive, yeah, they'll collect income from other sources. It is one small head. No, if they convert, they will not take tax. For conversion, there is no tax. Yes. But if you sell that, then they'll take it. Huh? Even if they pay dividend. From company, no. From shareholder, they'll. Okay. Now, finally, options. Options. In options, you have to understand one thing. Very, very important to understand this in options. See over here, options. Let's say I have 1 lakh options. 1 lakh options. Now, how is it different, sir? Options and redeemable preference shares, redeemable debentures. Redeemable preference shares, everything was coming for free. Nothing impact on the numerator other than the savings. Redeemable preference shares and debentures, both the places it is same. But options, everything is not coming for free. They are giving me some money, but they are giving me some money which is less than market. Clear? Now, if you see over here, options, okay, option price is 15. Market price is 20. Now, what you are supposed to do? See over here, in options, what did I tell? In options, potential equity shares, then while computing diluted EPS, consider only shares for no consideration. Now, tell me one thing. How much am I getting? 1 lakh options into 15. Am I getting 15 lakhs? Am I getting 15 lakhs? Divide this by 20. How much are you getting? 75,000? 75,000? That means the value is equal to only 75,000 in the market. Therefore, only 25,000 will be considered for computing diluted EPS. How will you compute diluted EPS now? Diluted EPS will be, what is the formula for diluted EPS? Patesh. What is Patesh? 50 lakhs plus savings, no savings. In option, before I was not giving them interest and all to save anything. Divided by 1 is, how much is 1 is? 10 lakh. 10 lakh plus how much? 25,000. So 50 lakh divided by 10.25. You are getting 4.88. Are you getting 4.88? Is this clear? So what you have to understand? Simple. Remember this again. If debentures get converted, you have to take after tax amount. Numerator savings is after tax. Denominator, you have to add all the converted shares. Now, preference shares are getting converted. You have to take before tax. There is no tax only. No need to worry about the tax rate and all over here. And you have to take all the shares which are there because of conversion. If options are converted, what you have to do? Options, number of options into price, divide by the market price. That time you will get the value. Difference only you will take. 25,000 only you will add to the denominator. In numerator, there is nothing. No saving at all in options. Is this clear? Yes. I am issuing 1 lakh shares. Not options, 1 lakh shares. At rupees 15. Am I calculating diluted EPS? That's it. That's your answer. Am I calculating diluted EPS? I don't calculate diluted EPS when shares are issued and money comes in. I calculate diluted EPS when shares are issued, there is no money coming in. That is diluted EPS. If they are going to give me money, that money I'll put into business, we will earn profits. Numerator also will potentially grow. Diluted EPS is only when conversion happens and shares come for free. That means only denominator is getting affected heavily. Numerator is not changing much. Is this clear? That's why we are taking only 25,000. Okay guys, that's it with AS20. Done. You have to solve problems. Okay. Simple questions only are there in the material. Next. We have to go into the next standard. Don't skip anything. I think last exam, first question was AS20. First question. If you want to practice AS20, go and solve that question. Very easy it was. 8 marks, sir. 5 marks, sir. 5 marks. 5. Okay guys, let's go into a small and sweet and simple standard called AS25. Very, very simple. Nothing is there in this. Okay. Nothing is there in this. We have to understand this standard AS25. Interim financial reporting. Now, listen. Shh. Note. Online guys, are you there? Aishu. Who is this Aishu? 9. As the day progresses, then it will become 5. Yesterday, last only three were there online. One is Ananya. Yes, Ananya is there. Hey, this person I know. Tanavanti. It's very common. Ananya Goyal, I was constant. It says. Okay, guys, is it done? Shall we go further? Okay. Now, if options are converted and all, you have written it, I hope. AS25. Now, listen to this. Very, very simple standard it is. They haven't asked any question from AS25 in the last 3 attempts. That means they can ask. Are you getting my point? AS20, they asked question just last attempt itself. That means again they can ask. So you have to study. Okay, now AS21. What is AS21? Consolidation. AS14. Amalgamation. AS3. Cash flow statement. AS4. Contingencies and events occurring after balance sheet date. AS12. Government grants. AS7. Construction contract. AS18. Related party disclosure. AS13. Accounting for investments. AS20. EPS. Only that much. 9 standards we have finished. 27 standards are there. 18 standards to go. That's it. Only that's it. Only 18 standards we have, and we have a lot of time. It's only 2:53 in the afternoon. Only 2:53 in the afternoon. So much time is there. Up to Up to 7, huh? After that? Till we finish, you saw the number, no? 18 standards are there. Till we finish 18 standards. That's it. What? Chota standards only. All are chota. AS22 and all, very small it is. Okay, now AS25. Let's focus on AS25. This is a very small one. We shouldn't spend too much time on that. It's a very small one. Okay, now what is AS25? Interim financial reporting. Interim financial reporting. Now, listen, hello. Shh. Complete set of financial statements. Condensed set of financial statements. Okay, if you are doing interim financial reporting, what does interim financial reporting mean? End of the year, usually we prepare financial statement. During the year, we want to prepare financial statement many times. Okay, interim period. Many times you can prepare quarterly, you can prepare once in 4 months, you can prepare every month, you can prepare every 15 days. Okay, no other work, we are preparing. Okay, so it can be complete set or condensed set. What is complete set? Okay, sir, when I listen to complete set and condensed set, I understand one thing, sir. Complete set means you are prepared properly as per schedule 3 only. Condensed set means as per schedule 3, we will put only limited things. Is it correct? No. Is it correct? No. Complete set means schedule 3, all headings and subheadings. Here also schedule 3, all headings and subheadings, selected notes. Selected notes. So what financial statement you are preparing in amalgamation chapter, that is condensed set. Because you don't prepare all notes over there. What financial statement you are preparing in financial statement chapter, that is complete set. There you are preparing all the notes. For everything you are preparing note. Clear? That is all they told. They didn't tell you skip the heading only. No. You are going to show everything. Now, example also I have given here. Equity and liability, shareholders fund, share capital, reserves and surplus. Same thing, sir. Same thing I'm seeing this side also. Yes. But here there is no note here. Can you see? So only important notes you are going to show, that is called as condensed set. You are going to show all the notes required, that is called as complete set of financial statements. Clear? Now, preparation of interim financial statements, time period. Let's say time period. You can get this in MCQs. Time period 1/7/2024 to 39/2024. That means I am preparing for which quarter? Second quarter of the financial year. Don't see the quarter of the calendar year. Financial year second quarter. Now, if I am preparing balance sheet, I'll prepare balance sheet as at 39/2024. Why 39? Because my quarter ends on 39. For comparison, you have seen financial statement, no schedule 3. You have current year, you have previous year. Current year column, what you are going to show? This year's results. Previous year column, previous year figures. Now, if you are preparing interim period, you will prepare balance sheet as at 39. But the balance sheet to compare will not be 39 last year. Balance sheet to compare will be 31/3. That means you are going to compare this balance sheet. That means you are going to compare your position today to the position at the previous year end. To the position at the previous year end. Clear? P&L. When we are talking about P&L, what we are doing? You are preparing P&L for this quarter. Comparison will be last year same quarter. Last year same quarter will be comparison. Then you are also going to prepare cumulative P&L from starting of the year till now and compare it again with last year's cumulative P&L. Clear? I want to know, okay, for example, I want to know what I studied in April, okay, 5 days, and I want to compare it with what I studied in the first 5 days of March. Then I also want to know, ever since my class got over in January, what I studied till today. Are you getting my point? That is what they are talking here. This quarter, you will compare with last quarter and all the things from starting of the year, compare with the same period last year. Now, cash flow statement. Cash flow statement I'll prepare. starting of the year till this quarter end. Compare it with last year also, starting of the year till this quarter end. That means here we are doing cumulative, here we are doing cumulative, here we are doing cumulative, and here also we are doing cumulative. Is this clear? Yes. Now, time period. If at all I am giving third quarter. 1/10/2023 to 31st of December 2023, third quarter. Now, current year, what you are going to do as at 31st December. Comparison will be with last year 31st December. No, 31st March, last year end is 31st March. P&L, last quarter, third quarter, here also third quarter. But from starting of the year till third quarter end, starting of the year till third quarter end. Cash flow statement, starting of the year till third quarter end, starting of the year till third quarter end. Last year. Is this clear? Now, rule. Correct. Very much correctly you have told the wrong answer. For me, I am on 31st December. When did my last time year end? 31/3/2023. Here you didn't get the same doubt. Here it should have been 3, no then. I am in 24/25. This previous year end was 23/24 end. Food is digesting well. Here it is 23/24. This is 22/23. Good afternoon. Okay, now anything, only rule of AS 25 is anything related to a particular interim period must be recorded in that period only. That's all. That is it. That's the standard. What they will ask, questions, they will be like, there was a huge expense in this year, but because sales is more in the next quarter, I will put it to next quarter. No, don't put it to next quarter. It should be in this year, this quarter only. They will tell there was a huge expense which is transferred to the next quarter. So what you will do? You should take that expense over here itself. They will tell last quarter's expense has been put to this quarter. What will you do? You add back the expense. It's not required here. They will tell income was there. It is divided equally to 4 quarters. Not required. You have to remove the income. So what happens? That means inside the quarter also we are doing accrual concept. What happens in a particular quarter should be recorded in that quarter only. Is this clear? Now, tax is an important thing. Tax you can't do, no. You cannot tell tax I am paying at the end of the year, so full tax I will show in that quarter only. No, but it is related to whatever is earned during the year. So for tax, what they said, imagine you have 4 quarters like this. For tax, no, they said, you do one thing. Whenever there is tax, remember water. Whenever there is tax in interim period, interim financial reporting, you have to remember water. What is water? Weighted average tax rate. Oh, simply you thought I drank water. Huh? Weighted average tax rate. What is water? Weighted average tax rate. You have to apply weighted average tax rate and you have to multiply. Now understand this. How to calculate weighted average tax rate, sir? Whatever estimated tax you are going to pay divided by the estimated income. Okay. See, sir, I am in the first quarter, sir. How will I know the tax of the end? I will not know, right? Estimate your income for the full year. Calculate the tax. That is your estimated tax. Estimated tax divided by estimated income. You will get the tax rate. That is called as water. Weighted average tax rate. Is this clear? Now, example you see over here. My first quarter, second quarter, third quarter, fourth quarter income. Can you see the incomes there? They told, okay, one person suddenly came and told me, who is this? No, not that girl. This is Nirmala auntie. Nirmala auntie came and told me, you don't worry. Up to 5 lakhs, you pay 20% tax. After 5 lakhs, you pay 30% tax. Even though she told not to worry, I started worrying after listening to this. Correct. 5 lakh slab rate, 20% tax. Now new slab rates are there. Up to 12 lakh, there is no tax. Did you see the new basic exemption limit? Up to 12 lakhs. Crazy. Correct. First time Nirmala aunty did something that people are not sure still whether it is good or bad. They are still thinking, what is the twist in this? Something twist is there. Okay, so 20% and 30%. Now, tell me one thing. Are you going to tell, sir, okay, sir, up to 5 lakh 20%? No. First quarter, I will take 20%. Second quarter, I will take 20%. Then third quarter, I will take 30%. Fourth quarter, I will take 30%. Is it like this, sir? No. You have to use water, not the tax rate. You have to use water, weighted average tax rate. What you will do now? What is your 11 lakhs? Out of 11 lakhs, first 5 lakhs you're going to pay 20%, 1 lakh. Next 6 lakhs you're going to pay 30%, 1 lakh 80. What is the total tax you're going to pay? 2 lakh 80. 2 lakh 80 divided by 11 lakhs into 100, you're getting 25.45. That means not 20 also, not 30 also. Somewhere between you are getting the tax rate. So what you will do, every quarter you will apply 25.45 and calculate the tax. Is this clear? Now, AS25 tells only one thing. AS25 tells, okay, whatever expense has happened in which quarter, it should be taken in that quarter only. Simple. We can follow that for all the expenses, all the incomes. But we can't follow it for tax, no. Because tax will be incurred at the end of the year. So now I cannot tell I'll put full tax in the fourth quarter, 3 quarters no tax. So for tax, they have prescribed a different methodology, that is compute the water and multiply with water and get the tax for every single quarter. Clear? Are you following this? Yes. Water not applicable. Water is not applicable when water is not applicable when AS25, you should have studied and come to marathon. When is water not applicable? When tax year and accounting year not same. That means tax year we are going to follow financial year, accounting year we are going to follow calendar year. Now you don't use water, just use the applicable tax rates. Are you getting my point? Why? Because in your accounting year, January, February and March is falling into different previous year. And from April, you are in a different previous year. So tax rates are actually different for you for a particular year. That is why they said don't worry about anything. Just apply the tax rate what is there, actual tax rate which is there. This year which tax rate is applicable, apply that. This year which tax rate is applicable, apply that. No need to calculate water. Forget about water, drink juice. Is this clear? Are you following this? That is AS25. That is AS25. Now, listen, there are some questions. Towards you should go and solve. I'll tell you which questions to solve. Go and see the practice questions of AS25. AS25, there are some practical questions at the end. Okay. There are some questions where 4-5 adjustments are there. What has happened in that entire thing is only one thing. By mistake, they put an expense in this quarter. Remove. They didn't put the expense in this quarter. Put it. By mistake, they put income in this quarter. Remove. They didn't put income in this quarter. Take the income. That is what has happened. Entire standard stands on. Okay. Recording things correctly in a particular quarter. Other than that, you can have water calculation. That's all. Okay. That is your AS25. We're not spending too much time on that. Let's go further. AS1. Okay. In 5 minutes, we should finish AS1. Nothing more than that. Okay. AS1 should be done in 5 minutes. Okay. What is there in AS1? Disclosure of accounting policies. Disclosure of accounting policies. That means they are telling, please do whatever you want. It is like your parents will be telling, no, wherever you go, please tell me and go. Are you getting my point? But then when you tell that you want to go somewhere, they will tell, don't go. Are you getting this? That is what is AS1. Disclosure of accounting policies. Okay, where should I disclose, sir? Notes to accounts. Everything will be disclosed in notes to accounts. Is this clear? Now, main thing in this is fundamental accounting assumptions. Fundamental accounting assumptions, there are three things: going concern, consistency, accrual. Going concern is what? You are becoming a chartered accountant. Forever in your life you will be learning. Forever in your life you will be learning only, because things will get updated. You will learn even after clearing. Correct? That is going concern. That means we have plan of not shutting down at all. Clear? Consistency. Exams are coming up. We have to study every day. That means whatever we follow consistently, we will follow it. Whatever accounting policies are there, consistently we will follow it. One day we will study for 12 hours, another day we will not study at all. That we are not going to do. Clear? Accrual. Accrual. This I can't link it to studies. Okay. Transactions are recorded as and when they happen. Money comes in, money goes out. No. Follow the process. Clear? Whenever transaction happens, we have to record it. From school you are studying this. Okay, these three concepts. Now, there is one assumption about fundamental accounting assumption. Afternoon, sir, food. I don't know what is happening. You tell properly what you are telling. There is always one assumption about fundamental accounting assumption. That is, it is always followed. It is always followed. If it is not followed, tell me. It is not followed, tell me. That means your parents will make an assumption that you are always going to study. If you don't study, tell me. Then they will make different rules. Don't worry about it. Okay. Now, selecting an accounting policy. When you select an accounting policy, there are three things you have to learn: substance over form, materiality, and prudence. What is substance over form? Don't judge the book by its cover. Correct? What is substance over form? Don't think about the legal reality. Think about the economic reality. That means there is one land. On that land, you constructed building. Land belongs to your father. Correct? Building belongs to you. You constructed the building. Now, can you tell land is in father's name? That's why father only should calculate depreciation on this? No. Are you getting my point? One more example. Hire purchase. Do you know hire purchase? There is something called as hire purchase. You purchase the asset and you keep paying the installment. When will you become the owner? When you pay the last installment, you will become the owner. But still, every year you will only be taking depreciation because you are the person who is enjoying the asset. Clear? You have one topic called as finance lease, AS19. In finance lease, what happens? Same thing. You will be paying the lease rent only. You are not the owner. But still, depreciation will be in the books of the lessee itself. Okay. Now, materiality. What is materiality? Everything because you know it. Don't go and put it in the exam paper. What they ask, that much only you tell. Are you getting this? That is information that helps the reader in decision making. He wants to give 4 marks from from consolidation. He has asked one question. What is minority interest? Please don't go and write all the steps from step 1 to step 8. He didn't ask all that. Okay, so what is important for the reader, that much only you give it. Provide for foreseeable losses and not for future profits. Prudence. Prudence we know. Okay, we know prudence. What is prudence? Future losses should be provided. Future income, ignore. We don't know all about it. Okay, now, changes in accounting policy. When can you change an accounting policy? When it is required by statute or law? When it is required for complying with an accounting standard, or for just showing a better presentation of the financial statement. Okay. Now, disclosure of change in accounting policy. When should you disclose it? You should disclose in current period. You change something, it is affecting current period. Show the amount in current period. But you are not able to disclose the amount. You are not able to compute the amount. You change some policy which will impact the retirement of the employees. So somewhere in the future it will impact you. You don't know. Just fact to be disclosed. If you know the amount which is impacting the profit or loss, you show the amount. If you don't know the amount, just mention the fact and end the story over there itself. Not material in current period affects the future period. That means something you did today, it will not impact you today at all, but it will impact you somewhere in the future. Fact to be disclosed. Which one? That means I told whoever employees cross the age of 50, I will give them bonus after that. Today all my employees are in their 20s. All my employees are there in the 20s. Somewhere in future it will be material. Now it's not. But I will mention the fact of such change. Clear? AS1 done. That's it. More than that, AS1 discussion is not required only. Okay? You should be able to answer. AS2. AS2. What is AS2? Valuation of inventories. We don't know this at all. Huh? Valuation of inventory. CA foundation also people have studied little of AS2. Now, what is inventories? What and all can be included in inventory? Raw material, finished goods, work in progress, and store spares and consumables. Clear? Raw material we know what we are using to manufacture. Work in progress we know half manufactured goods. Finished goods, what is it? Completed but we did not sell it. Finished goods usually we used to call it as closing stock. Correct? What is the store spares and consumables? Huh? What is the store spares and consumables? What? To maintain the machinery, what I have done, I have kept one bottle. This is my generator over here. Okay, I have kept one diesel bottle. Diesel. I'll pour to the generator and run the generator. Okay, now this is consumable, right? This also will be taken as closing stock or it will be taken as inventory. Is this clear? No. Now, work in progress. What and all is not included, they are telling, not applicable. One, work in progress under construction contract. Why? A7 is already there. Then, work in progress in ordinary course of business of service provider. Service provider, marathon is going on. Okay. Now, if I continue the marathon, if I'm taking the marathon on 31st of March and I'm continuing the marathon after 12 o'clock also, okay, still I have to finish some 2 hours of marathon. Can I take at 12 o'clock closing stock? Marathon, closing stock, service is not completed. Can we do that? It is not possible because it is very tough to value the services. Service, when it is semi-finished, it will be very difficult. Okay, when it is finished only, you can tell what is the value you are supposed to get. Now, shares, debentures and other financial instruments held as stock in trade. Why we are not considering this? We have AS13. Producers inventory, livestock, agricultural products and all which are there. We are not going to consider only. That means AS2 rules are not applicable. But if I have some agricultural products, if I have some dried coriander leaves, okay, what will I do with this dried coriander leaves? It will be taken at NRV. It will be taken at net realizable value. What happened? Okay, it will be taken at net realizable value. Is this clear? So if you have, imagine Kiki is there. Okay. Now Kiki, what she has done, she has grown some rabbit. I was waiting for you to tell a name and that would be the animal. Okay. Rabbit. So what she has done is she has grown one rabbit. In one rabbit, nothing can be done. So what she did, she made one more rabbit. Okay. So she bought one more rabbit. Now, moment there were two rabbits, there were many rabbits. Okay. Now, there are like small rabbits. Sir, this rabbit eyes, it didn't open its eyes yet. Small rabbits, they don't open the eyes. First 15 days, they don't open the eyes. Okay, so now, there are 3 rabbits. Tell me one thing, what is Kiki's business? Selling these rabbits. Selling these rabbits only is the Kiki's business. Sir, to whom she is selling the business, sir? To zoo people. Zoo people, they are taking rabbits, sir. Yes, to feed the snakes. All the rabbit people, they sell their biggest purchaser is who, zoo people only. They will grow the rabbits and sell the small rabbits to the zoo people. Zoo people, they will not feed. They will not feed. What they will do? They will leave the rabbit inside the snake's that box. Then it's up to the rabbit's survival skills. Okay, then it's up to the rabbit's survival skills. Are you feeling bad about it? Yes, I feel the same when I see the hen also in the chicken shop. There also it is up to its survival skills. That was a twist question. Okay, now they're like, sir, okay, sir, these little rabbits I'm selling, no, my business is that only, no. So my little rabbits are inventory, no. But then why am I not taking it as inventory, sir? I am not taking it as inventory because I don't know the cost. These two are responsible. Are you getting my point? I don't know the cost. I can calculate the cost, but it becomes a huge task. First, I have to calculate how much money I have spent on all the food that I have given to these people. Then I have to see how much I have given all this vaccination and all that to these rabbits. It becomes really tough to calculate closing stock. That's why they said whatever rabbit is there, show it at NRV. Market price you are going to get 5,000 per rabbit, show it at NRV. No, we are not getting. That is a hypothetical situation. Suddenly I know you got a business plan and you're ready, 5,000 for rabbit. Yes. Measurement of inventories, always cost or NRV, whichever is lower. Okay. Cost means what? Purchase cost. What did you pay to purchase it? Conversion cost. What is conversion cost, sir? People attending costing classes. Now, tell me, what is conversion cost? Conversion cost is no. Direct material first, direct labor, variable overhead, fixed production overhead. Are you getting this? Direct material, direct labor, variable overhead and fixed overhead. This is your conversion cost. Now, understand this. Purchase cost. Simple. There is a huge list. Okay. Don't worry too much about the list. Purchase cost is, where did you purchase from? Imagine there is a kid. Okay. He is planning to manufacture something. So he is getting raw material from Thailand. Oil. Some oil is getting from Thailand. Now this oil which is getting from Thailand, no. Simple. You want to calculate from there till it reaches the go down. Whatever has been incurred, everything is going to be taken as cost. From there till it reaches the go down, whatever has been incurred, everything will be taken as cost. Okay. See this, purchase price, duties and taxes other than those refundable. That means if you are getting ITC, those you don't take as cost. If you are not getting ITC, then you take it as cost. What is ITC, sir? I don't know. Please refer your tax classes. Okay. Freight inwards. Freight inwards. You are putting it on a truck. It is traveling towards your go down. Okay. Any other expenditure directly attributable to the acquisition. Some people are there loading. Then they are going to unload it. All that will be taken. Trade discount, rebate, duty drawback and all. If it is there, it is going to be subtracted. Cash discount to be ignored. Sir, why, sir? In my foundation class, someone taught me that trade discount should be ignored. Cash discount we will pass entry. Trade discount we are going to ignore. We never pass entry for trade discount. Cash discount we pass entry, sir. Here you are telling opposite. Cash discount to be ignored only when calculating stock. Cash discount is not an discount which is incurred now. It is for paying early or paying late. I mean, paying late, why you will get discount? Paying early only. Clear? So that is when at the time of payment, not at the time of purchase. That is why cash discount is ignored over here. Conversion cost, direct material, direct labor, variable overhead, fixed overhead. Now, see the fun. Okay, direct material, I know 5 rupees per unit. Direct labor, 3 rupees per unit. Variable overhead, 2 rupees per unit. Fixed overhead, 1 lakh. Are you getting my point? There I don't know per unit. There I don't know per unit at all. That time you have to go into your, what is your normal capacity? Normal capacity. Let's say normal capacity is 1 lakh units. Okay, let's make it 10,000 units. Normal capacity is 10,000 units. That means what? I saw this room and I thought, okay, this room I'll take it on rent and my capacity I can manufacture in this room is 10,000 units. Now, let's assume, okay, what if 8,000 units are manufactured? What if 10,000 units are manufactured? What if 12,000 units are manufactured? Okay, 10,000, 8,000 and 12,000 units are manufactured. Now, all the cases, my closing stock is 1,000 units. My goal is not to calculate cost of manufacture. My goal is to calculate closing stock. My goal is to calculate closing stock. So what will I do? Direct material 5. Okay, it will be 5 plus 3 plus 2. Already this I know, 10 rupees per unit. Fixed overhead, what I will do? If at all, okay, it is at normal capacity. If it is at normal capacity, what is the normal capacity? Normal capacity is what? 10,000. So if I am at normal capacity, then what I will do? 1 lakh divided by 10,000 is equal to 10 rupees per unit. Therefore, total is 20 rupees per unit. Because it is 20 rupees per unit, my closing stock will become 1,000 into 20, 20,000. Did you get this? Okay. If it is below the normal capacity, that means below normal capacity, then 8,000 units. What will you do? 1 lakh divided by 10,000 is equal to 10 rupees per unit. So your closing stock will still be 1,000 into 20, 20,000. But you have to remember one thing. How many units you manufactured? 8,000. So 2,000 units you didn't manufacture, no? 2,000. So if you see 8,000 into 10 rupees, only the fixed overhead, it is becoming 80,000. But what is the actual? 1 lakh. So what will happen? 20,000 will be debited to P&L. Are you getting my point? See, first time what happened? 1 lakh units, no? 1 lakh rupees, 10,000 units I have manufactured. So nothing to worry at all. Full 10,000 units I have manufactured. So therefore, full 1 lakh, whatever I have spent on fixed overhead, gets added to my stock itself. Gets added to my cost of inventory itself. But here what happened? I have manufactured only 8,000 units. That means I didn't use this building according to plan. So how much I did not use the building, that cannot be added to the inventory. That will be taken to P&L as other expense. Are you getting my point? The 8,000 rent is getting added. 8,000 units, whatever rent is incurred, it is getting absorbed. 2,000 units is not getting absorbed by the inventory, it is going to P&L. Now my question is, sir, what if it is 12,000, sir? About that time I will do 1 lakh divided by 12,000. That will give me 8.33. Only 8.33 will be taken. So my cost is 18.33 into 1,000. That makes it 18,330. What happened? Simple logic. What happened? In this room, I plan to manufacture 10,000 units. I manufacture 10,000 units. Whatever rent I have paid for this room, I will add it to my inventory. My inventory cost only I will add it. In this room, I was planning to manufacture 10,000 units. I manufactured only 8,000 units. That means 2,000 units what I did not use or did not manufacture. Rent which is related to that 2,000, I will show it as rent, where other expense. It will not be added to the inventory. Now in this room, I was planning to manufacture 10,000 units. Okay, I manufactured 12,000 units. That means I manufactured more. If I manufacture more, what will happen? Can I put more rent? No, I'm going to pay only 1 lakh. No. So per unit will reduce. Because I have overworked. That time cost per unit has gone down. Is this clear? All the other things will be variable. If I work more, I will pay more. If I work less, I will pay less. Is this clear, guys? Yes. Fixed production overhead, variable production overhead, allocation, low production, high production. Just now what we did, that only is there over there. Okay. See, in case of abnormally high production, amount of fixed production overhead allocated to each unit of production is decreased so that inventories are not measured above cost. See, in low production, what happens? Unallocated overhead are recognized as an expense in the period in which they are incurred. Did we discuss this with the example? Yes. Now see, fixed overhead per unit will be total fixed overhead divided by higher of actual or normal production. Higher of actual or normal production. Higher means whichever is higher. Whenever you get doubt, you should spend 2 seconds on self-love. Okay, you should just think about yourself for 2 seconds. That time you will only get the answer for them. Yes, no problem. We have one more here. Kept see. Okay, what? What? Stores and spares. Yes, yes. It is PPE, by the way. PPE it is. Okay, guys. Remaining fixed overhead expenses off to P&L. That is total fixed overhead minus absorbed fixed overhead. Whatever balance was there, no, there for 2000 units, it will go to P&L. Actual production is, we know, you can use the cost of goods sold formula only. Opening stock plus purchases minus this thing. Here what they are doing, closing units plus units sold minus opening units. You use the same formula, find the missing figure wherever in the formula it is there. Clear? Now, small things. Your small chapters in costing. Joint product. If it's a joint product, what will you do? Joint product, what will you do? You have one product like this. This is your product. First process of your process costing. Okay, it is joint only. Second process of your process costing. There also it is joint only. In your third process, they get split and they become like this. It is called a split off point. Now, cost till the split off point is together, no? How to divide it to the two products? Based on, in which ratio? Quantity, no. Based on, no, not costing, based on value. There is one method there, I know. We are talking about AS2 here. Okay. AS2, see over here. Allocation be based on relative sale value. It will be allocated on the basis of sale value, not the quantity. Not the quantity. Some products quantity might be very high, but the selling price might be very low. Some products quantity might be very small, but you will sell it at like 25,000 per product. Are you getting my point? So sale value. So after this, sir, what about after they got split? After they got split, you know the cost, no, individually. You will know the cost individually, no. Add it here, simple. But these things we don't know, right? How much for this one, how much for that one. Take the total and in the ratio of the sale value, just split it. In the ratio of sale value, split it. Clear? Yes. Let's go further. One more is there. Byproduct. What is byproduct? What is byproduct? Absolute waste product. Absolute waste product. You are thinking of taking it and putting it into the dustbin. But when you are about to throw into the dustbin, someone came and told, hey, I want to buy it. Give me, I'm ready to pay money for that. Are you getting my point? That is byproduct. Buttermilk and dairy industry, buttermilk is waste product. That is their scrap. They are not putting any effort to manufacture that. When they are doing butter and ghee and all, no, in that process, automatically they are getting buttermilk. They are actually going to pour it out. That time in Chennai heat, they told, give me, I will drink it. Okay. See, he's drinking already buttermilk. Okay, so now what to do that time? Packet it and sell it. Scrap and byproduct is not exactly same. Depends on what scrap you are talking about. Scrap in the process of production is byproduct. Scrap of your machinery is not byproduct. Your machinery which has gotten old, that is not byproduct. Now, here what you are going to do? When products as well as scrap or waste material in nature are immaterial, but when this is, what happens here? Net realizable value, you will take it and it will be deducted from the cost of the main product. Your main product you spend 1000 rupees. Luckily byproduct you got 100 rupees. So your main cost will only be 900 rupees. Is this clear? Other cost. What is other cost? Other expenses. Whatever is required to bring the inventory to the present location and condition should be taken. Now, cost incurred to bring the inventory to the present location and condition is other cost. But if at all there is interest and borrowing cost, we are not going to take it, but we will take it. If AS 16 is applicable, borrowing cost will not be taken, but if AS 16 is applicable, it will be taken. What is AS 16? Borrowing. Oh, very good. Yes, borrowing cost. Now, what will happen in AS 16? If at all something takes some time for it to be ready, that time you will add it. So here they give the example of grape wine. Wine will take some time now. Imagine you took loan and you are making grape wine. For 2 years, you are not going to touch that wine at all. You are going to let it spoil and spoil. When it is spoiled, people will be having more demand. So now it is getting spoiled. So every time whatever borrowing cost is there, you will add it to the inventory value. Clear? This is not because of AS2, it's because of AS16, which we are going to see today itself. Okay, though the standard is silent, treatment of amortization of intangible assets should be taken as part of inventory cost. You are manufacturing this calculator over here in Chennai, but we don't know how to manufacture this calculator. The technology was given by Casio, Japan. So every time I manufacture one calculator, they said 2 rupees should be given to them. Technical know-how. Clear? That also will be added. Amortization of intangible asset will also be added. Exchange difference will not form part. You will not worry about exchange difference. Okay, inventory cost will not worry about exchange difference. For exchange difference, AS11 has separate rules. How to calculate Wikipedias? Now, let's go further. Okay, these charts and all. Now, only thing that I have to discuss is, no, we have purchased the technical know-how from them. That's why it's a technical know-how, not royalty. Royalty will anyways be added. Direct material, direct labor, direct expense. Array, I took the technical know-how from them. I can manufacture Casio calculators in India for 5 years. So every time whatever is this is there now, when I divide, I'm getting 2 rupees per unit. Amortization. And I divide. Okay, now inventory. Listen. Shh. Inventory, what we are going to do? Finished goods and work in progress. It will always be cost or net realizable value, whichever is less. Finished goods, work in progress. Always cost or net realizable value, whichever is less. But raw material, what we are going to do? Raw material, it will be taken at cost. Raw material will be taken at cost. But if finished goods are sold at below cost, then you will take it as replacement cost. But if your replacement cost is more than cost, you will take it at cost. I don't know what's happening in life, sir. Now, simple. Understand this. Raw material will always be taken at cost. Okay, cost. Let's say cost is 100. Now, finished goods and WIP will always be taken at cost or NRV, whichever is less. Clear? If finished goods, for example, cost is 100 and NRV is 110. Cost is 100, NRV is 110. That time finished goods should be shown at what value? 100. Correct? That time raw material also will be shown at 100. But imagine finished goods, the NRV is 90. That time finished goods should be shown at 90. NRV it should be shown. That time raw material will not be shown at 100. It will be shown at the replacement cost of 80. If you have replacement cost. But imagine the replacement cost is 120. That time doesn't make sense not to show something more than cost. So you don't take 120, take 100 only. Are you getting this? Finished goods, cost or NRV, whichever is less. Raw material, WIP, cost or NRV, whichever is less. Raw material will be taken at cost. If finished goods are sold at below cost, then raw material will be taken at replacement cost. But in case replacement cost is more than cost itself, then you take it at cost only. You cannot show something more than cost. Okay, below cost is conservatism. Above cost is not allowed. Clear? That is the main thing over there. Now, NRV. What is NRV? How are we going to get NRV? Estimated selling price minus estimated cost of completion minus estimated cost necessary to make the sale. Estimated selling price. Okay, today I have WIP with me. Okay, today I have already spent 50 rupees on this, but I know that I have to spend another 20 rupees. This is estimated cost of completion. Then I know I have to spend 5 rupees to sell it. This is estimated selling expense. Clear? Now, tell me one thing. If I am calculating NRV, for WIP, then it will be estimated selling price minus estimated cost of completion. Okay, cost of completion minus estimated selling expenses. This is your NRV. If you are doing NRV for finished goods, that time estimated selling price minus estimated selling expenses. That's it. There is no cost of completion because it is already completed. That's why it's called as finished goods. So if you're calculating NRV for WIP, you use this formula. If you're calculating NRV for finished goods, you'll be using this formula. Both the things, whatever information is required, it will be given in the question. It will be given in the question. Without fail, it will be given in the question. Whatever we have done in regular, you just go and see that, okay? Same questions. Yes. Normal versus abnormal loss. What is normal loss? What is normal loss? It is avoidable. What is abnormal? Unavoidable. I'm sorry. Hey, normal is unavoidable. Abnormal is avoidable. Now, let's say 5,000 kgs. Okay, of apples I bought. 5,000 kgs of apples. And cost is 100 rupees per kg. 100 rupees per kg. Now what happens? Let's say 10% normal loss. 10% is normal loss. That means I cannot avoid at all. It will get lost. It's not under my control. 10% normal loss. Now, actual loss. Actual loss is 600 kgs. 600 kgs. That means 100 kgs is abnormal loss. 100 kgs is abnormal loss. This was not under my control, no? This was under my control, no? Abnormal loss. See how it will be working now. 5,000, how much was the cost per kg? 100. Now you see what will happen. 5,000 kgs into 100 gives you 5 lakhs. This is the total cost. This is the total cost. Now what you will do? 5,000 kgs, 5 lakhs divided by 4,500 kgs. That makes it 111.11. I'm ignoring 111. What happened? You had a group project in school. 5 people were there in the group project. Everybody was given little work. When 2 people don't do the work properly, what will happen? Other people will have an additional headache. Correct? Normal losses like that. Cost per kg was 100. Because 500 kgs are gone, now cost per kg has gone up to 111. That means the good units are going to bear the cost of the bad units. Good units are going to bear the cost of the bad units. But the very bad units are there, no, who after warning also they didn't listen to us. That we will not go to bear. What we will do now in this case, 4,400 kgs into 111. This is no need to calculate. This is your cost of production. Cost of production or cost of goods. 100 kgs into 111. This is your abnormal loss. This is your abnormal loss. It will be debited to P&L. This is what you need to know about abnormal loss. They can ask you questions like this. Normal loss, no problem. Ignore it. Okay. Whatever normal loss is there, those units, whatever, because of them, whatever we face, others will bear it. But abnormal loss, whatever is there, that will go to P&L. Clear? There is one question in your study material where they talk about something in tons and all. Go and see that question. Yeah, in tons, 500 metric tons, something and all they will be telling. Yes, that is it guys with AS2. AS4 is anyways done. We'll go to AS5. Huh? Hey, no break. 10 now. What is AS21? We'll go in order. What is AS1? Disclosure of accounting policies. AS2. Valuation of inventory. AS3. Cash flow statement. AS4. Contingency events occurring after balance sheet date. AS7. Construction contract. AS13. Accounting for investments. AS12. Government grants. AS14. Amalgamation. AS18. Related party disclosure. AS20. EPS. AS21. That's it. 11 standards only we finished. 27 standards are there. 16 standards to go. 16 standards to go. Okay, you can take a 5 minutes break. Okay, let's continue. AS5. We'll go into AS5 now. Okay. AS5 focuses on few things, that is net profit or loss for the period, prior period items and changes in accounting policies. That's all. That's it. Clear? Net profit or loss for the period when we are talking about, it is divided into multiple categories. One is ordinary activity, another one is exceptional activity, or third one is extraordinary item. Ordinary, exceptional, extraordinary. What is ordinary? Normal day-to-day business activities. Okay, normal. Part of normal business activities. Clear? Now, what is extraordinary? Which is not recurring in nature. It happens very rarely. Like loss because of some earthquake and all is extraordinary. Now tell me one thing. Government grant received. Sir, wait, you are in AS5, not AS12. Yes, government grant received. Is it ordinary or extraordinary? It is ordinary. Exceptional, we'll get to that later. It is ordinary. Clear? Government grant refund. It is extraordinary. Why? Why? Because you getting help from government, that is part of your day-to-day business. That is expected. But you not following rules and you have to refund the money, that is not expected. That is extraordinary item. Other than that, you can see extraordinary item, attachment of a property by government. That means you had one property. Inside that you were selling some dried coriander leaves. Okay, that time they seized the property itself. Government came and seized the property itself. They are like, no dried coriander leaves. Only fresh coriander leaves are to be sold. Okay, so then loss due to earthquake. Earthquake, unless you are living in Japan, you are not expecting earthquake to happen every day. Okay, therefore loss due to earthquake will be an extraordinary item. Sir, okay sir, I understood. Ordinary I understood. Regularly happening. Extraordinary I understood. Not regularly happening. Not expected to happen also. Non-recurring in nature. What on earth is exceptional item, sir? Exceptional item is ordinary activity. Huh? Ordinary is ordinary. Extraordinary is extraordinary. Exceptional also ordinary. Yeah. What is exceptional item? It is ordinary item. But because of its nature, size and incidence. Nature, size and incidence. It may be disclosed as exceptional item. You're like, okay, what is this? What is this? Now, normally, if I sell my inventory, okay, and the inventory value went down by 1%, normal. Inventory value went down by 25%, normal. But it's a huge thing. I want to tell my reader, exceptional item. Clear? Exceptional item. Now, let's say electricity bill, I got 2000 rupees. Normal. Okay. Electricity is part of business. Electricity bill, I got 3000 rupees. Part of business. We got a new CM Vijay. He told everybody in one category, okay, all will get free electricity. Free electricity, he said. Okay. some card and all he will make, and he will be like, and people who are below this income group, for them free electricity. That time, obviously, my electricity bill went to 8,000 because they increase the unit rate for others. That's how no people, governments give free. One person gets free, that means somebody else will suffer. So it went to 8,000. Sudden jump in the electricity. Is it normal? Ordinary activity? Ordinary only. But I want to tell the reader something has happened different. Exceptional. Exceptional. Is this clear? Now understand this. Profit and loss on sale of assets or investment. It can be taken as exceptional. Litigation settlement. I had one land. Finally, that land case got resolved and I got one compensation. Exceptional. Writing down the stock to NRV, cost or NRV. Just now we learned cost or NRV, whichever is lower. If it is NRV, I have to write it down. I have to reduce it. Exceptional. Reversal of provision. I created provision for bad debt. Ordinary. Reversing the provision. Exceptional. Ordinary only, but exceptional. Restructuring expense. What is this? What is restructuring expense? Internal reconstruction we did yesterday. In that there was something called as realization expenses. Realization expense, ordinary if you are doing internal reconstruction. But internal reconstruction is little different from ordinary. Exceptional. You want to still tell the person. You being in trouble in business and you trying to recover from trouble is always ordinary. Are you getting my point? It's ordinary. This is, but you will treat it as exceptional item. That means anything that is ordinary, but because of nature, whenever you are writing the definition of exceptional item, you have to write because of nature, size and incidence. It may be classified as exceptional. Sir, okay sir, exceptional, extraordinary and all you are telling I have to show it. Where sir? Where should I show it? In your P&L. In P&L there is a place, profit before, exceptional and extraordinary item, then exceptional item, then extraordinary item. There is a separate area to disclose these things. Is this clear? Now, prior period item. What is prior period item? What is prior period item? Previous years? Yes. Previous year, not losses. Previous year mistake, if it is rectified in the current period, that is called as prior period item. Sir, somewhere I have learned rectification of errors, sir. There I saw 3 stages are there for rectifications. Before preparation of trial balance, after preparation of trial balance, in the next accounting period. Whenever I am in the next accounting period and I am doing rectification, sir, if I see income or expense, I throw them away and I write P&L adjustment. Okay, P&L adjustment. Because of that P&L adjustment, prior period item did not come here. Because of prior period item, P&L adjustment came there. Are you getting my point? Oh, so there we were putting P&L adjustment. That's why it is prior period item here. No, because standard is there. There you are writing P&L adjustment. That means prior period items also have to be shown separately. Sir, wait, stop, go back. Okay, we are going back. Okay. Sir, exceptional item and extraordinary item, sir, you told separate place is there in P&L to show it. But there is no separate place for showing ordinary activity. First half of your P&L is ordinary only. First half of your P&L, no. Income, expense, all this ordinary only. If it is not ordinary, you have a separate area. Prior period item is what? Last year's salary I paid this year. Is it prior period item? No. Last year salary paying this year is not prior period item. Last year's salary without passing outstanding salary last year, I paid the salary this year. Is it prior period item? Yes. Is it prior period item? Yes. I have one factory. I have one factory, no smoke. Emission free. Okay. Old. Earlier it was there. Just now it turned like Sri Lankan government. Just now I went into this thing. What is that? Bio-friendly and all that. Now we are having this factory. Okay. And inside the factory we have the owner. Inside the factory the owner is sitting, kid. Outside the factory all the workers are sitting. Outside the factory all the workers are sitting. What does it mean? That means they have gone on strike. They are asking for salary hike. Okay, this strike happened in 2016. This strike happened in 2016 May. Clear? How much they will sit outside in Chennai? After one point, they will get, they will feel the heat and they will come inside and do the negotiation. Correct? Then they told, okay, I will listen to you. Okay. One guy, he likes heat. He's staying outside only. Okay. So they came and then they told, okay, we'll negotiate. But see, kid was very smart. He said, you do one thing, you go to court. Till the court case is solved, you pay, I will pay you this salary only. If court tells that I have to give you more, no, that time I will give you more. He knows next 5 years free, no tension. He knows next 5 years this case will run. Okay, so 5 years are over. Now 2021. Okay, he thought what? Court will be telling again for me only decision. 2021 February. Kid was getting ready for Valentine's Day. That time court judgment came. He was waiting for some other judgment, but court judgment came. Okay. So now in the court judgment, they told you have to pay the differential salary from 2016 to right now. Whatever is there, extra salary is there. No, you should give from that day to this day. Okay. Okay. Kid paid in February itself. Is it prior period item? 2016 to 2021, is it prior period item? Is it prior period item? No. Is it prior period item? No. But in the previous year, your lawyer had told you will lose the case, but you did not make the provision. Now you are going to make the payment fully. Is it prior period item? Yes. 2021 judgment came. 2021 judgment came. Kid just ignored it. Directly paid in 2021 May. Is it prior period item? Yes. Why? In 2021 the judgment came. No. You should have made the provision. No. But when are you paying? In May. When are you paying? In May. Is this clear? It was a mistake to not record it in 2021. Therefore, it is prior period item. If you had paid the full amount in 2021, you are not going to tell it is prior period item just because you are paying from 16 to 2021. 16, 17, 18, 19, 20. 5 years you are paying in 2021, not prior period item. But if at all you made a mistake in the previous year and you are going to pay, that is prior period item. Is this clear? What will it be? What? No, nothing. It will be an, you can show it as exceptional item. It will be an ordinary item only. Because of the nature, size and incidence, you can show it as exceptional. Okay, next. Changes in accounting estimate. Okay, I'm just brushing through this. Changes in accounting estimate, understand this. Making an estimate is not changes in accounting estimate. First time I am creating provision for doubtful debt. No. I created provision for doubtful debt as 2%. Now I increase the provision for doubtful debt to 5%. This is changes in accounting estimate. And 5% provision I made it 0. What is this? It is changes in accounting estimate and it is exceptional item. Remember we saw reversal of provision is exceptional item. So creating a provision for the first time is not changes in accounting estimate. Okay, creating provision for the first time is not changes in accounting estimate. Creating the provision, then changing that provision, that is changes in accounting estimate. Clear? Changes in accounting policy. What is changes in accounting policy? Change in depreciation method, WDV to SLN. What is this? Changes in accounting estimate. Changes in accounting estimate. Huh? No, I'm just seeing if we have written there. No, it's not written, but it changes in accounting estimate. Yes. Yes. If you were in 2020, then it would have been changes in accounting policy. Now it has changed. It is changes in accounting estimate. Now means since 3-4 years. When you change the, you had a question in CA Foundation. We are changing the method of depreciation. That time, are you going to calculate depreciation from before or from that day? No retrospective. That is why it is changing the accounting estimate. Before they should do retrospective. Now, before weighted average. Changes in accounting policy. Your way of valuing the stock only you are going to change. This is not changes in accounting policy because entire depreciation chapter is just an estimate. In depreciation, only thing you know is cost. Useful life 10 years. How you know? Who told you 10 years? Are you getting my point? Scrap value 5,000. Today's value only. Properly we don't know. 10 years later we know someone will give us 5,000. Are you getting my point? So everything in depreciation is estimate. Therefore, if you change the method, changes in accounting estimate. For 24, it's becoming too cool, no?
Depreciation percentage, change in estimates or change in accounting.
Change in accounting estimate. Why you change the percentage? What? Then he changed it. See, if I take 10% to 15%, that means I feel my asset will depreciate faster. Change in estimate. If I take from 10% to 8%, that means I feel asset will depreciate slower. Change in estimate. Heard only half class of audit. The following are not, I heard your notes was not complete in audit. Yes, the following are not changes in accounting policy. Two things you have to remember, which is not changes in accounting policy. That means introducing a new policy is not change in accounting policy. See here, adoption of an accounting policy. Adoption means you are starting it for events or transactions that differ substance from previously occurring events or transactions. Before I was manufacturing dried coriander leaves. Now I started manufacturing chocolate. So I started manufacturing chocolate. Oh, both are same. Depends on what chocolate it is. Okay, now I started manufacturing calculator. New events. Now it is called as adoption of a new policy. Clear? Adoption of new accounting policy for events or transaction which did not occur previously or that were immaterial. Before I was doing service. Till 9:30 in the night we were giving marathon. Clear? Now I thought, forget it. I will start manufacturing calculator. I'll start manufacturing calculator. New policy. Okay, it is not change in accounting policy. Is this clear? Yes. Any change in accounting policy which has material effect should be disclosed. It shall be quantified and it is not possible, then fact should be disclosed. This we studied in AS4 also. If you know the amount, show the amount. If you don't know the amount, tell about it. That's all. Done. AS5 done. AS7 also already finished. AS8 I'm skipping. I'm not doing it. AS8 I'm skipping. I'm not doing it because it's not there. There is no AS8 only. Go AS. Yes. AS8 we are not doing, guys. AS6 also we are not doing. It's also not there. AS30 is also not there. That is also removed. AS9, revenue recognition. Too cold. Okay, just go and make it 22. Make it 22. That's right. We'll reduce it. That time will become proper. 24 is discontinuing operations. How much is it? Enough. Come. 22. 26. Hey, it's too hot, man. 26. Okay, we'll do one thing. 15 minutes, half an hour, we'll keep it 26. Half an hour, we'll keep it 16. Yes, AS9, guys. Revenue recognition. Let's go to revenue recognition. Next accounting standard. Okay. Sir, what is this, sir? AS9, revenue recognition. What does it mean? When should we recognize revenue? You know what does it mean? This is telling you the starting point of your P&L. Revenue from operation. You are writing your revenue from operation. For your ice cream, the trial balance sale was given. No. You are taking that sale and directly putting no. Okay, that revenue from operation, how to recognize, they are telling us. Okay, now, how can you get revenue from operation? Three things: sale of goods, sale of services, rendering services, or you're not doing both. You're just letting something that belongs to you, you're giving it to others. That is yielding interest, royalty, and dividend. You have, let's say, money. You give that money to somebody, they give you interest. You have money. You invest that money in somebody's company, they give you dividend. You have some technical knowledge. You give that to somebody, they give you royalty. Is this clear? All this will be considered as revenue. Now we just know what is revenue. Okay. Now understand this. AS 9 not applicable to these following people. Who are they? 1. Construction contract. Why? AS 7 is already there. Hire purchase and lease agreement. Why? AS 19 is already there. Then government grant. AS 12 is already there. Insurance companies. Why? IRDA regulations are there. There is no accounting standards, but IRDA regulations are there. Now, examples of AS9 certain things. Realized or unrealized gain resulting from non-current assets like appreciation in the value. Asset value goes up. Revaluation reserve. We don't put it to P&L. Clear? Unrealized holding gain. I'm holding the shares. Value is going up. Value is going up. Am I going to take it as revenue from operation? No, because it is unrealized. Whenever something is unrealized, you will not take it only as revenue. Okay. And see, natural increase in agricultural and forest products. Are we going to take it as revenue? I bought one piece of wood. Okay. I thought this is just some stupid wood. But then this wood was ancient wood. During the Chola times, this wood was used for generating fire. Okay, stone, but they used to use wood. New technology. Okay, so now this wood has crazy value, but I have not sold that wood at all. It is unrealized holding gain. Clear? Realized or unrealized gain from change in forex rates. Forex changes. AS11 is already talking about it. Realized gain resulting from discharge of an obligation at lesser than its carrying amount. What does it mean? I had to pay Darshan 500 rupees. I negotiated with him like crazy and I'm going to pay only 400 rupees. 100 rupees is realized gain. It will not be taken as revenue from operations. It's your other income. Are you getting my point? Discount received, you will not put it under revenue from operation. Yes. Unrealized gain resulting from restatement of carrying amount of an obligation. Obligation was 500. I made it 400. I got 400 rupees profit. Sitting. Unrealized gain. I am not going to take it. Is this clear? Okay. Revenue, we already discussed this. Recognition from sale of goods. When we sell goods, how to recognize the revenue? Or when to recognize the revenue? Now, property in goods for a price, it's transferred to the buyer. Property in goods for a price, okay, it's transferred to the buyer, or all significant risk and reward of ownership, and the seller retains no effective control. Simple. I have one ship. Ship. Sanjit is standing over here. Oh, sorry, Kid. Kid is standing over here. Darshan is standing over here. Clear? Now, understand this. Goods are already given. Okay, goods are already given to Darshan. That means, and Darshan has given this fellow money. Property in goods for a price. Clear? This is obviously transfer. Now, box is still here only. The box is not there. Box is still here. But already the invoice was raised in Darshan's name and sent to Darshan. Clear? This is significant risk and reward of ownership, and the seller retains no effective control. That means no control is there with the kid. Ownership is already transferred. Only thing is delivery is pending. Delivery is pending. Are you getting my point? Now, tell me one thing. If you go to Reliance Digital, you told you want one fridge. You are like, sir, class AC is not fine, sir. Whenever I feel cold, I want to sit inside the fridge. So I will buy one fridge itself. Okay, you bought one fridge. You did not pay 1 rupee also. You did not pay 1 rupee also. But invoice is already made in your name. You sign it and delivery will be tomorrow. Now, did the property risk and reward transfer to you? Yes. You took the fridge with you. You took the fridge with you and you paid the amount also. Is it transferred already? No. When you went there, no, Reliance Digital, when they looked at your face, they felt that you look like Surya. You look like Surya. So they told, oh, Surya's brother, you said yes. They said, sir, for you what, sir, price and all, take the fridge for free. Don't want anything. That time, will it be taken as revenue recognition? No. Will it be taken as revenue recognition? No. From whose angle are you thinking? Not from your angle. You should think from the shopkeeper's angle. For you, what is it? You are getting for free. Shopkeeper, seller of goods, has transferred to the buyer. For a price is not there. If for a price is not there, there is no revenue to be recognized only. Or, that means risk and reward of ownership is transferred. Yeah, but if price is not there, you will not take it. Because what revenue will you recognize? Zero value. Okay. For that, actually, one more condition will come. That is uncertainty. There should be no uncertainty. We'll go to that. Wait. See this. No significant uncertainty exists regarding the amount of consideration that will be derived from the sale of goods. Understand this point. Understand this point. One person, your best friend came to your shop, okay, took the goods and went and told, within 1 week, I will make the payment. Within 1 week, I'll make the payment. Clear? Now, after 1 week, you called. Your number was blocked. Your number was blocked. Now, are you having some doubt in your mind? Correct? Now there is no problem. Why? When you sold the goods, they had a smile on their face. Clear? But after 1 week, there is no smile on your face. Are you getting my point? That time, you will go and pass provision for doubtful debt entry. You will not pass anything related to revenue. Why? Because when you sold the goods, you had a smile on your face. You recorded the revenue. After 1 week, you don't have smile on your face. Now you will pass provision for doubtful debt entry. When you sold the goods only, if you had no smile on your face, don't recognize revenue itself. Sir, tell me one thing, sir. When I am selling only, I am having uncertainty, it seems. Then why am I selling in the first place? Why am I selling? What? Related party? No. Everyone is not related party. Okay, why am I selling? Now, sometimes what happens, you have one customer from 3 years. From 3 years. Regular customer. Now, this year, customer is in loss. You will still supply the goods because you have been a supplier for so many years. You will still supply the goods to that customer. But when you supplied only, you knew maybe this amount will come very late or not come at all. But as you had a relationship for 3 years, you are going to supply the goods. Now, when you are supplying, you have some uncertainty. Okay, you have some uncertainty. So what you will do? You will not recognize the revenue. You will not recognize the revenue. For that, we have to actually see this part over here. Uncertainty on recognition of revenue. Now, here what will happen? Any revenue can be recognized only when consideration is certain to be received, or else revenue recognition shall be postponed. Now tell me one thing. On 1/4, I sold goods. Okay, sold goods for 50,000. Okay, to Kiki. Okay, I sold goods for 50,000 to Kiki. Clear? Kiki told on 2nd April. Okay, on 1st April only, Kiki told, I purchased goods from you, sir. Okay, I told Kiki, you have to give me money after 1 month. Kiki told, April Fool. Are you getting my point? 1st April, no, I am not going to pay money at all. I simply told I am going to pay you. Now, what is there? Is there an uncertainty? Uncertainty is there. Okay, after that I called Kiki just to check whether actually there was April Fool or not. She is not picking my call only. Now, is there uncertainty? There is uncertainty, right? I will not recognize revenue. I will not recognize revenue. Okay, no provision also. If I don't recognize revenue, what provision I will create for? I will not recognize revenue only. Revenue means sale. I will not show the sale at all. Now, 5th April. Kiki came and told, sir, I fooled you, no. Take 50,000. Kiki gave the money. Now I will recognize the revenue. Now I'll recognize the revenue. If you have uncertainty, wait. When you get the money, recognize the revenue. If you don't have uncertainty, recognize it. Now understand this. Sir, wait, sir, you're going against the concept of credit sale. Basically, I'm trying to tell you, credit sale you recognize only if you know that you're going to get the money in future. Otherwise, don't recognize the credit sale. Whenever you get the money, that credit sale will be recognized as cash sale. 1/4, April Fool's Day. Yes. My question is, on 1st April, should I recognize the revenue or not? No. Why? Uncertainty. Simple. See, sir, wait, sir. Credit sale, we pass the entry. No. Credit sale, you pass the entry if you know that you're going to get the money in future. When you are selling only if you have doubt, don't recognize revenue. Wait till the money comes. When the money comes, recognize it as revenue. On 1/4, there is no problem at all. On 2/4, Kiki called and told, I am not going to give the money. I am going to Thailand. Clear? Kiki told, I will change my SIM also. You will not be able to contact me only. Now what happens? 1st April, there was no doubt. I recognize the revenue already. 2nd April, the doubt got created. Now I will create provision for doubtful debts. Are you getting my point? When I am recording the sale, if there is a doubt, I will postpone the sale itself. When I am recording the sale, there is no doubt. I will record the sale. Later, if doubt comes, then I will create the provision for doubtful debts. Is this clear? No. If you have uncertainty, I will not recognize the revenue on 1st April. No. You will recognize 5th April only the same. Yeah. You can't do predated. Even though in real life we will do it, but according to books, you can't do predated. You can't go back and pass the transaction. 5th only is the transaction. Is this clear? When there is uncertainty, postpone. When you get the money, recognize. When there is no uncertainty, record today only. Okay, when you get the money, take it. But later, if there is uncertainty, create provision. Don't go back and cancel the sale entry. Just create the provision. Clear? Now, there is also recognition for rendering of service. You can use two methods, proportionate completion method and completed service contract method. What is proportionate completion method? Part by part, when I complete the service, I will recognize the revenue. Completed service contract means when you complete the service, that time you will recognize the revenue. Sir, we are going against AS7. That's why AS9, AS7 is not included. Or in AS9, construction revenue is not included. In AS7, they told you have to follow only proportionate completion method. Here, they are telling completed service contract method also. Is this clear? So, understand this. It recognizes revenue based on proportionate completion of services. Hence, there can execution of more than one act, revenue can be proportionately recognized. More than one act is there. I told, okay, Darshan told, Darshan went to one person. Okay, on the road, he found one person with this chair. That person told, you have to just sit on this chair. First, I will give you head massage. Okay, then I will give you foot massage. First, I will give you head massage. What were you thinking, Sanjit? Not that. Okay, first I will give you head massage. Then I will give you foot massage. Okay, now, Darshan sat 31st of March, they started the head massage. Okay, by evening of 31st of March, shop closing date, time. Okay, he cannot recognize the revenue fully. But he is doing two acts over here. First act is completed. Revenue for the first act will be recognized. Second act will be done later. Revenue for the second act will be recognized later. Imagine that fellow is doing only head massage. Only head massage is doing, or something like, forget head massage, you forget. He is doing detan. Okay, or forget that. He is doing root canal. You know root canal? Okay, they'll ask you to come for some 3 sittings or 5 sittings. Now, only one act is happening over here. No, one act. So, after all the 5 sittings are over, then he is going to make your recognize the revenue. Dentist will recognize the revenue. Clear? Imagine he is telling whitening of teeth. Every day you come, I will make one teeth white, one tooth white. Okay, for every tooth, I'm going to charge 200 rupees. Everyone is doing like this. Everyone is feeling their teeth now. Sir, what? Oh, here I think I have some cavities, sir. They're all doing like that. Okay, so every tooth, I'm going to charge 200 rupees. First day he came, one tooth is done, one act is done. He can recognize 200. He can recognize 200 because there are multiple acts. If it is only one act, then after the full act is over, that time they are going to recognize the revenue. Clear? If the pricing was not like this, if they told upper set, lower set. Now, if upper set, two teeth still remaining, you can't recognize the revenue. Is this clear? Yes. Let's go further, guys. Let's go further. Revenue arising from other things. Small technical timeout, guys. Okay. Next, we'll continue. Revenue arising from interest, royalty and dividend. Interest, what you will do, like you have always done in your life. For interest, what you do, you multiply it into time divided by 12 and you multiply into the rate, correct? Interest on time proportionate basis, taking into account the amount outstanding and rate applicable. On the outstanding amount, as per the applicable rate, based on the time, you are going to take the interest revenue. Clear? What about royalty? Royalty on accrual basis, as per what is discussed in the agreement. Royalty accrual basis, interest time proportionate basis, okay, on the outstanding amount as per the rate applicable. This is what we always did. Morning also what we did for debentures. Debenture amount on face value at the rate into 4 by 12, 5 by 12, something we did. Clear? Dividend. When the owner's right to receive is established, sir, no. Dividend we have to record only when it is paid. That is by whom? Company. Company, when they pay the dividend, record. Company, when they declare the dividend, no entry. Correct? But see the fun part. When company declares the dividend, shareholder record. When company declares the dividend, shareholder will record the dividend. Why? Because the owner's right to receive is established. As soon as it is declared, they know that they have the right to receive it. Clear? Uncertainties we have already discussed. Okay, that is it with AS5. Let's go next into AS10. PP is very simple. Okay, there shouldn't be any problem with the AS10. When we finish AS10, the first set is done. Those things, yes. AS9, there are some more things that we have to discuss. What is that? One is delivery delayed. Delivery delayed at buyer's request. Delivery is delayed at buyer's request. What does it mean? When delivery is delayed by buyer's request, now you made the box ready. You made the box ready. That fellow called and told, give it after 10 days. That fellow called and told, give it after 10 days. Now what will you do? You will recognize the revenue today only. If it is ready for delivery. If it is ready for delivery. Imagine, morning he called and told, I don't want it today. So you stop the work. Half work was done. You stop the work. Now it is not ready for delivery. You will not recognize it as revenue. Clear? Now, consignment sales. Consignment. When will you recognize it as revenue? You will recognize it as revenue only when the goods are sold. Wait. Why am I simply wasting time writing it? I think I have already written it. But searching for AS9 only is the challenge. I don't do it in order now. That's the problem. What? Give me a second. Wait. AS9. Got it now. See, this is the head massage entry. I'm telling head massage. From there I got that inspiration for the head massage. Okay, revenue recognition. See, if there is uncertainty about collection, postpone. If there is reasonable certainty, recognize revenue. Okay, recognize revenue when amount is received. Okay, goods sold, reasonable certainty, amount is yet not received. Debtor account debited to sale. Goods sold, uncertainty, no entry. Amount received, bank account debited to sale. This is what I was telling you. It will become cash sale. Additional points. This we have to discuss. Additional point. Delivery delayed at buyer's request. Okay. 31st of March, goods. Okay. Delayed to 10th April. On Pinky's request, revenue may be recognized if goods are ready for delivery. Next, consignment sales. Consigner, consignee. Goods are sent. Are you going to take it as revenue? No. Owner of the goods is still consigner. Note, revenue to be recognized by consigner when goods are sold by consignee. Goods are sold by consignee, that time the revenue will be recognized by consigner. Is this clear? Next, sale of goods on approval basis. When are you going to show it as revenue? When the goods are accepted. When the goods are accepted. Sir, wait, sir, wait. Sale of goods on approval or return basis. I had it, sir, in CA Foundation. That time, what I used to do, when I used to send the goods only, I will pass the sale entry. But if the goods are not accepted this year, end of the year, I will reverse the sale entry. And next year, when it is sold, that time I'll pass the sale entry. So, inevitably, the goods are taken as revenue only when it is accepted. You will pass one temporary sale entry, but if it is not accepted this year, you will reverse it. If it is rejected anyways, you will reverse. No, there is no doubt about that. Okay. Date will be? No. AS9 talks about revenue recognition. No, they're talking about revenue from operations for the year actually. So date might differ, but if it's within the year, it is this year's revenue. Or if it is not accepted, it will become next year's revenue. That is fine. Date will change, yes. Guarantee sales, warranty sales. What does it mean? Guarantee sales, warranty sales. Actually, this is a mobile, okay, which can be converted into umbrella. From the mobile only, umbrella will open whenever they feel like. Okay, now for this guarantee of 10 years. Guarantee of 10 years means what? If at all there is one small hole in this umbrella also, they will give you a new one. Warranty of 10 years means what? If there is a small hole in the umbrella, just like how when there is a hole in the tire, what they do, they put one plaster over that and they make it correct. Like that, they will make it correct. Is this clear? So now, both the cases, revenue to be recognized when sale is made. Don't worry about warranty, guarantee and all, recognize the revenue. But provision to be created for unexpired guarantee or warranty based on estimated values. Estimates, it is not estimated, estimates, based on estimates. Now tell me one thing. I told you that I will give you full amount back. I will share the notes. I'll share the notes, sir. Can you show the examples? We'll take photo. I'll share the notes itself. Okay. Revenue to be recognized when sale is made. Is this clear? Now, tell me one thing. I told you I will sell you a mobile, and if at all it gets spoiled, I'll give you a new mobile. That means if the mobile costs 1 lakh, should I make provision for 1 lakh 80,000? Should I make provision for 80,000? No. I will make only 1% of 80,000 as provision. If I'm selling a mobile and I feel that mobile 100% will be lost only, why am I selling that mobile? Are you getting my point? So, if I'm having warranty sales, you think 100% of the customers will come back for warranty? No. That's why based on estimates, make a provision. Is this clear? Yes. Sale of goods with installation condition. Installation condition. Now, kid told that in my house, I want one treadmill. I want one treadmill. Okay, I want to work out at home itself. Huh? No, that is the handle of the treadmill. Okay, he said, I want that one treadmill at home. Now, there he told, in this treadmill, okay, there should be a condition or there should be a function where I can have elevated treadmill. I can make it like this and I can run. Okay, they said, yes, it is there. They came and installed. Okay, already the installed treadmill is like this. There was a fault. Okay, little it was like this, slopey. He wanted slope upwards, it is slopey downwards. Okay, so he said, you take this treadmill, running, you go home. Are you getting my point? That is basically with installation condition. If I tell I want a product, I will check on inspection whether it is proper or not, then only I will accept it. So in such case, revenue to be recognized after it is installed and accepted by buyer. Is this clear? Now, event. What is event? You went to CSK match, but you are not going to, for you it is not revenue, for you it is expense. You went to CSK match. Clear? It started raining. It started raining. You had already bought the tickets, no? It started raining. Okay. You spent 15,000 on the ticket. It started raining. Will you get refund? Yes. But you will get only 4,000 because you bought in black. MRP is only 4,000. You will get only 4,000. Ticket you bought for 15,000. Okay. Now in this case, what will happen? Revenue to be recognized only when the event starts. As soon as the match starts, first ball is bowled, over, finished. Then the ground authorities are not bound to refund any money to you. They are not bound to give any money back because the event has started. Now imagine you called one singer over here and asked him, can you sing one song for us? Okay, when he's singing the song, people started telling, I want this song, I want this song. And then everyone started fighting over. Singer, they had to safely take them away. People started throwing stone and all. It doesn't happen in South. It happens very often in North. It doesn't happen in South. In North, it's very common. This fellow, especially in Punjab and all, some Punjabi singer will be there. He'll come for the show. Down, everyone will be drunk. Down, everyone will be drunk. They'll be like, yes. And Punjab, you know, everyone will have one gun of their own. Okay, when they're too happy, they'll be shooting bullets in the air out of happiness. But if they're little more drunk and if their hand goes like this, then they'll shoot the singer itself. Okay, so if there is a situation like that, if that fellow already finished singing first song, done, revenue will be recognized, no refund will be done. Is this clear? Now, sir, in match, sir, what if the toss is over? What if the toss is over? Actually, event starts when the toss only. Clear? Now, what if one ball is bowled, sir? One ball, only one ball is bowled. Immediately rain, match got abandoned. Actually, ground authorities are not bound to give you any money, but just to keep their fan base, okay, what they might do the refund. But according to legally they are not supposed to give you anything back. Now, advertisement. One chips was there, okay, you called Virat and made him shoot an ad for the chips. Now tell me one thing, what will you do with advertisement? I'm the advertisement company. After the advertisement is displayed before public. When the advertisement is displayed before public, once it was there. Now, for example, let's say you put one big hoarding. You made one big hoarding, and in that hoarding you put CM Vijay. CM Vijay you put over there in the hoarding, and you told this is the hoarding of one educational institution. You put over there that 100% pass CA Inter. 100% pass CA Inter. No, here we don't tell 100% pass. How can you tell CA exams? 100% pass CA Inter. Now, you put that hoarding, public saw it, immediately you got notice from ICAI. Immediately you got notice from ICAI. You removed that. Now, revenue is already recognized because as soon as it is displayed before public, it will be recognized as revenue. Clear? Tuition fees, accrual concept. Group 1 got over, revenue recognized. Group 2 got over, revenue recognized. Technical service, if it is performed and accepted by the customer. Technical service. You called on plumber telling that there is some water leakage in the sink. Okay. Plumber told 5,000 rupees. You told, okay, come, urgent it is. Okay. Now, plumber, will he recognize the revenue when he is on the way to your house? Will he recognize the revenue when he has reached your house? Will he recognize the revenue when he finished the work?
Yes.
No. When he finished the work, obviously the customer will open the tap and he will see whether leakage is still there. When you open, more water is leaking now. Will he pay that 5,000? No. So, in such case, it is performed and accepted by the customer. That is it, guys. That is it with AS9. Let's go further to AS10. Maybe when we finish AS10, we can go to AS11. When we finish AS10, we'll go to AS11. That's it. What did you expect? Okay, now AS10. Listen. Let's go into AS10, guys. Very simple and small and easy standard. Okay, concepts might look that there are many, but whatever you have studied in life and what you're already doing in multiple chapters, that only is there in AS10. Now, listen. Shh. What is the meaning of PPE? Property, plant and equipment. What are they? Can you see them? Yes, tangible items. Correct. Held for. Why are you holding these tangible items? Use in production, supply of goods or services, administration purpose, rental to others. Oh, sir, I didn't understand anything, sir. Okay. I have one machine. Okay, let's say I have one car. Okay. This car, wait, tire is there, don't worry. Okay, this car, when you looked at that car only, no, you told, sir, this is PP. This is PP. But I am telling, no, sir. You cannot take it as PP just because you got the car. This car should be used in production. That means inside the car, during the daytime, you are making idli. Evening, outside the car, you are putting on table and selling. Clear? Is it used for production? Yes. There are people who do that, okay? Next, used for supply of goods and services. In the house, you are making idli. Taking it in the car around the city and selling. It is used for supply of goods and services. Yes. Administration purpose. You are selling idli in 5 locations. In the car, you are just going to all those 5 locations and seeing whether work is happening properly. Administration purpose. You are tired of eating idli. You give the car only on rent. Okay. Rental to others. Only if these things are happening, then it can be taken as PPE. Clear? You took the car. Okay, you took the car and you just went on a trip. You took the car to go on trip. Is it related to any of these? No, it will not be taken as PPE in the books. That means if it is not used for production, supply of goods, administration, rental, it will not be taken as PPE. Anything you see as PPE, it will always be used for one of these. Even a printer which is kept in the office, that is used for administration purpose because you are going to print something which is related to business. Clear? Expected to be used for more than one accounting period. You bought the car, you wanted to make idli in that. Because of the extreme heat when making idli, car top layer got burst. Yeah, it burst out. Okay, now, can you use it for more than one accounting period? No. Entire car amount will go to P&L. This chapter is all about capital and revenue expenditure. You can't show it as PPE, then it will go to P&L as expense. Simple. Clear? Recognition of PPE. When should I recognize? Okay, sir, I am using it for production only. When should I show it in my books? You should show it in your books when both the conditions are satisfied. What are they? Cost can be measured reliably and it is probable that future economic benefit will flow to the enterprise. You have a car, you can show it as PPE when there is a cost and you know that future benefit will be there from this PPE. Is this clear? Now, initial measurement. How are you going to show the PPE at cost? See, purchase price, trade discount minus non-refundable import duty and taxes. Why non-refundable? If there is ITC, don't take it because you're going to get it back. Transportation cost, handling and loading, unloading cost, insurance on purchase, brokerage to buying agent, whatever is there which is related to buying. Once upon a time in your life, you had depreciation chapter. When you're doing depreciation chapter, what you used to do? When you write asset account debited to bank, all related expenses you used to add and you should take it over here. So all the expenses which are related to, directly related to the PPE will be added. Now what if it is self-constructed? Self-constructed. You are only going to construct one building. You are only going to construct one building. Now what will happen? Direct material, direct labor, other direct cost, production overhead, architect or consultant fees, site preparation cost. What is site preparation cost? Your land was like this. Now you made it level by filling the mud. Little leveling is not proper. Okay. Okay, by filling the mud. So now what happens? Is it level? Site is prepared. That also is considered as cost of the PPE only. Clear? Imagine in this building, you had one old building. Okay, old building. You removed it and you started constructing one new building. Old building removal, that is also cost of the PPE itself. Demolition. Okay, cost of trial run. What is cost of trial run? You made the asset ready for 5 days. You want to just see how it is working. That time, whatever you spend, that also will be taken as cost of the PPE itself. Clear? There is one question in your study material where they tell you that it is already at 70% operating capacity. That means it is ready. After that, trial run is not there. Once it is ready, some amusement park or something they tell, okay, 70% capacity, it is already at 70% operating capacity. 70% operating capacity means what? It is good for its use, no? If it is good for its use, then after that there is no trial run. Before starting, before you have any operating capacity, you do the trial run. Clear? Now, minus sale proceeds from units produced during trial run. You made one you were having one machine, you manufactured some chips, you didn't sell it to outsider, you just gave it to some few people to test the taste of it. That will be taken as sale proceeds during trial. Clear? Next, after that, present value of dismantling and decommissioning. You are going to dismantle the machine after 5 years. That also should be taken as cost, but you will take it at present value. Today's value you want to take. You know how to do present value. Okay. Present value of restoration cost. Somebody told you this site has to be given back in the same way it was given to you. So now you have to restore the site to its normal. So that is in future. So you are going to take the present value. Any other directly attributable cost. That's it. Okay. Now, items ignored while calculating cost. Sir, when you are calculating property, plant and equipment, certain items are going to be ignored because they are not directly related. First, tax. If ITC is available, see, can you see if credit is available, ignore the tax. Office and administrative overhead, indirect expense. Selling overhead, indirect expense. Abnormal loss, normal loss you would have thought of, but abnormal loss is not related. Advertising cost of new product, advertising expense is always indirect, it will never be added. Now if they tell you also in the question, they might tell you one new factory is started and inauguration expenses are spent. Inauguration expenses advertisement, it will not be capitalized. Clear? Interest cost, unless if it is allowed by AS 16. AS 16 tells you borrowing cost can be capitalized, otherwise don't capitalize. Simple. Okay. Relocation of staff cost. Relocating the staff. Here I am constructing, so I shifted my staff from here to here. Now, this is not related to the construction, so it will be considered as indirect, not considered here. Operating losses. They might give you a question telling that we started new factory, first 6 months there was loss. Loss also he has capitalized to the building itself. Can he do that? No, it should be taken as expense. Such questions are there. I'm not telling from pocket, these questions are there in the material. Training of staff. Training of staff. I bought one new machinery. My staff don't know how to operate only. I gave them training for 2 weeks. Whatever I paid them during training, that also is capitalized. Can be capitalized? No, it's not directly required. Inauguration cost. New factory you make, okay, call CM Vijay for that. Still it will be taken as indirect expense only. Here advertising. Income during construction of PPE. During construction of PPE. Not directly attributable, transfer to P&L. Directly attributable, reduce it from the cost of the PPE. Clear? Now you are constructing one building which is bigger than Burj Khalifa. You are constructing one building which is bigger than Burj Khalifa. So now, when you are constructing, only people are coming, they want to see. They want to see the site where this biggest building is happening. You are constructing a building with 500 floors. Now, Burj Khalifa is 100 something floors. No, you are constructing something with 500 floors. Now, people are already visiting. Tourists have already started coming. Clear? Directly attributable. Directly attributable. It is related to your building only. No. Sorry. Directly attributable, right? So, reduce it from the cost of the PP. Indirectly attributable. What is indirectly attributable? In the site, okay, you got diamonds. In the site, you got diamonds while digging little. What? You have to hand it over to government. You got diamonds. You sold it. It is not directly related to your building construction. So you will take it to P&L. When government takes the diamond from you, you will take it as expense. Don't worry. Okay, pre-acquired or on deferred payment. What does it mean? PP acquired on deferred payment. Deferred payment means what? I purchased it today, I will make the payment later. When I make the payment later, there will always be interest. Interest will not be taken as the cost of the PP. Interest will go to finance cost. Is this clear? Now understand this. Interest, total cash outflow minus total normal purchase price. Interest will be transferred to P&L over the credit period. Interest and all you cannot capitalize. Only borrowing cost as per AS16 can be capitalized. Now, PP acquired on exchange of asset. Transaction has commercial substance. Very important this is, okay? Exchange of asset, they keep asking questions based on this. Now see, first you will understand what is commercial substance. Has commercial substance means PP acquisition affects the cash flow of the entity. Lacks commercial substance means PP acquisition doesn't affect the cash flow of the entity. We didn't understand anything. Okay. Now see here. I have one amazing sofa. Okay. I have kept one sofa. Anyone has to just come and sleep on this sofa alone. Okay. That time all their joint pains will be gone in half an hour. All their joint pains will be gone in half an hour. Okay. Now imagine I am exchanging this sofa for one more sofa. Now this is my question. This sofa will be exchanged for one more sofa. Now, has commercial substance means before at a time one person could sleep. Now at a time two people can sleep. That means two customers I can handle, not what you are thinking. Okay, two customers I can handle. Clear? Now this will be impacting my cash flow, no? How will it impact my cash flow? Because I am getting more revenue now. See, PP acquisition affects cash flow of the entity. Now you are going to get more money. Now here the question is only one thing. Okay, whenever there is an exchange, remember this. PP should be, what is exchange by the way? I give this old one and I take this new one. Okay, PP should be acquired. PP acquired should be recognized at what value? This new sofa is there. No, my question is at what value I should show this new sofa? What? Wait a second. We are not in amalgamation now. Okay. The WDV of this sofa is 50,000. WDV of this sofa is 50,000. The fair value of this sofa is 80,000. Okay. And the fair value of this old sofa is 40,000. Clear? Now, new sofa should be shown at what value? You are doing whichever is lower, whichever is higher, not there only. Okay. They said fair value of asset given up. Asset given up is this sofa. You should take it as 40,000. I don't know the fair value of the asset given up. Then I will take it at fair value of the asset acquired. Asset acquired 80,000. I don't know the fair value of the asset acquired. Then carrying amount of the asset given up. Are you getting my point? Understand this. When asset is exchanged, it should be taken at fair value of the asset given up. That means new asset which is coming in, new double sofa which is coming in, it should be recognized at 40,000 in the books. You don't have it, you don't know this information, then you recognize it at 80,000 in the books. You don't know this information also, this information 100% you will know, it will be taken at carrying amount only. Now understand, if this information was there, we would recognize 10,000 loss. If this information was there, we would recognize 10,000 loss on exchange. Are you getting how? New machinery 40,000, old one 50,000, 10,000 loss. No. Now, if this information was not there, then I'll take this information. Then I'll recognize 30,000 profit. New one 80, old one 50. This is also not there. Then I will have no profit, no loss. Old one 50, new one is also 50. Are you getting this? Yes. Okay. Now, transaction lacks commercial substance. No commercial substance at all. Okay. Old sofa also one person can sleep. New sofa also one person only can sleep. That time, what will happen? Carrying amount of asset given up, no loss, gain on exchange. Well, if your cash flow is not going to change, then what was the old value will be the new value. You are just going to pass an entry, PP account debited 50,000 to PPE account 50,000. Old one is removed from the books, new one is added to the books. That's all. Clear? Now, PP acquired, exchange of asset. Exchange of asset. Understand this. Okay, whenever there is an exchange, they will also talk about money. Do you think exchange will happen just asset for asset? Asset for asset, always money is involved there, right? So, PP account debited. PP account debited. Whatever amount you have decided above, whether it might be 40, whether it might be 50, whether it might be 80, that you have to decide based on these rules. If there is commercial substance, first preference, second preference, third preference. If there is no commercial substance, only one, this one. Clear? Now, what is going to happen here if I acquire the asset? Okay, imagine there it was 50,000, or let's say there it was 80,000. Now, 80,000 will be the value of PPE. But if I have to pay again 10,000 cash, then 90,000 will be the value of the PPE. To cash 10,000 and to asset 80,000. Then later on profit or loss will get transferred to P&L. If asset is acquired and cash is received, they are going to give you an asset of 80,000 and they are going to give you 10,000. Then the PP will be recorded at 70,000. Cash will be recorded at 10,000. To asset 80,000. Is this clear? Are you following this? Now, note. This we already discussed, the note. From here, there is nothing in AS10 till here only. In fact, I feel the most tricky part is this asset exchange only. Asset exchange. Understand? New asset is coming. Sir, what value I should take for this new asset? What value I should take, sir, for this new asset? Now, you have to decide this based on whether there is commercial substance or not. What is commercial substance? By taking this new asset, your cash flow will change. What is no commercial substance? By taking this asset, your cash flow will not change. If your cash flow is not going to change, new asset value will be same as old asset value. Don't think only anything. If your cash flow is going to change, new asset value should be fair value of the asset given up. Not there. Fair value of the asset acquired. Not there. Now you take WDV only. Of the old asset. Clear? Now, you decided based on that. Now, based on that rule, you got to know that 50,000 is the value of the new asset. Now, what will you do? If you are going to pay another 10,000 in cash, now it becomes 60,000. New asset value becomes 60,000. To bank will be 10,000. To asset will be 50,000. Profit or loss you calculate and put it to P&L. But you are getting a new asset and you are going to also get 5,000 rupees cash. So, new asset will be taken at 45. 5,000 will be bank account debited and old asset will be 50,000. Is this clear? Yes. Depreciation of PP. I don't think I have to spend too much time on that. They are telling when to start the depreciation. When asset is ready for use. No, sir. In PGBP I learned it is put to use. In PGBP I learned, sir, it is put to use. That is in PGBP. Here put to use is irrelevant. Is this clear? Now, component wise depreciation. What is component wise depreciation? You have one car. You feel depreciation usually car was told 5 years. Now you are like, sir, no. Tire, I want to take 2 years as the useful life. Engine, I want to take 6 years as a useful life. Body, I will take 5 years as a useful life. Can I do this? Can I do this? This is called as component wise depreciation. One asset itself, you can break it into components and depreciate it with different useful lives. If you have the knowledge, if you have the information, do it. Nobody is forcing, but the option is given. Now, land no depreciation. I don't think I need to tell you that. Building depreciation is there. When will the depreciation end? When will the depreciation end? When the asset is obsolete. Anything else? Sold. Anything else? Useful life ends. Yes. Then anything else? When you decided to sell only. Okay, see here. PP sold or PP held for sale, whichever is earlier. That means you stopped using the PP. You already bought new machine. That time only depreciation will stop. Okay, you will keep it aside and you will be holding it for sale. Now, method SLM, WDV and production units method. Sir, I had more methods. What are the other methods which I had? Sum of digits method and all, not there at all. Only SLM, WDV and production units. Huh? Yeah. But Machina's is not there. Now, change in method of depreciation. Change in method of depreciation. Prospective effect. Considered as change in accounting estimate. Clear? Component accounting. Component means part of the PPE with significant cost. Okay. If at all you have a part that can be depreciated. Okay. Depreciation to be charged for each component. Now, let's go further. Subsequent measurement of PPE. Subsequent measurement. Already you have recognized. Now, what should I do? I should follow cost model or I should follow revaluation model. That means every year I am going to do revaluation. Now, when I am doing any of this, it should be for the entire class of assets. I have office building. Okay, 5. I have residential building, 2. In these 5 buildings, I want to follow cost model. These 2, I want to follow revaluation model. Is it allowed? Is it allowed? Yes. I have 5 buildings, 2 I am doing cost model, 3 I am doing revaluation model. Is it allowed? No. This is clear. So, full group of assets, you should follow same model. Treatment for revaluation. I think you should already know this. Revaluation, if it is increasing, credit revaluation reserve. If it is decreasing, debit P&L. But if it is increasing, credit revaluation reserve. After that, if it decreases, debit revaluation reserve, but extra loss, debit the P&L. Clear? Decreasing, debit the P&L. After that, if it increases, credit the P&L, extra profit, credit it to revaluation reserve. Is this clear? That's it with AS10, guys. That is it with the AS10. Next we move into AS11. Do you need a break? Huh? 5:15, 5:16, 5:30 I'm starting. 5:16, 5:30 I'm starting. 15 minutes break I'm giving you. Yes, let's continue. We finished AS1, disclosure of accounting policies. AS2, valuation of inventory. AS3, cash flow statement. AS4, contingencies are events occurring after balance sheet date. AS5, net profit or loss for the period, prior period items and changes in accounting policies. AS7, construction contract. AS9, revenue recognition. AS10, PPE. AS12, government grants. AS13, investments. AS14, amalgamation. AS18, related party disclosure. AS20, EPS. AS21, consolidated financial statements. AS25, interim financial reporting. I think we finished till here. 15 standards are done. 27 standards are there. 12 to go. Only 12 accounting standards are remaining. Only. Okay, let's continue with AS11. Okay, let's continue with AS11. Just let's quickly go further, guys. We'll do one thing. We'll go to AS28. We'll go in one order. AS28. Okay. AS28 is what? Impairment. AS28 is impairment. Now, imagine we have a car. Limousine. You have a car. Okay. This car usually gets depreciated. How does it get depreciated? You have wear and tear. Okay. Passage of time, and then you have technological changes, which is obsolescence, correct? Because of that, the car value reduces. What is impairment? Impairment is if the car value reduces beyond the reasons of depreciation, it's called as impairment. Other than these reasons, if it is depreciating or it's going down, that is called as that is called as impairment. Impairment happens because of multiple reasons. One, sudden decline in the market value. Suddenly the market value fell. You had a nice big car and you were sitting in the front seat and you were going in this car. Okay, suddenly they told such big cars are not allowed in the road. So market value has gone down. Or there is a physical damage to the asset. Asset got damaged. Asset got damaged. Now what happens? Suddenly the value of the asset will go down. Then last reason. What is that? Sudden technological changes. They said no more. Only 2 days. Odd Monday and Tuesday we can use petrol car. All other days there should be EV only on the road. Now suddenly the value of the car will go down because of these changes. Clear? Now our job is to calculate impairment loss. How to calculate impairment loss? Carrying amount minus recoverable amount. Carrying amount means what? WDV. Carrying amount means what? WDV. Recoverable amount means what? What you can recover. How can you ever recover something from an asset? You can recover it by selling it or by using it. By selling it or by using it. If you sell it, you what?
Oh, that is it. Okay.
Using it. Okay. Yeah, 2-second rule you should follow. 2 seconds. Okay, by selling it or by using it. Is it clear? Now, if you sell it, understand, if you sell it, what will you get? Net selling price. What will you get? Net selling price. Okay, you are not selling it. If you sell it, you will get net selling price. Net selling price is estimated selling price minus cost of disposal. If you have to dispose it, maybe you have to pay some commission to agent and all, that and all will be subtracted. Okay, if you use it, you will get value in use. But you will get the value in use next year, after that year, after that year, after that year. But you are doing all the calculation today. So present value of future cash flows. Present value of future cash flows. Clear? Now carrying amount you already know, WDV in books. Cost minus accumulated depreciation plus or minus revaluation. What has happened in the past? So today's value is there in the books. By using, I am getting something. If I sell, I am getting something. Whichever is high is the value in use. Sorry, whichever is high is the recoverable amount. Imagine your WDV is 100 and net selling price is 80 and your value in use is 90. What will be the recoverable amount? 90. Recoverable amount will be 90. So your impairment loss will be 10. Is this clear? Impairment loss will be 10. Imagine you have carrying amount of 100 and your net selling price is 80. Net selling price is 80 and value in use is 125. What will be the recoverable amount? 125. 125. What will be the impairment loss? What will be the impairment loss? 0. Why? If the value is high, then there is no impairment. If the value goes down, that is impairment. Is this clear? Now, example. Carrying amount on 31st March 2024 is 1000. Carrying amount on 31st March 2024 is 1000. Net selling price is 600. What is net selling price today? If I go and sell it in the market, I'll get 600. Discounting rate is 10%. Value in use. How will you calculate? Cash flows will be given to you in the question. Take the present value factors. How to do that you know. Okay, take the present value. You got 986.9. So, 986.9 or 600. Which is higher? 986.9. That will be your recoverable amount. Carrying amount is 1000. 13.1 will be your impairment loss. Is this clear? I know many places you take whichever is less, but here it is whichever is more, higher. Clear? Now, revised carrying amount. Revised carrying amount means what? After impairment, what is your carrying amount? After impairment, the carrying amount should be 986.9 only because you are reducing it. Impairment, what is the entry? Impairment loss account debited to asset account, which is PPE. Clear? Now, 986.9. Journal entry, impairment loss to asset, P&L to impairment loss. Clear? Now, revaluation of asset. It can play an important role in your AS28, revaluation. There are 2-3 questions in the study material which revaluation only is the trouble, impairment is easy. Now, asset increases, no? Asset increases, entry, asset account debited to revaluation reserve. Now, understand this. When you have a revaluation reserve, you have 2 options in front of you. What can you do with that revaluation reserve? Keep it till the asset is sold in revaluation reserve itself. Second option is asset is going to be used for 5 more years. So revaluation reserve every year, take it and put it to P&L. Clear? Now, maintain till the end of the useful life of the asset. Then after that transfer to general reserve. Or adjust the revaluation reserve with the increase in the depreciation due to revaluation. Nothing. What does it mean? If asset is increased, depreciation also will be increased. If depreciation increases, there is extra expense in the P&L, correct? Therefore, what you do with your revaluation reserve, transfer that to P&L every year so that that extra depreciation will get covered. Is this clear? Now, example, asset revalued from 100 to 160. Now, remaining useful life is 4 years. Revaluation reserve suddenly became 160 rupees because it went from 100 to 160. First option, maintain revaluation reserve for 4 years, then transfer it to general reserve. Or 60 divided by 4, 15, every year you transfer 15 to P&L. 60 divided by 4, every year you transfer 15 to P&L. See over here. 60 divided by 4 years, 15 is the extra depreciation. That is the amount of revaluation reserve also. Okay, transfer that amount to P&L. See, old depreciation is 25, new depreciation is 40, extra depreciation is 15. That will go to P&L. Every year, revaluation reserve debited to P&L 15. Now, if there is impairment loss, loss has to be taken from profit only, no? Utilize revaluation reserve, how much is there? If it is not sufficient, then utilize P&L. If it is not sufficient, that means impairment loss is 60. We have only 45 remaining in revaluation reserve. What will I do? I'll take 45 from revaluation reserve and I'll take 15 from P&L. Is this clear? Yes. CGU. One last point of AS28 which we have to discuss. CGU. What is CGU? Cash generating unit. What is cash generating unit? CGU. What is cash generating unit? Huh? Machine is not working individually. Yes. CGU means what? That unit which is generating money for you. Now imagine you have machine 1. From there it is transferred to machine 2. From there it is transferred to machine 3. From machine 3 you get the output and that output is sold. Tell me one thing. These 2 machines are not there. Can this give you any cash? These 2 machines are not there. Can this give you any cash? No. These 2 machines are not there. Can this give you any cash? No. Just because output is coming from here, you are telling yes. But it is coming because of these 2 machines only here. Any machine on its own cannot generate anything. This is called as cash generating unit. I have one machine. From this machine, I am having output and I am selling. Only one machine I have. Now that time, this one machine is cash generating unit. If I have a group of machines, then those group becomes cash generating unit. Basically, your process costing. Clear? Now, CGU, understand this. If a group of machines are CGU and any machine in that group is not capable of generating cash on its own. What is CGU? If a group of machines are there, any machine in that group cannot generate cash on its own. Only as a group they can generate cash. Then, understand, then do not calculate impairment loss for any machine. calculate impairment loss always for the entire group. Clear? Impairment loss has to be computed for the entire CGU and not for the individual asset. Is this clear? That is it. Okay, that is it which we have to understand about AS28. I don't think there should be any problem. Present value and all, how to calculate, you have to do it. Okay, some 8-9 questions are there in study material that I don't think they will ask anything outside that. Recent 10 questions. Recently they have not asked also in exam. Okay, so we should not worry about it. Is this clear? Let's go into the next accounting standard. Next accounting standard. Let's go into the next one. We'll take some tougher ones and finish it off. AS18 is also done. AS11. AS11. Okay, one portion of AS11 we have already finished. What is that? Foreign branch. Foreign branch is done. Now, foreign currency transactions we have to understand. Foreign currency transactions. In foreign currency transactions, you have, for example, you have in India, Amarnath Limited is there, and there is one Leo Limited. Leo Limited. Clear? Now, what happened over here? Plant and machinery, one AI camera you are purchasing. One artificial intelligence camera you are purchasing. However, you stand in front of that, it will always make you look like Vijay. However, you stand in front of that, it will always make you look like Vijay. So you have purchased that camera for $5,000 on 1/1/2025. Sorry, 1/2/2025. Payable on 1/7/2025. Understand this. Whenever we have foreign currency transactions, we have 3 stages. 1. Initial recognition. First thing is called as initial recognition. Second, restatement on the balance sheet date. Third, settlement. Finally, settlement. Clear? Now here, when did the transaction happen? 1/2/2025. So on 1/2/2025, what will you do? Record it. Initial recognition means record it. Record at what rate? That day it was 86. So you'll pass the entry, plant and machinery account debited to Leo Limited. You did not pay the money. Leo Limited. $5,000 into 86. The rate on 1/2 you are going to take. Is this clear? Now, 31st of March is your balance sheet date. On balance sheet date, what will you restate? Will you restate both these things? No. You will restate only monetary items. Non-monetary items will not be restated on the balance sheet date. Plant and machinery you purchase, no, overdone, no, value will not change. It will only depreciate after this. But Leo Limited, you have to pay money, no. Earlier you have recorded telling that you have to pay 86 rupees per dollar. But the dollar it has gone to 89, no, now. So you have to pay 3 rupees more, no. Conservatism concept. Not even conservatism, rate has changed, you have to record it. Now what will you do? P&L account debited, forex loss to Leo Limited. Leo Limited was recorded at 86. Now you have to make it 89. If you have to increase the creditor, that is a loss. Loss will be debited to P&L. Is this clear? Now, finally you are supposed to pay on 1/7. When you are supposed to pay, Leo Limited, the dollar it has gone to 91. Should you pay 2 rupees more now? Yes. Now, when you pay somebody, what should be the entry? Leo Limited account debited to bank. But Leo Limited is in the books at only 89. It was at 86. We increased it to 89. Now it's only at 89. So Leo Limited account debited for 89. But you are going to pay how much? 91. You are going to pay 91. To bank will be 91. 2 rupees extra per dollar you are going to spend now. P&L forex loss. P&L forex loss. Is this clear? Now, note. Date of transaction. Okay, date of transaction. What you are going to do? Initial recognition. Whatever rate is there on that date, take that rate. If it is restatement on balance sheet date, when there is a restatement on balance sheet date, non-monetary items ignore. Non-monetary items. How we ignore plant and machinery in this case? Like that. Ignore. Monetary items. Restate it on balance sheet date using closing rate. Using closing rate. Profit or loss will go to P&L. Settlement date. What you are going to do on settlement date? Rate on the date of settlement. Again, profit or loss you transfer to P&L. Okay, we saw that example. Example number 2. We'll take one more example here. Now, understand this. We have purchased one plant and machinery for $10,000 on 1/6/2024. Okay, we purchased one plant and machinery. Okay, rate on that day, 1/6/2024 was 85. Okay, and we are supposed to pay on 1/8/2024. First, what you're going to do? Record the machinery, plant and machinery debited to the creditor. Okay, $10,000 at the rate of 85. Clear? Any doubt with this? Recorded. What was stage 2? Balance sheet. But guess what has happened over here? Before the balance sheet, settlement has happened. Now, after the initial recognition, if a balance sheet date comes, and after that, if we are going to settle, then there is a balance sheet date where we have to restate. But before that, settlement has come on 1/8/2024 itself. So directly you have to pay money to your creditor. You have to pay money to your creditor at what value? 85 or 88? 88. Creditor will be debited for what value? 85 or 88? 85. P&L will be debited for 3 rupees difference, and what you are paying is 88. Is this clear? Yes. If it is rate will decrease means it is a gain, so it would have been 2 P&L forex gain. Clear? Now MCA notification is there. MCA notification. Do you know that MCA notification? Yes. What did they tell? Can't be used, not long-term foreign currency monetary item. Here you can't use it. What is MCA notification? MCA has given one notification telling that if at all the forex loss on depreciable asset is from a forex gain, from a foreign currency loan, that time difference, instead of putting to P&L, you can add or minus to the asset itself. Okay guys, you are looking like as if you have never heard it. Let's show you. MCA notification. If exchange difference arise on long-term foreign currency monetary items which relate to acquisition of depreciable asset, the difference can be added or deducted from the cost of the asset. It is an option, not compulsory. Okay, did you understand this? Now imagine I have taken a loan. I have taken a loan of $5,000. $5,000, and I have purchased one property, plant and equipment. Now I will pass the entry. On that day the rate was 85. So I will pass the entry, property, plant and equipment debited to loan account 4,25,000. 4,25,000. Is this clear? Now later on payment, the rate was 88. Rate was 88. Now usually what I pass the entry? I pass the entry, loan account debited 4,25,000. Okay, then P&L account debited. Okay, what is the amount there? How many dollars? $5,000. I'll write 5,000 into 3, 15,000. 2 bank account 4,40,000. 4,40,000. Otherwise, what I can do if I follow MCA notification, loan account debited 4,25,000, PPE account debited 15,000, to bank account 4,40,000. This is an option that is given by MCA, Ministry of Corporate Affairs. They said it is an option, not compulsory. There should be a long-term borrowing, because from that borrowing you should have a PPE. Now if that borrowing fluctuates and when you are making payment, that forex gain or forex loss can be added or subtracted from PPE itself. You took loan and you borrowed, you took loan and we purchased one raw material, this option is not there. You took loan and you purchased one raw material, this option is not there. Is this clear? Yes. Next. What if Mayor told settlement date is 1/8/2025 next year? That time, can you see in middle one balance sheet date will come? You have to restate. What should you restate? What should you restate? The creditor you should restate. Asset will remain like that only. So you will write over here P&L account debited to creditor. Then on the settlement date, what will you do? The settlement date, the rate has gone to 89. Further loss, P&L will be debited, M89 will be paid. Clear? Yes, MCA notification, you can see over here, wherever MCA notification is applicable, plant and machinery is debited, not P&L debited, plant and machinery is debited for the loss. Forward rate, we can do, yeah, it's an option. It's an option. If ICAI tells you have to follow MCA notification, you have to follow, otherwise you can ignore it. Okay, now forward rate. What is forward rate? Futures. You should know it very well. Yes. What is forward rate? Today only I am entering into a contract with you telling that next week you have to give me $5,000. Okay, I have to give you you have to give me $5,000 and the rate is already fixed. Rate is already fixed. Are you getting this? No. Why do we do this? Why do we do this? Yeah, that is called as hedging. Okay, we do it only for two reasons, hedging or for speculation. Speculation is, you saw that as an opportunity. Now understand this example. We have Amarnath over here. Okay, he has sold goods to Trump. He has sold goods to Trump. $5,000, 1/4/2024. Payment date is 1/7/2024. And on rate on 1/4/2024 is 88. Today's rate is 88. But you will get the dollar when on 1/7/2024 you will get the dollars. Now Amarnath expects that rate on 1/7/2024 will become 85. He feels that the rate will go down. If it goes down, it is bad for him. Why is it bad? Because he already recorded it at 88. On the day he sold, it was 88. Now he is getting dollars. When he is getting dollars, if the rate goes down, it is very bad. So now what he has done, he has gone to one forex dealer and told, I want to buy dollars after 3 months. Okay, I will sell it to you. You have to buy dollars after 3 months. Is this clear? Amarnath will get the dollars. Amarnath will give the dollars to the forex dealer and the rate agreed is 87. Sir, Amarnath is mad, sir. 88 it is. Why did he agree for 87? He is speculating $3 loss, 3 rupees loss, but nobody is agreeing to give it at 88. Everybody is expecting that it is going little down. Finally, he got a rate at 87. He is like, okay, $1 if it is 1 rupee per dollar, if it is loss also no problem. At least I will get 87. When he is doing this, let's assume the market has gone to 80. Market has gone to 80. Still is protected. No, he'll get it 87. He'll get 87. Are you getting my point? Market has gone to 91. He'll feel bad. That's all. Market has gone to 91. He'll just feel bad. Oh, I should have waited. I would have got 91 only. Okay. This is called as hedging. Instead of losing, you protect yourself. Nothing. Okay. Now, loss for Amarnath will be 5,000 into 88 minus 87. What is 88? Spot rate. What is 87? Forward rate. What is 88? Spot rate. What is 87? Forward rate. Nothing. 5,000 rupees will be taken as loss, but just ensure that 5,000 rupees it is taken for how many months? Let's say it is, we don't know the months here. Okay. Now, what I'm trying to tell you is the loss which is there. No, if at all 3 months are there, and in that 3 months, 2 months are this year, 1 month falls into next year. 1 month falls into next year. That time 2 months loss should be recorded in this year. 1 month loss should be recorded in the next year. That is one thing you have to keep in mind. You can't just put full loss today. The contract is for 3 months or 4 months. You should spread it across the contract. Clear? If at all the contract falls little into next year, then that little should be recorded in the next year. What if you are doing speculation? What if you are doing speculation? You saw that. Oh, very good it is. Time basis. First month, second month, third month. Time basis. Okay. Now, speculation. You are just noticing that, I don't have any risk, but I'll still take it as an opportunity and make money out of it. That time, nothing to be done. Recognize profit or loss on the date it is earned or expended. Don't record today, nothing. Whenever that contract ends, if at all there is profit or loss, that day you record it. Otherwise, nothing. Are you getting my point? Yes.
Claim taxes if I make the loss of pay.
No. Because for that you have to study one subject called as IT, income tax. In that they have told speculative losses cannot be adjusted with other loss. That's it. They also thought that someone will do like this, or maybe someone did it. Then they introduced the provisions. Someone 100% did it. Then later only, all the amendments come when people get smarter. People get smarter. Okay, we'll go to AS29. Okay, AS29, my example always remains same. No. AS29, small AS it is. I'm searching for AS29. Where on earth is AS29? Yeah, that's what I'm searching for your material only. I'm not finding it. Yeah,
Second one, sir, after age 13, it was
after AS13, huh? No, date I don't have, man. How will I have the date? That time I saw it, I'm not able to. Oh, no, that. How can you search from handwriting? Got it. AS29. AS29. Okay. Now, listen one thing. Let's quickly go further. What is the page number? Yeah, 68. Yes, AS29. Okay, very simple standard. Provisions, contingent liability and contingent asset. Okay, we have discussed this before. Provisions, contingent liabilities and contingent asset. Now, understand this. Okay, what is not applicable here? Financial instruments that are carried at fair value, shares and debentures are not there, executory contracts are not there, and contracts of insurance enterprise is not there. IRDA regulations is specifically covered by some other accounting standard. Right now, nothing, but everything is here only. Provisions. The definition of provision you have to understand. You have whatever comes from AS29, you have to write the definition of provision or contingent liability or contingent asset. That is a must. Now, provision. That means there is a present obligation as a result of past event. It is probable that outflow of economic resources will, when embodying economic benefit, will take place. Reliable estimate can be made. If you fulfill all these conditions, then it is called as provision. Now, for example, if you think of this example, now there is one nice beautiful bakery. One guy called Vishal, who is standing over here next to the bakery. There is one girl called Harshita. She sees, oh, my friend is selling Okay, bakery is there. She comes to that bakery and orders for one veg puff. He orders for one veg puff. Now, as soon as this person sees, no, Vishal will be on the phone. Okay, on the phone, busy, but he will give the veg puff to Harshita. When he was removing the veg puff, he saw that in the gap, no, there was one cockroach. One cockroach was there. But he gave it. He gave it. Harshita ate it. After eating, okay, towards the end of it, she felt some little crunchy. Something different was there. So she removed one piece and it was the leg of the cockroach. Huh? Crispy. He removed and leg of the cockroach was there. He looked at Harshita and she looked at Vishal and pointed fingers and went off. But preserved that leg properly. Preserve that leg. Proof. Okay. Evidence. Yes, properly she preserved it. Now, for Vishal, we'll think of Vishal's angle. Forget about Harshita. Okay, we'll think from Vishal's angle. As soon as next day morning sunrise, Harshita, 99% of her time she was spending in washroom only. She's coming out, going inside, again and again. Okay, now next after that, whenever she got little relief, she went to the lawyer and told, file a case on Vishal, compensation 4 lakhs. 15 rupees veg puff, 4 lakh rupees compensation. Clear? Now, 4 lakh compensation is asked. Vishal, is there present obligation? What is the obligation now? This case notice has already reached him. Present obligation. As a result of past event. What was the past event? He supplied that veg puff with cockroach. Correct? As a result of past event. He is clicking picture to send it to Arshita. He is sending to your competitor. Yes, as a result of past event. Past event was what? He gave that, correct? It will have outflow of economic resources. It is probable that there will be outflow of economic resources. Lawyer told, get out. I have other land case and all to deal. This case you pay 4 lakh compensation and get out. Don't even trouble me. That means outflow of resources is happening. And estimate amount can be estimated. Clear? Now, if any of this is missed, it becomes contingent liability. Now, imagine you got notice as a result of past event only, all that. But lawyer told, don't worry at all. What is cockroach case and all? People are murdering, they are not getting caught. This cockroach murder, you are getting caught. No, you will not get caught for this. Don't worry at all. They said, no way you will lose this case. No need to create provision. It becomes contingent liability. Clear? Lawyer told, you will lose the case. Lawyer told, you will lose the case. But Harshita, when she filed the case, she didn't ask for 4 lakhs. She asked only for compensation. Now you are not able to estimate how much compensation you have to pay. That time what it becomes contingent liability. 1. If you feel that you are not going to lose the case, it is contingent liability. 2. If you feel that you lose the case but you don't know how much amount you have to pay, it becomes automatically contingent liability. Clear? Are you following this? No. Oh, that's it. Now listen. Contingent liability definition I want to go through once. There is a possible obligation. Can you see the twist in the language? Not present obligation. There is a possible obligation. Legal notice has not reached you only. Legal notice has not reached you only. Next day morning you are waiting, hoping that Harshita is fine. Hoping that Harshita is fine. You are waiting. No call at all from anybody. No legal notice at all. Okay. So you thought, okay, there is a possible obligation. I'm still under risk as a result of past event. You gave that cockroach. Can't help it. Okay. Existence of which the legal notice will come or not, I don't know. Is confirmed only by occurrence or non-occurrence of one or more uncertain future events. You will get to know based on some uncertain future event which is not only within the control of the enterprise, which is not fully under your control. Something was under your control. What is that? Giving that puff. That you didn't care. Now nothing is under your control. Contingent liability. One more definition for contingent liability is there is present obligation. You got the legal notice as a result of past event. It is not probable that outflow of resources will take place. You got the notice, but it is not probable. Lawyer is very good. Okay, or reliable estimate of the amount cannot be made. You got the notice, lawyer is okay, but estimate you cannot make. You don't know whether you will have to pay any amount or not. If you have to pay also, you don't know how much amount. If you don't know amount, can you create provision? Clear? Contingent liability should not be recognized in the financial statement. Where will you show? Footnote. Yesterday in financial statement chapter, one question there was contingent liability, bill discounted. Where did we show? Just below the balance sheet. Clear? Now, contingent asset. Now you are thinking from Harshita's angle. After eating the cockroach, she is feeling good or bad? Good. She can get 4 lakh compensation. Correct? Now, there is a possible asset. Possible asset. You might get money. You might get money as a result of past event. As a result of past event, cockroach. Okay? Existence of which will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events, not wholly within the control of the enterprise. You will get the money or not, you will get to know only on the occurrence or non-occurrence of one or more future events, which is not under your control. If judgment goes in your favor, you will get it, otherwise you will not get it. Imagine you get a lawyer. Imagine you get a lawyer. Lawyer told, I will make you win. I am a huge fan of cockroaches. Because you killed one, because one got killed, I will ensure that there is justice for its life and I will ensure that you get a compensation. Clear? Now, tell me one thing. Can you show it as asset? No, why? Sir, wait. When I was on the other side of the court, okay, when the lawyer told you will lose the case, you made provision. When I came this side, when the lawyer told you are going to win the case, you did not record it. Why? Prudence. AS1, mother of all standards. AS1, prudence. Loss you will recognize when it is probable only, but asset only when you get it. So you will wait till the judgment. You will wait till the judgment. Judgment came 3 lakhs compensation. You will recognize it that day as receivable. You didn't get it. On the day of judgment, he will not give you the money. And judge gave 2 months time to pay the amount. But you will recognize 3 lakhs as receivable because it is confirmed. No, you're getting the money. Clear? Yes. Yeah, virtually certain. That means judgment has to come. Okay. Now, virtually certain is court. No, 3 stages are there. One day, they will tell guilty. Another day, they will tell settlement. Third day, they will tell pay. 3 things can happen. So, because so many cases are there, no, they can't tell everything on one day only. Okay, so for one day, what they tell, they tell, yes, 100%, Vishal is guilty. Now you know it's virtually certain that you'll get compensation. Then second day, they'll tell, yes, compensation of 3 lakhs has to be paid. Then you are going to make the payment. I mean, you are going to receive the payment. That's why you'll have, that's why they said virtually certain. Okay, restructuring cost. Receivable. First day you can record it as receivable. What is this restructuring cost? Internal reconstruction, realization expense. What? Yes, demerger cost they wrote. Internal reconstruction only we can take it as any cost incurred which materially changes the scope of the business. When will you recognize? Provision should be made when the obligation starts from the date on which the binding sale agreement is established. You made one agreement telling that I want to sell it that day for amalgamation. Internal reconstruction, you went to court and took their approval on that day. That day only you make provision for all the legal expenses or realization expense and keep it aside. Is this clear? This is your AS29 done. I don't think there should be any trouble with AS29. Let's go forward. AS28 done. AS27 I want to finish. We'll finish AS27. Quickly, we'll try to finish AS27. Shouldn't take too much time. Done now? Shall we go further? Few standards only we have. 9. How many standards we have? 9 standards. That's it. Huh? AS15? AS15 is huge actually. But we can't discuss so much. We will discuss in brief only. AS15 is huge. Segment reporting is small. Last day we did it, but. Okay, guys. Hello. Let's continue. Okay, AS27. Why are you getting restless? It's only 6:24. Why are you feeling unhappy? It's only 6:24. There is so much. Arey. Okay, guys. Let's continue. Huh? Kid. Wait for tomorrow's class. Rashid sir will come. He will give you amla. Yeah. He already finished. He's going to know. I think he already finished. That time he called. He's going to take the bus tonight and he'll be here. From Coimbatore. That is the only comfortable option from Coimbatore. Sleep and come nicely. Yes, AS27. Financial reporting of interest in joint venture. Clear? Ananya go LC, she knows. He finished. Every break she'll be there, then she'll come back here. By around 5:30 only, 2 to 3 questions were left. But poor guy would have been frustrated. Because today no one was there in class. Yesterday, 3 were there it seems. No, offline. Offline. It's a new place, no, new branch, right? I don't know. Online, you can't trust people like this, Ananya Goyal, going in break and all. We can't count that number. Yes, AS27 guys. Few standards we have left, we will complete it. Okay, you know that without completing I will not go anyways. Okay. Yesterday you thought, no, you had some hope in your mind, telling that somewhere before cash flow statement sir will stop. No. Huh? Yeah, RTP classes, you know. Yes, joint venture. Joint venture is temporary partnership, by the way. Okay. It is defined as contractual arrangement whereby 2 or more parties carry on economic activity under joint control. You have 3 things that you have to focus on over here. One is jointly controlled operation. Jointly controlled operation. That is basically if you have, let's say, 2 people are there over here. 2 people are there. This person is also constructing house. This person is also a constructing person. Both are construction business, they are there. Suddenly, after our CM Vijay comes, CM Vijay tells we are going to construct one flyover. Both the construction parties are interested in this flyover construction, but it is a huge project for them. So what they do, this construction we will do it together. These 2 people will get together just for this flyover construction. Are you wondering why the chair is there? Even I was wondering. I actually don't know why I kept it there. There should have been some example I gave. Huh? I don't know why. Oh, actually it's not chair. Now I remembered. It's a laptop here. And this is the chair. Can you see there is a small gap between the table and the laptop? Huh? I have no clue at all. I actually don't remember why. Okay, we'll focus on the objective. The flyover is constructed. Okay. Now, do you agree these 2 are competitors? Yes. But are they going to be together for this particular project? Yes. This is jointly controlled operation. Clear? Now, understand this. for that jointly controlled operation or for anything else. They are nearby, but competitors, they wanted one machine. They wanted one machine. Have you seen this machine in construction areas? It will turn like this, mixing machine. Okay, they wanted one machine. This, they didn't want to spend money on their own. They said both of us will put money. Some days you can use it, some days I will use it. This is called as jointly controlled asset. This is called as jointly controlled asset. Clear? Now, they felt, see there was two people, Sastika and Kamya. Okay, they felt, see we'll keep it clear. Jointly controlled operation and all, we have to maintain books no separately. Clear? They said we'll keep it clear. For all government work, we'll get together. For all the government work, we'll get together. For that, we'll form a separate entity called Kastika Limited. This is jointly controlled entity. Sir, wait. Isn't it holding subsidiary, sir? Isn't it holding subsidiary, sir? Why?
Yes, their own
This is on the point.
no, their own firms. No one purchased share from the other.
They have 50% share here. This person has 50% share. More than 50 should be there. Jointly controlled means both have 50-50. Both have 50-50 or 4 have 25-25. That is why it is silent over here. Otherwise, AS21 would be activated automatically. Are you getting this? Yes, jointly controlled operation, jointly controlled asset and jointly controlled entity. Now, understand this. If it is jointly controlled operation, what we do? Joint venture is not a separate entity. Co-venturers may carry on their main activities along with the venture. So, in jointly controlled operations, usually what we do is we prepare one joint venture account, joint bank account, and record all the transactions, and we have even co-venturer account. Okay, in joint venture, we always have two things. Either separate set of books are maintained or separate set of books are not maintained. If separate set of books are maintained, you will maintain these three ledgers. If separate set of books are not maintained, all the transactions will happen in the co-venturer's ledger only. All the transactions will happen in the co-venturer's books only. Clear? So there are two things again. I will record all my transactions, you will record all your transactions. Or both will record all the transactions. Clear? Now, what if it is financial reporting of jointly controlled operations? See over here. If separate set of books are maintained, then all the transactions of the venture to be recorded in those books. Now you are thinking only one project. No, why for that again separate books of accounts and all? If separate set of books are not maintained, then each co-venturer will prepare in their books of accounts joint venture account to record the transactions related to them. You're like, sir, here you told no, sir, joint venture. Here it is separate set of books are there. Here separate set of books are not there. So you will prepare joint venture account to record all the transactions which are related to you. Okay. And then you will also prepare one co-venturer account to tell how much money has to be paid or received from the other person. Clear? There is first question in your study material. Okay. Where A, B, C. I think three co-venturers are there. They're constructing some flat or something. They're taking some flats also for themselves. Please have a look at that. Clear? Next. Jointly controlled asset. Jointly controlled asset. What is it? I have a machine. You also can use it. I also will use it. Clear? Simple. What is the right over that asset we have? You have 60% right. I have 40% right. Then 60% of the PPE will be shown in your books. 60%, 40% of the PPE will be shown in my books. Then 60% of the depreciation will be shown under depreciation amortization for you, and 40% of the depreciation will be shown as depreciation amortization for me. Some maintenance we are doing for this. Maintenance 60% you will take it as expense, 40% I will take it as expense. Clear? Yes. Assets that are under joint ownership of two or more enterprises. Financial reporting of jointly controlled assets. Each entity shall record in their financial statement their share of asset, liability, income, expense, any expense separately incurred. Jointly controlled asset. Is this clear? Now, what happens after that? Jointly controlled entity. If there is a jointly controlled entity, we discussed no separate company we are going to form. Separate entity is created for the joint venture which is jointly controlled. Financial reporting of jointly controlled entity. What we are going to do in separate financial statement, record investment as per AS 13. Separate financial statement, you will show it as per AS 13. In consolidated financial statement, you will do proportionate consolidation method. Nothing. You have A limited, you will have B limited, you will have C limited. A limited and B limited has formed C limited, jointly controlled entity, and it is 50-50%. Now here you have some PPE, here you have some long-term borrowing, here you have some current assets, here you have some current liability. What will happen, 50% of this will get added over here and 50% will get added over here. 50% of this will get added over here and 50% will get added over here. So whatever is there in their balance sheet, 50-50%, consolidation will happen. Consolidation will happen. No. See, in consolidated financial statements, that means consolidated financial statement is there because of some other subsidiary. When AS 21 is applicable, what will happen? Automatically you have to prepare consolidated financial statement. That time you will do all this. Just adding. So if AS 21 is not applicable, then what you will do? You have A limited, you have some machine which is sitting somewhere belonging to you, but only half. You will put it in your financial statement. Yeah, every year you will do it permanent. Like the subsidiary company is also permanent only. Every year you will do consolidation. Same way here also you will do every year consolidation, because jointly controlled. No, you also have control. No, just like the other person. So what you will do every year, whatever is there, your share is 50%. Take 50% of the assets and add it to you and add it to yours, and then prepare consolidation, consolidated financial statements. Is this clear? Okay. I think some 4 questions are there in study material, 4 or 5 questions. You should be able to do it. Okay. Without seeing those questions, don't go. They haven't asked from joint venture for last 2-3 attempts. Okay. So they can always ask. That is AS 27. AS 26 will be our next target. Intangible asset, AS 26. Simple, easy. Simple and easy. Okay. First we will understand what is non-applicable. Then we will think anything further. Intangible asset, non-applicability. Intangible asset held for sale in ordinary course of business. Why it is not applicable? If it is held for sale in ordinary course of business, AS2 it becomes valuation of inventory. You have one software, you are doing software business, then AS2 applicable. Deferred tax asset, AS22 applicable. Lease transactions covered under AS19. AS19 is applicable. Intangible asset arising from employee benefit plans, AS15 is applicable. Clear? Goodwill acquired in business combination, AS14 is applicable. Intangible asset arising in insurance contract, IRDA regulations are applicable. Clear? Intangible asset, before we study, we should know what is asset. What is asset? It is an economic resource. There is some economic resource which you are having, controlled by the enterprise as a result of some past event. Either you have purchased it in the past or you have constructed in the past, from which economic benefit will flow to the enterprise. Okay, you will get some economic benefit which will flow to the enterprise. Is this clear? Now you know what is asset. Intangible asset, first point only, it should be an asset. If it is an asset, then we'll talk about whether it is intangible. Then it should be a non-monetary asset. Obviously, monetary assets we know. Debtors, creditors, bills receivable, bills payable, loan given, loan taken. Correct? It should be identifiable. What does it mean, sir? Intangible asset, what I knew was, you cannot see it. But here they are telling, sir, it should be identifiable. That means they are indirectly telling you, self-generated goodwill gone. What? Okay. I should monetary item. Monetary assets are debtors, bills receivable. Okay. Now it should be identifiable. It should be identifiable means what? Self-generated goodwill cannot be identified. It should be identifiable means what? I have one patent. I have one letter where I know that patent belongs to me. I have one license. I have a letter that it belongs to me. Self-generated goodwill means I have a reputation, but I don't know, I cannot value it, I cannot identify it. That's why self-generated goodwill is not there in AS26 definition. Okay, it should not have physical substance. This is what you should tell. It cannot be seen, touched, felt, and all. It should not have physical substance. It should be held for use in production or administration purpose. That means imagine you have a software. With that software, you're going to manufacture something. That software is linked to your machinery and machinery is going to work. This is used for production. You have one software to mark the attendance. That is for administration. Both are fine. It will be taken as intangible asset. Clear? Now, you just have one software. Okay, EA Sports, FIFA 2025. EA Sports. Okay, you have installed that game in your computer. Okay, main computer only of the company. Is it going to be considered as intangible asset? You have paid heavy amount, 20,000 you have paid for this. And you, not cracked version. You paid 20,000 and you have purchased. So now this will be taken as intangible asset? No. But the same thing, if it is connected to the customer area and you are telling any customer can come and play when they are free. I mean, when they are waiting for the work to be done, they can play. Customer launch they have created. Then it will become intangible asset because it is for administration purpose. Clear? If employee can play also, it will be considered as intangible asset. It is used for business, no. There are companies where employees can just play. Shuttle will not be considered as intangible. That is PPE. Shuttle how intangible. I can see the code right in front of me. Non-monetary asset. It refers to asset that which do not have fixed and determinable value. We have already discussed this. Recognition principle of intangible asset. Understand this. Recognition principle. When can I recognize? Intangible asset can be recognized only if it is probable that future economic benefit. That means you should get future benefit. You have one software which cannot give you any benefit. No. Cost of intangible asset can be measured reliably. That means you should spend it. Again, self-generated goodwill is gone because cost is not there. You cannot measure the cost. Are you getting this? You should measure the cost, or you should, it is probable that future economic benefit should be there. Now, intangible asset should be initially measured at cost. First, you are going to recognize that cost only. After that, it will get amortized. It will get amortized. There are two ways in which intangible asset comes into existence. How can you get intangible asset? Two ways. Either you purchase it or internally generate the intangible asset. Sir, you told self-generated goodwill is not there. Yes, but internally you can generate other intangible assets like software. Okay. Purchase intangible asset. What price you will recognize? Normal acquisition cost input. You have incurred some cost, you will recognize it at cost. You are making software for you, your usage only. Like for example, Infosys obviously will have their own ERP, no, which they only have developed. So that is internally generated for them. Yes, acquired through amalgamation. This very beautiful question in one of the RTPs they have asked recently. Last 3 RTPs, one of the RTPs I have seen this. Now, intangible asset acquired through amalgamation. See this fun. Applied when amalgamation is in the nature of purchase. Sir, why they told, sir, amalgamation nature of purchase? Because in amalgamation nature of merger, there is no goodwill creation. Now we remember, yes. If specific identifiable asset is acquired, it has to be recorded at fair value. If it is not identifiable, then it has to be recorded at goodwill. We didn't understand anything. What are you talking, sir? There is one purchasing company. There is one selling company. In selling company's balance sheet, there is already one intangible asset. This is taken over. Taken over at what value? Agreed value. Agreed value will obviously be the fair value for two of us. So see over here. If specific identifiable asset is there, it is acquired. It has to be recorded at fair value. Now imagine there is no intangible asset at all. No intangible asset at all. But when I paid the money, purchase consideration is greater than net assets taken over. I paid more. I can't identify. Some reason I paid more. If it is not identifiable, then it should be included in goodwill. Sir, Self-generated goodwill also I can't identify, but why I am not taking that one? Because I didn't pay any money there. Here at least some money is there, cost is incurred. Are you getting this? So intangible asset sitting in that selling company's balance sheet, you take it at agreed value, which is nothing but fair value. But you are paying more. Purchase consideration is more than net assets. That extra amount you are paying, that is goodwill. Clear? Yes. They actually gave numbers and asked. That's how they asked the question. They framed the question. They told that so much is there in the balance sheet, all that they told. And they also asked amortization. In AS26, whatever goodwill comes, no, you can amortize it over 10 years. The goodwill under AS14 is there. No, you can amortize it over 5 years. Are you getting my point? In AS26, whatever goodwill or anything is there, intangible asset is there, you can amortization period, its useful life is usually 10 years. Any intangible asset. Okay, but if you want, you can take more also. Actually, we'll see that. If you want, you can take more, but you should justify that decision. Okay. Otherwise, it is 10 years normally. But if it is purchased, goodwill which came from amalgamation, 5 years. Intangible asset acquired through government grant. Government gave you license for free. It will be taken at nominal value. 100, yes. Yeah. Self-generated is not there. No. Self-generated, we are going to come here. Internally generated goodwill and all those things we are going to see here. How to account is AS14. But after accounting, at what value they are telling over here, AS14 will tell about the accounting. Amortization will happen over there. Other amortization will happen over here. Now, internally generated goodwill. Full story they have told. Over the years, company might increase its reputation which increases its goodwill. However, no cost of goodwill can be determined. Hence, self-generated goodwill is not recognized in the books of accounts. You can't measure, no. It's not measurable. Sir, I measured, sir. I measured. Yesterday only I measured in amalgamation chapter. Okay, we used super profit method or something and we weighted average profit method and we measured it. Correct? Are you getting this? But that goodwill, wait. That goodwill becomes purchased goodwill. Why? He measured the goodwill. I paid the amount for that. It is not that I measured the goodwill and showed it in my balance sheet. Selling company measured the goodwill. Purchasing company paid the money and took it. Let him measure however he wants. Are you getting my point? If you don't have cost involved, you can't recognize it. No. Imagine, I want to recognize my goodwill. Now imagine, I am the purchasing company, you are the selling company. I told, tell me, what is the value you want me to pay for your reputation? You made 3 chits. One has 2 lakhs, another has 4 lakhs, third one has 6 lakhs. You took the chits like this, put it like this, you picked one chit. In that 4 lakh came. You told, 4 lakh you should pay for my goodwill. Okay, I paid. Purchase goodwill. Finished. Are you getting my point? You decide however you want, but I paid no. Purchase goodwill. Now, internally generated intangible asset. There are 2. Internally generated. Okay, there may be another intangible asset like computer software, self-created and scientific formulas and all. You sat and did some crazy scientific formula. With that scientific formula, you can find in the universe, wherever black hole is there, you can find it. But you can't go there. You can only find it. Clear? Now with that scientific formula, you know that you will become rich. So you have patented that formula. Clear? Now, these assets can be recognized as intangible asset on cost incurred. Whenever there is something internally generated, most commonly asked question in AS26 is this. Whenever there is internally generated, you have 2 phases, research phase and development phase. What is research phase? Making the product ready, but I also don't know whether there is product or not. Therefore, everything should go and it become expense in the P&L. Why? The condition over here. It is probable that future economic benefit should flow the enterprise. In the research phase, when I am only doing the research, how do I know that there is future economic benefit? Correct? Everything will be expense. This phase includes expense incurred to create or invent a new product. Expense incurred under this phase should not be recognized for capitalization. As no future economic benefit can be obtained, these expenses are charged to P&L. Clear? Development phase means what? Research is completed. You have a product. Now you don't know how to use the product or how to sell the product. So what you are doing, you are making it ready for market. Development phase is you are making the product ready for market. It is the activity which converts the research product into a marketable commodity. Your research product will become a marketable commodity. Is this clear? Now, development cost can be capitalized if product meets the asset recognition criteria. What is the asset recognition criteria? Future economic benefit should be there and cost should be measured reliably. Otherwise, it should also be charged to P&L. Are you getting this? Any doubts with this? Development? Yeah. That is also included. Development cost. See, research cost, I only don't know whether I will get benefit or not. So everything P&L. Once that is ready, then development cost, whatever development cost is there, it will be transferred to P&L if you are not sure. But if you are sure that you are having future economic benefit, then you will take it as intangible asset. Clear? Determination of cost of internally generated intangible asset. Okay, what and all it includes? Cost of material, salary and wages, any expenditure directly attributable to the intangible asset, overheads which can be apportioned for the intangible asset. General stuff. Okay. Cost not to be included. Selling, administration, general overhead, not directly attributable. These same things were not allowed even in PP. Even in PP, general expenses these are. Inoperating expenses or inefficient expenses, nothing but abnormal loss. Expenditure on staff training, there also staff training was not allowed. So some rules of PP should be allowed, no? Same thing, no, it should be. Because there it is tangible, here it is intangible, that's all. Okay, subsequent expenditure on intangible asset, very, very critical area. Okay, very, very disputable area. What subsequent expenditure you are telling? Building, one floor I constructed, one more floor I constructed, capitalize. Intangible asset, I have one patent. How can I have subsequent expenditure on the patent? Only if I renew the patent for another 5 years. Only if I renew the patent or renew the license for another 5 years, that can be subsequent expenditure. Otherwise, what subsequent expenditure you'll have? You have a software, you are going to redevelop it. You want it to be more better. Are you getting my point? That can be a subsequent expenditure. Now, if you're having subsequent expenditure, it's going to give you future benefit, capitalize, otherwise expense. Increases future economic benefit. You have a software, that software can let you manufacture 5 units per hour. You are going to upgrade the software and make it more nice and beautiful, and it can still manufacture 5 units per hour. It will be taken as expense. See, people change the software just to make the user interface good. User should feel happy when he is going and using it, correct? But the production, there is no future economic benefit extra. Capital, no capitalizing, expense. But suddenly you can now manufacture 8 units per hour. Whatever extra you have spent on that software, it increases the future economic benefit. Such expense can be attributable to the intangible asset only. Expense can be measured also, capitalize. Capitalize. Is this clear? Now, amortization. Just like depreciation it is. But method 1 is not straight line method. Method 1 is not straight line method. Method 1 is on the basis of the ratio of the cash flow. I have one patent. I got one patent for 50 lakhs. Useful life is 5 years. What I will do usually, 50 lakh divided by 10, 50 lakh divided by 5, correct? Here what is happening, that is not the first preference. First preference is somebody told me 1, 2, 3, 4, 5. 5 years cash flow. I am going to get 100, 200, 300, 200, 100, 900. So what I will do, first year I will do 100 divided by 900 into 50. Second year I will do 200 divided by 900 into 50 and so on. If this information was not there, then I would do 50 divided by 5, 10 per year. Did you understand the amortization methodology? SLM is not first preference. See over here. Amount should be based on systematic basis over best estimate of its useful life. Okay. It refers to allocating the intangible assets over its useful life. Okay. Formula also they told that we don't need to know because we know cost minus scrap value divided by useful life. Clear? Useful life also they told maximum is 10 years. Maximum is 10 years. If any longer or shorter period is estimated, then it has to be justified. Clear? Useful life is always assumed to be 10 years. But if you took the license for 2 years, what useful life 10 years you'll take? Are you getting my point? You took a license for 2 years only. What will you take useful life as 10 years over there? Okay. Now that you have to understand. Now see here, method of amortization. If enterprise can reasonably estimate the pattern of revenue, then amortization is based on that pattern. If you don't know the pattern of revenue, SLM. First preference is based on pattern of revenue. If you don't know the pattern of revenue, then it will always be SLM. Residual value. What is residual value? Scrap value. For intangible assets, scrap value 0. 0. Unless there is active market for intangible asset. If they don't tell you it is 0, because very hard to tell the scrap value for an intangible asset. Clear? But there are some licenses and all, like liquor license and all, which is given by government. Okay, you can sell it to somebody for higher value. I don't think it's happening in Tamil Nadu because it's all under government control. But in Karnataka, you get liquor license. And liquor license costs around 1 crore. It costs around 1 crore. Don't be too amazed about it. In 7 months, they will recover it. 7 months they will recover. The break even will happen. Huh? Yes. In 7 months, they recover 1 crore in tier 2 cities. Tier 2 cities, not even Bangalore and all. Bangalore liquor license might be more also. In tier 2 cities, they are recovering in this thing. Because people will not stop drinking. No? It's tough to get the license. Government has stopped giving license there. Now you have to buy from somebody else. And everyone cannot arrange 1 crore. No. That is also the reason. Now, that is the thing. See, liquor and all shouldn't be a big deal for government because government will never stop it. 100% government will never stop it. Because actually if you see, people who drink, they're very disciplined. They're very disciplined. I noticed it when during COVID. I was going to vegetable shop. Okay, I was going to milk to buy milk. They have drawn box like this. Oh, not like that. They have drawn box like this outside the shop. Okay, this is the shop. People don't care only about the box. They are all standing here. Clear? But when the liquor was opened, people were standing inside the box. All the drunkards, they were standing inside the box in line. So much discipline they followed, Huh? Why? That even, I don't know. That's when I decided that people who drink are disciplined. They were standing in line. No problem at all. They were not fighting also. Because there, in vegetable shop, there was fight that I should get vegetable. In liquor shop, all are united. They're like, I should also drink, you should also drink. Let's stand in the line. Okay, if you drink, it is like me drinking only. Don't worry. Or if you get the bottle and I don't get it, we'll share later in the night. Are you getting my point? Yes. No, that is what I saw. Even news and all, they were highlighting on that only, outside liquor shops. And in fact, I don't know about Tamil Nadu government. Karnataka government made crazy money in COVID just because of liquor. Otherwise, they would be in loss. Government was in loss. They made very good money. Because people, they were very happy when it was available. And they don't know about the future of life. Within 2 months, I might get COVID and die. So they're like, let's drink and enjoy today. Today is today. Tomorrow, we will say tomorrow. Yes. In Kerala, what is the state? It's banned, right? Tri-state, right? Is that government? Government controlled. Here also it's government controlled, right? You won't believe I met a student in Coimbatore whose father has a business, okay, of collecting all these bottles from bar and all. They will throw the bottle, no, collecting all the bottles with different brands. They'll collect the bottles and then they'll segregate it and send those bottles back to those companies. And if you give the bottle back to those companies, 15 rupees per bottle will be paid by the company. 15 rupees per bottle will be paid by the company. And I asked, what was the turnover? He showed an Excel sheet. Some many districts tender they only have in Tamil Nadu. So he was showing in the last month, they had made revenue of almost 70 lakhs. 70 lakhs revenue they had made in 1 month. Huge scale. You are telling it's a huge scale business. Actually, if you see, it's scrap dealer, yes. Correct. Okay, residual value. Now, sale or disposal. If I sell, what will happen? If I sell intangible asset, what will happen? You will either get profit or loss, recognize it. That's all. When intangible asset is disposed or if there is no future economic benefit, it has to be removed from financial statement. Gain or loss should be recognized in the P&L in the year of disposal. That is it. Okay, practice the problems, please. That was your AS 26. AS 25, we have already finished. Correct. Interim financial statement. AS 24. Discontinuing operation. If you go and search for exam questions also, you will not find any because they have not asked under old scheme also. Once they asked, I think, and it was ditto copy paste of study material question. AS 24, let's go. 7 o'clock. We just hit 7 o'clock. Huh? 6 hours. Now we will not revise the standards which are completed. We will revise the standards which are not completed. AS 25, 4, discontinuing operation. AS 23, because that list is bigger. Okay, AS 23, investment in associates, in consolidated financial statement, accounting. AS 22, accounting for taxes. This will be easy now. Regular class, this is difficult, but now it will be easy. We are coming fresh from tax marathon. Correct? Now, AS 21 done, AS 20 done, AS 19, leases. AS 17, segment reporting. AS 16, borrowing cost. AS 15, employee benefit. You were wrong. There is actually color for a reason. 7 are there, not 6. Yes. Huh? 8:30? I like the hope you have in life. AS 24, yes. Few easy standards only are there. We'll finish it. Okay, AS 24, discontinuing operation. Sir, somewhere I have seen this, sir, in my life. You know where you have seen? Only in one place. That is, if you have seen your P&L properly. Otherwise, you would have not seen anywhere. In P&L format, there is a place. Profit or loss from discontinuing operation. Tax expense of discontinuing operation. Clear? Now, direct to the point we'll go. No bakwas. Discontinuing operation means what? What is discontinuing operation? You were not there yesterday, right? That guy was not there yesterday, right? Oh, you were sitting this side. Oh, you became friends. Yes. Discontinuing operation. Listen. Last 7 standards, guys. Sitting in Chennai. Okay. 7 has lot of importance. Tala for a reason. We don't know the reason. Let's continue. Yes. A discontinuing operation is a component of an enterprise. Component means what? Part of the enterprise. Usually this component is nothing but segment. This component is nothing but segment. Segment means what? One part. Segment can be geographical. Segment can be business. That means either you have 3 products or you are selling in 3 locations. One of the products is stopping. Stopping is called as discontinuing. One of the product is stopped. We are not bothered. It's discontinued. AS 24 is worried about only discontinuing operations. Where do you say? Where are you going? Where's your house? How far is that? Only. They have to go some 400 kilometers. See you. Bye. You're going back today? Huh? Not staying for law. Right? Train, what time? 8:30. Yeah, you're also leaving. 7, yeah, you'll be late otherwise. Yes. See you. Bye. If you have any doubts, you ask. Yeah, welcome. He messaged me that day from Kerala. He's going to come. You send me a hi on WhatsApp, I'll send you the material. Anybody else? Elimination. Let's end all eliminations now. If anyone is going, huh? 8:30, not 30. After one point, it's like you have to stay. But I already told him. 10 o'clock I told him. Because if I tell him less and if I leave late, he'll be heartbroken, no? I kept on higher limit. If I leave early, he'll be happy, no? Yes, that's the spirit. Discontinuing operation, guys. Let's not discontinue the classes. We'll only study discontinuing operation. Okay. A discontinuing operation is a component of an enterprise. It means it's a part of the enterprise. Okay. That pursuant to a single plan. You have to understand this, very important. What is called as discontinuing operation? Disposing of substantially in its entirety. That means such as by selling the component in a single transaction, you have A, B, C, three different locations or three different products. You decided to sell this entirely to somebody. Product A, you are going to sell completely to somebody. Okay. Now, in a single transaction or by demerger, demerger means what? Opposite of merger. Merger means what? Two companies were getting together. Demerger means what? From the company, one will go out and make a new company. That means A will go out and it will become A Limited. Huh? Yes, that's correct. This is demerger. We don't have it in our syllabus, by the way. It was there. In amalgamation chapter, demerger also was included, but I don't know, for inter level, they have removed demerger only. Okay, demerger is beautiful. Nothing to worry about it. Like amalgamation only, nothing to worry about. Okay, demerger or spin-off both mean the same thing. Okay, of the component to the enterprise shareholders. So what you have to do, either sell the entire component or you're going to do demerger. This is the meaning of discontinuing. Next, disposing by piecemeal. Piecemeal means what? Part by part you are selling. That is also discontinuing. Then terminating through abandonment. Nobody wants to buy, but I will still pull the shutter and stop. Nobody wants to buy my component. Okay, I'm going to still pull the shutter and stop it. This is called as termination. Three things. What are the three things again? One, I sell fully. I do demerger. Two, piecemeal distribution. Three, termination through abandonment. Is this clear? Yes. That represents a separate major line or geographical area. I told you, segment will always be a separate product or geographical area, and that can be distinguished operationally and financial reporting purpose. How you are going to distinguish in AS 17? How are you going to distinguish it in AS 17? You are going to show it separately. Clear? When you are showing it separately, one thing goes away, that becomes AS 24. Discontinuing operation. Explanation, read it at your convenience. Initial disclosure event. What is initial disclosure event? Very important. That means, okay, I agree with you that it is discontinuing operation. When should I start to disclose? What is this tiger mom you're putting in coming? When should you start to disclose? When should you start to disclose is the question. When one of this happens. Now, enterprise has entered into a binding sale agreement for substantially all the assets attributable to the discontinuing operation, or enterprise board of directors or similar governing body has both approved a detailed formal plan for discontinuance and made an announcement of the plan. Okay, I just want to show you one example. We had one example which we need to see. AS24 should rearrange this. Okay, guys, silence. Okay, I can't find that example. Forget it. Okay, now listen. Listen. What did they tell? Shh. You entered into one sale agreement. You entered into one sale agreement on 28th of March. 28th of March, you entered into one sale agreement. Okay. And listen, shh. You entered into sale agreement on 28th of March and you approved that. Approval was done by board of directors on 29th of March and announcement was done on 1st of April. 1st of April. Okay, which will be taken as initial disclosure event 28th of March. Clear? Now, sale agreement was on 3rd of April. Sale agreement was on 3rd of April. Approval was done on 29th of March and announcement was on 1st of April, which will be taken as 1st of April. Why? Approval and announcement both has to happen. Can you see over here? Enterprise board of directors or similar governing body has both approved and they have announced the plan. Approval and announcement should complete or the sale agreement should be entered. Whichever happens first, that will be considered as initial disclosure event. Why are we learning so much about initial disclosure event? Because whenever the initial disclosure event happens, from that year, you have to disclose the discontinuing operation separately. Discontinuing operation will be shown separately. Sir, where to show separately, sir? In P&L, there is a place for it. Whatever you have to disclose, if there is no P&L place for it, then you will show it in notes to accounts. Clear? Now, why, sir, we have to show separately? Because the reader should know, I am stopping this business. From this business, if you are getting 50 lakh profit, this year you are getting it, but don't expect it in future because I am stopping this business. Is this clear? Now, detailed formal plan. They told no, one formal plan has to be approved. Detailed formal plan. Simple things, even if you have read once, no, if you think with an open mind, you'll be able to write. What can be in a plan? What can be in a plan? Normal things. See, identification of major assets. First, you will sit in that meeting. You will ask, no, what and all assets we are going to dispose. Okay. Expected method of disposal. How we are going to dispose. Okay. Expected period required. You are going to dispose. Tell me within what time you will finish it. Third question you will ask. Locations that are affected. You are stopping this. Which locations are affected? Okay. Location, function, expected number of employees who will be compensated. I'm getting my point. So you are going to stop. Where are the employees? How they will be affected? Estimated proceeds or salvage value from the disposal. What money we will get from this disposal. Is this clear? This is the general thing that they will ask no in any meeting where you want to discontinue something. Now, initial disclosure. Initial disclosure. What are you going to disclose? I don't know. First, discontinuing operation. Then, initial disclosure event happened. When that event happens, I should start disclosing. When I start disclosing, what should I disclose? What should I disclose? First half, story. Second half, financials. See, till here, first 4 points. This is the, till here it is the story. After that it is the financials. Clear? First 4 points are story. What is the story? Description of the discontinuing operation. What we are stopping. Business or geographical segment as per AS 17. Okay. Date and nature of the initial disclosure event. What happened? Did you sign the agreement? Did you announce the plan? When did you do this? Date. The date or period in which the discontinuation is expected to complete. When are you going to complete it? 4 things you're going to write. Then after that, complete financials. Here, carrying amount of the balance sheet date, total assets and liabilities, amount of revenue and expenses, tax expense, cash flow. That means first half you remember it as story. Second half, asset, liability, income, expense, tax and cash flow. Asset, liability, income, expense, tax and cash flow. Before disclosing this, you have to disclose the story. Story, what are you discontinuing? Whether it is geographical or business. When did this initial disclosure event happen? When will you complete it? Then you disclose the financials. When you have to disclose so many things, everything doesn't fit into P&L, no? There are a lot of things which are outside P&L also. Notes to accounts. Straight away notes to accounts. Is this clear? Now, updating the disclosure. Updating the disclosure means what? Last year you made some disclosure, you want to change it. Okay, update it. That's all. Last year you thought you will finish it in 15 months. Now 12 months are over. You feel you will not finish it this year also. Update it. Clear? Next, continuance of disclosure. Till when I should disclose it? Till when should I disclose? When this word discontinuing becomes discontinued, till then you will disclose. When this word discontinuing becomes discontinued, till then you will disclose. Here they can test you in MCQ. They can tell that last asset was sold on 28th of March 2024. Amount was received on 2nd of April 2024. Clear? Now tell me whether 23-24 will be the last year or 24-25 will be the last year. 23-24 will be the last year. Why? Asset is sold, no. Amount is received later. Credit sale is fine. See over here. All disclosure required above should continue in financial statement for periods up to and including the period in which discontinuance is completed. Till the year where discontinuance is completed, you have to keep on disclosing. Discontinuance is completed when the plan is substantially completed or abandoned, though full payment from the buyer may not have been received. Full payment you might get later also, no problem, but discontinuance is completed. Is this clear? Yes. Separate disclosure should be made. Here only they have told, see, above disclosure should be presented in the notes to financial statements except the following, which should be shown on the face of the P&L. Whatever disclosures are there should be shown in notes. Only some things you will show in P&L. What has the facility in the P&L, you will show it in P&L only. No? See over here. Pre-tax profit or loss from ordinary activities attributable to discontinuing operation. There is a place, discontinuing operation. During the current financial reporting period, an income tax expense related thereto. And amount of pre-tax gain or loss recognized on disposal of assets or liabilities, settlement of liabilities. So, what you can show? Operating profit you are making or loss you are making, you show in P&L only. You sold asset or settled liability, profit or loss, you show in P&L only. Other things which were there, asset, liability, income expense you will show over here. Tax you will show over here. Cash flow and that story part, everything will be shown in notes to accounts. All that will be shown in notes to accounts. Clear? Restatement of prior period. You have one column, no? Current year, previous year. This previous year, last year it was not discontinuing operation, it was continuing operation. So from the top, you have to separate it and you have to put it into previous period. From the top, nothing understood, sir. Everyone is looking. You remember? This is your previous year. Previous year. There you have current year column and previous year column. Previous year for previous year. There, everything was continuing operation only. Now you move into current year. In current year, what happens? This is your current year column, previous year column. First half is ordinary operation. Somewhere here, there is discontinuing operation. You will put discontinuing operation information over here. But previous year, there was no discontinuing operation. No. Previous year, discontinuing operation also was continuing operation only. From here, you have to go to previous year information, split it, take the information and put it into previous year column. Otherwise, everything will be on top. No, in the continuing operation area, you have to split it and put it into previous year figures also for comparison purpose. Is this clear? That is your AS 24. 25 is already done. AS 23. AS 23. Accounting for investment in associates in consolidated financial statement. What on earth is associates, sir? When I have substantial influence or significant influence, I am not a holding company, but I am an associate. That means I am able to control, no, but I am able to influence them. Clear? Now, this standard, you have to understand one thing. Accounting for investment in associate in consolidated financial statement. In separate financial statement, you will quietly follow AS 13. Standalone financial statement, you will quietly follow AS 13. But in consolidated financial statement, you will follow AS 23. You will follow AS 23. Is this clear? Now, associate is an enterprise in which investor has significant influence, in which neither is a subsidiary nor a joint venture. Okay, because for subsidiary we already have AS 21, joint venture we already have AS 27. Significant influence, enterprise having 20% or more of the voting power, directly or indirectly in any other enterprise. Is this clear? Okay. Calculation of percentage of holding. Let's not worry about that. How to calculate percentage, you'll be able to understand. Associate accounting. How to account it. It's very, very important. Equity method is a method of accounting followed by all enterprise having significant influence on their associates, except control is intended to be temporary. I have 25%, but it's only temporary. Within 2 months, I'll sell it. Don't bother. There are some severe long-term restrictions. I have shares yet, but I can't sell it, or I will not even get dividend fully. I have some loan, the dividend amount will go directly to the loan only. I have some long-term restrictions imposed. Then don't bother about AS24. Don't bother about AS23. Clear? Now, calculation of goodwill or capital reserve. Do I have to worry about this calculation of goodwill or capital reserve? No. Why? This is step 6 of consolidated financial statement. Step 6, cost of control step of consolidated financial statement. See over here. Amount paid for the investment minus pre-acquisition dividend. Then here, share in the assets. Okay, that time share of net assets, you know already, equity share capital plus capital profit. That time you will get goodwill or capital reserve. This is already done in consolidation in detail. Now, calculation of carrying amount of investment. Calculation of carrying amount of investment means what? At what value I should show the investment in my books? Okay, at what value? Now see over here, cost or carrying amount of investment in SFS. Standalone financial statement, you are going to show the investment. There you are going to show the investment as per AS 13. That means you have to answer this question. This value is after removing the pre-acquisition dividend or before removing the pre-acquisition dividend? After removing the pre-acquisition dividend or before removing the pre-acquisition dividend? Why after? Because AS 13 is telling us to remove, not AS 23 or AS 21. This is after only. Okay. Now, to that what you will add? You got some profit. Imagine that company made 400 rupees profit and your share is 30%. What you will do? 400 into 30%. You will add 120. You will add that 120 to the investment. It will get added to the investment only. Why? Because that 120 belongs to me now. My asset value increased. Asset value increased. Minus post-acquisition dividend received from the associate. They were supposed to give me 120. Dividend is just distribution of the money which I was already supposed to get. They were supposed to give me 120. They gave me 30. In that, value will be reduced. Are you getting my point? I paid 500 rupees and purchased one investment. After I purchased the investment, that company made some profit. That company made profit. My share in that is 120. So my investment value has become 620. Then what happens? They distributed the dividend. Distributed means what? Profit, what I was supposed to get. I got it. Minus 30. Now the investment is standing at 590. Clear? You're like, sir, why minus, sir? Because that 30 will get minus from here and it will get added to your cash. Both are asset only. Both are asset only. If you have not revised income, don't ask. Okay, now listen. Seeing today only, AS 23. Okay, now listen. I spent 500. Do you agree it is investment? Pre-acquisition dividend removed. That we know why. Now, the company where I invested in, they made a profit. They are supposed to give me 120 receivable added to my investment. Asset got added to each other. They gave me, when they gave me what they were supposed to give me, reduced. So from here 620, 30 goes and 30 will get added to my cash and cash equivalent. Is this clear? Are you following this? Yes. Now, after that, consolidated balance sheet, how you are going to show share of net assets, you will show plus or minus the profit and the goodwill you will show. Basically, you are going to show cost of investment only. Now, consolidated P&L, what you will show? Share in the profit. You will show your profit in the associate. That's all. Okay, that should be it. Now, there are a few questions in this also. With no RTP much and no past examinations, There are some chapters which have no past RTPs or past examinations much, okay, because they are all new standards introduced in your new scheme. Those things you have to be very thorough with the study material questions. Which are those? AS 28, AS 27, AS 23. Gubesh, see the material which we solved in class. AS 28, AS 27, AS 23, AS 25, AS 25, AS 26 was there, AS 15. Yeah, it was not there. It's a new standard. And that's it, I think. I can't remember anymore. That's it, that's it. Employee benefit expense was not there before. It's a heavyweight standard. They are just showing you a glimpse of it. That's it. Just glimpse of it they have shown AS 15. That standard has no boundary whatsoever. It can go to any level. Yeah. They are not going to do that in inter level, don't worry. AS 15, you thought it's easy standard, huh? AS 15 has concepts like reverse discounting and all. Didn't revise, yes, I know. Looking at the face only, can understand. We don't know, sir, what on earth is discounting. You are telling reverse discounting. We only know the discount, sir, which is there in the mall. Yes, AS 22. Accounting for taxes on income. This shouldn't be a problem because recently we have finished our tax marathons. Clear? AS 20. AS 22, accounting for taxes on income. Now, here, understand this entire thing is because of something called as timing difference. Permanent difference will not cause any problem. We are only focusing on timing difference. Clear? Someone has told, sir, only 5 standards, sir. Yes, that is right. Only. Yes, timing difference. Now understand this. In accounts, in taxation, in accounts, in taxation. Okay. In accounts, I have depreciation for which I followed straight line method. Straight line method. So I'll get some value. But taxation, you follow WDV method. So you'll get a different value. But both the cases, I said the total depreciation will be same. This is like you are doing something today, but it will get reversed tomorrow. Clear? This is called as timing difference. Now, depreciation, we have something called as 35 AD. What is it? Specified business. Taxation also will do, PGBP. Okay, 35 AD. Accounts, you don't get any deduction for that. But in taxation, 100% of the asset will be taken as deduction. Can you see it's different now? In accounts, I will do 10% every year, but taxation, full thing gone 1 year only. Okay. Then we have additional depreciation. 32 only. Okay. Additional depreciation. In the first year of your purchase, if it is used for production, that time you can get 20%, right? Extra depreciation of 20%. So that facility is not there in accounts. Accounts, it will go 10% only slowly. Clear? Yes. Then 43B. 43B, if you pay within the due date for filing the return of income, you can take it as expense. But in case you pay after the due date for filing the return of income, you cannot take it as expense this year. You can take it as expense next year. But in accounts, you don't care about all that. You follow accrual concept and quietly take it as expense. Clear? 43B. Yes. One list is there. Go and read the list. 43B. Now, listen. Fast. I have to make payment to you. I made payment to you. Fully. 100 rupees payment I made without even knowing what is TDS. Clear? Now what happened? I will take 100 as expense. I am not bothered about all that. Even if I don't pay you 100, I will show it as expense because accrual concept. Clear? Later I realized, oh, I have to deduct TDS and pay it to government. So now this 100 is fully disallowed. Sorry. This 30 is disallowed. 100 is not disallowed. 30 is disallowed for me. Why? When you make payment to resident without deducting tax, 30 will be disallowed. This 30 will go into next year and 38 will be allowed because there I paid the government the amount. Clear? If it is paid to foreigner, then full 100 will be disallowed. Is this clear? All these things are examples. One more thing is you can also think of preliminary expense. Here I will take full preliminary expense. We have it also in financial statement chapter. When preliminary expense comes, straight away we will put it to other expense and end the story. Correct? But there you will take it over 5 years. All this is causing difference. But difference what? You take it in 1 year here, you take it in different years over there. But both the places it is taken. This is called as timing difference. Only for timing difference we worry about deferred tax. Now, I paid donation. I gave one donation to a private trust. Okay, I will still take it as expense. Okay, here not allowed, not allowed. Permanently disallowed. Are you getting my point? Permanently disallowed. I paid my electricity bill. I paid my electricity bill of 12,000 rupees. 12,000 rupees electricity bill. It's business expense here also, it is business expense there also. Correct? I paid it in cash. I paid it in cash. No problem. What is that? I will still take it as expense in accounts. But here it is disallowed. More than 10,000 in cash you have paid, it is disallowed. Permanently. Permanently. Are you getting my point? Permanently disallowed. Now, is this clear? These are the things which will cause difference. Things which cause difference and it will reverse. This is called as timing difference. Things which cause difference and it will never ever reverse. That is called as permanent difference. Permanent difference, forget about it. Forget about it. Timing difference or deferred tax will be calculated only for timing difference. Clear? Now, understand this. Okay, understand this. Now, directly we'll go into definitions. Accounting income means what? As per books of accounts, what is there? Taxable income means what? What you are calculating as per income tax provisions. Tax expense means what? Tax expense means what? What you are calculating as per income tax. Okay. Current tax means what? Sorry. Tax expense is not as per income tax. Tax expense is current tax plus or minus deferred tax. Plus or minus deferred tax. I think in your P&L, when you see profit before tax, after that there is tax expense. In that there is current tax, there is deferred tax. What is current tax? What is current tax? Current tax is, what is current tax? Current tax is, understand this, tax that is calculated as per income tax provisions. Current tax is tax that is calculated as per income tax provisions. Okay, you have to apply tax provisions, calculate your tax, that is current tax. What is deferred tax? The timing difference. The tax effect on timing difference is deferred tax. Okay, timing difference are difference between taxable income and account income for a period that originate in one period and are capable of reversal in another period. Permanent difference means what? It will originate and it will never reverse. Clear? Now, recognition. Tax expense for the period comprising of current tax and deferred tax should be included in the determination of net profit. Now, permanent difference do not result in deferred tax asset or deferred tax liability. Did we discuss this? Yes. Tax effect on timing differences are included in tax expenses. Now, understand how to calculate. Simple rule. Always focus on tax. Focus on tax. If I tell you, as per accounts, as per tax, income is 100, income is 120. Now focus on tax. Okay, as per tax, if income is more, tax will be more. Today if tax is more, tomorrow tax will be less. If tomorrow tax is less, deferred tax asset. Clear? If at all I write 120 and I write 100, you focus on tax. In tax, income is less. If income is less today, tax is less today. If tax is less today, in future you will pay more tax, deferred tax liability. Instead of writing income, I write depreciation. You focus on tax. Depreciation is what? Expense. If the expense is less, that means income is more. If income is more, tax is more. Today, if it is more, in future it will be less. Deferred tax asset. Clear? If at all I tell depreciation here 100 and here 120, that means expense is more, income is less, tax is less. So in future you will pay more tax, deferred tax liability. Sir, how you are telling, sir, future you will pay more tax? Because we only talk about timing difference. That means something that happened will reverse. Only timing difference we are talking about in deferred tax. Is this clear? Yes, that is what is there here also. Now, reassessment of unrecognized deferred tax. Deferred tax asset, no, they told one rule. They're like, deferred tax asset means what? What expense I could not take today in taxation, in future I can take it. If I take it in future, I will pay less tax in future. But to claim the expense in future you should have income, no? Because in taxation, see, some word was there in taxation. In taxation, in accounts, we just take it as expense. In taxation, it is called charge against income. The expenses are not taken as expense directly. Now see, for example, if I am preparing a P&L, I don't care what is there on the credit side. If it's expense, I'll put it on the debit side and I'll show loss. But in taxation, if you have income only, you can claim the expense. Are you getting my point? Except depreciation. Depreciation, you don't worry. Depreciation can be carried forward. Unamortized depreciation can be carried forward for indefinite period. We are not talking about that. But remember, you have those, like for example, you have small expenses like repair to furniture, salary, all that. You can claim only if you have income. Huh? Yeah. Only if there is income, you can claim the expense. Charge against the income. What kind of loss can be carried forward? That's a different thing. Okay. Now, here what happens in that case? If you have income in the future, imagine preliminary expense I carried forward. Preliminary expense I carried forward, telling that in future I can claim it. That means this today I paid more tax, but in future I'll pay less tax. But future for you to pay less tax, income should be there, no? If income is there, I will adjust it. Then I'm like, okay, I paid less tax. In future there is loss. That time, is there a concept of less tax that time? No. So they are telling whenever you want to take deferred tax asset, no. Whenever you want to take deferred tax asset, just have reasonable certainty that in future there will be income. Where did we talk about that? Where here it is there? There only, yeah. Okay. See here. Reasonably certain or virtually certain. So to recognize deferred tax asset, you should always have virtual certainty that in future there will be income. Clear? Now, measurement. All this we know in P&L, it is there. Offset of DTA and DTL. Can I adjust DTA and DTL with each other? If it's related to same business, I can do it. Otherwise, I cannot do it. Okay, notes. Tax holiday. What is tax holiday? What is tax holiday? Some years you don't have to pay tax. Only one question is there in the study material. What you have to understand, any deferred tax created and reversing within the tax holiday, ignore. Created and reversing outside the tax holiday, created. Clear? 1, 2, 3, 4, 5. You have deferred tax which is generating over here, but it is getting reversed within the tax holiday. Okay, ignore it. But it is creating over here and it is reversing outside the tax holiday, then you create it. Is this clear? Now, MAT also, there is a question on MAT. What is MAT? Minimum alternative tax. You don't have MAT, actually you have AMT. Okay, but MAT you have to understand because it's applicable to companies. What are they telling? You have to pay tax, no, normally. You have to see something called as book profit. On book profit, you have to apply the MAT rate. You have to apply the MAT rate. That time you will get one value. If this value is greater than your normal tax, then you have to pay this value only. You have to pay this value only. But someday in future, if your normal tax is more, then whatever extra you paid in the past, I will allow you as MAT credit. I will allow you as MAT credit. So when you are paying for you, as per tax, what you are paying, this one, no. As per tax, what you are paying, this one. Compare that with what you are paying as per books of accounts. Okay, that time you will get the answer. I think 1 or 2 questions are there on MAT in study material. Now, very important thing I want to discuss before we go further. The most important thing is, what if I have loss? I have loss. As per accounts also, I have 2 lakh loss. As per taxation also, I have 2 lakh loss. And my tax rate is 30%. Is it going to cause deferred tax asset or deferred tax liability? It will cause deferred tax asset of 60,000. Why? Oh, that I know, but why is it deferred tax asset? Why is it deferred tax asset? Yes. What he told and what you told was same. He told why it is. You told you will recognize only if there is future income. He told today if I carry forward, in future I don't have to pay tax, no, when I have income. But in accounts, in future there is no set off. Set off doesn't happen in books of accounts. So if you carry forward the loss in future, you don't have to pay tax. If you don't have to pay tax in future, it is benefit. That's why it is deferred tax asset. But when will you take deferred tax asset? Only if you are sure that you will get income in future. You should have no 8 years. You carry forward every year. 8 years there was nothing. What will you set off against? Are you getting my point? Can you set off against salary? But someone was telling in US it's allowed. Business loss can be set off against salary. Huh? Good for the employee, no? Good for the employee. When you're in employment, just start one side business. Show loss in that. Oh, how to show loss, sir? You'll study in articleship. How to show loss, we don't know. Loss will happen, sir. We'll compute loss now. Okay? How? No, I don't know. That and all I don't know. EPS we finished. Can take loan. No. That and all you'll do one year of articles. You will understand. Now how you calculated in tax classes, how you calculated tax? You started from here. Okay. One by one, all the heads you did. Okay. Then finally you got all deductions and all. Finally you got tax. There are some gubes who will calculate tax. First you will fix the value over here. I am ready to pay 1000 rupees tax. Then I will do reverse everything and then we will determine what we want to show. There are people who do that. Okay. Don't do like them. Be honest. AS19. No, I have not done it. I don't encourage it. Today she's not shouting. No, she's only calling. Yesterday she was shouting.
Shout, sir.
Bye. Yes. We'll go into AS19, guys. Okay, let's go to AS19. Accounting for leases. Accounting for lease. Huh? First time you all are telling you don't need break in 2 days. Okay, guys. You stay here only, no? 10 o'clock. Yes. AS19, guys. Accounting for leases. Now, lease is a long-term rental contract. That and all we will not go into. Finance lease, we have to understand what is finance lease because accounting only is different when it comes to finance lease and operating lease. Clear? Now, it's better if I would, 1 second. Now, AS19, understand this. Okay, AS19, we have an asset which is given on lease. There can be 2 types of lease, finance lease and operating lease. What is finance lease? What is finance lease? How do we understand it is finance lease? Finance lease, what they tell is transfer of ownership of the asset at the end of lease term. That means when the lease term gets over, automatically you will become owner. That means during the lease term also you enjoyed the asset. After that also you will enjoy the asset. Finance lease. Finance lease is when substantially all risk and reward incidental to ownership is transferred. That means the risk and reward of ownership is enjoyed by you only. Main owner is not enjoying anything. Clear? Lessee is given an option to purchase the asset. You don't become the owner automatically. But I'm giving you the option that after the lease term, if you want, you can buy the asset. Clear? Lease term is for major part of economic life. Economic life is 5 years. Lease is for 3 years. Now what happens? Major portion is covered by lease only. No, it becomes finance lease. At the beginning of the lease, present value of lease payment recover substantial portion of the fair value of the asset. For that I have to show the example, otherwise I won't be able to recalculate everything for you. Now understand this, fair value of the asset is 10 lakhs. What is fair value of the asset? Today if I buy, I should pay 10 lakhs, correct? Okay. Lease rent that I am going to pay is 4 lakh, 4 lakh, 4 lakh. Sir, you're paying 12 lakhs, sir. Yes, you're paying in future, no? You will have to pay more. Now, present value factor is 10%. If you see the present value of the lease rent, it is 9,94,400. Can you see you're almost paying the 10 lakhs? It's almost like buying the asset only. That's why it's called as finance lease. That means risk and reward is transferred. Last one is, it is of a specialized nature. That means customized asset. Anybody else cannot use it. Even if you give it back, that will be taken as finance lease. Clear? Now you see over here, customized asset is there. Useful life is 10 years. Lease is 2 years. Still it will be taken as finance lease. Don't worry about the hair and all. Okay. Accounting in the books of lessee. Now you know you have to do two things. Accounting in the books of lessee, accounting in the books of lessor. Now, finance lease. We'll only focus on finance lease. Operating lease, there is nothing. Only sale and lease back will bother you in operating lease. Now, asset taken on lease. Asset taken on lease. For you, what did you get? Finance lease. Asset you got. Sir, wait, sir. I am actually staying in one PG. I am paying rent. But when I am paying rent, no, I am not showing that building as my building in my books. Are you showing any of you who are staying in PG? No. You are just showing rent as expense, right? Because it is operating lease. It is operating lease. Okay, risk and reward of ownership is not given to you. You are only going to be there for few years. Now, if you pay, let's say PG rent for 2 years also fully, the cost of the asset is much higher. Value of that asset is much higher. You are not going to cover it like how we did over here. It's not getting covered. Okay. Now, asset account debited to lease account. This is the entry. Asset account debited because asset comes in. Lease account is credited because you have to pay the money. You have to pay the money, so liability. But at what value will you recognize this? Present value of minimum lease rent from lessee's point of view, or fair value of the asset, whichever is less. What on earth is all this, sir? Present value of minimum lease payment from lessee's point of view, or fair value of the asset. Fair value of the asset is today's value. Present value of MLP. How will you calculate MLP? MLP from lessee's point of view, lessor's point of view. For lessee, MLP is whatever he is going to pay. For lessee, MLP is whatever he is going to pay. What will he pay? Lease rent. And what will he pay? Guaranteed residual value by lessee. He told after the lease term, I will only buy the asset for this much. Guaranteed residual value by the lessee. Lessor's point of view, what will he get? Lessor's point of view, what will he get? He will get the lease rent. He will get the guaranteed residual value by the lessee. And he will also get guaranteed residual value by others. Are you getting my point? I have 3 houses. See over here. I have 3 houses. Okay, which is taken on lease through Zoyo. Zoyo, not Oyo, Zoyo. Okay, I have 3 houses. Now what happened? I have taken this house on lease. I told after the lease term gets over, this house I will only buy. And I will pay you this money. This is guaranteed residual value by lessee. Someone else has told when the lease gets over, second-hand building I want. That is guaranteed residual value by others. This third house is there. Nobody has guaranteed, but that also has a residual value. This is unguaranteed residual value. It's unguaranteed residual value. Is this clear? So here in the books of lessee, is lessee worried about others? No. Lessee knows I am going to pay lease rent. I have guaranteed residual value. That's it. End of story for lessee. Clear? So in the books of lessee, what will happen? Present value of minimum lease payment from lessee's point of view, or fair value of the asset, whichever is less, will be taken as the amount for this particular entry. Is this clear? Are you following this? Okay. Now, at the end of each year, what you will do? At the end of each year, they have very long time. They have not asked journals only. They will only tell, calculate the amount at which it has to be recorded. So you'll prepare a table, calculate present value, done. Now, at the end of each year, what you're going to do at the end of each year? Lease rent is paid, liability reduces, lease account debited to bank. Interest is due, interest account debited to lease. Interest is due entry, interest is debited to lease. Already interest is included when you are paying. Clear? P&L account debited to interest account. Done. Now, asset taken on lease is for 4 years. Lease rent is 4 lakhs per year. Discounting rate is 10%. Fair value of the asset is 14 lakhs. Guaranteed residual value is 1 lakh. Now my question is, past necessary journal entries you forget. At what value you will show it today? At what value will you show it today? Now, 4 lakh, 4 lakh, 4 lakh, last year 5 lakh. Why? Last year you will get the guaranteed residual value is also there. You are still in lessee's books. You didn't go to lesser book at all. Still in lessee's books. Present value factor. Take the present value. You get 13,35,900. This or fair value, whichever is lower. Fair value is 14 lakhs. So you will take it as 13,35,900. Can you see? You will pass the entry for 13,35,900. Asset account debited to lease. Now, understand this. How to calculate interest, sir? Every year's interest. You have to prepare one repayment schedule, which you do in FM. Do you remember you prepare one repayment schedule? This is my opening balance. Every year I am paying 4 lakh, 4 lakh, 4 lakh. Last year I am paying 5 lakh. Interest is basically opening balance into whatever the rate is there. You will get the interest. Principal or installment, what you do? From lease rent, if this much is interest, remaining everything is installment. Out of opening balance, this much was supposed to be paid. You subtract this, that time you will get the closing balance. You will get the closing balance. Is this clear? Are you following this? Yes. Finally, it will become 0. This is your interest every year. Every year's interest. Now you will pass the entry. Lease account debited to bank. Interest account debited to lease. P&L account debited to interest. Now, accounting in the books of lesser, finance lease. Lesser, asset is given, right? Asset is given on lease, no. So you'll pass the entry, lease account debited, because it is receivable to asset. Asset is gone. And in the books of lesser, it will be recorded at net investment. Sir, what is net investment, sir? Net investment is present value of gross investment. Net investment, or difference, yes. Net investment is present value of gross investment. Sir, tell me what is gross investment. Now don't tell present value, future value of net investment. Okay. What is net investment? Present value of gross investment. Gross investment is MLP from lesser's point of view plus unguaranteed residual value. So gross investment, imagine I am going to take one building and give it on lease. For me, what is the investment? Whatever keeps coming from that is investment. What will keep coming from that? The lease rent will come from that. Then what will come? The guaranteed residual value from the lessee will come. Then what will come? Guaranteed residual value from others will come. Then what will come? Unguaranteed residual value also will be there. Is this clear? So for me, this is my gross investment. But all this will come only in the future. So I need to do the calculation today. So net investment is present value of gross investment. You need to calculate the present value of all that. Imagine you have a 3-year lease. Present value factor is 10%. Residual value is 2 lakhs. Guaranteed residual value is 1,50,000. Now what you will do? Gross investment is what? 3 lakh into 3. You will get the lease rent. Plus you will get 1,50,000 also. Plus you will get 50 also. What is the 50? Unguaranteed. How did I get this? 2 lakh minus 1,50,000 is 50,000 is unguaranteed residual value. This is your gross investment. But you are not getting it today. You will get it in the future. So what you will do? You will take the present value of all that. When you take present value of that, you will get this value. You will get this value. So actually you are going to get 11 lakhs in the future. But today's value of that 11 lakh is only 896. Why, sir? I am supposed to get 11 lakh in the future, but today's value of that 11 lakh is only 896. That means what is the difference? The income which I have not earned, income which I have not earned, which is called as unearned finance income. Unearned finance income. So I am going to get 11 lakh in future, but when I saw the present value, it's only 896. Then why am I going to get 11 lakh in future? Because when they pay late, they pay interest. That is called as unearned finance income. Just calculating unearned finance income also, so many questions are there in study material, RTP and past examinations. They only calculate unearned finance income. What will you do? Gross investment minus net investment. But to get the net investment, you have to take the present value. Okay, this is the entry lease account debited. Every year, what you will do for this person, lease rent is received and interest is an income. Income is transferred to P&L. Last topic over here is sale and leaseback. Sale and leaseback is very important. Why? Because there are a lot of mistakes people make from sale and leaseback. Now, understand this. Only thing what is sale and leaseback? I sell the calculator to you and then take the same calculator back on lease. Why, sir? Are you mad? No. Sometimes people are in trouble. No. So what they do, they sell their asset. Got the money, they can recover from their trouble. But without the asset, they cannot survive. So they'll take the same asset back on rent. Is this clear? This is called as sale and leaseback. But when I sell the asset, there is a profit or loss on sale. I have to record it. How do I record it? Depends on what lease it is. How do I record it? Depends on what lease it is. If it is finance lease, what am I talking about? I am not talking about lease rent. I am talking about in sale and leaseback. When I sell the asset, I will have a profit or loss. That profit or loss on sale will be recorded. Okay, if it is finance lease, how? If it is operating lease, how? If it is finance lease, amortize over the lease term. Don't record the profit immediately. Amortize over the lease term. Amortize over the lease term means what? Spread it across. For example, my WDV was 50. I sold for 70. Did I get a profit of 20? If my lease is for 4 years, divide that 20 over 4 years and 5 rupees per year will be credited to P&L. Did you get this? Now, just listening to this. If you go to the exam and they tell sale of asset. I got profit. Sir, I'll spread it across 5 years. Buy. Sale of asset, no. Sale and lease back only. Sale and lease back only. Are you getting this? And if it is a finance lease, don't record the profit or loss. Immediately amortize over the lease term. Okay. If it is operating lease, debited to P&L. No, nothing. Here it is credit. If it is loss, it will be debited to P&L. It will become deferred revenue expenditure. Huh? Sorry, I didn't get to. Yeah, prudence tells us what? You should recognize the future losses. No, provide for future losses is what prudence tells. They didn't tell, they said bring it into books. That's it. Now, if you have a loss of 20, what you will do? Loss, which you have not recognized, it will be shown on the asset side of the balance sheet. Then every year, 5 will get debited to P&L. If it is profit, 20, it will be shown on the liability side of the balance sheet. Then every year, 5 will be credited to P&L. Clear? Okay. Now, if it is operating lease, understand this. If it is operating lease, what can happen? 3 things. There is a new terminology which comes into picture if it is operating lease called as fair value. Sale value is equal to fair value. So what is fair value? Today's value in the market. You sold it at fair value. Isn't it normal? Isn't it normal you sold the asset at the market value itself? Normal? Profit or loss, recognize now. Profit or loss, recognize now. End of the story. Are you getting this? Okay. WDV 50, fair value 70, sale value also 70, profit is 20, recognize it now itself. End of story. Sale value is less than fair value. You sold it at little less than market. Is it normal? Yes. Is it normal? Yes. Why? Because whenever, imagine there is a land, they are telling 50. You'll go and negotiate. No. You'll tell, can you give it at 45, 40? You'll negotiate. It will go less than market value that time. This is also normal. Recognize the profit or loss now itself. Recognize the profit or loss now itself. But if sale value is greater than fair value, this is abnormal. Sale value is greater than fair value. Why will it happen? I will tell, see, market value is 50. I will sell it to you at 80. You pay me 80 today. But from tomorrow, I will pay you lease rent. That time I will give you high lease rent so that it will get compensated for you. You give me more money now, I will give you more money in lease rent form. It will get compensated for each other. Correct? This is abnormal. This happened only because of lease back. This happened only because of lease back. So here they are telling sale value minus fair value recognize over lease term. Fair value minus WDV recognize now. Nothing we understood, sir. Simple. See this example over here. WDV is how much? 50. WDV is how much? 50. Fair value is how much? Market value 60. How much did you sell for? 65. How much did you sell for? 65. This extra 5 profit which you got, no, it is abnormal. It is abnormal. This is because of the lease, amortized over the lease term. But this profit is there now which you got 10 over here. It's normal. It's normal. Recognize it now itself. Is this clear? Are you following this? So, sale value is here. Fair value is here. WDV is here. This profit happened just because of lease. Amortize it. This profit would have anyways happened. Recognize it now. Clear? That is it with the AS19, guys. That is the AS19 for you. You have to go and solve, obviously. Related party we finished, I guess. No? Nice. Beautiful small standard. AS17. Segment reporting. AS17, 16 and 15, right? Three standards we have. Oh, it's already 8 o'clock. Just give me 1 minute. AS14. Next standard, AS14, segment reporting, very. Oh. AS17, sorry. Segment reporting. What has happened? Okay, now, scope of this standard, basically segment reporting means what? Looking at the company from micro angle. Usually, I look at the financial statement. Clear? And I see that there is a profit which is showing 1 crore. And I see that there is equity share capital 1 lakh. Won't I be happy? Equity share capital is showing 1 lakh, but the profit is showing 1 crore. Won't I be happy? Yes. Now if I tell you, I have 3 products. Correct? And one product is having profit of 50 lakhs. Another product is having profit of 1.5 crores. 1.5 crores. And third product is having a loss of 1 crore. Now are you having the same happiness? No. First you are very happy. You are thinking that 100x returns. I invested 1 lakh. I am getting profit of 1 crore. You are happy. Obviously you are happy. But then when I tell you there was a potential to actually earn 2 crores. But because of one product which is having a loss, we are not able to do it. Clear? Now our goal is to do profit maximization. That means if I reduce the loss over here, overall profit will get maximized. Clear? This can be product or it can be even locations. Segment can be product or locations. Why are we doing it? Can you see I'm looking at it from micro angle. Financial statement won't give me this information. If I would just look at financial statement, I would just be happy. I would not know about the potential which is there over here. Clear? Now, you have 2 types of segments. Business segment and geographical segment. What is business segment in brief? Different products which can be identified. Clear? Now, imagine you are sitting in a hardware shop. In hardware shop, 1000 types of screws are there. Are you going to show every screw as a segment? No. Clear? Now, that means nature of products and service, nature of processing, how you are going to process a product, all products which are processed in a particular way, separate segment. Class of customers, to whom you are targeting. Imagine you are making magazines. Magazines for sports lovers, one segment. Magazines for political views, one more segment. Magazines for fashion, one more segment. Clear? Are you getting this? They're talking about product, business. Business means product only. Yeah. No, they are separate companies only altogether. Yeah, they are separate companies only. Now imagine Reliance was one, or Tata was one company. They're making salt, one segment. They're making automobiles, one segment. They're having something else, another segment. Clear? They manufacture software, TCS, one more segment. Now, nature of domain, banking or insurance, even that also considered as segment only. Geographical, hello. Geographical segment, we are in different areas. Now, economic and political conditions also, we are within India only. We are within India only. Are you getting my point? What now? After 2 days of marathon, when we are still second day also, we are at 8 o'clock in the night. 12 hours we have been in the academy. Whatever I draw, is it not India? Yes, it is India only. Okay. Whatever I draw, you should accept that it is India. Yes. Now, understand this. Similarity of economic and political conditions. That means, see, all these, we have branches or we have locations everywhere. All these are going to be considered as one only because within the country. But imagine what is there over here. There is different political or economic condition over here. That time, this will be considered as one segment. All others will be considered as one segment. Is this clear? Or special risks are associated. Imagine here there is a war going on. Other areas are safe. So this will be one segment. This will be one segment because there is a separate risk involved. Clear? Now understand this enterprise revenue. Okay, guys. Shh. Enterprise revenue. Enterprise revenue, if you understand, enterprise expense also you will understand. Now, sales revenue from external customer. Outside customer is giving me revenue. Clear? That is enterprise revenue. Enterprise revenue is not segment revenue. Enterprise revenue is the revenue for the entire business. Excludes inter-segment transfer. Inter-segment transfer is not enterprise revenue. That is only revenue from one segment to another segment. But for the business, it is not revenue at all. Okay. Segment revenue. What and all is included? Includes revenue of specific segment. My own revenue is my revenue only. Reasonably allocable part of enterprise revenue. Business made the revenue. They gave little portion to me. Head office made the revenue. They gave little portion to me. That is also considered as revenue for me. And inter-segment transfer. A, B, C and head office. What I made is my sale only. What they gave me a portion, that is my sale only. And what I transferred to others, that is also my sale only. If primarily a financial segment means what? Banking or investments. Banking or investment, if they are doing, then interest and dividend income is also revenue. Interest and dividend income is also segment revenue. Interest and dividend income of advance or loan given to other segment, that is also segment revenue. If I am bank, I give loan, I get interest, segment revenue. If I am bank, I give loan to the other segment revenue. If I am bank, understand this, if I give loan to anybody, it is segment revenue. But if I am investment company, I am buying mutual funds, I am buying and selling investments. Okay, if I get dividend, that is segment revenue. Okay, understand this. If I am not mutual fund, dividend would go to other income. That's why it would not be considered as segment revenue itself. Is this clear? Now, gain on sale of investment. Segment revenue. Gain on writing off of debt. What is this? Gain on writing off of debt. Somebody gave me land and they had taken loan from me. When I sold the land, I got higher value. I got a gain. This is also considered as segment revenue. So this is only if you are a financial segment. Excludes, extraordinary items are not taken. Non-operational interest and dividend income. Non-operational means what? Not related to my operations. That means I'm not doing that business. Then it will not be considered. Non-operational interest and dividend income of advance or loans to other segments. If you give advance or loans to other segment, that will not be considered. Clear? Non-operational gain on sale of investment. You sold the investment, you got gain, but it is non-operational. That means it is not related to your operations. So mainly for this to be considered, you should be a bank or insurance company, bank or investment company. Clear? Segment expense. Segment expense. Now, specific segment expense, that means your own expense. Reasonably allocable part of enterprise expense. Enterprise told, little expense I'm putting on your head, that is also your expense. Reasonably allocable, operationally relevant part of administrative head office and other expenses incurred on behalf of the segment. Now I have hired 3 people. Head office has hired 3 people. 3 accountants are there for 3 segments. Their salary, if you can apportion it to the segment, that will be taken as segment expense only. If a primarily financial segment, that means you're a financial segment. Remember, your bank. Then interest is expense because interest was income. Interest expense on advance and loans from other segment. If you're a bank, you have taken loan, that is also expense. Loss on sale of investment, that is also expense. Loss on writing off of debt, bad debt. Bad debt is also an expense. Clear? Now simple. If you're bank, interest income is revenue, interest expense is expense. If you're not bank, interest income is not segment revenue, interest expense is not segment expense. Clear? Excludes extraordinary items, non-operational interest expense, non-operational interest expense on advance or loans from other segments, and non-operational loss on sale of investment. That means your business is not investment. Loss you have, not segment expense. Non-operational loss on writing off of debt, and interest expense on OD and operating liabilities of a specific segment. Anytime you have interest expense on overdrafts or any liabilities, low interest on loan will never be taken as segment expense. Why? Because we are trying to find what is the result of your core activity. We don't want interest on loan to bother us now. Income tax expense, obviously, administrative head office and other expense relevant to whole enterprise. These things are eliminated. Clear? Now, segment result means what? Very tough formula. Segment revenue minus segment expenses. It will give you segment result. Clear? Segment assets. Segment asset. If you are a bank, interest was taken as income. Therefore, the loan that you have given should be taken as asset. Clear? Specific reasonably allocable operating assets employed by the enterprise, that we already know. If segment result includes interest or dividend income, then segment asset includes related receivables, loan and investments or other interest and dividend generating assets. You take interest over there, then you take asset over here. Simple. Income tax assets are excluded. What is income tax asset? Deferred tax asset are not included over here. It will be taken by the company as a whole, but the segment will not take it. Relevant allowances and provisions are deducted before balance sheet. What allowances? You are taking loan, but you have doubtful some amount. You will minus the provision and then you will show the net amount. Always you do like that only. No, debtors minus PDD. Clear? Segment liabilities. Okay, segment liabilities. Understand this. Specific or reasonably allocable operating liabilities of the segment. Their own liabilities, their liability only. But if segment result includes interest expense, when will segment result include interest expense? When you are a bank, that time, or investment company, that time the loan which you have taken, that will be taken as liability. Then segment assets, no. Segment liabilities include related interest bearing liabilities. Income tax liabilities are not included anyways. That means deferred tax liability is also not there. Is this clear? So remember, everything is revolving around what business you are doing. If you are a bank, interest is income, interest is expense. So loan given is asset, loan taken is liability. If you are an investment company, then dividend income is income, profit on sale of investment is also income. Then loss on sale of investment is expense. Then the investment will become asset. Clear? Treatment of interest for determining segment expense. We already decided that if you are bank, you will take it, otherwise you will not take it. We have already discussed this. Primary and secondary segment. What is primary and secondary segment? Now I have business also in multiple areas and I have multiple products also. Imagine you are Samsung. You are there in multiple locations also. You have multiple products also. Now you have to do segment reporting. No. Segment reporting when you do, what will you show first? What will you show? Will you do it according to locations? Will you do it according to products? You should do both. But you should choose which is more relevant, where there is more risk and reward, diversified risk and reward. So if you feel products are more important, then you will choose products as primary segment and locations as secondary segment. Who cares, sir? Both reports I have to make, right? Okay, AS 17 cares. Why? If you choose something as primary, more disclosure. If you choose something as secondary, less disclosure. Now see over here. If it is a primary reporting format, see over here. You have to show the segment revenue. You have to classify the segment revenue into external and internal, inter-segment. You have to show the segment result. Then you have to show the carrying amount of segment assets. You have to show the segment liabilities. You have to show the total cost incurred to acquire segment asset. That means new assets if you are acquired, you have to show that also. Depreciation, amortization, you have to show. Any other non-cash expenses there other than depreciation, amortization, that also you have to show. Basically everything you are showing. There is nothing that you are left. Asset you are showing, liability you are showing, income you are showing, result you are showing, additional assets you have purchased, that also you are showing, depreciation, amortization you are showing, and you are showing other non-cash expense. But what if it is a secondary reporting format? If it's a secondary segment, then secondary reporting format. See, you don't have to show all revenue. Revenue from external customers whose revenue is 10% or more. That means big customers revenue only you show, small not required because it is secondary segment. Segment assets whose assets are 10% or more. All the assets you don't need to show. If it is more than 10% of the total, you show it. Any additions that are made to assets, that you will show. Is this clear? This is why we are classifying into primary and secondary. Now main thing is how to choose the reportable segments. Very important. Very easy. So many times they ask these questions. I don't know why. Nothing is there in this. Now, first we do something called as revenue test. In revenue test, what we will do? Anything more than or equal to 10%, you will take it. That also no problem. Then you will do something called as asset test. Anything more than or equal to, you will take it. Now, result test is the important one. Result test. Now, for example, I have A, B, C, D. And my segment revenue is 100, 1000, 2000, 3000 and 50. What will I do now? Total is how much? 6050. 6050 into 10% is how much? 605. This one and this one will be reportable segments. Correct? Reportable segments. I have segment assets. Segment assets. 10,000, 200, 500, 300. That means it is 11,000. 11,000 into 10% makes it 1,100. This one only is reportable segment. Now, segment result is little critical. Segment result I am telling, I have profit of 500, profit of 300, 200 loss and 10 loss. 200 loss and 10 loss. If you total this, no, you will get 800, 590. You will get 590. If you do that, 590 into 10%, that time it becomes 59. That time you will choose this, and you will ignore the other two. Wait. You will ignore the other two. Why you will ignore the other two? Because those are in negative. That time, always, loss-making segments will ever be ignored. But loss-making segments also you have to show. So now what they have told, simple rule. They said, first you total profit. What is the total of profits? 800. Then you total the losses. 210, which is a bigger number in absolute terms. Absolute terms means ignoring the symbol. Which is a bigger number? 800 is a bigger number. 800 into 10% you do. How much you got? 80. 800 into 10% you got 80. Whichever segment has more than 80 in a number. Forget about symbol. 80. Is this more than 80? Yeah. Is this more than 80? Is this more than 80? Is this more than 80? No. That means these three segments will be reported. Because of this, can you see a highly loss-making segment is reported, but a small loss-making segment is not reported. Same way, the small profitable segment also would have been ignored. Are you getting this? This is how you choose. Clear? But one rule they have told, okay, remember this. Overall test. When I'm choosing the segments now, once you check whether the total revenue, at least 75% is reported. All the ignored segments, if it is gone, and if here only 70% is reported, then they told, now forget about AS 17. You choose any segment and put over here. It should cross 75%. Are you getting my point? Out of 8 segments, you chose 5 because of the tests which you did. Okay, now it is coming only to 70%. You should cross 75% total revenue which you are disclosing. Then you will choose any of the 3 to make it 75. Clear? This is your AS 17, guys. AS 17 done. Dun 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 dun. Let's go further. AS 16 borrowing cost. Very, very nice, small and sweet standard. How many standards we have left? 2. AS 16 and AS 15 only. AS 15 is very nice and small. You only told that time it is beautiful. You only told that time AS 15 is beautiful. After AS 16, I'll give the opportunity to people. If you want to go, you can go. Okay, because AS 15, I cannot take it slow. I mean, take it fast. I have to go slowly only in AS 15. I will tell you when I finish AS 16. I will tell you what will be the approximate time when I finish AS 16. Okay, guys. Then why are you asking approximate time? Why are you asking approximate time? I was thinking that I'll finish by 8:45, but you told you have to leave at 9:30, so I'll take it till 9:30. Huh? Okay, guys, we'll finish AS 16. AS 16 is not tricky. AS 16 is simple. Like all the other standards which we did. Okay, now AS 16 borrowing cost. Kiki, good morning. Okay, borrowing cost. No, people who are watching on YouTube later, they will not know at what time of the day we are in. And I tell good morning, they'll go early morning. They just started AS 16 now. They don't know that. Yes. AS 16 borrowing cost. But you only watching, you will know. No morning was there. We were at 8:30 in the night. 12 hours later, we were still in class. Okay. Now, meaning. Meaning of borrowing cost. What is borrowing cost? What is borrowing cost? Hello. Cost of borrowing. That's it. Basically, interest is what you immediately think of. But they said, even other things which are connected with borrowing the funds. I am going to pay interest on loan. 100% it is borrowing cost. Correct? But to borrow that loan, I have no idea only. I hired an agent. That fellow got me the loan. To that agent, I paid 5,000 rupees. That is also borrowing cost. That is also borrowing cost. That loan, when it got processed, bank charged something called as processing charges. That is also borrowing cost. Later, I decided I want to close the loan early. Bank charged pre-closure charges. That is also borrowing cost. Everything is borrowing cost. Clear? Now, rule. One, actually, no, this entire standard is only this line. Borrowing cost related to qualifying asset to be capitalized till the asset is ready for use. Oh, I didn't understand half the sentence, sir. Huh? Yeah. In tax, it is put to use. Okay. Borrowing cost related to qualifying asset to be capitalized till when? Till the asset is ready for use. What on earth is qualifying asset? Qualifying asset is an asset which takes substantial amount of time for it to be ready for its intended use or sale. Are you getting my point? I went and bought a building. I went and bought a building. Is it qualifying asset? No. I had constructed the building. Is it qualifying asset? Yes. I went and purchased the machinery. Is it qualifying asset? No. I went and I went and manufactured the machinery. Is it qualifying asset? Yes. See over here. Asset that necessarily takes substantial period of time to get ready for its intended use or sale. Borrowing costs are capitalized as a part of the cost of qualifying asset when it is probable that they will result in future economic benefits to the enterprise and cost can be measured reliably. Now simply you will not add the borrowing cost to the asset. When you know that asset will give you future benefit, then you will add. What is the point of making the asset value more and more and more when asset is not going to give you future benefit? Remember in PPE they told you will take it as PPE only if it is going to give you future economic benefit. So when you are adding borrowing cost to PPE, if the asset is going to give you future economic benefit, then you are going to take it. Otherwise, you are not going to take it. Other borrowing costs are recognized as an expense. We know, right? If borrowing cost is not capitalized, it is shown in the P&L as finance cost. Clear? No. Borrowing cost eligible for capitalization. On qualifying asset, capitalize. Other than qualifying asset, debit to P&L. I have one building. Okay, I'm constructing the building. I took a loan. On this loan, whatever is there, it will be capitalized till the building is ready. After the building is ready, what will you do with the borrowing cost? Debit it to P&L. Are you getting this? Now, are you telling me that just because the building is completed, loan will stop? No, right? Loan will still continue, right? So after that, whatever interest is there, it will go to P&L as expense. Okay. Commencement of capitalization. What does commencement of capitalization mean? When can I start the capitalization process? First, expenditure for acquisition, construction or production of qualifying asset is being incurred. That means building expenditure is going on. Okay, next, borrowing cost is being incurred. That means borrowing cost should be there. Building is under construction. We don't have any loan. What will you capitalize? We took the loan. Building construction is not going on. What will you capitalize? Are you getting this? Building construction is going on. Borrowing cost is not there. I mean, loan only is not there. No borrowing cost to be capitalized. Loan is borrowed, but building construction did not start. No borrowing cost to be capitalized. Activities that are necessary to prepare the assets for its intended use or sale are in progress. That means activities are going on. Imagine, next actually is suspension of capitalization. I started construction of the building. That is part of the process. That time you can capitalize, yes. Construction, yeah, that is fine, that is fine. Now, for example, see, I wanted to construct, I constructed one floor, okay. After that, I was constructing what? Huh? After constructing one floor, I was constructing the second floor. This much construction I finished. That time there was COVID. Clear? Now, loan will not stop. No. Loan is still there. No. Interest you have to still pay. No. But during COVID, what did I do? I stopped the work. This is suspension of capitalization. Suspension of capitalization will happen when the work has stopped for a very long time. Now, suspension of capitalization will not happen when the work stopped from outside. What I did, I started doing the interior. I thought outside work is not happening. I will do all the wiring. Okay, all wiring and all I will do. Nice one, lamp and all I'll keep. Lamp. Oh, it looks like human being. Okay, lamp and all I'll keep. Are you getting my point? I'm doing the interior work. That means other things are still going on. That time suspension will not happen. See over here. Borrowing cost may be incurred during extended period in which activities necessary to prepare the asset for its intended use or sale are interrupted. That means activities are interrupted. Such costs are costs holding partially completed asset. They are telling now what you are paying is not for the construction. It is for holding one half constructed building. Clear? Now, capitalization of borrowing cost is not normally suspended during a period when substantial technical and administrative work is being carried out. That means inside still administrative work is being carried out. That time it's not going to be suspended. Now, sometimes what happens? Some delay is required. I finished this wall. I finished this wall also. I just finished the slab. For 1 month, I cannot do any more work because this is called as curing process. So now they told if it is a temporary delay is necessary part of the process of getting it ready, then you do not suspend. That time what I'm doing, I'm just coming every day and pouring water and going. That's it. Okay. So if at all it happens, that time it will not be considered. Otherwise, any suspension in work will be suspension in capitalization. Suspension in capitalization means what? Borrowing cost which comes doesn't get added to asset. Borrowing cost which comes goes to P&L. Is this clear? Next, cessation of capitalization. What is cessation? Cease. Stop. When will you stop? When asset is ready. When will you stop? When asset is ready. Asset is ready for its use. After that, you can't capitalize. After that, all borrowing costs will go to P&L. Okay. Now, types of borrowing. You have two types of borrowing. One is called as specific borrowing. One is general borrowing. Specific borrowing, nothing. You took the loan. You took the loan for the asset only. Whatever borrowing cost, capitalize. Clear? General borrowing. You took the loan. You are going to use it for asset. You are going to use it for qualifying asset. You are going to use it for other asset. You are going to use it for expenses also. This is called as general borrowing. General borrowing, what you will do? Whatever you have spent on the asset, you will multiply it into weighted average rate. You will multiply into weighted average rate. How to get weighted average rate? Total borrowing cost of general borrowing divided by total general borrowing. For example, I'll tell you, I have one loan from HDFC, 50 lakhs. I have one loan from SBI, 30 lakhs. HDFC loan is 10% rate of interest. SBI loan is 12% rate of interest. So what will I do now? What is the borrowing cost on the HDFC loan? 5 lakhs. And 30 lakhs, it is 3.6 lakhs. So totally I have 8.6 lakhs. What is my borrowing? 80 lakhs into 100. 8.6 divided by 80. 10.75% is my borrowing cost. 10.75% is my weighted average borrowing rate. So what I will do, whatever expenditure is there on the qualifying asset, I will multiply with the weighted average rate of borrowing and end it. That's all. Is this clear? Huh? That amount will be capitalized. No, you can't capitalize. That is just like suspension, no? It will go to P&L. That is just like suspension, which is it is an extension which is not normal. It will go to P&L. Now see, if construction is going on, court case is going on in middle of the construction, what you will do? You will put it to P&L only. Construction is completed, court case started, you will put it to P&L only. Clear? Yes, this is your AS16, guys. You have to solve problems. I think question number 1 from study material, first question. One huge question is there that you have to see. 3 borrowings are there in that, and then there are multiple different stages we have spent money. Okay, specific, general, everything is there. That is it with the AS16. Last standard for the day, for the marathon, AS15. AS15 is very, very important. Yeah, if anyone wants to leave, they can leave now. Okay, guys, let's go further to AS15. Last standard, employee benefits. Let's go further. Okay, now, employee benefits, when we are talking about all forms of consideration given by an entity in exchange for services rendered by employees. Whatever employee is providing service, whatever we give them, it is considered as employee benefit. AS15 deals with accounting disclosure for employee benefit in books of employer. AS15 is only talking about employer. Remember in P&L we had one area called as employee benefit. What to fill there? AS15. What to fill there? AS 15 is talking about. Clear? Now. Oh, some people have already decided to skip AS 15, I think. They left as soon as AS 15 started. They're like, AS 15 we are skipping, already decided. Okay. Now, I think out of the last three attempts, 2 attempts, they have asked question from AS 15. Okay. Just a late night motivation. That's it. Okay. Except employee share-based payment. That means ESOP is not covered over here. Sir, where is ESOP covered, sir? No accounting standard is talking about ESOP. Yeah. Generally accepted accounting practices. Okay. Employee benefits paid due to. What and all employee benefits? Formal plan or agreement. Formal plan or agreement. That means you went into this example. I don't know what is happening. Only forget it. Okay. You went to the interview. Okay. You went to the interview. You got an offer letter. Whatever is there in that, that is your employee benefit. Formal plan or agreement. Legislative requirement. Not there in that, agreement. But law is telling you have to pay gratuity. Law is telling you have to cut PF. There is some PF which is involved. So everything is because of law. Informal practices. Informal practices. Pattern which creates expectation among employees. Now understand this. You had one company over here, Adi Limited. They had so many employees. So many employees were there. Whatever is there in their offer letter, employee benefit. Whatever is payable as per law, employee benefit. Clear? Now understand this one thing. What Adi Limited has done, gone and given ornaments to one of the employees' wife. Okay, company gave. One of the employees' wife. That is also employee benefit only. Clear? And what Adi Limited has done last year, during Deepavali, what they did was, they gave car to all their employees. They gave car to all their employees. Last year they did. Did they tell in the offer letter that they are going to give car? No. Was it required by law that they have to give car? No. But last year they gave, no. Last year they gave. That created an expectation among employees. So this year also Deepavali they will be expecting something. So it is an employee benefit expense. Informal practices also, I have to create provision for it and be ready for it. Okay. Yeah. No, it's not a one-time thing. You gave it on Deepavali. Last 2 years you have given. Now employees will be talking, oh, Deepavali is coming. Something will get, something will get. So that time we have to be ready for that. That will also be considered as employee benefit expense. Informal practices. Now, okay guys, let's continue. Types of employees that are covered. Okay, types of employees that are covered. What are the types of employees that are covered? All employees. What are the types of employees that are covered? All employees. What does all employees mean? Full-time, part-time, whole-time director. Oh, what is this whole-time director? Director who is in full-time employment is called as whole-time director. He is also considered for employees list. Clear? Casual staff. What is casual staff? Temporary. Temporary is part-time, no? What is casual staff? In this building, there are so many offices, right? Oh, but I have not changed still. Casual stuff also sounds nice. Casual stuff. Okay. Now, understand this. This building, there are so many offices, right? One person will come in the morning and they will do chai for all the employees, give chai and go. Clear? Casual staff. Casual staff. Clear? Are they on payroll? No. Are they part-time? No. But still they'll be considered as employee for AS 15. Includes employee benefits given to dependents, spouse, children, others. You give something to the children. You're giving some sports material for the children. That is also considered as employee benefit. You give that jewelry to the employee's wife. That is also considered as employee benefit expense. Pay made to employees, dependent, other legal heirs, insurance company. Now, understand this. Employee died. You are paying to the legal heir. That is also considered as employee benefit expense only. Now, Insurance, what is this, sir? Remember, somewhere in tax, you have something called as key man insurance policy. Key man insurance policy. That means you have one person who is important, so the business is taking an insurance policy on that guy. Clear? Premium is paid by business, but it is towards that person. It will also be considered as employee benefit expense. Basically, health insurance. If they are taking health insurance on your health, then it will be considered as employee benefit expense. How do you pay, sir? Whatever is paid in cash or kind. What is kind? You have an employee, every day you will tell, you sit here, I will pay you 1 hour less salary, but for 1 hour I'll make you sit here and I will give you one nice head massage. I'll give you one nice head massage. Are you getting my point? That is also given in kind, right? Employee benefit expense. Clear? Basically, usually employees, they get this gym membership and all, right? Gym membership is given to the employees. They can just go and work out without paying anything. That is given in kind. You have a subject called as tax. In that, something called as perquisites. It should be contract of service and not contract for service. Let's continue. Types of employee benefits. Okay, guys. Shh. Types of employee benefits. Short-term employee benefits. What is short-term? Within next 12 months, we are supposed to pay it. This is called as short-term. Example, salary and wages, normal ones. Long-term employee benefits payable after 12 months from balance sheet date of current year. That means sabbatical leave. What is sabbatical leave? Reading from the book. What is sabbatical leave? Like Glenn Maxwell once upon, Glenn Maxwell, one Australian cricketer, once upon a time he said, I want to take break from cricket because of my mental health. Okay. So nowadays what this corporate started doing, they are telling if you have completed 2 years, that means you have worked hard for our company, you need a break. I will give you 2 months of mental health leave. Mental health, 2 months, example. 2 months mental health leave I'm giving. Clear? Now this is payable after 12 months, no? Or I'm going to give you a free trip to Thailand. Now for massage. Clear? Now that will also be considered as long-term employee benefit. Now post-employment benefit. Post-employment, after you finish your employment, paid on or after retirement. Paid on retirement, gratuity. After retirement, pension. On retirement, commuted pension. Is this clear? Now, terminal benefits. Terminal benefits means what? I am removing you or I am making you go. I am removing you or I am making you go. What does it mean? Removing you, retrenchment. Retrenchment. I am making you go. I am giving you an offer which you can't refuse. I am giving you a nice offer. You are like, okay, voluntary retirement. And I'll give you voluntary retirement compensation. Is this clear? All these are employee benefits only. Now, short-term employee benefits. Okay, guys. Short-term employee benefits. 1 second. Okay. Now, short-term employee benefits types. Regular period benefit. Every time I'm paying you. Short-term compensated absence. Every month I'm giving you 1 leave. That is short-term compensated absence. Why? No, not leave salary. Every month I'm giving you 1 leave. Okay, this is like just for your other things. Okay, 1 day you can be absent and I'll give you money. I'll give you the salary also of that day. Profit sharing and bonus plans. Clear? You have seen so many times in taxation, there will be like commission on net profit, commission on net profit. Okay, non-monetary benefits also. Motor car. Non-monetary benefits with the driver. Clear? It is there. Okay. Record the employee benefit expense in the period in which employee renders service. Simple. For short term, no tension at all. Employee is working this year, record it as employee benefit expense. Finished. Clear? Salary or wages. This we have learnt from the beginning of time. When we were small kids, that time we have learnt it. That if at all there is outstanding salary, it should be taken as liability. If it is prepaid salary, I should take it as asset. See over here. Accrued and paid. Employee benefit expense debited to bank. Accrued but not paid. Employee benefit expense debited to outstanding salary. paid in advance, prepaid salary to bank. Clear? Now, bonus and profit sharing plan. This becomes very, very important. Bonus and profit sharing plan. Normal bonus, bonus per employee into number of employees. Okay. Now see over here. I have normal bonus example. Number of employees that I have is 50. How many employees I have? 50. I told everyone I will give 1000 rupees per employee. Bonus. Multiply, you will get the bonus. Put the bonus in employee benefit expense. Put the bonus in employee benefit expense. Is this clear? End of story. Now, profit sharing plan. Profit earned by entity during the year into share in profit expected payout percentage. Profit sharing plan means what? See what I have told over here. Number of employees 50. 50 lakh is my profit. 5% bonus. Will I give 5% to all the employees? No. Then I have to borrow loan and give. Because there are 50 employees over here. Okay. Are you getting my point? 20 employees will cover the 100% of the profit. Then I have to borrow loan. No. So, bonus is how much? 50 lakh into 5% for all the employees. 2,50,000. Direct. Profit percentages, take the profit, multiply, you will get the bonus. You want per employee, 2,50,000 divided by 50. You will get per employee. Is this clear? Yes. Next is leave salary, which we have to discuss in detail. Short-term compensated absence. What is the short-term compensated absence? Which is our major thing called as leave salary. Huh? That's what? Oh, previously, that's what you told. Okay. I think, what were you talking about that time? Oh, yeah, correct. Leave salary, that's what you said. Okay, leaves for which salary will not be deducted. What does it mean? Usually companies, you have a huge calculation only under salary head for leave salary. One month every year they are giving, okay, leave, you can take, do whatever you want. If you don't take, it will get accumulated. Okay, now see over here. In leave salary, you have two things, accumulating, non-accumulating. Accumulating means unused leave can be carried forward to next year. Once it is carried forward, what can you do? Vesting means entitled to take cash. Non-vesting means entitled to take leave. Are you getting my point? Vesting means it will get carried forward, but you can take money for that. If it is non-vesting, you can't take money, you should take leave only. Imagine first year we had 1 month leave. First year of articleship, they told 1 month leave. Full Josh, we worked as if the office belongs to us only. Correct? That time, that 1 month leave got carried forward. If it is vesting, that 1 month stipend will be given to you. If it is non-vesting, next year you can take 2 months leave, which will never happen. Huh? Vesting means you entitled to take cash. Non-vesting means entitled to take leave. Non-accumulating. Best. Non-accumulating. Unused leave cannot be carried forward to next year. No accounting treatment only required. When you know that it can be carried forward, I know expenses there on my head. I have to make provision. When I know you cannot carry forward, over, done, no, finished, no. Nobody will agree for this. Employees on the offered letter day only they'll tell don't want. Okay, now calculation of leave compensation. To create compensation, that means to create the provision. Now, vesting means what? What will it take in future? Vesting means what? What will it take in future? Money, right? Money. Total number of employees into number of unused leave into salary per day. Number of unused leave into salary per day. Clear? Now, see what is happening. In leave salary, you have two types, accumulating and non-accumulating. Accumulating, if leave is not taken, balance carried forward to next year. Non-accumulating, if leave is not taken, lapsed. Okay. Vesting means what? Cash can be taken. Non-vesting means what? Cash, no cash, only leave can be taken. Now, if I am taking vesting, I have 10 employees. Unused leave is 5 days per employee. Every employee has 5 days leave pending. Now, salary per day is 500 rupees. Now, employee benefit expense will be 10 employees into 5 into 500. That means total amount I have to create provision for 25,000. Because I know next year they can take 25,000 for this. Okay. Sorry. Approx. Why approx? Huh? Number of employees will increase, you're telling her. What is the assumption here? No. There is no assumption. This is actual actually. What is the assumption? I have 10 employees. Actual. They did not take leave. 5 days leave. Unused. They did not take leave. And salary is how much? 500 rupees per day. So next year they can take money. How much money they can take? 25,000. Exact. If next year new employees come, they will not get this now because they will not have unused leave. They will have other things, salary, wages, bonus, everything. Unused leave will not be there. This is the estimate. But what? This is the actual. When I am telling it is estimate is, next year if he does not take the money, provision will continue. He tells, I don't want money now. I will take when it becomes a lump sum amount. Provision will continue. Whenever he takes, I have to pay the money. Are you getting my point? Okay, non-vesting. Non-vesting, number of employees expected to utilize unused leave in next year. Number of employees who are expected to utilize the unused leave into number of unused leave expected to be utilized into salary per day. What an amazing thing. They are telling, see over here. Understand how the amazing thing it is. Number of employees are 10. Unused leaves are 5 days. Okay, it went forward. No. Now I am not telling 10 into 5. What I am telling is salary per day 500. Okay. Number of employees expected to utilize the unused leave. Out of 10, I feel only 6 people will take the unused leave. And out of the 6 people who are taking, they have 5 days, but they will take only 3 days. How on earth I am making the assumption here? How on earth I am making the assumption here? I cannot. I will go to one more guy called as actuary. He also has written a tough exam and he has passed it. So we have to give him also a job. Huh? Spent a lot. No, I think that's also a very cheap course. It's expensive. I am not sure about the fees. Actuaries, there is Indian Institute of Actuaries. Very few people are doing that course. Very high revenue, reward is there if you can complete it. In fact, the reward is even more than CS if you can complete it. Yeah, even more than CS. The pay is even more than CS. Very few. Full statistical research you have to do. Are you getting my point? Now, listen. Actuary will try to find out. Okay, all these employees are there in which area? Chennai. In Chennai. Okay, how is the health of these people? In what age group they follow? What age group they fall? What is the health of the people? How often they are falling sick? Based on that, what is the family background of the people living in this area? Then they are like, okay, out of 10, I feel only 6 will take the leave. 6, yeah. Their calculation, not feeling. Okay, they come to a conclusion that 6 will take the leave. Now, out of 6, will they take all the 5 days which is pending? No, they feel only 3 days will be taken. Are you getting my point? All this will be done by actuaries. The data will be fed to you. You are just going to pass the entry. Now, what will you do? 6 employees into 3 into 500. 6 employees into 3 into 500. 9,000 will be your employee benefit expense provision that you are going to create. Next big thing is DBO. We'll discuss DBO. Don't worry. Okay. Note. Total employee benefit expense in a year is salary paid plus provision made. Salary paid is direct. Other things, all this will be extra. Now, leave can be utilized either on FIFO or LIFO basis. Assume FIFO if question is silent. Sir, leave also FIFO basis, LIFO basis. What is this, sir? Stock I can understand. First in, first out. What is this leave? Leave FIFO means your earlier salary will be considered for calculating the leave. Leave LIFO means your last salary will be considered. Huh? Leap only is better, but your employer might have a different idea. You're thinking from employee's angle. Employer may tell you it was your old leave which was pending, that year's salary only you should get. Why I should give you this year's salary? Because you carried forward. I told you take that day only. You didn't take it. Okay, they will come to a common ground. Don't worry about it. Post-employment benefit. This is a very, very important thing. Post-employment benefit. Defined contribution plan. Now that you have studied tax recently, so easy to tell you. Defined contribution plan means what? I will, as an employer, contribute some money to PF. My job is done. My job is done. If there is actuarial risk or investment risk falls on employee. What is this actuarial risk or investment risk? Statistical risk. Okay. And predictions. And then investment risk is what? PF will go and invest it in the stock market. Stock market crashed. Money went. Whose? Employees. I am not bothered at all. Arey, government will regulate it. Don't worry. PF, LIC, ESI, all these things will never crash. Don't worry. They are not allowed to invest. They are not allowed to do trading in the market. They will invest in only some important things. Okay, now, what they're trying to tell is, if at all it's a defined contribution plan, that means my contribution is defined. Whatever I have to do, I'll contribute. My job is done after that. I don't have to bother about anything. So if I contributed, done. Okay, record expense for amount contributed. Finished. I contributed 5,000. Remember, you have a PF 12% you're going to contribute. Okay, when you contribute, done. End of the job. Example, provident fund and gratuity. Defined benefit plan. Defined benefit plan. That means I am telling when you retire, I will give you this. As an employer, I am telling when you retire, I will give you this. This is called as defined benefit plan. Now, plans other than DCP, defined contribution plan or defined benefit plan, entity has agreed to pay directly to employees post-employment. Clear? Actuarial risk and investment risk falls on employer. Okay, it is on employer only now. Every risk is on me. Apply actuarial calculation to determine the charge. Now, don't worry about this plan is set ledger. We will discuss that later. We start our discussion from here. DBO. DBO means what? I am the employer, you are the employee. Correct? I have entered into a contract with you for a defined benefit plan. I told when you retire, I'll give you something. Clear? Because I told you that I will give you something, there is an obligation on me. That becomes defined benefit obligation. Clear? First step. Calculate estimated benefit to be paid to employee post-employment. Expected final salary into benefit percentage into number of years of service. Okay. We'll go step by step here. I have one employer here. I have one employee over here. What happened? Are you thinking something? Why is he bending? Always employees bend before their employers. Okay. 5 years to retirement, yes. 5 years to retirement. Old employee. 5 years to retirement. Annual salary is 15 lakhs. Annual salary is 15 lakhs. Benefit promised is 10%. Now tell me how much I should give. 15 lakh into 10% into 5 years. Usually they tell 10% for every completed year of service. Okay, into 5 years. So 7,50,000 is the estimated benefit that I am supposed to give. 7,50,000 is the estimated benefit I am supposed to give. When they retire after 5 years. Clear? Okay, that is first step. Calculate the estimated benefit. Okay. Now, allocate the benefit over the period of service. Total benefit divided by number of years of service. How much was the total benefit? 7,50,000. Allocation of benefit. What will I do? 7,50,000 divided by 5 years. That means 1,50,000 per year. 1,50,000 per year. Are you getting this? Okay. Next. Gone. That will come in between if they retire and all. That will come. Wait, don't worry. Now we are hoping that they'll stay for 5 years. Now, calculate current service cost. Calculate current service cost. Recognize each year at present value of benefits attributed to that year. Note reverse discounting will apply. Okay. Current service cost debited to defined benefit obligation. And interest cost is also there. What is interest cost, sir? We don't know. Interest cost debited to defined benefit obligation. Do you agree one thing here? I'll explain to you what it is. Don't worry. Do you agree one thing? Current service cost is also employee benefit expense here. Interest cost is also employee benefit expense only. Clear? Everything is employee benefit expense till here, whatever we have seen. Now, let's understand. Let's understand. Allocation of benefits done. Now, what will happen? Every year, 1,50,000. Now, DBO, 1,50,000, 1,50,000, 1,50,000, 1,50,000, 1,50,000. Present value factor at the rate of 10%. Sir, usually you write present value factor like this, like this, like this, like this, like this. But you have written like this, like this, like this, like this, like this. Why? Why? Why is it like that? Understand this. 1,50,000 that I'm going to see. What is the plan here? As an employer, I have to take 1,50,000 and keep it aside. And it should be given to the employee when he retires after 5 years. 1,50,000 that I take aside in the first year end, I will give it to the employee in the 5th year end. That means 4 years are away. Still 4 years are away. Usually what you used to think in present value factor, you're like, I am going to pay after 1 year. What is it today? I am going to pay after 4 years over here. I am going to pay after 4 years. So what happens? 4 years away, discounting rate. 3 years away, discounting rate. 2 years away, discounting rate. 1 year away, discounting rate. Can you see the last one is 1? You know why last one is 1? You are going to take 1,50,000 from your pocket at the end of 5th year and give it to the employee at the end of 5th year. That's why there is no present value factor over there. Clear? When you do this, you get all this present value of DBO, 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 6,25,350. How much you are supposed to pay actually? 7,50,000. Now see over here. Did you define something as current service cost? They are like, I have to give 1,50,000 after 4 years, but end of first year, only 102,450 is enough. Only 102,450 is enough. Now you have to understand this in this way. Unwinding of interest and all they have spoken. Okay, it's a very complicated concept. Let's try to simplify it. Now what you have to understand is, I have to remove 102,450 and invest it in such a place where I get 10% return, which will grow and become 1,50,000 at the end of 5th year. I have to take 112,650 and invest it in such a place which will give me 10% return, which will grow and become 1,50,000. But 5th year end, what I take 1,50,000, it has no time to grow. That's why full amount you're taking over here. Is this clear? So whatever is there over here, no, this is current service cost. Current service cost. Current service cost is also employee benefit expense only. You completed 1 year, I took this much. Employee benefit expense. See the entry over here. Employee benefit expense, current service cost, debited to. Did I give you first year on the end only? Did I tell, take this money for you? Did I tell? No, right? It will go to defined benefit obligation. A liability is created. A liability is created. So first year and what I am doing, I am taking this money, putting it into a provision. Putting it into a provision. Is this clear? Then what I am doing, I am going to next year. Now see this unwinding of interest. Very important part. Unwinding of interest. See here what is going to happen. First year, opening balance 0 because I hadn't saved anything last year. Interest 0. What did I remove that year? 102,450. Where I am getting these numbers from? These are the numbers. These are the numbers. 102,450. So closing balance will be 102,450. What I invested in first year, it will remain for the entire second year. So 10% will be the interest on that. Now, will I take the interest away? Is it like FD? I take the interest, I'll enjoy the interest. No, I'll let it grow there. So interest will be there here only. Interest will be there here only. It gets compounded. Now what happened? Second year, again I took some more money and I put it aside. Second year, I took some more money and I put it aside. That is 112,650. So the amount that you put in first year, on that what interest you got, and the amount that you put in second year will be your closing balance. Will be your closing balance. That came to the third year. On this you will get interest. But this you will not get interest because that you are taking third year end. Third year end you are taking. So amount that came from second year on that interest plus what you are investing in third year, that becomes your third year end. That comes to the fourth year. You will get the interest on that, and that becomes again some more amount you're keeping aside. This is the amount that is coming. If you notice, on this interest, usually we take it as balancing figure. Last year, because of so much rounding off and all, present value factors are not full. This is 1,50,000. If you notice, it will come somewhere close to 7,50,000. It might be some 200, 300 difference might be there because of rounding off difference. That you can ignore. Okay. So what has happened? Amount kept aside, interest on that has grown. Now you have 7,50,000. So what is the entry you are going to pass in year one? Employee benefit expense, which is current service cost, debited to DBO. You are keeping the money aside, DBO. Then second year, what is going to happen? Employee benefit expense debited to DBO. But second year, you will get the interest of the first year. On the first year's amount, you will get the interest. So employee benefit expense, interest cost to DBO. Third year, what will happen? Okay, that's it. That's it. Okay, that is another concept. Okay, is this clear? Third year, what will happen? Again, employee benefit expense is this, interest is this, that will be transferred to employee benefit expense, and you are not going to pay it today, you are going to keep it aside, so it will be DBO again, defined benefit obligation. Is this clear? Clear? Now, after this it's easy, don't worry. Now see, what they are telling, calculate actuarial gain or loss at the end of each year, arising due to change in assumptions. Now you did all these provisions properly, according to some plan you made some provision. Now actuary is calling you and telling, hey boss, listen, you thought that only 5 employees will retire. No, actually 6 employees will be there who will retire, will stay in your company only. Increase in DBO, increase in your provision, actuarial loss debited to DBO. The actuary will call and tell, hey, why are you making so much provision, da? 4 people will not even retire. They will leave your employment tomorrow only. DBO debited to actuarial gain. Guess what has happened? Extra provision is also employee benefit expense. Reversal of provision also is employee benefit expense minus. Employee benefit expense minus. That means it's gain. Employee benefit expense will reduce that year. That's all. Clear? For example, where are we? In year 3, actuarial loss. In year 3, actuarial loss. What will happen? Actuarial loss, which is employee benefit expense, debited to DBO. He told more provision required, more employees will stay in your company only. He told less provision required. DBO debited to actuarial gain. DBO debited to actuarial gain. Is this clear? Now let's go further. Calculate past service cost arise due to changes in defined benefit plan. Employee was working amazing. Employee was working amazing. I promised you 10%, right? Now I will give you 15%. I will give you 15% of what every year. Correct? Now what happens? Additional benefit to employees. Extra provision required. Now past service cost debited. It's called past service cost because you're going to restructure everything. Past service cost account debited to DBO. This is also employee benefit expense. Now employee was working, looking at him, I thought, why did I make this promise? Then I told, you are not working properly, I will give you only 2%. If you want to stay or go. If he goes, I'm very happy because 10% saving. If he stays, I am little happy because 8% saving. Now what will happen? That much liability is not required. Provision will reduce. Past service cost will be credited. That means employee benefit expense will be minus. Clear? Now, curtailment and settlement. Entity curtails benefit of employee under DBP. What is DBP? Defined benefit plan, and settles before maturity. What I am telling, I am not reducing and all. I am telling enough. I have seen enough of you. Get out. 2 years you have worked. I am only telling you to get out. 2 years you have worked. So whatever is accumulated, I will pay you. Now, see over here. DBO debited because provision is gone. Provision is gone, DBO debited. To bank, whatever amount you are paying. If you are paying little more, loss on settlement. If you are paying little less, profit on settlement. This will happen either the company only is going to shut down or employee has done some scam. I'm going to send. Okay, 2 years he was there. I will accumulate something and I will give it to him. Over, go. Again, I cannot give you retirement benefit and all. This is the situation. Clear? Now, let's just have a look. See, after year 2, extra compensation promised. Now, what will happen? Past service cost debited to DBO. Increase the provision. After year 2, compensation is reduced. DBO debited because liability reduces to past service cost. Employee benefit expenses credited, so employee benefit expense will reduce. If DBO was 5 lakh, curtailment and settled 5 lakh 5,000. I am settling it at 5 lakh 5,000. DBO debited 5 lakh, but I am paying 5 lakh 5,000. 5,000 is loss on settlement. I am paying 4 lakh 90,000. So 10,000 will be gain on settlement. With that, we are done. One small area. Say, wait. Not done. Wait. They ask this question very regularly. Plan assets. Plan assets, they ask this question. Now, understand this. Simple. Plan asset, you think of it like an investment. Plan asset, you think like that. It might not be the same in reality, but think like this. It is a planned investment. It is a planned investment. Investment will have opening balance debit. Investment will have closing balance credit. But the closing balance will be at fair value. Closing balance will be at fair value. That means market value you are taking. Okay. Now, to bank, you made more contribution. To bank, investment account debited to bank. When you have to pay some employee who is retiring, what you will do? You will take from the investment. No, you will sell the investment. Buy bank, benefit paid. Buy bank, benefit paid. Now, after this, anything can be your balancing figure actually. Actuary told gain. So, investment value increases. Actuary told loss. Investment value decreases. Now, this is your expected return. Okay, what you planned, actual return is over here, or actual loss also can be there on the other side. Is this clear? Now, understand this. Your total return is this. What actuary told and what you actually gain. Your loss is on the other side, which is the balancing figure. Is this clear? Are you following this? Now, for example, if I have a plan asset and I have to balance brought down 100, by balance carried down 80, by balance carried down 80 or 180. Okay, and I invested some more money to bank 50, to bank 50. Okay, I removed some money to pay the employees, by bank 20, by bank 20. Now, actually my actual return is there. No, I made a return of 20. They told 10% or something. I calculated. I got return of 20. So, actual return. My actual return is 20. Now, what happened? 150 plus 20, 170 minus 20. It should have been 150. But it has become 180. That means balance is actuarial gain 30. Balancing figure. If at all it was on the other side, it's a loss. Is this clear? This also can be asked in the exam. I think one or two are there, which is on plan assets. One in the illustrations, one more is in the practical questions at the end. With that, we are done with our marathon, guys. Accounting, advanced accounting. Okay. Now listen, guys. Listen. We'll spend some 10 minutes. Okay. Now, September, guys. Now listen. Where are we? Class up. How much time do we have left? Little. We have a few days left. Okay. Please utilize the time properly. Okay. Everything can wait. I have been telling a lot of times, everything can wait. Next few days, full focus on exams. Minimum, we have to study 10 hours. Minimum, we have to study 10 hours. Don't come and tell me that you studied for 6 hours and all and I felt, oh, tired, sir, enough. No tired. No tired, it's do or die situation. Okay, minimum you have to study for 10 hours, nothing less than that. 10 hours studying is easy. I am telling you, for studying 10 hours, no, you don't have to sit late in the night or you get up early in the morning, not required. You start your studies at 8 o'clock also, easily you will be finishing 10 hours. How? 8 to 10, 2 hours done, 10 to 10:30, break. 10:30 to 12:30, 2 hours done, 4 hours. Done. 12:30 to 1:30 you take break for lunch. Okay. Now 1:30 to 3:30, 6 hours done, half an hour you take break for tea. 4 o'clock you sit again, 4 to 6, 8 hours done. 8 hours done actually, by 6 o'clock only you finish 8 hours. 6 to 6:30 you take break, 6:30 to 8:30 if you want to study. 10 hours done within 8:30. You can spend 2 hours on leisure. 10:30, 11 o'clock you can sleep and get up again in the morning. Are you getting my point? It is just an illusion. It is just an illusion that hard work in studies means I have to sit late or get up early. Nothing. If you have full day to study, you can just utilize the daytime. Don't simply waste your sleep cycle. Sleep. These are not courses which are studied in the last week and you go and write in the exam. These are courses where you have studied for a very long time, months together you are studying and you should go and write in the exam. If your sleep is not there, your brain cells will die. If your brain cells die, your memory is affected. Minimum you have to get 6 hours of sleep. 10 hours, huh? 10 hours you sleep? Okay, minimum you have to sleep for 6 hours. Clear? Minimum. I feel 6 hours sleep is more than enough. 6 hours sleep is more than enough because you'll be able to manage. Last 1 month, 6 hours sleep is enough. Actually, if you utilize your time properly during the day, no, you can even sleep for 7 hours. You can even sleep for 8 hours. Just that you should cut down all other things, all other distractions you should cut down. That's all. And any functions that you have will happen. Any functions that you have will happen. You don't need to wait. Okay, you don't need to go. It will happen. Marriage. First cousin is getting married. Let them get married. No issues. No issues. During my inter exam, my first cousin got married. I didn't go for it. That attempt I cleared. Okay, no need. You are anyways going to eat food only, no. And click some pictures. That's all. They will still get married. No. Are they going to wait if you don't go? Then that wedding you have to be, maybe it's yours. Are you getting my point? Okay, other than that, everything can wait. No. So don't worry about it. Just forget about all functions, birthday parties, nothing. Next 1 month. Okay, usually I tell you, you should have leisure. But when there is 1 month left for exam, no leisure. Just focus. It should be just eat, study, sleep, repeat. That's all. That is the cycle. That is the cycle. Nothing else should happen. That is it. You should feel bad that if half an hour you have wasted. You should feel bad that half an hour you have wasted. You should feel bad. Okay, that is when you will be like on the right track. And then obviously exam days and all. Okay, don't take too much tension. Just stay calm. Easy to tell, very tough to follow. Correct. Now previous day of accounts exam. Nothing. Stay chilled. You know why? Because you don't have the previous day pressure. Because accounts exam 5-6 days you'll be doing only accounts. No. Only accounts you'll be doing. You don't have that pressure that I have to finish the portion on previous day. Clear? But other exams you'll have that. But accounts exam you'll have this pressure. Going to a new place, new exam center, new place to sit, random people around you. You don't even know who they are. Okay. Entire place only is new. You have to just go there little early. Okay. When you're having travel and all that, just go early. First day you go early. 25 minutes or 30 minutes early you go, because outside there will be a notice board there. In that they'll notice board or one stand, they'll put in that all roll numbers will be there. See where is your classroom. Go to that classroom. Every desk will have a label. Go and search where is your place. Go and sit there. After that, ignore everyone. Don't go to top only. Don't go to top. You saw your friends over there in the exam hall. If you don't smile also, no problem. Okay, just ignore them. Completely ignore them. Whatever they tell, you will only be under tension. Whatever they tell, you will be under tension only. You will be like, if they ask about some topic which you have studied very well, still you will get underconfident. You will be like, again, I want to see what is he talking about. If they ask about some topic which you don't like, gone. And some friends will be there outside the exam hall. They'll be like, hey, somewhere I saw something in one video. They told that this only will come this time. These days, a lot of things are there. No, predictions are there on Telegram, YouTube. People do ABC analysis and all. According to me, there is no ABC analysis, guys. Okay, simply don't waste your time on ABC analysis and all. There is no ABC analysis. ICAI also will be seeing those ABC analysis. Anytime they can make it go upside down. Anything. Recently, I mean, in some YouTuber, some faculty only had put some ABC analysis for CA final one subject. On the exam day, I just went to that ABC analysis because I know if it went according to the plan, students will be there in the comments. In the comments, people were shouting left, right, and center. They were like, "Pura C category aa gaya." Okay, whatever he gave C category, everything was there in the paper. ICA also sees when faculties are successful. No, when predicting questions, 2 attempts, third attempt, ICA will reverse everything. They will reverse. So don't go to see any ABC analysis and all. Nothing. If at all some important questions are there, that means they are not telling you that these questions will come. These questions will cover the revision faster. All concepts are covered in these questions. That's all. Other than that, there is nothing. Nobody can predict. Okay. Once or twice it might go right. That's all. It's like just throwing the stone at the mango tree. If it goes, mango will fall. Otherwise, one stone went. That's all. Okay. So don't go to fall for all that. And many of the things are just marketing. It's for views. They'll put a caption. 100% leaked paper, something like that. That doesn't happen in CA. Okay. That's just for views. That's all. Okay. So don't go to bother about all that. Just focus on your exams. And every day after accounts exam will be pressure. Prepare. Be prepared for that. Accounts exam after that, every day will be pressure. Because in 1.5 days, you have to revise everything. In 1.5 days, you have to revise. So you will have 5 pressure days. 5 pressure days for 5 exams. First exam, I'm guessing you're doing accounts for 5-6 days. Okay, 5 pressure days will be there. Now, what you should try to do is, the day you write your exam and come, no. You know what are the light chapters in that subject. Finish all those light chapters. Simple ones. You don't have to spend too much brain energy. For example, if it was accounts, buyback would be something you will do easily. Internal reconstruction you can do easily. Correct? Except you. Okay, internal reconstruction you don't. You just go on passing journal entries. Simple things. Same thing for other subjects, law and tax and all. They'll have simple things. Okay, just finish all those simple things. Something like, for example, in a tax subject, okay, something like PGBP. Don't do it on the exam days. Next day morning, fresh start. Start with that. So next day morning when you are starting, no, you are doing all the tough areas or all the heavy weightage areas. You are doing next day morning. Obviously, your energy will come down. As the day progresses, your energy will come down. So what you will do, that time you take lighter topics again. Try to keep again lighter topics only for the exam day morning. Because exam day morning, you don't want to take a heavy topic and get stressed about it. Seeing something, you're like, oh God, what is happening? My mind is not working because you have the exam pressure also. You don't want to go in that negative mindset to the exam. When you go in that negative mindset to the exam, what happens? You're already like you're having that frustrated mindset. When you're going irritated, you are. Whatever you see, small twist also, you'll get irritated. Don't do that. And 15 minutes reading time. It doesn't make sense to read the entire paper. You just see, okay, this topic. Okay, this topic I'm confident. Now read that question. Okay, can you attempt it first? Write it well. MCQs everywhere you should try to target 30 minutes, 30 marks. Because it's not 30 questions now. It's 15 questions only. 30 marks. 15 questions you can attempt in 30 minutes. It makes a huge boost. Your overall time will be boosted if you can finish it in 30 minutes. Now, the students keep asking, I don't know whether MCQs to do at the starting or at the ending. I feel you can do it at the starting, but don't do it at the ending. Because ending, you're already like in time constraint and all. Don't do it there. Sometimes you can, if you feel MCQs, you don't want to spend all the time on that. Descriptive is your strength. What you can do, you can keep MCQ exactly in the middle. 3:30, 3:45, you do MCQs. Then you go back to descriptive area. Okay, it's up to you. But I feel MCQs, you can finish it in first 30 minutes because you'll be fresh also. MCQ requires little more brain energy also. Okay, because reading one huge case, then seeing the question, then coming back and searching numbers, then going and filling it over there, it will take some time. Okay, so starting is always better. But don't carry forward something that has happened in MCQ to descriptive. Start descriptive like fresh. Okay, don't think that, don't keep thinking about one MCQ answer you don't know, A or B. 2 times you have erased and changed it over there in the OMR sheet. Now third time you want to make it C. Okay, don't go to do that. Just focus on the descriptive part, because even descriptive, if you do well, you can really score well. In 30, you should try to target somewhere around 22. If you can get some 22 minimum guaranteed over there, it makes a huge boost. If you can get 30 out of 30, amazing. Okay, then so much pressure is relieved. And when accounts exam goes well, usually the group goes well. The group goes well. Why? Because if your accounts exam goes well, you're confident. Then the confidence just goes into your law studies, goes into your law exam, goes into your tax studies, goes into your tax exam, and so on it continues. And you have to know, ICAI, in one group, one subject will be difficult. It's not a surprise. It's not a surprise. Every group, one subject will be difficult. It is always like that. There's never been an attempt where all three are very simple or something. One will be difficult, you have to be prepared for that. And if it's difficult, it's not bad. If you're prepared, you score well. You score well because correction will be lenient, grace marks will be given. If you have done well in a difficult paper, you really top the charts over there. And when you have written well in a difficult paper, 3-4 papers are not that good. Fourth paper, yours will stand out. Clear? So you have to prepare every subject. You are not going to do, see, you are paying only the exam fees to write the exam. Don't decide that law 40, tax 40, account 70, costing 70, FM 60. You are not going to do that. Bye-bye, all the best. Yes, so you are not going to do that because for that, there is somebody else. Somebody else to do that work. Internal reconstruction, last time 14, before that not asked, this time 14. Buyback, last time not asked, this time 7. Cash flow statement 7, last 2 times. So this time also 7. For doing that also, no, board of studies is there. Exam department is there. Somebody will do that work. You don't do. You are only paying fees to study and write the exam. That's all. Go and do it. And don't become environmental friendly in the exam. This is our exam answer paper. Nicely we will be writing. When we come towards the end of the paper, we feel, why should I go to the next page? So many trees were cut to give me this paper. I will write like this. Like this, like this, like this, like this. Here only it will end. Okay? Don't do that, please. Don't do that. If at all your next page, you need only 1 line or 2 lines also, go to the next page and write. Then the blank space, just strike it out like this, blank space, and then go to the next question. Clear? Keep it simple. You don't want them to search with irritation. You want it to be there. When they look at it, they should find it. Okay? So all these things you should follow. And please eat healthy. Okay? Eat at home only. Don't go to eat outside. You don't know what's going to happen. Some people are there. Whatever they eat, they'll digest it. Okay? I never had that problem. It's like I will eat anything. I will be able to survive. I will, just because of eating something, I'll never fall sick. Okay, touch wood, I have never fallen sick because of eating something. Okay, so if you are like that, then fine. Otherwise, some people are there. They are very sensitive. Something they eat, something wrong, gone. Okay, so don't do that. Home food, you already are adjusted to it. PG, if you are staying in a PG, the same PG food, even if you don't like it, eat that because your body is already adjusted to that. The same PG food, you eat that. It's okay. I know it's not nice, but eat that only because your body is already adjusted to it. Later, after exam, you can think of something else. And if you are a person who is falling sick, falling cold and all, avoid all these cold items and all. Just eat to survive. Eat for luxury, you can do after exams. Are you getting my point? Eat to survive, that's all. And sleep is very, very important. And keep your mental health at peace. So the lesser number of people you talk to is always better. Lesser number of people you talk to is always better. You are in a zone. You talk to someone, unnecessary fight happens, you'll simply be thinking about that. Correct? You talk to someone, unnecessary fight happens, you'll be thinking about that. Simply it will affect your studies. Lesser number of people you talk to is better for 2 things. Your mental health also good, and whatever they tell will affect you only. They are telling they are studying 1 chapter. You leave this chapter and go and study that. You'll think that is more important. Are you getting my point? They will tell that I studied 8 hours continuous. They will tell I studied 14 hours a day. You will be like, 14 hours. I am not studying enough. You will be studying in pressure. 14 hours and all, unrealistic. Nobody can study for 14 hours. They will be in front of the book for 14 hours. They will be in front of the book for 14 hours. Effectively, they will be studying for around 10-11 hours only. Okay, if you can do effective studies, 10 hours is more than sufficient. You'll be able to cover everything. Okay, and try to ensure that your theory is studied in all those areas when you are fresh. Theory requires your brain to be fresh. Study in all those areas when you are fresh. Usually mornings when you start your studies, you are fresh. Clear? Afternoons, after lunch, keep it for practical subjects. Evenings, usually, around 4 to 6 and all, you'll be fresh. Suddenly, one new spark of energy will be there in you. Let them study theory again. And always theory, you try to do cumulative. Revise. Audit stuff, law stuff, revise it again and again. Tax provisions are irritating. Keep it on a board. Put it on your wall itself. Every time you should look at that. Oh, okay, tax provisions. This. Are you getting my point? Okay. Yes. So what you have to do, just prepare and please believe in yourself. Okay. People ask, sir, can I do CA? I don't know the answer. Go and ask the mirror. Go and ask the mirror. Okay. You should ask, can I do it? You will be like, yes, I can do it. Yes, go do it then. Are you getting my point? It is possible. 100% it's possible. If you have the dedication to sit till 9:45, okay, then you should use that dedication to study also. And it is clearly it's possible. Exams are not difficult. I told you again, it's a data game. Data game, cover the database in all the subjects. 100% you will be able to clear. Clear? Okay, guys, wish you all the best. Again, we should not meet in an inter class. Okay, if we are meeting, we'll meet again in a CA final class only. Okay, see you. Bye. All the best. Bye.